Part 4, the Revenue Engine Finance, Performance and Ghosts.
Welcome to the grand finale of our Masterclass series. The orders have shipped and the trucks have left the yard, but the most critical stage of the migration is just beginning, securing the money. In this final part, we analyze 64 incidents involving the financial integration of the digital core, HANA database performance spikes, and the terrifying ghost incidents that only appear under production load. This is where we ensure the revenue engine is stable, auditable, and high-performing.
Part 3 Recap, Operations and Logistics.
In the 2 volumes of Part 3, we successfully navigated the operational front line. We analyzed 85 incidents across testing strategy, cutover sequencing, and day 1 logistics execution. We saw how advanced ATP and embedded EWM shifts can paralyze the physical movement of goods. If you missed those operational deep dives, please check the links in the description before starting the final chapter. A true architect understands the system from the blueprint to the balance sheet.
Mapping to SAP Activate.
The final 64 incidents align with the long-term stabilization and optimization of the system. Sections 11 to 15 align with the run phase for hypercare and month-end closing stability. Section 16 covers the explore through run phases for specialized industry solutions. This part focuses on securing the investment and achieving the promised S/4HANA ROI.
Section 11, Billing and Finance Impact Incidents.
Section 11 addresses the point of sale in the general ledger. In S/4HANA, the sales subledger and the general ledger are technically fused via the universal journal. This section highlights why legacy billing habits create financial imbalances in the ACDOCA table, and how the move to modern revenue accounting and settlement management creates a new landscape for financial audits. If the money does not post correctly here, the entire migration is a failure in the eyes of the CFO.
Section 11, Incident List, Billing and Finance.
The following incidents represent the financial risks in the final stage of the O2C cycle. Scenario 227, Billing Pricing Differences. Relevant SAP note, not applicable process design and FI integration. Scenario 228, FI posting timing differences. Relevant SAP note, not applicable process design and FI integration. Scenario 229, account determination differences. Relevant SAP note, not applicable process design and FI integration. Scenario 230, credit memo differences. Relevant SAP note, not applicable process design and FI integration. Scenario 231, settlement management behavior differences. Relevant SAP note 2267377. Scenario 232, accrual posting differences. Relevant SAP note, not applicable process design and FI integration. Scenario 233, tax calculation differences. Relevant SAP note, not applicable tax engine and localization design gap reference SAP note 2267310. Scenario 234, billing split differences. Relevant SAP note, not applicable process design and FI integration. Scenario 235, margin analysis differences. Relevant SAP note 2349298 and SAP note 2225170. Scenario 236, event-based revenue recognition differences. Relevant SAP note 2267319 and SAP note 2225170. Scenario 237, down payment clearing failure. Relevant SAP note 2333948. Scenario 238, revenue accounting contract mismatch. Relevant SAP note 2267319 and SAP note 2225170. Financial reconciliation is the ultimate gate for a successful S/4HANA migration.
Scenario 227, Billing Pricing Differences.
On day 1 of an S/4HANA go live, the billing department often reports that the final invoice value does not match the original sales order value. While the order looked correct during entry, the S/4HANA billing engine re-evaluates specific condition types, such as freight, taxes, or tiered discounts, during the copy control process. If the pricing type in the SD to billing integration is not perfectly aligned with the new HANA native calculation rules, The system will trigger unexplained variances that block the financial posting.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high financial accuracy and customer trust risk. 2. Phase, run post go live. 3. Frequency, common in environments with multi-step discounting and complex freight. 4. Primary ownership, SD functional lead, the person who owns this and gets fired if it fails. 5. Supporting sales controller and ABAP lead. 6. Business ownership, billing manager. 7. Relevant SAP note, not applicable process design, and FI integration reference SAP note 2267308 for pricing data model context.
Diagnostic dashboard, symptoms and evidence.
How billing pricing variances manifest in the live system. 1. Symptom, an invoice is generated for a different total amount than the customer signed sales order, triggering an immediate payment dispute. 2. Red flag, the billing document status shows error in accounting interface due to a 1-cent rounding difference in local currency. 3. Business impact, significant increase in credit and debit memo requests to correct systemic billing errors on day 1. 4. Detection, comparing table VBRP NETWR against table VBAP NETWR reveals a discrepancy for documents with redetermined pricing flags. 5. Technical proof, pricing analysis in transaction VF02 shows that a specific condition was deactivated during the copy from delivery to billing. Insight in S/4HANA, the invoice is the financial reality. If it drifts from the order, your audit trail is broken.
Why this happens, scenario analysis and root cause.
1. Legacy copy control settings in transaction VTFL were migrated without revalidating the pricing type, for example, type G versus type B. 2. The new S/4HANA pricing engine evaluates group conditions more strictly, often recalculating scales based on the actual delivered quantity rather than the ordered quantity. 3. Failure to synchronize the rounding rules in the pricing procedure with the new universal journal currency settings. 4. Custom pricing routines in VOFM were refactored for syntax but not for functional parity, leading to different results during the billing save event. The failure is a result of treating the billing copy process as a technical pass-through rather than a secondary calculation.
Why this is a migration exclusive failure.
1. ECC upgrades kept the legacy cluster math KONV, ensuring that the rounding behavior remained constant for 20 years. 2. S/4HANA migration moves the math to the transparent PRCD_elements model, where 15 decimal internal precision is the new standard. 3. The requirement to balance the invoice to 0 in the Universal Journal ACDOCA makes micro-variances fatal that ECC simply ignored. 4. This failure only surfaces when real-world delivery variances, for example, shipping 99 instead of 100, trigger the repricing logic in S/4HANA. Migration introduces a level of financial balancing discipline that the legacy ECC kernel never enforced.
Financial and customer impact.
1. Revenue leakage if the billing drift results in lower prices than contracted, damaging the quarterly profit margins. 2. Customer frustration as automated AP systems reject invoices that do not match the purchase order values precisely. 3. High operational costs as the finance team must manually write off thousands of penny variances to close the month. 4. Audit risk as the company cannot mathematically explain the drift between the sales subledger and the general ledger. Billing pricing errors directly compromise the integrity of the enterprise's cash inflow.
Governance and accountability RACI model.
Securing the invoice value requires a partnership between SD and the controller. 1. Accountable SD functional lead, the person who owns this and gets fired if it fails. 2. Responsible ABAP lead refactors the VOFM formulas to ensure consistent rounding across the O2C lifecycle. 3. Consulted corporate controller defines the maximum allowable variance for automatic write-offs. 4. Informed billing manager monitors the invoice discrepancy queue on the first day of business. Accountability ensures that system math aligns with corporate financial policy.
Ownership who actually fixes it.
Resolving this requires an audit and precision realignment. 1. The SD functional lead audits transaction VTFL and VTFA to ensure the pricing type is set to G to preserve order pricing. 2. The ABAP lead refactors the pricing routines to use the commercial rounding class CL_PRC_result_factory for all custom math. 3. The FICO lead configures rounding diff accounts in transaction OBY6 to catch unavoidable currency drift. 4. The QA team executes a volume recon test, comparing 1,000 orders against their invoices to ensure 0-cent level variance.
Who gets blamed versus who owns it?
1. Blamed billing clerk's management assumes the users are changing prices manually. 2. Blamed SAP the business claims the new HANA math is producing random results. 3. Actual owner SD functional lead responsible for the failure to perform a precision drift audit during the testing phase. 4. Root cause using an ECC rounding mindset in a high-precision S/4HANA environment. If the numbers do not match, the configuration failed to account for the new system's accuracy.
How this is actually fixed the right way by a role.
1. SD functional lead mandates a rounding logic freeze, ensuring all modules use the same decimal rules. 2. The team implements static pricing and copy control for physical goods to prevent recalculation at the point of invoice. 3. ABAP lead refactors any routine that performs manual division to use the standard SAP currency-aware function modules. 4. The project team utilizes SAP Note 2267308 to ensure the data element lengths for condition values are consistent across the landscape.
What not to do. Common wrong fixes.
1. Do not allow users to manually adjust invoices to fix a rounding error. You are hiding a systemic flaw. 2. Do not assume that 1 cent is immaterial. S/4HANA will block the entire billing batch if the universal journal is out of balance. 3. Do not change the condition category of tax conditions to price to bypass a calculation error. 4. Do not allow go live until a full order to bill reconciliation shows 0 unexplained variances for 100% of test data. Shortcuts in billing precision lead to an audit nightmare that the CFO cannot solve.
Follow-up 1. Why does S/4HANA recalculate prices during billing more often than ECC?
Answer: it does not recalculate more often by default, but it is more sensitive to the calculation. Because S/4HANA needs to populate the profitability segment and the universal journal in real time, it performs a more rigorous validation of the pricing components during the save event than the old ECC row-based system.
Follow-up 2. What is pricing type G, and why is it the standard for brownfield?
Answer: pricing type G tells the system to copy pricing elements unchanged and redetermine taxes. This is the safest setting for a migration because it ensures the customer is billed exactly what was quoted in the sales order, while still allowing for real-time tax updates at the moment of the invoice.
Follow-up 3. Curveball. What if the billing price is correct, but the P&L shows a variance because the exchange rate used for the COGS posting during goods issue was different from the rate used for revenue during invoicing, and the matching principal configuration failed?
Answer: this is a valuation timing failure. In S/4HANA, you must test the COGS to revenue alignment. The fix is to implement deferred COGS SAP Note 2349298 or to use the same billing date for the COGS revaluation. If you miss this, you will have a ghost variance on your daily margin reports that will require a massive manual reconciliation at month end.
Exclusive pro tip.
On day 1, run a custom report comparing VBAK NETWR to VBRK NETWR for all completed documents. If the ratio is not exactly 1.0000, your copy control is allowing price drift. Fix transaction VTFL immediately to protect your revenue integrity.
Scenario 228. FI posting timing differences.
On day 1 post go live, the finance team often reports that they cannot see sales revenue in their dashboards immediately after the invoice is saved. In ECC, the accounting interface was often an asynchronous background task. S/4HANA enforces a synchronous commit where the SD billing document and the universal journal posting must happen in the same technical transaction. If custom ABAP exits or technical locks delay this commit, the system will trigger an update terminated error, resulting in invoices that exist in SD but are missing from finance.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high system performance and data consistency risk. 2. Phase, run post go live. 3. Frequency, extremely common in systems with heavy custom FI substitutions. 4. Primary ownership, FICO lead, the person who owns this and gets fired if it fails. 5. Supporting ABAP lead and SD functional lead. 6. Business ownership, corporate controller. 7. Relevant SAP note, not applicable process design, and FI integration reference SAP note 2349298 for universal journal context.
Diagnostic dashboard, symptoms and evidence.
How FI posting timing failures manifest in the live system. 1. Symptom, a sales rep saves an invoice and receives a success message, but the accounting document number is missing from the document flow. 2. Red flag, transaction SM13 is flooded with failed update tasks for the function module RV_message_update. 3. Business impact, significant unposted revenue backlog, leading to a loss of real-time financial visibility for the CFO. 4. Detection, checking transaction VFX3 reveals hundreds of documents with the error document already being processed by user X. 5. Technical proof, system logs SM21 show database deadlock detected on table ACDOCA during peak billing hours. Insight in S4 HANA, SD and FI are inseparable if the accounting gate is slow. The sales doc cannot pass.
Why this happens, scenario analysis and root cause.
1. S4 HANA uses a synchronous update for the universal journal to ensure a single source of truth, increasing the database lock time per invoice. 2. Legacy custom logic in FI user exits GGB1 or substitutions was not optimized for the high concurrency requirement of S4 HANA billing. 3. Failure to deactivate asynchronous update flags in the SDFI interface settings, leading to a conflict with the S4 HANA kernel. 4. Underestimating the impact of parallel billing runs VF04, which now compete for the same financial number range objects and ledger locks. The failure is a result of treating a real-time architectural mandate as a background batch process.
Why this is a migration exclusive failure.
1. In ECC, the SD and FI modules were technically decoupled. A failed V2 update in FI did not prevent the V1 save of the SD document. 2. S4 HANA migration physically merges the subledger and GL, requiring an atomic transaction where both must succeed or both must fail. 3. The move from legacy COPA tables to table ACDOCA increases the number of database inserts per line item, intensifying the commit window. 4. This failure only surfaces when the new integrated core encounters the real-world transactional volume of the live business. Migration creates a lockstep requirement between sales and finance that ECC never approaches.
Financial and customer impact.
1. Deferred revenue collection, as invoices are technically billed but cannot be cleared or paid by the customer. 2. Inaccurate financial reporting, as the general ledger lag makes it appear as if the company has zero sales for the current hour. 3. High IT support costs, as a special task force must manually reprocess thousands of failed update tasks in transaction SM13. 4. Risk of duplicate postings, if users attempt to rebill the order manually, because they do not see the original accounting document. Posting timing differences directly compromise the real-time promise of the S4 HANA business case.
Governance and accountability RACI model.
Securing the financial commit requires a partnership between basis and finance. 1. Accountable FICO lead, the person who owns this and gets fired if it fails. 2. Responsible ABAP lead refactors legacy substitutions and exits to handle synchronous commit logic. 3. Consulted SD functional lead provides the billing volume profile, for example, invoices per minute for stress testing. 4. Informed IT infrastructure director monitors the HANA database commit wait time as a primary system health KPI. Accountability ensures that technical speed does not come at the cost of financial consistency.
Ownership, who actually fixes it.
Resolving this requires a transaction and lock audit. 1. FICO lead audits transaction GGB1 to identify and simplify complex substitution logic that is slowing down the commit. 2. Basis lead increases the number of HANA update processes to handle the peak synchronous load from mass billing. 3. SD functional lead utilizes transaction VF04 to partition the billing jobs by sales org, reducing the chance of lock collision. 4. Technical architect utilizes SAP Note 2349298 to optimize the LUW or logical unit of work for the integrated digital core.
How this is actually fixed the right way by a role.
1. FICO lead mandates a substitution audit, removing any legacy ECC logic that is now handled by standard S/4HANA features. 2. The team implements parallel posting groups, ensuring that Entity A's billing does not lock Entity B's financial ledger. 3. ABAP lead utilizes application log monitoring SLG1 to catch and fix update errors in under 5 minutes. 4. The project team execute a stress test, proving that the system can save 500 invoices and post them to ACDOCA in a single minute.
What not to do. Common wrong fixes.
1. Do not use SQL direct update statements to fix an unposted invoice. You will permanently corrupt the sub-ledger audit trail. 2. Do not ignore SM13 errors thinking they will resolve themselves. A failed update is a missing financial posting. 3. Do not allow go live until the technical throughput for SDFI has been proven at 120% of the legacy ECC peak volume. 4. Do not assume that asynchronous posting is still an option. S/4HANA is designed for synchronous integrity. Shortcuts in posting validation result in a financial black hole that is nearly impossible to reconcile.
Follow-up 1. What is a synchronous commit in S/4HANA?
Answer: it means the system treats the SD billing and the FI posting as one single task. If the FI posting fails for any reason like an authorization error or an account block, the SD billing document is rolled back and never saved. This ensures that the two modules are always 100% in sync.
Follow-up 2. Why is transaction SM13 so important during the first week live?
Answer: SM13 is the update monitor. In S/4HANA, if a document save fails in the background and update termination, it appears here in red. On day 1, you must monitor this screen constantly. Every red line is an invoice your customer didn't receive and revenue you didn't recognize.
Follow-up 3. Curveball. What if the FI posting succeeds, but the sales order status does not update, because the update task was killed by a HANA SavePoint operation, leaving the invoice uncleared in the sub-ledger?
Answer: this is a metadata mismatch failure. S/4HANA uses different task prio levels for the doc status update. The fix is to configure the HANA SavePoint interval to avoid collisions with mass billing jobs. You must test the job overlap logic. If you miss this, you will have inconsistent document flow. The invoice is paid but the order says being invoiced, leading to duplicate shipments.
Exclusive pro tip.
On day 1, set up an update monitor tile on your Fiori launchpad that counts the entries in table VB data with status error. If that count is greater than 0, your financial handshake is failing and you must stop your mass billing job immediately.
Scenario 229. Account determination differences.
On day 1 post go live, organizations often find that SD billing documents fail to post to accounting because of account determination errors. S/4HANA requires that all general ledger accounts used in O2C must be defined as revenue or primary cost elements in the unified chart of accounts. If the legacy VKOA mapping points to accounts that were deleted, blocked, or not extended to new S/4HANA company codes, the automated billing interface will collapse, halting revenue recognition across the enterprise.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, medium financial integration and data integrity risk. 2. Phase, run post go live. 3. Frequency, extremely common in multi-entity brownfield conversions. 4. Primary ownership, SD functional lead and FICO lead. The person who owns this and gets fired if it fails. 5. Supporting MDM lead and ABAP lead. 6. Business ownership, corporate controller. 7. Relevant SAP note, not applicable process design, and FI integration reference SAP note 2349298 for universal journal context.
Diagnostic dashboard, symptoms and evidence.
How account determination failures manifest in the live production system. 1. Symptom: Creating an invoice in transaction VF01 results in the error account 123456 requires an assignment to a CO object. 2. Red flag, transaction VFX3 shows thousands of billing documents with the status error in account determination. 3. Business impact, inability to generate customer invoices, leading to an immediate cash flow deficit and uncleared sales orders. 4. Detection, checking transaction VKOA in the new system reveals mapping rules that refer to accounts not existing in table SKA1. 5. Technical proof, errors in the accounting interface log stating that the revenue account is blocked for posting. Insight in S/4HANA, SD and FIR1. If the account is missing in FI, the document is dead in SD.
Why this happens: scenario analysis and root cause.
1. The project team lifted and shifted the VKOA table from ECC without revalidating the accounts against the new S/4HANA chart of accounts. 2. Secondary cost elements were not correctly mapped to SD account keys, causing a derivation failure in the Universal Journal. 3. The move to S/4HANA required new profit centers or segments that were not maintained in the SDFI integration logic. 4. Custom baddies in the SDFI interface were still trying to use legacy account IDs that were renumbered during the FICO migration. The failure is a result of treating the SDFI handshake as a static setting rather than a dynamic financial link.
Financial and customer impact.
1. Delayed revenue collection as invoices are technically blocked and cannot be sent to customers for payment. 2. Inaccurate financial reporting of sales revenue at the start of the month, triggering management concern. 3. Customer service delays as reps cannot confirm if a customer has been billed correctly. 4. High cost of emergency IT support to manually repair thousands of account assignments in a live environment. Account determination errors directly threaten the cash-to-cash velocity of the enterprise.
Governance and accountability RACI model.
Securing the financial handshake requires a partnership between SD and FICO leads. 1. Accountable FICO lead and SD functional lead. The person who owns this and gets fired if it fails. 2. Responsible FICO analyst ensures all accounts in the chart of accounts are active and correctly classified. 3. Consulted corporate controller provides the mapping rules for new S/4HANA general ledger accounts. 4. Informed global sales director monitors the billed but not posted volume on day 1. Accountability ensures that the corporate subledger and general ledger are perfectly balanced.
Ownership, who actually fixes it.
Resolving this requires an account-to-key audit. 1. The FICO lead audits transaction FS00 to ensure all revenue-relevant accounts are extended to all company codes. 2. The SD functional lead audits transaction VKOA to ensure every account key, for example, ERS has a valid target account. 3. The MDM lead validates that the account assignment group table KNVVKTGRD is populated for all strategic customers. 4. The technical architect utilizes report FINS_recon to identify document-level variances between sales and finance.
How this is actually fixed the right way by a role.
1. SD functional lead mandates an account mapping simulation during the realize phase, verifying 100% of O2C variance. 2. The team implements substitution rules in transaction GGB1 to provide default accounts for legacy documents that have missing data. 3. FICO lead ensures the field status group for revenue accounts allows for the mandatory profit center and segment data coming from SD. 4. Functional leads execute zero blocked invoices gate, ensuring transaction VFX3 is empty before declaring the SIT cycle finished.
What not to do: common wrong fixes.
1. Do not manually adjust the general ledger using transaction FB01 to bypass a billing error. You are breaking the audit trail. 2. Do not allow users to manually change accounts in the billing document. It is a major internal control violation. 3. Do not assume that sandbox account determination will work in production without checking the local company code settings. 4. Do not skip the testing of credit memos and returns, as these often use different account keys than standard sales. Shortcuts in account determination result in a dirty financial subledger.
Follow-up 1. What is the account assignment group and why is it important?
Answer: it is a field on the customer and material masters. Transaction VKOA uses these groups to determine which GL account to post to. In S/4HANA, if a customer was migrated without this group, the system cannot find a revenue account, and the invoice will fail to post.
Follow-up 2. Can I use S/4HANA to post to costing-based and account-based COPA at the same time?
Answer: no. S/4HANA is designed for account-based margin analysis, while costing-based COPA can technically be active as a legacy feature. It is not integrated with the Universal Journal. You should always prioritize the account-based determination to ensure financial consistency.
Follow-up 3 curveball. What if the account determination works perfectly in the sales order, but the billing document fails because the S/4HANA accounting interface triggers a validation that the tax account is not defined as a tax account in the new GL settings, even though it worked in ECC for 10 years?
Answer: this is a GL master redesign failure. In S/4HANA, the tax category in transaction FS00 is enforced strictly for any account linked to an SD tax condition. You must test the account metadata compatibility. The fix is to update the tax category in the GL master record to allow only tax postings. If you miss this, you will have inconsistent postings where your sales tax is calculated in SD but rejected by the ledger, creating a total billing blockade on day 1.
Exclusive pro tip.
On day 1, monitor transaction V/08 specifically for account determination warnings. Any pricing condition without an assigned account key, for example, ERL, will produce a financial gap. Audit your pricing procedure 48 hours before go live to ensure 0 blank account keys.
Scenario 230. Credit memo differences.
On day 1 of an S/4HANA go live, users often report that credit memo requests are not behaving as they did in ECC. S/4HANA introduces advanced returns management and stricter copy control rules for revenue recognition. If the process design has not been realigned, the system will either fail to reverse the original revenue correctly or attempt to post negative quantities that the Universal Journal now rejects, leading to financial imbalances and customer payment disputes.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, medium financial integrity and process integrity risk. 2. Phase, run post-go live. 3. Frequency, common in industries with high-volume customer returns. 4. Primary ownership, SD functional lead and FICO lead, the person who owns this and gets fired if it fails. 5. Supporting ABAP custom code remediation lead. 6. Business ownership, sales operations manager. 7. Relevant SAP note, not applicable process design, and FI integration reference SAP note 2267324 for advanced returns context.
Diagnostic dashboard, symptoms and evidence.
How credit memo differences manifest in the live system. 1. Symptom: a credit memo is created, but the accounting status remains not posted with error negative values not allowed. 2. Red flag: discrepancies between the original invoice and the credit memo for the same item due to unsynchronized pricing dates. 3. Business impact: significant delays in resolving customer billing disputes, leading to brand damage and increased call center volume. 4. Detection: checking table ACDOCA reveals credit memo line items with incorrect reference document IDs. 5. Technical proof: errors in the revenue accounting monitor FRR_monitor showing that the credit memo failed to link to the original contract. Insight: in S/4HANA, a credit memo is a revenue reversal. If the reversal logic does not match the original sale, the ledger will block it.
Why this happens, scenario analysis and root cause.
1. The project team lifted and shifted legacy credit memo document types without revalidating the billing type integration in S/4HANA. 2. Failure to align the copy control transaction VTFA to ensure that taxes are redetermined while prices stay fixed for the refund. 3. The move to S/4HANA Advanced Returns ARM changed how credit memo requests are automatically generated from inspections. 4. Underestimating the impact of the Universal Journal, which requires credit memos to perfectly offset the original profit center and segment. The failure is a result of treating a credit memo as a standalone document rather than a process reversal.
Financial and customer impact.
1. Material misstatement of revenue if credit memos are posted in the wrong fiscal period or with the wrong tax amounts. 2. Customer frustration peaks when strategic buyers refuse to pay future invoices until their stuck credit is resolved. 3. High operational cost as accountants must manually force credit memos through accounting using transaction VFX3. 4. Inaccurate net sales reporting results in wrong commission payments to sales representatives. Credit memo failures directly disrupt the total customer experience and the corporate balance sheet.
Governance and accountability RACI model.
Securing the credit cycle requires a partnership between SD and the controller. 1. Accountable SD functional lead and FICO lead. The person who owns this and gets fired if it fails. 2. Responsible sales operations team ensures the credit memo request reasons and data are 100% accurate. 3. Consulted corporate controller provides the revenue recognition rules for credit events. 4. Informed customer service lead monitors the refund cycle time as a primary day 1 operational KPI. Accountability ensures that the customer refund matches the original financial intent.
Ownership who actually fixes it.
Resolving this requires a reversal logic audit. 1. The SD functional lead audits transaction VTFA copy control, billing to ensure the data transfer logic is S4 HANA compliant. 2. The FICO lead configures account keys for credit memos to ensure they hit the sales deduction accounts rather than revenue accounts. 3. The ABAP lead refactors custom pricing routines to ensure they do not produce negative price errors during reversal. 4. The QA team executes a circular test, verifying that an invoice of $100 and a credit of $100 results in a zero balance in ACDOCA.
How this is actually fixed the right way by a role.
1. SD functional lead mandates a credit logic audit, ensuring that all legacy Z document types follow the S/4HANA standard reversal path. 2. The team implements automatic tax redetermination in the credit memo copy control to account for regional tax shifts. 3. The FICO team utilizes transaction FINS_recon to automate the consistency checks between the credit subledger and the ledger. 4. Functional leads execute volume reversal testing, ensuring the system can process 1,000 credits in the nightly batch run without error.
What not to do. Common wrong fixes.
1. Do not use manual journal entries to give a customer credit. You are destroying the link to the original sales order. 2. Do not ignore rounding differences in credit memos. A 1-cent variance will block the entire financial posting. 3. Do not assume that ECC custom return routines will work in S4 HANA. You must revalidate the copy logic. 4. Do not allow go live until the credit to invoice reconciliation shows 0 unexplained variances for 100% of test data. Shortcuts in credit memo validation lead to a financial audit disaster post-go live.
Follow-up 1. What is advanced returns management, and how does it change credit memos?
Answer: ARM is a unified framework in S4 HANA that manages the return, the inspection, and the refund in one single process. In the old way, a credit memo was a separate task. In ARM, the credit memo is a follow-up action that the system automatically triggers once the inspection is complete, ensuring much tighter control.
Follow-up 2. Why does S4 HANA reject negative values in some credit scenarios?
Answer: this is usually a FICO ledger configuration issue. The Universal Journal requires debit and credit indicators. If your SD pricing routine tries to pass a negative amount as a price rather than a discount, the ledger validation engine will reject the posting as a metadata violation.
Follow-up 3. Curveball. What if the credit memo posts correctly to the Universal Journal, but fails to update the customer credit exposure in the FSCM engine because the reason code in the credit memo was not mapped to a risk-reducing category in the S4 HANA credit configuration?
Answer: this is a risk ledger failure. You have refunded the customer's money, but the system still thinks they owe it, blocking their future orders. You must test the reason code mapping. The fix is to ensure every SD credit memo reason table TVGR is mapped to a corresponding FSCM exposure update rule. If you miss this, you will have stuck credits, customers who have paid their bills but remain blocked for credit, paralyzing your day one sales growth.
Exclusive pro tip.
On day one, run a report on all credit memo requests created. If the net value of the request is different from the original net value of the invoiced item, your copy control is broken. Fix transaction VTFA immediately to protect your margin consistency.
Scenario 231. Settlement management behavior differences.
On day one post-go live, organizations often find that their customer rebate payouts are inaccurate or failing to process. S/4HANA replaces legacy SD rebate processing with condition contract management within the settlement management framework. Because the new engine does not use the legacy VBox index table and instead relies on real-time document selection, any mismatch in the settlement date or condition type mapping will result in missing accruals and incorrect settlement amounts, leading to significant commercial disputes.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high financial accuracy and commercial risk. 2. Phase, run post-go live. 3. Frequency, extremely common in consumer goods and retail industries. 4. Primary ownership, SD functional lead, the person who owns this and gets fired if it fails. 5. Supporting FICO lead and ABAP lead. 6. Business ownership, commercial director. 7. Relevant SAP note. SAP note 2267377, SD rebate processing, replaced by settlement management.
Diagnostic dashboard, symptoms and evidence.
How settlement management behavioral shifts manifest in the live system. 1. Symptom, the settlement run in transaction WB2R_SC returns the message no documents found for settlement despite active sales volume. 2. Red flag, users attempt to use legacy transactions like VB01 or VB02 and find they are completely blocked in S/4HANA. 3. Business impact, inability to pay out earned rebates to strategic customers, resulting in commercial friction and market share risk. 4. Detection, comparing the rebate base in table KONV ECC against the settlement base in table WCOC S/4HANA reveals a data gap. 5. Technical proof, mismatches in the business volume selection criteria where legacy ECC fields are not correctly mapped to the new settlement fields. Insight, in S/4HANA, a rebate is a contract. If the contract parameters do not match the sales data exactly, the payout is 0.
Why this happens, scenario analysis and root cause.
1. S/4HANA physically deletes the VBox index table, which was the brain of legacy ECC rebates, and replaces it with dynamic HANA native selection. 2. The project team migrated legacy agreements but failed to configure the condition contract types required for the new engine. 3. Failure to synchronize the settlement calendar with the corporate financial periods in the new S/4HANA environment. 4. Underestimating the impact of the settlement document model, which creates real-time FI postings in ACDOCA that differ from the old credit memo model. The failure is a result of treating a fundamental engine replacement as a simple data migration task.
Why this is a migration exclusive failure.
1. ECC upgrades, EHP upgrades never impacted the rebate engine. VB01 remained the standard for 25 years. 2. S/4HANA migration involves a hard stop for legacy rebates, forcing a mandatory transition to the LOAB submodule. 3. The requirement to transform KONV agreements into WCOCO contracts is a unique, one-time task of the S/4HANA brownfield conversion. 4. This failure only surfaces when the new settlement run attempts to process migrated sales history. Migration forces a commercial logic transformation that no previous upgrade ever attempted.
Financial and customer impact.
1. Material misstatement of accrued liabilities on the balance sheet, leading to significant audit concerns at month end. 2. Customer disputes increase as retailers refuse to pay invoices until their stuck rebate credits are processed. 3. Operational paralysis in the sales department as controllers must manually calculate rebates in Excel to bypass the system error. 4. Loss of ROI as the company fails to utilize the automated settlement benefits of the new S/4HANA framework. Settlement management failures directly disrupt the company's net to net revenue accuracy.
Governance and accountability RACI model.
Securing the commercial payout requires a partnership between SD and finance. 1. Accountable SD functional lead, the person who owns this and gets fired if it fails. 2. Responsible SD functional team ensures every legacy agreement is correctly mapped to a modern condition contract. 3. Consulted commercial director validates the payout logic and business volume definition for strategic accounts. 4. Informed FICO lead monitors the accrual to payout reconciliation in the Universal Journal. Accountability ensures that the commercial promise to pay is technically honored.
Ownership who actually fixes it.
Resolving this requires a contract and selection audit. 1. The SD functional lead audits transaction WCOCO to ensure every business volume selection criteria matches the S/4HANA sales area data. 2. The FICO lead audits the settlement type to ensure the correct accounting keys are used for the final credit memo posting. 3. The ABAP lead refactors any custom rebate requirement routines into the new settlement management baddies. 4. The technical architect utilizes SAP Note 22673777 to apply the latest business volume optimization patches.
How this is actually fixed the right way by a role.
1. SD functional lead mandates a hard settlement of all ECC agreements older than 1 year to minimize the migration noise. 2. The team implements real-time accruals in the billing document to ensure the P&L is updated at the moment of the sale. 3. FICO lead implements delta accruals in S/4HANA to handle price changes that occur after the original sale. 4. Functional leads execute mirror testing, ensuring a $1,000 sale in ECC, and S/4HANA results in the exact same rebate accrual.
What not to do. Common wrong fixes.
1. Do not use manual journal entries to pay a rebate. This destroys the document-level audit trail required for commercial audits. 2. Do not assume that ECC pricing conditions for rebates like B001 will work in S/4HANA without a full mapping to condition contracts. 3. Do not ignore missing business volume errors in the settlement monitor, thinking the system will find the data later. 4. Do not allow go live until the settlement simulation transaction WB2R_SC shows 100% alignment with the legacy ECC expectations. Shortcuts in settlement management result in a financial reconciliation disaster.
Follow-up 1. What is a condition contract in S/4HANA?
Answer: it is the new master data object that replaces the old rebate agreement. A condition contract is more powerful because it can handle both sales and purchasing rebates in one framework, and does not rely on index tables like VBox for calculation.
Follow-up 2. Why is the removal of table VBox such a big deal?
Answer: VBox was a massive index table that had to be updated every time a billing document was saved. It slowed down the system and frequently became corrupted. S/4HANA uses the speed of the HANA database to calculate the rebate volume on the fly, eliminating the need for VBox entirely.
Follow-up 3. Curveball. What if the settlement run correctly calculates the rebate value, but the system fails to generate the settlement document because a custom SD billing routine in the background triggers a field overwrite for a field that is now mandatory in the S/4HANA Universal Journal, but was optional in the legacy ECC rebate credit memo?
Answer: this is a metadata collision failure. S/4HANA settlement documents are financial documents first. You must test the FI validation logic. The fix is to refactor your VOFM routines to respect the Universal Journal field status. If you miss this, you will have digital deadlocks. The rebate is earned and calculated, but the system refuses to issue the credit memo, paralyzing your commercial settlements on day 1.
Exclusive pro tip.
On day 1, monitor table WCOCO specifically for contracts with an invalid technical status. Every invalid contract is a group of customers who will not get paid. Run report RLI_RECO_rebate to reconcile your ECC accrual balances with your S/4HANA starting points immediately.
Scenario 232. Accrual posting differences.
In the run phase of an S/4HANA migration, organizations often encounter accrual drift in their general ledger. In ECC, rebate and commission accruals were often posted as statistical values or via unsynchronized background tasks. S/4HANA enforces a real-time integration where every SD accrual must create a balanced entry in the Universal Journal. If the account keys in the pricing procedure or the OBYC settings for transaction key ERU were not correctly aligned, the first month-end close will show massive variances between the sales subledger and the general ledger.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, medium financial accuracy and month-end close risk. 2. Phase, run post-go live. 3. Frequency, common in multi-currency environments with heavy rebate usage. 4. Primary ownership, FICO lead, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and revenue accountant. 6. Business ownership, corporate controller. 7. Relevant SAP note, not applicable process design, and FI integration reference SAP note 2349298 for Universal Journal context.
Diagnostic dashboard, symptoms and evidence.
How accrual posting differences manifest in the live system. 1. Symptom, the P&L shows rebate expense but the corresponding accrual liability account in the balance sheet is 0. 2. Red flag billing documents show the warning account for accruals not found but still allow the document to be saved. 3. Business impact, significant distortion of the monthly profit margin, leading to unexplained earnings spikes that auditors will question. 4. Detection, checking table ACDOCA for transaction key ERU reveals missing line items for high-volume sales orders. 5. Technical proof, mismatches in transaction VKOA where the accrual account column is blank for active condition types. Insight in S/4HANA, an accrual is a promise to the ledger. If the account is missing, the promise is broken.
Why this happens, scenario analysis and root cause.
1. S/4HANA requires every SD condition with an accrual flag to be mapped to a valid GL account in the Universal Journal. 2. The project team migrated the pricing procedure, but failed to update the account keys to reflect the new S/4HANA chart of accounts. 3. Legacy ECC systems allowed accruals to post to statistical accounts which are no longer supported in the same way in ACDOCA. 4. Underestimating the impact of real-time profitability analysis, which requires every accrual line to carry a valid profit center and segment. The failure is a result of treating accruals as off-balance sheet items rather than core ledger entries.
Why this is a migration exclusive failure.
1. ECC upgrades never changed the way SD accruals were passed to FI. The interface was highly stable for decades. 2. S/4HANA migration physically merges the SD and FI tables, requiring an atomic transaction where the accrual must balance immediately. 3. The move from legacy SD REV to SAP RER or EBRR changes the timing and account assignment of the accrual event. 4. This failure only surfaces when the organization attempts to close its first fiscal month in the new system. S/4HANA enforces a financial discipline on sales accrual that ECC never required.
Financial and customer impact.
1. Material misstatement of monthly profit and loss, leading to incorrect executive reporting and potential regulatory scrutiny. 2. Inability to reconcile sales deductions at year-end, resulting in massive one-time financial hits to the balance sheet. 3. Customer disputes arise if the accrual drift results in lower than expected rebate funds being available for payout. 4. High cost of manual top-side adjustments to correct the accrual balances during the audit period. Accrual failures directly compromise the company's ability to report a consistent gross to net margin.
Governance and accountability RACI model.
Ensuring accrual accuracy requires a partnership between SD and finance leads. 1. Accountable FICO lead, the person who owns this and gets fired if it fails. 2. Responsible SD functional lead ensures every condition type in the pricing procedure has a valid accrual key and account assignment. 3. Consulted corporate controller provides the matching principal rules for when accruals should be recognized. 4. Informed external auditors review the new S/4HANA accrual methodology for GAAP compliance. Accountability ensures that technical settings do not violate fundamental accounting standards.
Ownership who actually fixes it.
Resolving this requires an account-to-condition mapping audit. 1. The FICO lead audits transaction FS00 to ensure all accrual accounts are defined as primary costs or balance sheet accounts. 2. The SD functional lead audits transaction VKOA to ensure the accrual account field is populated for all relevant keys. 3. The technical architect utilizes SAP Note 2349298 to ensure the post-go-live reconciliation tools are functional. 4. The revenue accountant performs an accrual walk, tracing a $1 accrual from the sales order to the GL balance.
How this is actually fixed the right way by a role.
1. FICO lead mandates a ledger alignment audit, ensuring all SD condition values have a landing spot in table ACDOCA. 2. The team implements automatic accrual reversal logic in settlement management to ensure no double counting occurs during payout. 3. The SD team utilizes pricing simulation tools to verify the account determination for 1,000 document variants. 4. Functional leads execute month-end close simulation, verifying that the accrual balances perfectly match the expected sales volume.
What not to do. Common wrong fixes.
1. Do not allow users to manually post accruals in FI to fix an SD error. You are destroying the document-level audit trail. 2. Do not ignore 1-cent rounding variances in accruals. S/4HANA will reject the entire invoice if the universal journal is out of balance. 3. Do not assume that ECC statistical conditions will still behave the same way. In S/4HANA, they must be mapped to GL accounts for margin analysis. 4. Do not allow go live until the accrual to revenue ratio reconciliation shows 100% alignment. Shortcuts in accrual validation result in a financial black hole post-go live.
Follow-up 1. What is the accrual key in the pricing procedure?
Answer: the accrual key, for example, ERU, is the field that tells the system. This price is not for the customer, but for the company's internal liability. In S/4HANA, this key must be linked to a general ledger account in VKOA for the value to reach the universal journal.
Follow-up 2. How does S/4HANA handle reversal of accruals differently than ECC?
Answer: in S/4HANA, the reversal is integrated with settlement management. When you pay a rebate, the system automatically identifies the original accrual document in ACDOCA and posts a reversal to the cent. This ensures your liability account is always perfectly cleaned, which was a manual nightmare in legacy ECC.
Follow-up 3. Curveball. What if the accrual posts correctly to the local ledger, but fails in the group consolidation ledger because the trading partner ID was missing from the SD accrual line item, even though it was present on the revenue line item?
Answer: this is an inheritance logic failure. In S/4HANA, every line in ACDOCA must independently carry its metadata. You must test the field derivation logic for accrual keys. The fix is to configure the document splitting or derivation rules to ensure that organizational attributes like trading partner are copied from the main revenue line to the accrual line during the posting event. If you miss this, your consolidated group profit will be correct, but your intercompany elimination accounts will have residual balances that haunt your quarterly reporting.
Exclusive pro tip.
On day 1, monitor transaction FSR1 financial subledger reconciliation, specifically for transaction key ERU. If the variance column is not 0, your accrual account determination is missing a rule. Fix VKOA immediately to prevent your balance sheet from drifting out of sync.
The universal interview tip. Whenever you ask a tech VP or an industry mentor how to crack a tough interview, they all give you the exact same tip. Get familiar with the most commonly asked interview questions. It sounds simple, right? But here is the problem. The search nightmare. Finding the actual most commonly asked questions for senior roles is a nightmare. Generic Google searches only give you basic textbook definitions, and those will not help you clear a lead architect or senior engineer round where production reality matters. Imagine a master vault. Now, imagine a vault where the absolute most commonly asked interview questions for your specific role are already collected for you, perfectly organized by interview rounds like 1. Most commonly asked technical-based question and answers. 2. Most commonly asked scenario-based question and answers. 3. Most commonly asked real-world problem-solving question and answers. 4. Most commonly asked system design question and answers. 5. Most commonly asked behavioral-based question and answers. Cross-domain mastery. I built the ACE Interviews Master Vault for the modern architect. We did not just do this for one role. We covered everything: SAP, cybersecurity, DevOps, software testing, data engineering, Java, and Python. The ultimate all-access deal. Instead of paying for individual PDFs, you can now unlock our entire database. Get over 1,000 plus PDFs containing 50,000 plus of the most asked question and answers for a mere 1,499 rupees a month. The elite transformation. Stop studying just to pass. Equip yourself with the cross-domain confidence of a true architect and walk out of your next interview choosing between 2 or 3 elite job offers. Unlock the vault now. The era of buying individual guides is over. Click the link in the video description below right now to unlock the Master Vault. Now, let's get back to the masterclass.
Scenario 233. Tax calculation differences.
On day 1 post-go live, the billing department often reports that tax amounts on S/4HANA invoices do not match the legacy ECC values. These differences frequently stem from the transition to the new S/4HANA tax engine logic or updated integration requirements with external engines like Vertex or Avalara. If the tax jurisdictions and nexus rules were not perfectly synchronized with the new business partner address precision, the system will calculate incorrect tax rates, leading to customer disputes and legal non-compliance.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high financial compliance and legal risk. 2. Phase, run post-go live. 3. Frequency, common in multinational organizations and North American entities. 4. Primary ownership, tax lead and SD functional lead. The person who owns this and gets fired if it fails. 5. Supporting integration architect and MDM lead. 6. Business ownership, corporate tax manager. 7. Relevant SAP note, not applicable tax engine and localization design gap reference, SAP note 2267310 for international trade context.
Diagnostic dashboard, symptoms and evidence.
How tax calculation shifts manifest in the live production system. 1. Symptom, invoices are saved with a 0% tax rate for materials that were previously taxable in ECC. 2. Red flag, the billing document status shows error in account determination specifically for tax accounts. 3. Business impact, significant tax liability risk as the company undercollects government revenue on day 1. 4. Detection, checking the pricing analysis in transaction VF03 reveals that the tax condition, for example, MWSD, was skipped due to a requirement error. 5. Technical proof, RFC logs in transaction SRT_Moni show that the external tax engine rejected the request because of an invalid geocode. Insight in S/4HANA, tax is a synchronous guard. If the calculation fails, the financial posting is blocked.
Why this happens, scenario analysis and root cause.
1. S/4HANA enforces stricter address validation for business partners, which alters the destination-based tax jurisdiction determination. 2. Legacy custom tax routines in VOFM were refactored for syntax but contain logic that is incompatible with the HANA database kernel. 3. The project team failed to update the external tax interface parameters to account for the extended material and partner field lengths. 4. Underestimating the impact of the international trade simplification, which changes how the country of departure is derived. The failure is a result of treating tax as a static calculation rather than a dynamic integration event.
Why this is a migration exclusive failure.
1. ECC upgrades never modified the tax interface structures, allowing legacy Vertex or Avalara mappings to remain stable. 2. S/4HANA migration involves a move to the business partner model, where tax registration is handled via new tables like DFKKO taxnum. 3. The requirement to balance tax amounts to the cent in the Universal Journal ACDOCA is a unique S/4HANA financial discipline. 4. This failure only surfaces when the new integrated core attempts to call a tax API using newly transformed master data. Migration creates a data mismatch between the S/4HANA core and the external compliance engine.
Financial and customer impact.
1. Heavy government penalties and interest charges for inaccurate VAT or GST declarations. 2. Operational paralysis as thousands of invoices are stuck in transaction VFX3 and cannot be sent to customers. 3. Customer disputes increase as buyers refuse to pay invoices with incorrect tax amounts or missing registration IDs. 4. High cost of manual tax reconciliation audits to prove the integrity of the day one revenue stream. Tax errors are the fastest way to attract unwanted attention from government regulators post-go-live.
Governance and accountability RACI model.
Ensuring tax integrity requires a partnership between SD and the tax department. 1. Accountable tax lead and SD functional lead, the person who owns this and gets fired if it fails. 2. Responsible integration architect ensures the data mapping between the S/4HANA pricing structure and the tax engine is 100% accurate. 3. Consulted corporate tax manager provides the legal scenarios and validates the final tax outcomes. 4. Informed IT transformation director monitors the tax error log as a key operational health metric. Accountability ensures that technical speed never overrides legal compliance.
Ownership who actually fixes it.
Resolving this requires a policy and payload audit. 1. The tax lead identifies all active tax jurisdictions and confirms the legal taxability of top-selling products. 2. The SD functional lead refactors the pricing procedure to ensure the tax condition category is correctly defined for PRCD_elements. 3. The ABAP lead updates the tax user exits to ensure business partner attributes are correctly passed to the external API. 4. The technical architect performs a parallel tax run, comparing 1,000 ECC invoices against the S/4HANA equivalents.
How this is actually fixed the right way by a role.
1. Tax lead mandates a nexus audit, ensuring all S/4HANA company codes are correctly registered in the external tax engine. 2. The team implements address scrubbing in the legacy ECC system to ensure valid geocodes are ready for the migration. 3. SD functional lead utilizes transaction OVK3 to ensure all materials have valid tax indicators for the target countries. 4. Functional leads execute regression testing for complex drop-ship scenarios where tax is calculated across 3 different jurisdictions.
What not to do common wrong fixes.
1. Do not use manual tax overrides in sales orders to bypass an integration error. This is an audit violation. 2. Do not assume that sandbox tax results will match production results without the live government portal connection. 3. Do not ignore minor rate differences. In a high-volume business, a 0.1% error results in massive liabilities. 4. Do not disable the tax consistency check in the Universal Journal to force an invoice to post. Shortcuts in tax validation result in a financial crisis that the CFO cannot defend.
Follow-up 1. Why is the geocode more critical in S/4HANA than it was in ECC?
Answer: S/4HANA's Fiori-based address services are more integrated with global ISO standards. If the city and zip code do not perfectly match the external tax engine's master data, the API will fail to return a geocode, resulting in a zero tax calculation or a billing block.
Follow-up 2. How can I identify documents with tax errors on day 1?
Answer: use transaction VFX3 and filter for account determination and tax errors. Additionally, check the external tax engine's transaction log to see if requests are reaching the engine or failing at the S/4HANA RFC gate.
Follow-up 3. Curveball. What if the tax calculates correctly in the sales order, but the billing document fails because the in-transit time pushed the PGI into a new tax year with different legislation that was not updated in S/4HANA?
Answer: this is a period nexus failure. You must test the year-end crossover logic. The fix is to implement tax date determination based on the actual goods issue date rather than the billing date. You must ensure your S/4HANA tax procedure is updated with the new year's rates before you ship the first order in the new period.
Exclusive pro tip.
On day 1, run a report comparing the tax amount to the net value for all invoices. If the ratio is exactly 0.00 for any taxable material group, stop your billing batch immediately and audit your geocode synchronization.
Scenario 234. Billing split differences.
In the run phase post-go live, Organizations often find that S/4HANA is generating multiple invoices for a single order that previously consolidated onto one page in ECC. S/4HANA's billing engine enforces strict split criteria based on the new data model and the universal journal requirements. If header data fields, such as payment method, Incoterm locations, or custom Z fields, contain even a single character difference between line items, the system will trigger an automatic split, doubling freight costs and confusing customers.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, medium customer experience and operational efficiency risk. 2. Phase, run post go live. 3. Frequency, extremely common in first week O2C operations. 4. Primary ownership, SD functional lead, the person who owns this and gets fired if it fails. 5. Supporting ABAP lead and master data management lead. 6. Business ownership, billing manager. 7. Relevant SAP note, not applicable process design gap reference SAP, note 2227014, for billing simplification context.
Diagnostic dashboard, symptoms and evidence.
How billing split differences manifest in the live production system. 1. Symptom, a customer receives 5 separate invoices for one order, each containing only 1 or 2 line items. 2. Red flag, the split analysis tool in transaction VF01 shows different header data as the reason for the division. 3. Business impact, significant increase in invoicing volume, leading to higher postage costs and customer service inquiries. 4. Detection, checking table VBRK reveals multiple invoices with the same sales order reference but different payment terms or billing dates. 5. Technical proof, the split criteria field ZUKRL in table VBRK contains different hash values for items from the same delivery. Insight, S/4HANA is a perfectionist. Any data inconsistency in the header forces the system to start a new document.
Why this happens, scenario analysis and root cause.
1. Legacy custom split routines in transaction VOFM were migrated without zeroing out new S/4HANA header fields like Incoterm location 1. 2. The project team lifted and shifted copy control settings without revalidating the data transfer rules for the new HANA data model. 3. Master data inconsistencies in the business partner records, where different sales areas have slightly different payment instructions. 4. New S/4HANA Advanced Intercompany Logic requires separate invoices for different valuated stock in transit events. The failure is a result of treating invoice consolidation as a legacy setting rather than a data integrity challenge.
Why this is a migration exclusive failure.
1. ECC upgrades never changed the VBRK header structure, ensuring that legacy split routines remained 100% compatible. 2. S/4HANA migration involves a move to the universal journal, where billing headers are more tightly validated for financial consistency. 3. The transition to business partner CV often introduces subtle data drift in partner-specific header fields that ECC row store ignored. 4. This failure only surfaces when the organization attempts to process its first mass billing run in the live S/4HANA environment. Migration turns a stable invoicing pattern into a data collision event.
Financial and customer impact.
1. Revenue collection is delayed as customers reject fragmented invoices that do not match their purchase order structure. 2. Inaccurate group reporting if the billing split logic creates thousands of micro-invoices that overwhelm the consolidation engine. 3. Increased labor costs as the billing department must manually cancel and rebill thousands of documents to consolidate them. 4. Customer frustration peaks when strategic partners receive 50 emails for a single order on the first day post-go live. Billing split errors directly disrupt the total customer experience and increase administrative overhead.
Governance and accountability RACI model.
Securing invoice consolidation requires a partnership between SD and finance. 1. Accountable SD functional lead, the person who owns this and gets fired if it fails. 2. Responsible SD functional team ensures the copy control rules in transaction VTFL are optimized for consolidation. 3. Consulted billing manager defines the customer-specific rules for when a split is commercially required. 4. Informed. Accounts receivable lead monitors the invoices per order ratio on day 1. Accountability ensures that the system does not waste money by over-fragmenting customer documentation.
Ownership, who actually fixes it.
Resolving this requires an audit and simulation of the split logic. 1. The SD functional lead audits transaction VTFL and identifies all header fields that are causing the split. 2. The ABAP lead refactors the custom split Z routines to explicitly clear non-essential fields during the transfer. 3. The MDM lead executes a data normalization on the business partner records to ensure 100% consistency for strategic accounts. 4. The QA team executes a consolidation stress test, ensuring that a 50-item order results in a single invoice.
How this is actually fixed the right way by a role.
1. SD functional lead mandates a split analysis workshop, identifying every Z field that contributes to the ZUKRL key. 2. The team implements header data zeroing in the VOFM transfer routine, ensuring fields like purchase order date do not force a split. 3. The team utilizes SAP Note 2227014 to ensure that the S4 HANA document category mapping is not triggering unwanted splits. 4. Functional leads execute volume simulation, proving that the nightly billing job VF04 correctly groups items for the same customer.
What not to do. Common wrong fixes.
1. Do not allow users to manually merge invoices as a permanent fix. It is slow and destroys the digital audit trail. 2. Do not use direct SQL updates to zero out the ZUKRL field in the database. You will break the universal journal integration. 3. Do not ignore different payment method errors in the split analysis. These indicate a master data gap. 4. Do not assume that ECC custom billing reports will handle the new split logic without a 100% code rewrite. Shortcuts in split logic validation result in an administrative nightmare on day 1.
Follow-up 1. What is the ZUKRL field, and why is it the split key?
Answer: ZUKRL is the combination key in table VBRK. During invoice creation, the system builds this key based on your configuration. If any two items produce different ZUKRL strings, the system is technically forced to create two separate invoice headers.
Follow-up 2. How can I identify exactly why an invoice was split?
Answer: go to transaction VF01, enter the documents, and select environment leads to split analysis. S4 HANA will show a side-by-side comparison and highlight the specific header field like payment terms or exchange rate that caused the division.
Follow-up 3. Curveball. What if the split logic works in the SAP GUI, but fails in a background job because the background user has a different decimal format or language setting in their user profile, causing a character mismatch in the custom ZUKRL string?
Answer: this is a user profile collision failure. You must test the batch user context. The fix is to ensure your custom split routine uses internal format for all values, for example, using RAW values rather than formatted strings. You must also mandate that the migration user and the production batch user share identical locale settings to ensure that character-based split keys remain consistent between automated and manual runs.
Exclusive pro tip.
On day 1, run a report comparing the total count of invoices against the total count of deliveries. If the ratio is greater than 1.05, your system is oversplitting. Audit your payment method and Incoterm data in the BP master immediately to reduce administrative waste.
Scenario 235. Margin analysis differences.
On day 1 of an S4 HANA go live, organizations often find that their profitability reports show different results than ECC. S4 HANA replaces legacy costing-based COPA with account-based margin analysis. Because every sales value must now flow through the universal journal in real time, the lack of mapping for statistical conditions or unsynchronized account keys results in incomplete profit reporting, leading to distorted executive dashboards and month-end reconciliation crises.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high financial reporting and profitability risk. 2. Phase, run post-go live. 3. Frequency, extremely common in systems moving to margin analysis. 4. Primary ownership, FICO lead, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and sales controller. 6. Business ownership, corporate controller. 7. Relevant SAP Note, SAP Note 2349298, and SAP Note 2225170, Universal Journal and Margin Analysis Context.
Diagnostic Dashboard, Symptoms and Evidence.
How margin analysis gaps manifest in the live production system. 1. Symptom: the market segment's Fiori app shows revenue but zero cost of goods sold for recently invoiced orders. 2. Red flag: discrepancies between legacy reports and the new S/4HANA Universal Journal profitability views. 3. Business impact: inability to track real-time product or customer profitability, delaying strategic pricing decisions. 4. Detection: checking table ACDOCA reveals line items with empty market segment or POBJNR numbers. 5. Technical proof: errors in the billing document log stating that the COPA derivation failed for a specific material group. Insight: in S/4HANA, profitability is not a report, it is a ledger posting. If it is not in the GL, it does not exist.
Why this happens: scenario analysis and root cause.
1. S/4HANA mandates the move to account-based margin analysis, where all value fields must be mapped to GL accounts. 2. Failure to implement COGS splitting, which is required to break down manufacturing costs in the ledger. 3. The project team migrated legacy mappings without realizing that statistical conditions now need a statistical GL account. 4. Underestimating the shift from costing-based logic, which used estimates, to account-based logic, which uses actuals. The failure is a result of treating profitability as a technical upgrade rather than a fundamental ledger redesign.
Why this is a migration exclusive failure.
1. ECC upgrades allowed costing-based COPA tables to remain as the primary source for margin reporting. 2. S/4HANA migration physically prioritizes the Universal Journal, making legacy COPA tables obsolete for Fiori analytics. 3. The requirement to assign every SD condition value to a market segment in real time is unique to the S/4HANA architecture. 4. This failure only surfaces when the organization analyzes sales through the new HANA native reporting layer. Migration forces a level of financial and sales data convergence that ECC never approached.
Financial and customer impact.
1. Material distortion of the monthly P&L, requiring a formal restatement of regional profit margins. 2. Audit risk, as the company must prove that the matching principle is maintained between sales revenue and COGS. 3. Internal disputes, as sales managers claim their performance bonuses are being impacted by missing system data. 4. High cost of manual adjustments at month-end to correct unassigned profitability segments, as DCO mismatches directly compromise the credibility of the company's financial performance reporting.
Governance and accountability RACI model.
Securing the margin requires a partnership between SD and finance leads. 1. Accountable FICO lead, the person who owns this and gets fired if it fails. 2. Responsible SD functional lead ensures every pricing condition is correctly linked to a general ledger account. 3. Consulted sales controller validates the profitability segment derivation for custom business attributes. 4. Informed group finance director monitors the unassigned profit reports during the first week of operations. Accountability ensures that every dollar of sale is correctly attributed to a market segment.
Ownership: who actually fixes it.
Resolving this requires an account-to-segment mapping audit. 1. The FICO lead audits transaction KOT28 to ensure all characteristics are correctly derived from the sales order. 2. The SD functional lead audits the account assignment in transaction VKOA for all discount and surcharge condition types. 3. The technical architect utilizes SAP Note 2349298 to ensure the margin analysis activation is technically stable. 4. The sales controller performs a margin reconciliation, comparing 100 orders in ECC against 100 orders in S/4HANA.
How this is actually fixed the right way by a role.
1. FICO lead mandates a zero statistical policy, where every SD condition value must have a landing spot in table ACDOCA. 2. The team implements substitution rules in transaction GGB1 to automatically correct missing profit centers or segments. 3. The SD team utilizes predictive accounting to show the expected margin in the ledger as soon as the order is saved. 4. Functional leads execute volume comparison testing, verifying that S/4HANA can derive 5,000 segments per minute.
What not to do: common wrong fixes.
1. Do not use manual journal entries to move revenue to segments. It destroys the document-level audit trail. 2. Do not ignore unassigned segments in the Fiori dashboards, assuming they will self-heal over time. 3. Do not assume that legacy value field logic from ECC translates one-to-one to S/4HANA accounts. 4. Do not allow go live until the gross margin report in S/4HANA matches the legacy ECC financial baseline. Shortcuts in margin analysis result in a financial black hole that will haunt the CFO.
Follow-up 1. What is the POBJNR field, and why is it the key to SDCO integration?
Answer: POBJNR is the profitability segment number. In S/4HANA, this number is written to the sales order and billing document line items. It acts as the key that links your sale to the specific customer, product, and regional segments in the ledger.
Follow-up 2. How do I handle statistical pricing conditions in margin analysis?
Answer: you must map these statistical conditions to accrual or reporting accounts in the general ledger. S/4HANA needs an account assignment to capture the value in the Universal Journal for profitability reporting, even if it does not affect the payment.
Follow-up 3. Curveball. What if the margin is correct for domestic sales, but intercompany margins show 0 because the S/4HANA clearing accounts were not defined as functional area relevant?
Answer: this is a metadata derivation failure. In S/4HANA, the P&L depends on functional areas to categorize costs. If clearing accounts lack this link, the cost side of the margin is ignored. You must update the GL master or use transaction OKB9. Without this, individual entity margins will be completely skewed on day 1.
Exclusive pro tip.
On day 1, monitor table ACDOCA specifically for items with an empty POBJNR field. Every empty segment is a blind sale that will not appear in your profitability analysis. Fix the derivation rules in transaction KOT28 immediately to restore visibility.
Scenario 236. Event-based revenue recognition differences.
On day 1 of an S/4HANA go live, the finance team often notices that revenue is hitting the general ledger at different times than in ECC. S/4HANA introduces event-based revenue recognition, or EBRR, which prioritizes the transfer of control over the billing date. If the new event triggers are not perfectly aligned with the legacy business rules, the company will report revenue in the wrong period, violating IFRS 15 standards and triggering audit red flags.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high financial integrity and audit compliance risk. 2. Phase, run post-go live. 3. Frequency, common in systems with subscription models or project-based billing. 4. Primary ownership, FICO lead, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and revenue accountant. 6. Business ownership, CFO. 7. Relevant SAP note, SAP note 2267319, and SAP note 2225170 SD revenue recognition.
Diagnostic dashboard, symptoms and evidence.
How revenue timing drift manifests in the live system. 1. Symptom: revenue for a shipment on the 31st of the month appears in the general ledger on the 1st of the next month. 2. Red flag: discrepancies between the sales register and the revenue accounting report during the first week. 3. Business impact: significant variances in the monthly P&L leading to unexplained margin drops. 4. Detection: checking table ACDOCA reveals that the posting date for revenue does not align with the fulfillment date. 5. Technical proof: errors in the monitor stating that event-based triggers were ignored because the document was locked. Insight: in S/4HANA, revenue is a behavior. If the logistics event is delayed, the revenue moves fiscal periods.
Why this happens: scenario analysis and root cause.
1. Legacy ECC revenue recognition was account-based, allowing for manual period overrides that are now restricted. 2. The project team failed to map proof of delivery as the legal trigger for revenue, resulting in premature recognition at PGI. 3. New S/4HANA rules recognize revenue at the moment of cost of goods sold posting, creating a timing shift. 4. Underestimating the impact of time zones. An event at 11 p.m. might hit the next fiscal day for a global subsidiary. The failure is a result of treating revenue recognition as a technical setting rather than an accounting policy.
Why this is a migration exclusive failure.
1. ECC upgrades never required a change in the revenue engine. The VBREV table remained the stable source of truth. 2. S/4HANA migration physically deactivates legacy SD revenue recognition, making old testing patterns obsolete. 3. The integration between SD and the new EBRR engine is a unique setup required only for S/4HANA. 4. This failure only surfaces when the organization attempts its first period end close in the new system. Migration forces a total redesign of the revenue pipe that ECC took for granted for decades.
Financial and customer impact.
1. Material misstatement of financial results, leading to a loss of investor confidence and potential restatements. 2. Audit failures as the company cannot prove continuity of revenue between the legacy close and the new open. 3. Inaccurate commission payments to sales reps if their targets are based on the month of revenue recognition. 4. High cost of forensic accounting post-go live to explain and correct timing variances. Revenue timing drift is a P1 board-level risk that must be stabilized within the first 30 days.
Governance and accountability RACI model.
Securing revenue timing requires a partnership between SD and accounting. 1. Accountable FICO lead, the person who owns this and gets fired if it fails. 2. Responsible SD functional lead ensures the logistics events correctly trigger the revenue accounting items. 3. Consulted revenue accountant validates that the GL posting dates align with the corporate fiscal calendar. 4. Informed external auditors review the new S/4HANA revenue recognition methodology for compliance. Accountability ensures that technical automation does not violate accounting standards.
Ownership who actually fixes it.
Resolving this requires an event-to-posting audit. 1. The corporate controller defines the legal trigger point for revenue recognition for every sales document type. 2. The SD functional lead audits the requirement class to ensure it points to the correct S/4HANA revenue accounting key. 3. The FICO lead configures the EBRR recognition rules to match the inception-to-date revenue logic from ECC. 4. The technical architect utilizes SAP Note 2225170 to execute the mandatory reconciliation reports.
How this is actually fixed the right way by a role.
1. FICO lead mandates a revenue policy audit to align the S/4HANA triggers with the IFRS 15 concept. 2. The team implements proof of delivery for all international shipments to ensure recognition after customer acceptance. 3. The FICO team utilizes transaction KKA0 to automate the calculation of revenue recognition for all open orders. 4. Functional leads execute timing simulations, verifying that an order shipped at midnight is recognized in the correct period.
What not to do. Common wrong fixes.
1. Do not use manual journal entries to move revenue between periods. This destroys the document-level audit trail. 2. Do not allow sales reps to manually change the billing date to force revenue recognition. 3. Do not assume that the S/4HANA event-based engine works exactly like legacy milestone billing. 4. Do not allow go live until the revenue variance between the legacy and target systems is 0%. Shortcuts in revenue timing result in a financial disaster that the CFO cannot defend.
Follow-up 1. What is event-based revenue recognition in S/4HANA?
Answer: it is a real-time engine that posts revenue and COGS at the same time as the logistics event. It ensures that the P&L is updated the moment the business event occurs, providing a more accurate real-time margin than legacy SD.
Follow-up 2. Why is the fulfillment date more important than the invoice date in S/4HANA?
Answer: under IFRS 15, revenue is recognized when the control of the goods is transferred. The fulfillment date represents this transfer. S/4HANA uses this date as the primary trigger, whereas ECC often relied on the invoice date.
Follow-up 3. Curveball. What if the revenue is recognized at PGI, but the COGS remains in a stock in transit account Because the advanced intercompany engine is waiting for a pod.
Answer: this is a P and L mismatch. You have revenue without COGS, which inflates your margin. You must test the cost matching logic. The fix is to configure the EBRR recognition rule to postpone the revenue event until the pod occurs. This ensures the P and L reflects the sale only once the transaction is complete.
Exclusive pro tip.
On day 1, monitor table FRR_D_ posting for any document where the fulfillment date is different from the posting date. Rebaseline your EBRR event triggers immediately if you see a trend of revenue leaking into the next month.
Scenario 237. Down payment clearing failure.
On day 1 of an S/4HANA go live, users often find that they cannot create final invoices for sales orders that have associated down payments. In ECC, the condition type AZWR was used to deduct down payments from the final bill. S/4HANA enforces a stricter link between the SD billing plan and the FI special GL indicator. If the down payment was posted in ECC, but the clearing logic was not correctly synchronized with the new universal journal, the billing engine will fail to find the prepayment, resulting in overbilling the customer or a system dump.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high financial accuracy and cash application risk. 2. Phase, run post go live. 3. Frequency, common in industries with project-based or custom manufacturing. 4. Primary ownership, SD functional lead, the person who owns this and gets fired if it fails. 5. Supporting FICO lead and ABAP lead. 6. Business ownership, accounts receivable manager. 7. Relevant SAP note. SAP note 23339 for 8 down payments in S/4HANA.
Diagnostic dashboard, symptoms and evidence.
How down payment clearing failures manifest in the live system. 1. Symptom, creating the final invoice transaction VF01 results in the error condition AZWR could not be determined or invoice amount is incorrect. 2. Red flag, the customer payment transaction F29 exists in the ledger, but the down payment tab in the sales order shows a zero balance. 3. Business impact, inability to invoice strategic customers, leading to revenue recognition delays and customer overcharging disputes. 4. Detection, comparing table FPLT billing plan in S/4HANA against the legacy ECC records reveals missing settlement indicators. 5. Technical proof, the accounting interface fails with error tax amount has been changed because the down payment tax was not correctly transferred. Insight in S/4HANA, a down payment is a financial constraint. If the SD and FI links are not perfect, the final bill is blocked.
Why this happens, scenario analysis and root cause.
1. S/4HANA requires a one-to-one link between the sales order billing plan and the financial document in the universal journal. 2. Legacy ECC down payments were often posted without a reference to the sales order number, making them invisible to the S/4HANA billing engine. 3. The project team failed to revalidate the condition value routine for ZWR, which now requires different method calls in the HANA kernel. 4. Inconsistent tax configuration between the down payment request and the final invoice, causing a balancing error in ACDOCA. The failure is a result of treating down payments as a simple payment instead of a document-linked asset.
Why this is a migration exclusive failure.
1. ECC upgrades kept the legacy billing plan logic, allowing detached down payments to be cleared manually. 2. S/4HANA migration physically transforms the billing subledger, requiring every AZWR record to pass a strict data lineage check. 3. The requirement to have in-flight down payments correctly mapped to the new BP-based ledger is a unique S/4HANA migration hurdle. 4. This failure only surfaces when users attempt to close a sales cycle that started in ECC but ends in S/4HANA. Migration forces a level of transactional precision that legacy ECC never approached.
Financial and customer impact.
1. Double billing risk where customers are charged the full amount despite having paid a 50% deposit in the legacy system. 2. Material misstatement of customer deposits on the balance sheet, leading to audit variances at month end. 3. Operational disruption as the billing team must manually reverse and repost payments to link them to the new system IDs. 4. significant delays in cash clearing, impacting the company's daily working capital reporting. Down payment failures directly break the order-to-cash financial trust between the buyer and seller.
Governance and accountability RACI model.
Securing customer deposits requires a partnership between sales and accounts receivable. 1. Accountable SD functional lead, the person who owns this and gets fired if it fails. 2. Responsible FICO lead ensures the special GL indicators and down payment accounts are perfectly synchronized. 3. Consulted accounts receivable manager validates the customer balance during the final cutover. 4. Informed corporate controller monitors the uncleared deposit report on day 1. Accountability ensures that the customer's money is correctly accounted for in the final sale.
Ownership who actually fixes it.
Resolving this requires an order-to-ledger data audit. 1. The SD functional lead audits transaction OVK1 to ensure the down payment condition types are correctly assigned. 2. The FICO lead audits table BSEG and ACDOCA to verify that legacy down payments carry the sales order number in the assignment field. 3. The ABAP lead refactors the AZWR calculation routine to utilize the new S/4HANA standard pricing APIs. 4. The QA team executes a legacy to new test, creating a final invoice for a down payment that was posted in ECC.
How this is actually fixed the right way by a role.
1. SD functional lead mandates a deposit scrub during the realize phase, ensuring all open ECC down payments have valid SO references. 2. The team implements automatic clearing rules in the billing document to ensure AZWR is calculated based on the actual FI balance. 3. FICO lead ensures that the tax code used in the down payment request matches the tax code in the final billing document. 4. Functional leads execute milestone testing, verifying that partial down payments are cleared proportionally across multiple invoices.
What not to do. Common wrong fixes.
1. Do not allow users to delete the AZWR condition to bypass a billing error. You are ignoring a legal financial obligation. 2. Do not manually post GL credits to fix the customer balance. You will permanently break the sub-ledger audit trail. 3. Do not assume that milestone billing from ECC will automatically find the old payments in S/4HANA. 4. Do not allow go live until the open down payment reconciliation between ECC and S/4HANA is 100% complete. Shortcuts in down payment clearing result in a financial nightmare that will haunt the CFO for months.
Follow-up 1. What is the AZWR condition type, and why is it special?
Answer: AZWR is a statistical condition type used to represent the value of down payments already received. It does not calculate a price. It performs a lookup in the financial ledger to see how much money is available to be deducted from the current invoice.
Follow-up 2. Why do I need to check the assignment field in ECC before migration?
Answer: S/4HANA uses the sales order number in the FI documents assignment ZUONR field to link the payment to the billing plan. If this field was blank in ECC, S/4HANA will not see the payment, and the AZWR condition will return 0.
Follow-up 3. Curveball. What if the final invoice is blocked because the down payment was received in a different currency than the final bill, and the S/4HANA Universal Journal triggers a foreign exchange balancing error that ECC never detected?
Answer: this is a currency drift failure. S/4HANA requires every sub-ledger clearing to balance in all local and group currencies. You must test the cross-currency clearing logic. The fix is to configure a foreign exchange gain and loss account specifically for the billing clearing process. If you miss this, you will be unable to bill any international customer who paid a deposit, creating a massive revenue bottleneck on day 1.
Exclusive pro tip.
On day 1, monitor transaction FBL5N specifically for special GL indicators and F. Reconcile these against your open sales order billing plans. If a deposit exists in FI but not in SD, use report SAP F124 to force the clearing before the customer receives a wrong invoice.
Scenario 238. Revenue accounting contract mismatch.
In the run phase post-go live, organizations often find that the revenue accounting item, or RI monitor, is flooded with errors. S/4HANA deprecates legacy SD revenue recognition, and mandates the use of SAP revenue accounting and reporting, or RER. If the inception-to-date revenue from ECC was not correctly migrated, or if the SD item categories were mismapped to the new performance obligations, the system will fail to create revenue contracts, leaving the balance sheet in an unauditable state.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high financial compliance and revenue integrity risk. 2. Phase, run post-go live. 3. Frequency, common in industries with subscription billing or multi-element arrangements. 4. Primary ownership, SD and FICO lead, the person who owns this and gets fired if it fails. 5. Supporting data migration lead and revenue accountant. 6. Business ownership, CFO. 7. Relevant SAP note. SAP note 2267319 and SAP note 2225170, revenue recognition transition.
Diagnostic dashboard, symptoms and evidence.
How revenue accounting mismatches manifest in the live system. 1. Symptom. A sales order is saved in S4 HANA, but no revenue contract appears in transaction FRR_TM00. 2. Red flag. The RI monitor transaction FRR_monitor shows thousands of documents in error status for specific sales organizations. 3. Business impact. Inability to recognize revenue for the current month, leading to a potential material misstatement in the quarterly results. 4. Detection. Comparing the recognized revenue in S4 HANA against the audited ECC schedules reveals large variances. 5. Technical proof. Errors in the S4 HANA to RER interface stating that mandatory attribute product is missing for migrated orders. Insight. Revenue migration is a financial cut and paste. If the context is lost, the money is untraceable.
Why this happens, scenario analysis and root cause.
1. Legacy SD revenue recognition was account-based, while SAP RER is contract-based, creating a data granularity gap. 2. The project team failed to map the ITD or inception-to-date revenue correctly during the legacy data load. 3. S4 HANA event triggers like PGI or invoice were not correctly synchronized with the legacy ECC revenue schedules. 4. Underestimating the complexity of contract modifications, where an order changed price in ECC but was migrated in its final state. The failure is a result of treating revenue recognition as an SD setting rather than a financial data transformation.
Why this is a migration exclusive failure.
1. ECC upgrades never required a move to a new revenue engine. The VBREV table remained the stable source of truth. 2. S4 HANA migration involves a physical engine swap where legacy data is decommissioned and transformed into RER subledger entries. 3. The requirement to reconcile every dollar of open revenue is a unique, one-time gate of the S4 HANA migration lifecycle. 4. This failure only surfaces when the organization attempts its first revenue posting run FRR_rev_post in the new system. Migration forces a revaluation of the company's financial history that standard upgrades never touched.
Financial and customer impact.
1. Risk of double revenue recognition if the migration baseline is not perfectly frozen, leading to illegal financial reporting. 2. Audit failures and potential regulatory penalties for non-compliance with IFRS 15 or ASC 606 standards. 3. Operational overhead increases as the finance team must manually reconcile thousands of contracts in spreadsheets. 4. Delayed commission payments if the sales incentive logic is tied to the revenue recognition trigger. Revenue accounting failures are the highest risk financial incidents in any S4 HANA program.
Governance and accountability RACI model.
Securing revenue integrity requires a partnership between SD and finance. 1. Accountable SD and FICO lead, the person who owns this and gets fired if it fails. 2. Responsible revenue accountant defines the inception-to-date balances and validates the contract creation. 3. Consulted external auditors approve the migration methodology and the reconciliation baseline. 4. Informed CFO monitors the financial accuracy and the impact on the public-facing profit and loss statement. Accountability ensures that technical success does not violate accounting standards.
Ownership who actually fixes it.
Resolving this requires a value-matched data audit. 1. The SD functional lead identifies all open revenue-relevant documents and ensures the item categories trigger the RI monitor. 2. The FICO lead configures the RAR fulfillment rules and the performance obligation derivation logic. 3. The data migration team loads the legacy recognized revenue into the RAR staging area using the SAP migration reports. 4. The revenue accountant performs a cent-by-cent reconciliation between ECC table VBREV and S4 HANA report FRR_TM00.
How this is actually fixed the right way by a role.
1. SD and FICO lead mandate a revenue baseline report from ECC, capturing the total deferred revenue by contract. 2. The team implements automatic consistency checks that flag any sales order without a linked revenue contract in the first hour live. 3. The technical architect utilizes SAP Note 2225170 to execute the mandatory reconciliation tools between SD and RAR. 4. Functional leads execute modification testing, verifying that a price change in SD correctly allocates revenue in the RAR subledger.
What not to do. Common wrong fixes.
1. Do not allow the go-live to proceed until the revenue variance between legacy and target is 0% or fully explained. 2. Do not use manual journal entries to fix a revenue subledger error. You are destroying the document-level audit trail. 3. Do not assume that the migration cockpit automatically calculates the inception-to-date revenue correctly. 4. Do not skip the reconciliation of partially invoiced orders, as these contain the highest risk for financial inaccuracies. Shortcuts in revenue reconciliation will lead to a qualified audit opinion and CFO scrutiny.
Follow-up 1. What is a performance obligation or POB in S4 HANA?
Answer: a POB is the specific item or service the company is obligated to deliver to the customer. S4 HANA RAR allocates revenue based on these POBs rather than simple GL accounts, ensuring that revenue is recognized only as each specific promise is fulfilled.
Follow-up 2. Why is transaction FRR_monitor so critical during go-live?
Answer: FRR_monitor is the command center for revenue accounting. It shows every data packet coming from SD. If it is full of red entries on day 1, your financial integration is broken, and no revenue will post to the general ledger for those orders.
Follow-up 3. Curveball. What if the revenue accounting item technically succeeds, but the revenue contract is created with an incorrect currency because the SD document was in a local currency that was not correctly mapped to the RAR group reporting currency in the S4 HANA Global Ledger?
Answer: this is a multi-ledger mapping failure. In S4 HANA, the RAR engine must balance in all parallel currencies defined in ACDOCA. You must test the currency handshake. The fix is to update the revenue accounting item mapping to include mandatory conversion rules for all group currencies. If you miss this, you will have a ghost variance in your consolidated P&L that will take weeks to manually eliminate at year-end.
Exclusive pro tip.
Invite your external auditors to review your revenue reconciliation baseline 4 weeks before the cutover. If they approve the methodology in the sandbox, you prevent a crisis during the first post-migration financial audit.
Section 11. Wrap-up. Billing and finance impact.
Section 11 has analyzed the final financial handshake of the order-to-cash cycle. We explored how pricing drifts, account determination errors, and revenue recognition mismatches can block the cash register of the enterprise. The takeaway is that in S4 HANA, the SD subledger is no longer a separate entity from the general ledger. If your billing documents do not balance perfectly in the Universal Journal, your migration is not functionally complete.
The universal interview tip. Whenever you ask a tech VP or an industry mentor how to crack a tough interview, they all give you the exact same tip. Get familiar with the most commonly asked interview questions. It sounds simple, right? But here is the problem. The search nightmare. Finding the actual most commonly asked questions for senior roles is a nightmare. Generic Google searches only give you basic textbook definitions, and those will not help you clear a lead architect or senior engineer round where production reality matters. Imagine a master vault. Now, imagine a vault where the absolute most commonly asked interview questions for your specific role are already collected for you, perfectly organized by interview rounds like 1. Most commonly asked technical-based question and answers. 2. Most commonly asked scenario-based question and answers. 3. Most commonly asked real-world problem-solving question and answers. 4. Most commonly asked system design question and answers. 5. Most commonly asked behavioral-based question and answers. Cross-domain mastery. I built the ACE Interviews Master Vault for the modern architect. We did not just do this for one role. We covered everything: SAP, cybersecurity, DevOps, software testing, data engineering, Java, and Python. The ultimate all-access deal. Instead of paying for individual PDFs, you can now unlock our entire database. Get over 1,000 plus PDFs containing 50,000 plus of the most asked question and answers for a mere 1,499 rupees a month. The elite transformation. Stop studying just to pass. Equip yourself with the cross-domain confidence of a true architect and walk out of your next interview choosing between 2 or 3 elite job offers. Unlock the vault now. The era of buying individual guides is over. Click the link in the video description below right now to unlock the Master Vault. Now, let's get back to the masterclass.
Transition to Section 12, HANA Performance Incidents.
Even with a balanced ledger, a system that takes minutes to save a sales order is a failed migration. In Section 12, we shift our focus from financial logic to database physics. We will analyze why the high-speed HANA database often experiences runtime spikes, lock escalations, and performance regressions. This is where we debunk the myth that HANA's speed can compensate for unoptimized legacy ABAP code.
Section 12, HANA Performance Incidents.
Section 12 addresses the technical throughput of the S/4HANA core. Many organizations expect an instant performance boost, but instead encounter day-one slowness. This happens because the HANA columnar architecture and the new S/4HANA data models require a fundamental shift in how data is queried and committed. We will examine the specific bottlenecks in pricing, billing, and analytics that trigger system-wide latency during peak business hours.
Section 12, Incident List, HANA Performance.
The following incidents represent the technical performance risks of the S/4HANA digital core. Scenario 239, pricing runtime spikes. Relevant SAP note, SAP note 2267308 and SAP note 1912445. Scenario 240, mass billing performance issues. Relevant SAP note, not applicable basis and code tuning required. Scenario 241, parallel delivery conflicts. Relevant SAP note, not applicable basis and code tuning required. Scenario 242, lock escalation during billing. Relevant SAP note, not applicable basis and code tuning required. Scenario 243, custom code performance regressions. Relevant SAP note 1912445. Scenario 244, output performance issues. Relevant SAP note, not applicable basis and code tuning required. Scenario 245, order mass change spikes. Relevant SAP note, not applicable basis and code tuning required. Scenario 246, ATP runtime spikes. Relevant SAP note, not applicable basis and code tuning required. Scenario 247, CDS analytics impact runtime. Relevant SAP note, not applicable basis and code tuning required. Scenario 248, CPE runtime spikes. Relevant SAP note 2226411 and SAP note 1912445. Scenario 249, revenue recognition runtime spikes. Relevant SAP note 2267319. Scenario 250, flexible workflow runtime latency. Relevant SAP note, not applicable runtime and workflow design gap reference SAP note 2198647. Performance tuning in HANA is an architectural requirement, not a post-go-live luxury.
Scenario 239, pricing runtime spikes.
In the run phase post-go-live, users often report that the sales order save time has increased from 1 second in ECC to 10 seconds in S/4HANA. Because S/4HANA moves pricing from the KONV cluster to the transparent table PRCD_elements, the database must perform significantly more select and join operations to reconstruct the pricing situation. If custom VOFM routines or Z reports are not optimized for this new data access path, the system will experience massive CPU spikes during order entry, paralyzing high-volume call centers.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high system throughput and user productivity risk. 2. Phase, run post-go live. 3. Frequency, extremely common in systems with complex pricing procedures. 4. Primary ownership, ABAP lead HANA, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and basis lead. 6. Business ownership, sales operations director. 7. Relevant SAP note. SAP note 2267308, pricing data model, and SAP note 1912445, ABAP for HANA.
Diagnostic dashboard, symptoms and evidence.
How pricing runtime spikes manifest in the live production system. 1. Symptom. Users experience a frozen GUI for several seconds every time they change a quantity or add a line item. 2. Red flag, high DB request time and transaction STAD specifically for the pricing program SAP LV61A. 3. Business impact, order entry productivity drops by 50%, leading to customer abandoned calls and lost sales. 4. Detection, the HANA Threads monitor shows hundreds of active sessions waiting on table PRCD_elements. 5. Technical proof, SQL trace shows sequential scans on the pricing table, because a legacy index from KONV was not recreated in S/4HANA. Insight, transparent pricing tables are better for reporting, but they require 10 times more database IQ to calculate.
Why this happens, scenario analysis and root cause.
1. The legacy cluster table KONV loaded all pricing conditions in one compressed block. S/4HANA must fetch them row by row. 2. Custom pricing routines VOFM use nested select statements within loops, which is an anti-pattern for the HANA columnar database. 3. Failure to utilize the global buffer for pricing condition records, forcing a database read for every single line item in the order. 4. The project team lifted and shifted legacy code that was optimized for row store databases Oracle into the S/4HANA environment. The failure is a result of ignoring the code to data mandate of the HANA database architecture.
Why this is a migration exclusive failure.
1. ECC upgrades never touch the KONV table structure, so performance remains stable regardless of the ABAP code quality. 2. S/4HANA migration physically deletes the cluster table, making every legacy direct select a performance risk. 3. The move to HANA 2.0 requires a total redesign of large table indexing that ECC DBAs never had to perform. 4. This failure only surfaces when the new transparent pricing engine encounters the true multi-line document depth of production. Migration introduces a database speed penalty for unoptimized code that ECC never enforced.
Financial and customer impact.
1. Operational revenue losses. Call center reps process fewer orders per hour due to system latency. 2. Increased infrastructure costs as the organization attempts to throw hardware at a software logic problem. 3. Customer frustration as the e-commerce checkout spins indefinitely while S/4HANA calculates the final price. 4. Audit risk if performance timeouts lead to incomplete document saves and corrupted pricing records. Pricing latency is the fastest way to turn a high-speed business into a slow-motion operation.
Governance and accountability RACI model.
Securing system speed requires a partnership between developers and basis leads. 1. Accountable ABAP lead HANA, the person who owns this and gets fired if it fails. 2. Responsible ABAP developer refactors legacy pricing routines to use HANA native SQL and CDS views. 3. Consulted SD functional lead identifies the pricing complexity drivers, for example, tiered discounts for optimization. 4. Informed IT director monitors the average response time as a primary system health KPI. Accountability ensures that the system is tuned for the business volume, not just for the test data.
Ownership, who actually fixes it.
Resolving this requires a trace and refactor strategy. 1. The basis lead utilizes transaction ST05 to identify the specific SQL statements causing the highest HANA CPU load. 2. The ABAP lead refactors the VOFM routines range 900 to 999 to use the new standard pricing API class CL_PRC_result_factory. 3. The technical architect implements HANA table partitioning for table PRCD_elements to allow for faster parallel reads. 4. The SD functional lead simplifies the pricing procedure by removing redundant condition types that add to the calculation load.
Who gets blamed versus who owns it?
1. Blamed. Basis team. The business assumes the HANA appliance is too small or misconfigured. 2. Blamed. SAP users claim S/4HANA is bloated and slower than ECC. 3. Actual owner. ABAP lead HANA responsible for the failure to enforce HANA-optimized coding standards during the realize phase. 4. Root cause. Maintaining legacy row-based SQL patterns in a modern columnar database environment. Performance is a feature of the code, not just a property of the hardware.
How this is actually fixed the right way by a role.
1. ABAP lead mandates a zero select star policy for all pricing-relevant custom developments. 2. The team implements secondary HANA indexes on table PRCD_elements for common search fields like KNUMV. 3. The basis lead applies SAP Note 1912445 to optimize the DB connection pooling for the pricing engine. 4. Functional leads execute volume stress tests, proving that the system can process 500 orders per minute without latency spikes.
What not to do. Common wrong fixes.
1. Do not simply add more RAM to the HANA server. This is a temporary fix that does not solve unoptimized code logic. 2. Do not ignore performance warnings in the ATC check, assuming they are low priority. 3. Do not allow nested selects in pricing routines, even if they appear fast with small test data. 4. Do not assume that compatibility views are as fast as the native transparent tables. Shortcuts in performance remediation result in a sluggish system that destroys user adoption.
Follow-up 1. Why is table PRCD_elements transparent in S/4HANA?
Answer: HANA is a columnar database that performs best when it can read data directly from specific columns. KONV was a cluster, which is essentially a compressed zipped file. To calculate a price in ECC, the system had to unzip the data first. S/4HANA makes it transparent so the calculation engine can access the columns directly at lightning speed.
Follow-up 2. What is the risk of using select star on PRCD_elements?
Answer: PRCD_elements has over 100 columns. If your code uses select star but only needs the condition value, you are forcing HANA to reconstruct every column in memory and send it across the network to the application server, causing a massive performance bottleneck.
Follow-up 3. Curveball. What if the pricing performance is perfect in SIT, but the system crashes during the first mass billing run because the statistical condition types are triggering a table-level lock on the new S/4HANA pricing index?
Answer: this is a concurrency lock failure. S/4HANA pricing is integrated with margin analysis. You must test parallel commit logic. The fix is to configure optimistic locking for pricing via SAP Note 2267308 to ensure that multiple threads can read the same condition record without blocking the entire table. If you miss this, your mass billing job will trigger a technical traffic jam that freezes the whole system on day 1.
Exclusive pro tip.
Turn on SQL Monitor or SQLM in your ECC production system 4 weeks before migration. Identify the top 50 most expensive pricing queries and mandate their code pushdown to CDS views before you even start the realize phase. Solve the performance problem before it even migrates.
Scenario 240. Mass billing performance issues.
On the first month in close post go live, the billing department often discovers that the collective billing run transaction VF04 takes 10 times longer than it did in ECC. S/4HANA fuses SD billing with the Universal Journal in real time, requiring a massive amount of synchronous financial commits. If the HANA log segments or background work processes are not tuned for this concentrated load, the system will experience commit wait bottlenecks, causing the billing window to spill over into the next business day.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high financial throughput and system availability risk. 2. Phase, run post go live. 3. Frequency, common in high volume manufacturing and consumer goods. 4. Primary ownership basis lead, the person who owns this and gets fired if it fails. 5. Supporting FICO lead and SD functional lead. 6. Business ownership billing manager. 7. Relevant SAP note, not applicable basis and code tuning, required reference SAP note 2349298 for Universal Journal performance context.
Diagnostic dashboard, symptoms and evidence.
How mass billing bottlenecks manifest in the live production system. 1. Symptom: the nightly job SD bill DL starts at 10 p.m. and is still only 20% complete by 8 a.m. the next morning. 2. Red flag: HANA cockpit shows critical disk I/O warnings for the database log files during the billing run. 3. Business impact: inability to transmit invoices to customers on time, resulting in a spike in unbilled revenue and DSO. 4. Detection: checking transaction SM66 reveals dozens of background processes in hold status waiting on table ACDOCA. 5. Technical proof: mismatches in the wait for commit time and transaction SDAD compared to the legacy ECC performance baseline. Insight: in S/4HANA, billing is a stress test for the database logs. If the pipe is too narrow, the flow will back up.
Why this happens: scenario analysis and root cause.
1. ECC upgrades handled billing and accounting as separate background tasks. S/4HANA requires they finish together in one technical commit. 2. The project team failed to increase the number of HANA update processes to handle the surge in real-time financial postings. 3. Underestimating the volume of margin analysis records. Every billing line now creates additional rows in ACDOCA, multiplying the database write load. 4. Legacy billing batch jobs were scheduled with too many parallel threads, leading to internal locking contention on the same financial periods. The failure is a result of treating S/4HANA as a simple database swap rather than a re-engineered transactional engine.
Why this is a migration exclusive failure.
1. In ECC, the SDFI interface was often asynchronous V2 updates, which allowed the system to absorb billing spikes without slowing down. 2. S/4HANA migration enforces synchronous financial integrity via the Universal Journal, removing the legacy buffer between sales and accounting. 3. The move from costing-based COPA to account-based margin analysis increases the data density of every invoice by 300%. 4. This failure only surfaces when the new integrated digital core encounters the concentrated pressure of the first legacy month-end close. S/4HANA requires a level of commit speed that ECC row store databases never approached.
Financial and customer impact.
1. Material delay in revenue recognition, potentially missing public financial reporting deadlines. 2. Increased risk of system-wide slowdown, impacting other business functions like procurement or payroll during the billing window. 3. Customer disputes increase if duplicate invoices are sent because failed batch jobs were restarted incorrectly. 4. High cost of emergency consulting support to manually retune the HANA database in the middle of a live close. Mass billing failures directly compromise the company's financial heartbeat.
Governance and accountability RACI model.
Ensuring financial throughput requires a link between basis and the controller. 1. Accountable basis lead, the person who owns this and gets fired if it fails. 2. Responsible technical architect optimizes the parallel processing server groups and the HANA commit parameters. 3. Consulted SD functional lead provides the peak billing profile, for example, 50,000 invoices in 4 hours. 4. Informed corporate controller monitors the close calendar to ensure system performance, supports the timeline. Accountability ensures that technical limits never override the business's ability to close the books.
Ownership: who actually fixes it.
Resolving this requires a throughput and resource audit. 1. The basis lead identifies the CPU bottleneck in HANA and increases the number of available background work processes. 2. The technical architect configures logical partitioning for billing jobs, for example, splitting by sales org to reduce lock contention. 3. The FICO lead optimizes the document splitting rules to ensure the Universal Journal postings are as slim as possible. 4. The ABAP lead refactors the billing output BRF Plus to run in a separate background thread, freeing up the main transaction for the financial save.
How this is actually fixed the right way by a role.
1. Basis lead mandates a stress test simulation in the sandbox using 100% of the production billing volume. 2. The team implements HANA flash storage for log segments to provide the sub-millisecond response time required for mass commits. 3. The SD team utilizes transaction RZ12 to define a dedicated O2C billing server group that isolates the load from Fiori users. 4. Functional leads execute incremental close testing, ensuring that the system can handle a day's worth of invoices in under 15 minutes.
What not to do. Common wrong fixes.
1. Do not allow users to batch all invoices into a single massive job. You must use parallel threads to utilize all HANA cores. 2. Do not manually kill the billing job halfway through. You will leave the universal journal in an inconsistent state. 3. Do not ignore disk INO warnings in the sandbox, assuming production is faster. It usually is not during a peak close. 4. Do not assume that ECC custom billing reports will help you. They are likely contributing to the slowness. Shortcuts in billing performance result in an uncontrollable financial bottleneck post-go-live.
Follow-up 1. Why does S/4HANA require more database log capacity than ECC?
Answer: in S/4HANA, every billing document writes to table VBRK, table VBRP, and several rows in table ACDOCA simultaneously. This creates a massive surge in transaction logs. If your log file is not large enough to store the uncommitted data, the entire system will freeze until the log is backed up.
Follow-up 2. What is logical partitioning for billing jobs?
Answer: it is the process of breaking one large job into many small ones. Instead of saying bill everything, you run one job for domestic sales and another for export sales. This reduces the contention for the same number range objects and database indexes, allowing HANA to work in parallel.
Follow-up 3. Curveball. What if the billing throughput is excellent, but the system crashes because the automated output engine BRF Plus triggers 50,000 PDF renderings simultaneously in the Java stack, saturating the RFC connection pool and blocking the FICO commit?
Answer: this is a cross-stack resource failure. In S/4HANA, the ABAP and Java layers share the same wait state during an integrated save. You must test the output pacing logic. The fix is to decouple the PDF rendering from the invoice save by setting the output dispatch time to scheduled dispatch time 1. This allows the financial ledger to close instantly, while the PDF engine processes the invoices in a steady stream in the background. If you miss this, your month-end billing will trigger a kernel-level hang, effectively performing a denial of service attack against your own finance department.
Exclusive pro tip.
On day 1, set up a HANA dashboard that monitors average lock wait time for table ACDOCA. If the wait time exceeds 100 milliseconds, stop your mass billing job immediately. You have a lock contention in your FICO substitutions that must be refactored before the afternoon peak begins.
Scenario 241. Parallel delivery conflicts.
On day 1 post-go-live, high-volume distribution centers often report that background jobs for delivery creation and post-goods issue are failing with record-locked errors. In S/4HANA, the data model consolidation moves status fields into the delivery header table LIKP. When multiple parallel background processes, or RF users, attempt to update different items on the same delivery or same shipment simultaneously, the HANA database triggers row-level lock contention, resulting in aborted update tasks and warehouse operational delays.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high logistics throughput and data consistency risk. 2. Phase, run post-go-live. 3. Frequency, extremely common in large warehouses with high concurrency picking. 4. Primary ownership, basis lead, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and warehouse lead. 6. Business ownership, warehouse operations manager. 7. Relevant SAP note, not applicable basis and code tuning, required reference SAP note 2227014. For logistics simplification context.
Diagnostic dashboard, symptoms and evidence.
How parallel delivery conflicts manifest in the live production system. 1. Symptom, background job VL10 batch shows a status of finished, but the log contains thousands of documents locked by user errors. 2. Red flag, transaction SM12 shows long duration locks on table LIKP and table LIPS held by system background users. 3. Business impact, inability to execute a full warehouse shipment wave on schedule, leading to trucks waiting at the dock. 4. Detection monitoring transaction SMQ2 for embedded EWM systems reveals stuck outbound queues due to technical lock collisions. 5. Technical proof, system log errors referencing deadlock on HANA row-level lock during the PGI update task. Insight, S4 HANA flattened the status model to be faster, but this increased the lock density for multi-item deliveries.
Why this happens, scenario analysis, and root cause.
1. In ECC, header and item statuses were separate. S4 HANA moves them to the LIKP header, meaning an update to any item now locks the entire document. 2. The project team configured too many parallel threads for the collective delivery run, causing multiple jobs to fight for the same table indexes. 3. Legacy custom baddies in the delivery save event perform slow database lookups, extending the time the exclusive lock is held. 4. Failure to optimize the number range buffering for deliveries, causing parallel threads to serialize at the number range object level. The failure is a result of technical congestion, where the system speed exceeds the logic's ability to handle concurrency.
Why this is a migration exclusive failure.
1. ECC row store databases handled these locks using a different enqueue mechanism that was less sensitive to header-level status changes. 2. S4 HANA migration physically restructures the LIKP and LIPS tables, removing the VBUK and VBUP tables that previously acted as a lock buffer. 3. The transition to embedded EWM introduces synchronous direct calls that hold locks across both the warehouse and sales subledgers. 4. This failure only surfaces when the new HANA native logistics core encounters the true concurrent user load of a production environment. Migration creates a concurrency trap that standard ECC upgrades never triggered.
Financial and customer impact.
1. Operational revenue loss as shipments are delayed, resulting in missed delivery slots at large retail partners. 2. Inaccurate inventory reporting if a partial goods issue fails to commit to the ledger due to a lock, but the stock is physically gone. 3. Increased labor costs as warehouse staff must manually re-trigger failed shipments in the system. 4. Customer service complaints when track and trace notifications are delayed because the system status is out of sync. Delivery conflicts directly paralyze the physical movement of goods and the accuracy of the inventory book.
Governance and accountability RACI model.
Securing warehouse throughput requires a partnership between basis and logistics leads. 1. Accountable basis lead, the person who owns this and gets fired if it fails. 2. Responsible technical architect optimizes the server groups and tunes the HANA row-level locking parameters. 3. Consulted SD functional lead provides the peak wave profile, for example, 10,000 deliveries per hour for load testing. 4. Informed warehouse manager monitors the shipping success rate on day 1 to ensure dock flow. Accountability ensures that technical settings do not bottleneck the physical warehouse capacity.
Ownership who actually fixes it.
Resolving this requires a thread and lock audit. 1. The basis lead identifies the hot tables in HANA and increases the number of available enqueue work processes. 2. The technical architect configures block-based processing in transaction VL10 to reduce the number of parallel threads hitting the same document. 3. The ABAP lead refactors delivery baddies to remove any wait statements or unoptimized SQL that extends lock duration. 4. The SD functional lead updates the shipment type configuration to allow for more granular document splitting, reducing lock scope.
How this is actually fixed the right way by a role.
1. Basis lead mandates a concurrency stress test in the sandbox using 100% of the production logistics volume. 2. The team implements number range buffering transaction SNRO for object RV_beleg to prevent serialization bottlenecks. 3. The technical architect utilizes HANA partitioning for large logistics tables to distribute the right load across multiple CPU cores. 4. Functional leads execute peak hour simulation, verifying that 50 concurrent pickers do not trigger system-wide freezes.
What not to do. Common wrong fixes.
1. Do not simply increase the timeout limit. This only makes the system hang longer before it eventually fails. 2. Do not allow users to manually delete locks in transaction SM12 during a mass background run. This will cause data corruption. 3. Do not ignore update terminated errors in the system logs, assuming they are just temporary network glitches. 4. Do not use local update tasks as a shortcut. S/4HANA requires the integrity of the integrated digital core. Shortcuts in lock management result in a permanently unstable and inconsistent logistics subledger.
Follow-up 1. Why is table LIKP more lock-sensitive in S4HANA?
Answer: S/4HANA moved the overall header status fields from the separate table VBUK into the LIKP table. In ECC, a picker could update an item without locking the header status. In S/4HANA, every item confirmation forces an update to the LIKP header record, meaning two pickers cannot work on the same delivery at the exact same time.
Follow-up 2. What is the best number range setting to avoid parallel conflicts?
Answer: you should turn on mainframe-style buffering for the RV_beleg object and set a buffer size of at least 100. This allows each application server to pre-fetch a block of numbers, preventing the system from locking the number range table for every single delivery created.
Follow-up 3. Curveball. What if the PGI technically succeeds in the tables, but the SD goods movement status fails to update because the asynchronous V2 update task was aborted due to a temporary HANA memory spike, resulting in a ghost shipment?
Answer: this is a split brain failure. The stock is gone, but the delivery is open. You must test the update recovery logic. The fix is to implement report WS_CORR_VBUK_VBUP or the S/4HANA equivalent to run every hour. It identifies discrepancies between the material document and the delivery status, forcing a resync. If you miss this, you will double ship the same order when the next warehouse wave picks it up again.
Exclusive pro tip.
On day 1, monitor transaction SM12 filtered by table LIKP. If you see a specific user holding a lock for more than 30 seconds, you have an unoptimized custom baddie. Terminate the session and mandate a code trace immediately to prevent a global system hang.
Scenario 242. Lock escalation during billing.
In the run phase post-go live, organizations often encounter system-wide freezes during mass billing runs. S/4HANA fuses SD billing with the Universal Journal in real time, meaning every invoice save requires an exclusive lock on the financial ledger and the profitability segment tables. If the enqueue server is not tuned, or if custom FI substitutions are inefficient, the system will experience lock escalation, where a single job blocks all other users from saving sales orders or deliveries.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high financial throughput and system availability risk. 2. Phase, run post-go live. 3. Frequency, common in high-volume environments during month-end close. 4. Primary ownership basis lead, the person who owns this and gets fired if it fails. 5. Supporting FICO lead and SD functional lead. 6. Business ownership corporate controller. 7. Relevant SAP note, not applicable basis and code tuning. Required reference SAP note 2349298 for Universal Journal context.
Diagnostic dashboard, symptoms and evidence.
How lock escalation manifests in the live production system. 1. Symptom: users in transaction VA01 report that the save icon spins indefinitely until they receive a timeout error. 2. Red flag: transaction SM12 shows a table overflow warning for the enqueue server during a collective billing run. 3. Business impact: total enterprise paralysis during the last day of the month as the billing tsunami blocks all other modules. 4. Detection: checking transaction SD02 reveals that the enqueue buffer utilization is hitting 100%. 5. Technical proof: database monitors show hundreds of exclusive row locks on table ACDOCA held by a single background billing job. Insight: S/4HANA is a real-time ledger. If your billing run is too aggressive, it will act as a denial of service attack against your own finance core.
Why this happens, scenario analysis and root cause.
1. S/4HANA requires that SD billing and the Universal Journal commit in a single synchronous technical unit to ensure financial integrity. 2. The project team used legacy ECC parallel processing settings that were designed for row-based databases and are too intensive for HANA. 3. Custom FI substitution logic transaction GGB 1 performs sequential checks on a table that is also being updated by the billing run, triggering a deadlock. 4. Failure to scale the in-queue work processes in the SAP kernel to handle the surge in real-time financial commits. The failure is a result of treating a synchronous financial core as a legacy asynchronous batch engine.
Why this is a migration exclusive failure.
1. In ECC, SD and FI updates were often decoupled via V2 updates, allowing the system to absorb locks without impacting other users. 2. S/4HANA migration physically merges these updates into a single V1 task, making the system 100% sensitive to lock duration. 3. The move from costing-based COPA separate tables to margin analysis table ACDOCA concentrates all O2C write load on a single ledger. 4. This failure only surfaces when the new integrated financial digital core encounters the true transactional density of a live enterprise. Migration creates a lock intensity profile that ECC maintenance never approached.
Financial and customer impact.
1. Direct revenue loss if the system hang prevents the sales team from entering orders during a peak holiday or month-end period. 2. Audit risk if the lock overflow results in partial database commits that bypass standard financial validation rules. 3. Increased infrastructure costs as the organization is forced to buy more expensive in-queue server hardware to compensate for bad code. 4. Damaged employee morale as finance and sales teams experience constant frozen screens during the busiest days of the month. Lock escalation failures directly compromise the operational availability of the digital core.
Governance and accountability RACI model.
Securing system availability requires a partnership between basis and finance. 1. Accountable basis lead, the person who owns this and gets fired if it fails. 2. Responsible technical architect optimizes the in-queue server parameters and monitors the lock wait durations. 3. Consulted FICO lead provides the substitution and validation rules for optimization. 4. Informed corporate controller monitors the month-end throughput as a primary indicator of financial close health. Accountability ensures that technical bottlenecks are managed as a corporate risk, not a minor IT ticket.
Ownership who actually fixes it.
Resolving this requires an in-queue and transaction audit. 1. The basis lead identifies the max number of locks /table_size and increases it in the system profile. 2. The technical architect configures logical partitioning for billing jobs, for example, splitting by sales org to reduce lock contention. 3. The FICO lead audits transaction GGB1 to remove any nested loops or custom selects in the financial substitution logic. 4. The ABAP lead refactors any custom billing requirements to ensure they only read the database using primary keys.
How this is actually fixed the right way by a role.
1. Basis lead mandates a stress test simulation in the sandbox using 100% of the production billing volume. 2. The team implements in-queue standalone server ENSA2 to provide the high-performance lock management required for S/4HANA. 3. The FICO team utilizes SAP Note 2349298 to ensure post-conversion accounting settings are optimized for high-volume commits. 4. Functional leads execute month-end drills, verifying that 10,000 invoices can be posted without increasing the in-queue wait time in SD/AD.
What not to do. Common wrong fixes.
1. Do not allow users to restart a hung billing job without checking transaction SM12. You will multiply the locks and crash the system. 2. Do not assume that HANA DB locks are the same as SAP in-queue locks. They are two different technical layers. 3. Do not change the wait for commit parameters to 0. This will cause data corruption in the Universal Journal. 4. Do not allow go live without a mass throughput sign-off for the O2C to FI handshake. Shortcuts in lock management result in a deadlocked enterprise during its most critical hours.
Follow-up 1. What is lock escalation in S/4HANA?
Answer: it occurs when a system cannot manage thousands of individual row locks and attempts to promote them to a table-level lock to save memory. In S/4HANA, if table ACDOCA is locked at the table level by a billing job, no other user in the entire company can post any financial document.
Follow-up 2. What is ENSA2 and why is it recommended for S/4HANA?
Answer: ENSA2 is the standalone in Q-Server 2. It is a new S/4HANA technology that improves lock handling and provides faster failover capabilities. It is essential for multi-server landscapes where mass billing and order entry happen simultaneously.
Follow-up 3 curveball. What if the billing run correctly locks the documents, but the revenue accounting engine fails to post because the S/4HANA contract is locked by an unrelated background job from the RAR module, resulting in a circular deadlock between the sales subledger and the revenue subledger?
Answer: this is a cross-framework deadlock. It happens when SD and RAR are both trying to update the same universal journal row in a different sequence. You must test the update orchestration logic. The fix is to configure the RAR-RI transfer to be asynchronous rather than real-time during mass billing runs. This ensures the invoice posts instantly in SDFI, while the revenue contract is updated seconds later, breaking the circular lock chain and maintaining system-wide availability.
Exclusive pro tip.
On day 1, monitor transaction SM04 for any user with a high memory consumption count. These are the sessions most likely to trigger a lock table overflow. Kill unoptimized reporting sessions immediately during peak billing hours to protect the system's ability to save invoices.
Scenario 243. Custom code performance regressions.
In the run phase post-go live, organizations frequently discover that custom Z reports and interfaces which were efficient in ECC are now causing system-wide performance degradation. S/4HANA runs on a columnar HANA database, which requires a code-to-data paradigm. If legacy ABAP code, specifically in SD pricing routines or delivery exits, still uses unoptimized row-based SQL patterns like nested select loops or select star, the application server will be overwhelmed by data transfer volume, leading to slow response times and frequent session timeouts.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high technical architecture and user productivity risk. 2. Phase, run post-go live. 3. Frequency, extremely common in systems with high levels of legacy customization. 4. Primary ownership, ABAP lead HANA, the person who owns this and gets fired if it fails. 5. Supporting basis lead and SD functional lead. 6. Business ownership, IT transformation director. 7. Relevant SAP note. SAP note 1912445. ABAP custom code migration for SAP HANA.
Diagnostic dashboard, symptoms and evidence.
How custom code regressions manifest in the live production system. 1. Symptom: users report that the billing due list report takes 50 minutes to run, compared to 2 minutes in the legacy system. 2. Red flag: technical traces in transaction SDAD show very low DB request time but extremely high ABAP processing time. 3. Business impact: operational bottlenecks in the sales office as staff wait for reports to finish before they can process daily shipments. 4. Detection: SQL Monitor SQLM identifies specific Z programs that are performing millions of singleton selects against table VBAP. 5. Technical proof: high internal table memory consumption in transaction SD02 caused by fetching thousands of unnecessary columns. Insight: HANA is a Ferrari. If you drive it with the handbrake of legacy, ABAP logic engaged, it will perform worse than a standard car.
Why this happens, scenario analysis and root cause.
1. Legacy ABAP was designed for row store databases where fetching an entire row was standard. HANA is optimized for selecting specific columns. 2. The project team focused on fixing syntax errors that caused dumps but ignored performance warnings in the ABAP test cockpit. 3. Failure to utilize for all entries or database joins, leading to the application layer performing data aggregation that HANA could do in milliseconds. 4. Underestimating the impact of the compatibility view layer, which adds overhead to unoptimized legacy database queries. The failure is a result of treating the migration as a technical conversion rather than a true HANA modernization.
Why this is a migration exclusive failure.
1. ECC row-based databases Oracle or SQL Server were optimized for data to code where all data is brought to the application server for processing. 2. S4 HANA migration moves the system to code to data, where the logic should happen inside the HANA database via CDS views. 3. The physical removal of legacy SD tables like VBUK forces code to run against virtual views, which penalizes unoptimized select statements. 4. This failure only surfaces when the new technical stack encounters the real-world production data volumes of the legacy business. S4 HANA introduces a performance penalty for legacy coding habits that ECC never approach.
Financial and customer impact.
1. Increased infrastructure costs as the organization attempts to buy more CPU and RAM to mask poorly written code. 2. Delayed revenue recognition as month-end margin and reconciliation reports fail to finish within the financial window. 3. Customer frustration as web shop integrations time out while waiting for a price calculation from a slow S4 HANA backend. 4. Loss of ROI as the organization fails to achieve the real-time analytics goal of the S4 HANA business case. Performance regressions directly erode the business value of the digital transformation.
Governance and accountability RACI model.
Ensuring system speed requires a partnership between development and basis leads. 1. Accountable ABAP lead HANA, the person who owns this and gets fired if it fails. 2. Responsible ABAP developer refactors unoptimized Z code using HANA native SQL and CDS views. 3. Consulted basis lead identifies the most resource-intensive programs using SQL monitor data. 4. Informed IT transformation director monitors the system load and user experience KPIs post-go live. Accountability ensures that code quality is managed as a technical discipline, not a post-project afterthought.
Ownership who actually fixes it.
Resolving this requires a trace audit refactor strategy. 1. The ABAP lead utilizes transaction SQLM to find the top 10 programs consuming the most HANA CPU time. 2. The ABAP developer replaces nested select loops with single database joins or core data services CDS views. 3. The technical architect utilizes SAP Note 1912445 to enforce HANA-compliant coding standards across the team. 4. The basis lead monitors memory consumption per user to identify reporting sessions that are fetching too much data into internal tables.
Who gets blamed versus who owns it.
1. Blamed. Basis team. The business assumes the HANA hardware is sized incorrectly. 2. Blamed. SAP users claim S4 HANA is slower than the old system. 3. Actual owner. ABAP lead HANA responsible for the failure to perform a performance-based code audit during the realize phase. 4. Root cause. Maintaining unoptimized row-based ABAP patterns in a modern columnar database environment. System slowness is a coding failure, not a hardware capacity issue.
How this is actually fixed the right way by a role.
1. ABAP lead mandates a zero select star policy for all custom O2C developments. 2. The team implements code pushdown, moving heavy logic from the ABAP layer into the HANA database layer via CDS views. 3. The basis lead applies HANA SQL optimization parameters to ensure the query optimizer chooses the fastest execution path. 4. Functional leads execute volume comparison testing, verifying that Z reports can process 100,000 rows in under 10 seconds.
What not to do. Common wrong fixes.
1. Do not simply add more RAM to the HANA server. Unoptimized code will eventually consume any amount of memory you provide. 2. Do not use dirty reads on internal SAP memory as a workaround for slow database fetches. 3. Do not ignore performance warnings in the ATC check just to pass a transport into production. 4. Do not assume that compatibility views are as fast as native transparent tables for complex custom logic. Shortcuts in code optimization result in a permanently sluggish system that frustrates users.
Follow-up 1. What is the code to data paradigm in S4 HANA?
Answer: it means moving logic from the ABAP application layer to the HANA database layer. Instead of fetching millions of rows to ABAP and then filtering them, you write a CDS view that performs the filter and calculation inside HANA, returning only the final result to the user.
Follow-up 2. Why is select star dangerous on a HANA database?
Answer: HANA is a columnar database. Fetching every column select star forces HANA to read data from every single column location in memory, which is significantly slower than reading just the 5 columns you actually need for your report.
Follow-up 3 Curveball. What if the SQL query is optimized, but the system still hangs because the custom ABAP code performs a sort on an internal table with 10 million rows after fetching the data?
Answer: this is an application layer bottleneck failure. Even with HANA, ABAP memory is finite. You must test the database order by logic. The fix is to use the order by clause in your SQL statement, so the sorting happens inside the HANA engine. If you miss this, you will trigger a memory_low kernel event, freezing the application server for all other users. You must enforce database layer sorting for all high-volume SD reports.
Exclusive pro tip.
Integrate transaction SWLT SQL performance tuning worklist into your SIT phase. It combines ATC findings with actual SQL monitor data to show you exactly which programs are the most expensive to run. Prioritize refactoring based on this actual usage data to maximize your performance ROI.
Scenario 244. Output performance issues.
In the run phase post-go live, organizations often find that document printing and emailing are significantly slower than in ECC. S/4HANA Output Management, based on the BRF Plus framework, utilizes Adobe Document Services and XML-based rendering. If the technical connection between the ABAP core and the Java-based ADS server is not tuned, or if the PDF rendering jobs are serialized, the warehouse will experience massive delays in printing packing lists and bill of ladings, halting the outbound shipment wave.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high communication and technical throughput risk. 2. Phase, run post-go live. 3. Frequency, common in global organizations with centralized document rendering. 4. Primary ownership, basis lead, the person who owns this and gets fired if it fails. 5. Supporting ABAP lead and SD functional lead. 6. Business ownership, customer service manager. 7. Relevant SAP note, not applicable basis and code tuning, required reference SAP note 2228611 for S/4HANA output context.
Diagnostic dashboard, symptoms and evidence.
How output performance bottlenecks manifest in the live system. 1. Symptom. Users report that a sales order saves in 1 second, but the print spooler takes 30 seconds to generate a PDF. 2. Red flag. Technical error logs in transaction SLG1 show ADS connection timeout during peak billing hours. 3. Business impact. Inability to send thousands of invoices to customers on day 1, leading to a direct and immediate cash flow crisis. 4. Detection. Checking transaction APOC_monitor reveals thousands of document items in preparation status for several minutes. 5. Technical proof. High CPU utilization on the NetWeaver Java instance during the execution of the APOC_render_document report. Insight. NAST was a simple write to spool. BRF Plus is a complex Java rendering event. The technology stack is now much heavier.
Why this happens, scenario analysis and root cause.
1. The project team assumed that legacy smart forms would have the same performance footprint when wrapped in the new S/4HANA BRF Plus engine. 2. A lack of connection pooling for the Adobe Document Services ADS RFC destination, leading to serialization of rendering requests. 3. Failure to scale the Java application server threads to match the number of parallel ABAP billing processes. 4. Underestimating the impact of high-resolution logos and images in the new S/4HANA Adobe forms, which increase the XML payload size. The failure is a result of treating output as a functional task rather than an infrastructure throughput task.
Why this is a migration exclusive failure.
1. ECC upgrades never changed the output engine in ST, ensuring that the spooler performance remained constant across versions. 2. S/4HANA migration introduces the choice of BRF Plus, which represents a fundamental shift from ABAP only to a hybrid ABAP and Java stack. 3. The requirement to optimize the XML data provider classes for forms is a unique S/4HANA technical challenge. 4. This failure only surfaces when the new service-oriented output engine encounters the full volume of a production O2C cycle. Migration introduces a rendering bottleneck that legacy ECC spooling never encountered.
Financial and customer impact.
1. Direct impact on day one cash flow as the system fails to transmit invoices, delaying the customer's payment cycle. 2. Operational disruption at the warehouse as trucks are delayed while waiting for mandatory shipping paperwork. 3. Customer disputes increase as strategic buyers receive empty or corrupted PDF attachments due to ADS memory overflows. 4. Increased TCO as the organization is forced into an emergency hardware expansion for the Java application servers. Output failures are the most visible sign to the customer that the migration is unstable.
Governance and accountability RACI model.
Ensuring communication speed requires a link between basis and the O2C team. 1. Accountable basis lead, the person who owns this and gets fired if it fails. 2. Responsible technical architect optimizes the ADS connection pool and the Java thread configuration. 3. Consulted ABAP lead ensures the form data providers are optimized to minimize the XML payload size. 4. Informed customer service manager monitors the communication success rates for key accounts on day one. Accountability ensures that technical latency does not paralyze customer relations.
Ownership who actually fixes it.
Resolving this requires an infrastructure and API audit. 1. The basis lead identifies the response time for the ADS destination in transaction SM59. 2. The technical architect configures asynchronous dispatch for all high-volume billing types in BRF+. 3. The ABAP lead refactors the custom form data providers to remove redundant database selects during the rendering loop. 4. The QA team executes an output stress test, simulating 500 concurrent invoices to measure the Java heap memory peak.
Who gets blamed versus who owns it.
1. Blamed. ABAP developers the business assumes the invoice form is poorly written. 2. Blamed. SAP users claim the new BRF Plus system is slower than the old ECC system. 3. Actual owner, basis lead responsible for the failure to scale the Java stack to handle production rendering volumes. 4. Root cause, treating XML-based PDF rendering as a simple print task rather than a resource-intensive Java event. A slow invoice is a technical throughput failure, not a configuration bug.
How this is actually fixed the right way by a role.
1. Basis lead mandates an ADS tuning sprint, increasing the number of active XML transformation threads in the Java instance. 2. The team implements output scheduling, spreading the rendering load over several hours to avoid peak hour CPU spikes. 3. The SD team utilize SAP Note 2228611 to enable the compatibility layer for low-priority internal documents to save Java resources. 4. Functional leads execute stress tests, proving the system can generate 1,000 PDF documents in under 5 minutes.
What not to do. Common wrong fixes.
1. Do not allow users to manually re-trigger failed outputs multiple times. This creates a self-inflicted denial of service attack on the Java stack. 2. Do not use high-resolution color images or embedded fonts in the new Adobe forms. They significantly increase the XML payload. 3. Do not assume that sandbox printing results are valid for production volume. The Java stack is highly sensitive to concurrency. 4. Do not skip the testing of email versus print timing. Emailing involves an additional SMTP handshake that adds latency. Shortcuts in output performance result in a communication blackout on the most critical day of the project.
Follow-up 1. Why is S/4HANA BRF Plus more resource-intensive than legacy NA ST?
Answer: NA ST was built on procedural ABAP that wrote simple text to a spool table. BRF Plus requires the system to generate a complex XML stream, send it via RFC to a separate Java server, render it into a high-quality PDF, and send it back. This round trip to a different technology stack creates the potential for significant latency.
Follow-up 2. What is transaction APOC_monitor, and why is it essential?
Answer: APOC_monitor is the new S/4HANA output dashboard. It shows every document, its status, and its technical rendering log. If your printing is slow, you can see exactly which stage, data retrieval or Java rendering, is the bottleneck.
Follow-up 3 Curveball. What if the individual rendering is fast, but the mass billing run VF04 for 50,000 customers fails because the Adobe Document Services Java stack becomes fragmented and stops responding after the first 10,000 documents?
Answer: this is a Java heap fragmentation failure. The ADS instance is not releasing memory fast enough between rendering requests. You must test the continuity of rendering. The fix is to tune the ADS destination in transaction SM59 to use persistent connections and to increase the maximum heap size on the Java as. If you miss this, your month-end billing will trigger a Java stack dump, forcing a full system restart and delaying your financial close.
Exclusive pro tip.
Configure a dedicated basis monitor dashboard for Adobe Document Services during your first week live. If the response time for the ADS RFC destination, ADS_RFC, shows an upward trend in latency, your Java stack is fragmenting and must be resized before the afternoon shipping peak.
The universal interview tip. Whenever you ask a tech VP or an industry mentor how to crack a tough interview, they all give you the exact same tip. Get familiar with the most commonly asked interview questions. It sounds simple, right? But here is the problem. The search nightmare. Finding the actual most commonly asked questions for senior roles is a nightmare. Generic Google searches only give you basic textbook definitions, and those will not help you clear a lead architect or senior engineer round where production reality matters. Imagine a master vault. Now, imagine a vault where the absolute most commonly asked interview questions for your specific role are already collected for you, perfectly organized by interview rounds like 1. Most commonly asked technical-based question and answers. 2. Most commonly asked scenario-based question and answers. 3. Most commonly asked real-world problem-solving question and answers. 4. Most commonly asked system design question and answers. 5. Most commonly asked behavioral-based question and answers. Cross-domain mastery. I built the ACE Interviews Master Vault for the modern architect. We did not just do this for one role. We covered everything: SAP, cybersecurity, DevOps, software testing, data engineering, Java, and Python. The ultimate all-access deal. Instead of paying for individual PDFs, you can now unlock our entire database. Get over 1,000 plus PDFs containing 50,000 plus of the most asked question and answers for a mere 1,499 rupees a month. The elite transformation. Stop studying just to pass. Equip yourself with the cross-domain confidence of a true architect and walk out of your next interview choosing between 2 or 3 elite job offers. Unlock the vault now. The era of buying individual guides is over. Click the link in the video description below right now to unlock the Master Vault. Now, let's get back to the Masterclass.
Scenario 245. Order mass change spikes.
In the run phase post-go live, organizations often experience system-wide performance degradation during mass maintenance of sales orders. In S/4HANA, a mass change, such as a price update or a shipping block change via transaction mass or VA05, triggers synchronous updates to the sales header, the universal journal, and the ATP buffer. Because status fields have been moved into the document header, high-volume changes create massive lock contention on table VBAK, leading to session timeouts for regular order entry users.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high system availability and performance risk. 2. Phase, run post-go live. 3. Frequency, common during promotional launches or price revaluation cycles. 4. Primary ownership, basis lead, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and ABAP lead. 6. Business ownership, sales operations director. 7. Relevant SAP note, not applicable basis and code tuning. Required reference SAP note 2227014. For document status context.
Diagnostic dashboard, symptoms and evidence.
How order mass change spikes manifest in the live system. 1. Symptom. Users in the call center report that the system hangs for 30 seconds every time they try to save an individual order. 2. Red flag. Transaction SM12 shows thousands of entries for table VBAK held by a single background user performing a mass update. 3. Business impact. Order entry productivity drops to near zero during mass maintenance windows, leading to lost sales and customer frustration. 4. Detection. The HANA cockpit shows a massive spike in threads in garbage collection during the mass change run. 5. Technical proof. High sequential read and write times on table VBAK observed in transaction SD04. Insight. In S4 HANA, the header is the locking bottleneck. If you change 1,000 items, you are hitting the header 1,000 times.
Why this happens: scenario analysis and root cause.
1. Legacy mass change logic was designed for row store databases, where header updates were relatively lightweight. 2. The project team used default parallelization settings for transaction mass that are too aggressive for the HANA CPU core count. 3. Custom baddies for the sales document save event perform unoptimized queries that extend the duration of the header lock. 4. Failure to implement commit pacing, leading to the HANA database log buffer becoming saturated by a single massive transaction. The failure is a result of treating mass updates as a big bang event rather than a throttled stream.
Why this is a migration exclusive failure.
1. In ECC, document statuses were in separate tables like VBUK, which allowed certain header changes to happen without locking the entire status set. 2. S4 HANA migration physically merges statuses into VBAK, increasing the lock sensitivity of the header record. 3. The move to the Universal Journal adds a mandatory financial validation to every document change that ECC never had. 4. This failure only surfaces when the new integrated core architecture meets the true data density of a production environment. Migration removes the lock buffers that ECC users relied on for 20 years.
Financial and customer impact.
1. Revenue loss as customers abandon orders during system hangs in the web shop or call center. 2. Operational overhead as IT teams must work after hours to perform mass changes that used to be safe during the day. 3. Inaccurate inventory commitments if the mass change crashes halfway through, leaving some orders updated and others in a legacy state. 4. Loss of ROI as the organization fails to achieve the real-time agility promised by S4 HANA. Mass change spikes can effectively act as an internal denial of service attack on your own business.
Governance and accountability RACI model.
Managing mass throughput requires a partnership between basis and sales operations. 1. Accountable basis lead. The person who owns this and gets fired if it fails. 2. Responsible ABAP lead optimizes the custom baddies and mass update interfaces to reduce lock duration. 3. Consulted SD functional lead identifies the peak mass change scenarios and provides the business priority. 4. Informed sales operations director manages the schedule for mass maintenance to avoid peak trading hours. Accountability ensures that technical speed does not come at the cost of system availability.
Ownership who actually fixes it.
Resolving this requires a throttling and optimization strategy. 1. The basis lead increases the HANA and Q work processes and monitors the log writer performance. 2. The ABAP lead refactors any sales order baddie that performs a select star or a nested loop. 3. The technical architect implements chunking in mass update tools, processing data in blocks of 100 instead of 10,000. 4. The SD lead configures server groups to isolate mass update traffic from high-priority Fiori users.
How this is actually fixed the right way by a role.
1. Basis lead mandates a staging system test for any mass change job impacting more than 5,000 records. 2. The team implements HANA hinting in custom SQL to ensure mass updates use the most efficient primary key paths. 3. The ABAP lead utilizes application logging SLG1 to track and optimize the execution time of each update block. 4. Functional leads execute concurrency testing, verifying that a mass price update can run while 10 users enter orders.
What not to do: common wrong fixes.
1. Do not allow users to run transaction mass during peak business hours. It must be a scheduled background activity. 2. Do not disable synchronous updates to speed up the job. You will lose the financial integrity of the Universal Journal. 3. Do not ignore lock table overflow warnings. They indicate that your HANA and Q parameters are dangerously low. 4. Do not assume that faster hardware will solve a logical deadlock caused by unoptimized ABAP code. Shortcuts in mass update management result in a permanently unstable production environment.
Follow-up 1. Why is table VBAK more lock-sensitive in S/4HANA than in ECC?
Answer: S/4HANA moved all status indicators from table VBUK into the VBAK header. In ECC, you could update an item status without locking the header. In S/4HANA, every item change forces an update to the VBAK header record, creating a single point of contention for all users touching that order.
Follow-up 2. What is commit pacing and why is it needed?
Answer: it is the process of breaking a huge transaction into smaller ones. Instead of updating 10,000 orders and committing once at the end, you update 100 orders and commit, then repeat. This releases the database locks and prevents the log buffer from overflowing.
Follow-up 3. Curveball. What if the mass change finishes but the Fiori analytical tiles show the old data for 30 minutes because the CDS cache hasn't been invalidated by the mass update API?
Answer: this is a metadata latency failure. S/4HANA Analytics often use a cache for performance. You must test the invalidation trigger. The fix is to ensure your mass update tool calls the standard document save method, which automatically clears the Fiori cache. If you used a direct SQL or an old BAPI, the analytics will remain stale, leading to management confusion and poor decision-making on day 1.
Exclusive pro tip.
On day 1, monitor transaction DB01 exclusive lock wait. If you see a user waiting more than 2 seconds for table VBAK, identify the mass job and throttle it immediately. Use this data to justify a mandatory mass change schedule for all business units.
Scenario 246. ATP runtime spikes.
In the run phase post-go live, sales reps often report that the availability check in the sales order suddenly takes 20 seconds or more. S/4HANA Advanced ATP or AATP is a memory resident service. If multiple users simultaneously check stock for a hot material, or if the backorder processing or BOP job is running in the background, the AATP engine will experience PSC service contention. This leads to transaction timeouts and 0 confirmed quantities, even when stock is physically available.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high supply chain continuity and HANA performance risk. 2. Phase, run post-go live. 3. Frequency, common in retail, consumer goods, and wholesale industries. 4. Primary ownership, basis lead, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and supply chain architect. 6. Business ownership, supply chain planning director. 7. Relevant SAP note, not applicable basis and code tuning. Required reference SAP note 2321191 for advanced ATP context.
Diagnostic dashboard, symptoms and evidence.
How AATP runtime spikes manifest in the live production system. 1. Symptom: users experience a hang during order entry that eventually returns the message availability check timed out. 2. Red flag: HANA alerts for CPU overload specifically targeting the product availability check or PSC service threads. 3. Business impact: inability to confirm orders during peak morning hours, leading to customer abandoned carts on the web shop. 4. Detection: checking transaction NSILC AATP performance monitor reveals high latency in the requirement evaluation step. 5. Technical proof: logs in the S/4HANA Gateway monitor showing timeout errors for the OData Service API_sales_order. Insight: AATP is faster than ECC, but it is also more greedy for HANA resources. It requires a tuned memory engine.
Why this happens, scenario analysis and root cause.
1. The project team failed to allocate a dedicated HANA service for ATP, causing it to compete with heavy FICO reporting for CPU cycles. 2. Inbound EDI interfaces are triggering synchronous ATP checks for thousands of items at once, overwhelming the PSC buffer. 3. Failure to optimize backorder processing or BOP segments, leading to the engine recalculating stock for stale orders every hour. 4. Underestimating the impact of supply protection or SUP, which adds a complex logic layer to every availability check request. The failure is a result of treating a high-performance engine as a standard legacy background report.
Why this is a migration exclusive failure.
1. ECC ATP was disk-based table VBBE, which was slower but never saturated the HANA calculation engine threads. 2. S/4HANA migration introduces ABAP as the strategic engine, which moves the check entirely into the database RAM. 3. The transition from legacy rescheduling V_V2 to ABAP BOP is a one-time architectural shift unique to the S/4HANA path. 4. This failure only surfaces when the new allocation engine encounters the true concurrency of the live enterprise. Migration introduces a level of engine sensitivity that ECC consultants never had to govern.
Financial and customer impact.
1. Direct revenue loss as sales reps cannot commit to a delivery date, causing customers to cancel high-value orders. 2. Operational paralysis during peak events like Black Friday, resulting in warehouse picking teams having zero orders to process. 3. Increased infrastructure costs as the organization is forced to perform an emergency scale-up of the HANA database nodes. 4. Damaged customer loyalty if the system incorrectly returns out of stock for items that are physically available on the shelf. ABAP runtime failures directly break the promise to the customer and disrupt the revenue forecast.
Governance and accountability RACI model.
Securing the fulfillment speed requires a partnership between basis and planning. 1. Accountable basis lead, the person who owns this and gets fired if it fails. 2. Responsible supply chain architect optimizes the BOP segments and win and gain rules to reduce calculation load. 3. Consulted SD functional lead provides the material priority rules and peak concurrency requirements. 4. Informed IT transformation director monitors the ATP response time as a key go-live success metric. Accountability ensures that technical system limits do not override the business fulfillment strategy.
Ownership who actually fixes it.
Resolving this requires an engine and thread audit. 1. The basis lead identifies the CPU-intensive ABAP checking rules and increases the number of parallel threads in the HANA profile. 2. The supply chain architect refactors the BOP selection to ensure that only critical materials are checked during high-frequency runs. 3. The technical architect utilizes SAP Note 2321191 to apply the latest ABAP performance patches for high concurrency environments. 4. The SD functional lead simplifies the scope of check transaction OPJJ to remove non-essential stock categories.
How this is actually fixed the right way by a role.
1. Basis lead mandates a dedicated ABAP resource pool in HANA, preventing other modules from stealing CPU from the fulfillment engine. 2. The team implements interactive BOP for sales managers to manually resolve high-stakes stock conflicts in real time. 3. ABAP lead refactors the ABAP post-check BATI to ensure zero direct database selects are performed during the check loop. 4. Functional leads execute peak simulation, verifying that 200 concurrent users can perform a stock check in under 1 second.
What not to do common wrong fixes.
1. Do not allow the BOP job to run every 15 minutes for all materials. This will create a permanent background load on the database. 2. Do not disable the advanced features of a TP to fix a performance issue. You are throwing away the core value of S/4HANA. 3. Do not ignore memory peaks in the HANA cockpit. They are the warning signs of an imminent system crash. 4. Do not assume that sandbox ABAP performance is valid for production. Memory resident engines are 100% volume dependent. Shortcuts in ABAP tuning result in a day one fulfillment blackout.
Follow-up 1. What is the PSE service in S/4HANA ABAP?
Answer: PSE stands for Product Availability Check. It is the core HANA service that performs the stock math. In S/4HANA, it uses a technology called ATP buffer to store stock and requirement data in the HANA RAM, enabling sub-second response times for millions of records.
Follow-up 2. How can I identify which material is causing an ATP runtime spike?
Answer: use transaction NSILC and look at the by material statistics. You will often find that a single top seller with thousands of open orders is consuming 90% of the calculation time. You must optimize the checking rule specifically for that material.
Follow-up 3. Curveball. What if the ATP results are fast in the sales order, but the delivery due list VL10 job takes 10 times longer because it is re-triggering a synchronous AATP check for 50,000 items at once, causing a queue depth overflow in the HANA kernel.
Answer: this is a batch handshake failure. S/4HANA automation tools are faster than the underlying database commit limit. You must test the job pacing logic. The fix is to configure the delivery parallelization to limit the number of concurrent AATP calls per second. You must throttle the O2C background automation to match the HANA thread throttling limits to ensure system-wide stability during logistics waves.
Exclusive pro tip.
On day 1, set up an alert for long-running threads in the HANA cockpit filtered by service ATP. If a single thread exceeds 5 seconds, your supply protection rules are likely too complex. Simplify the priority rules immediately to restore order entry speed.
Scenario 247. CDS Analytics Impact Runtime.
On day 1 post-go-live, organizations often find that the real-time reporting promised by S/4HANA comes at a high technical cost. S/4HANA Embedded Analytics utilizes core data services, or CDS views, to read directly from transactional tables. If these analytical views are unoptimized or lack proper filtering, a single executive dashboard refresh can trigger a massive columnar scan on table VBAK, consuming all available HANA CPU and slowing down sales order entry for every user in the company.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high system performance and architectural risk. 2. Phase, run post-go-live. 3. Frequency, common in organizations with heavy Fiori dashboard adoption. 4. Primary ownership, basis lead, the person who owns this and gets fired if it fails. 5. Supporting, analytics lead and ABAP lead. 6. Business ownership, chief data officer. 7. Relevant SAP note, not applicable basis and code tuning. Required reference SAP note 2267306 for analytics context.
Diagnostic dashboard, symptoms and evidence.
How CDS-driven performance spikes manifest in the live system. 1. Symptom, transaction VA01 hangs every time a manager opens the Sales Management Overview Fiori app. 2. Red flag, HANA alerts for CPU saturation specifically in the index server service during peak reporting hours. 3. Business impact, operational order entry is paralyzed by the analytical load, causing a conflict between reporting and execution. 4. Detection, checking transaction MDT_analyze reveals a specific CDS view, for example. C_sales order analytics taking 60 seconds to respond. 5. Technical proof, high memory usage in the HANA database for temporary result sets generated by unfiltered CDS joins. Insight, CDS views are fast, but they are not magic. An unfiltered join of 10 million rows will kill any database.
Why this happens, scenario analysis and root cause.
1. Developers created custom CDS views using select star on transactional tables instead of selecting only required fields. 2. Failure to implement mandatory filters, for example, fiscal year or sales org in the CDS metadata, allowing users to query all history at once. 3. Lack of data aging strategy. The analytical engine is forced to scan 10 years of history to show today's sales. 4. Underestimating the impact of analytical engine overhead, which adds a processing layer between HANA and the Fiori UI. The failure is a result of treating the database as an infinite resource without governing the query complexity.
Why this is a migration exclusive failure.
1. In ECC, reporting was offloaded to BW or performed via LIS tables, protecting the transactional database from reporting spikes. 2. S/4HANA migration brings the reporting load on stack, meaning the sales order and the sales dashboard share the same CPU and memory. 3. The shift from LIS tables S001 and S002 to virtual CDS views is a fundamental change in how analytics consume system resources. 4. This failure only surfaces when real-time embedded analytics are activated on a live HANA production database. Migration removes the barrier between transactional and analytical workloads.
Financial and customer impact.
1. Operational revenue loss as sales reps abandon calls because the system is too slow to respond during order entry. 2. Inaccurate inventory commitments if the system hangs during an AATP check because the database is busy with an analytics query. 3. Increased cloud hosting costs as the organization is forced to pay for a larger HANA instance to handle the unoptimized load. 4. Loss of ROI as the organization disables Fiori dashboards to restore system speed, returning to manual Excel reporting. Analytical spikes can effectively act as an internal denial of service attack on your O2C cycle.
Governance and accountability RACI model.
Securing the digital core requires a partnership between basis and the data lead. 1. Accountable basis lead, the person who owns this and gets fired if it fails. 2. Responsible analytics lead ensures all custom CDS views are performance audited and utilize mandatory filters. 3. Consulted ABAP lead refactors unoptimized CDS joins to use HANA native SQL hints. 4. Informed IT transformation director monitors the system response time as a primary project health KPI. Accountability ensures that business insight does not come at the cost of business execution.
Ownership who actually fixes it.
Resolving this requires a query and filter optimization strategy. 1. The basis lead utilizes the HANA cockpit to identify expensive statements and the specific CDS views triggering them. 2. The analytics lead mandates a maximum runtime for any Fiori tile, for example. No tile should take more than 3 seconds to load. 3. The ABAP lead refactors the CDS DDL source code to use joins on primary keys and removes all non-essential table links. 4. The technical architect implements HANA plan stability to prevent the query optimizer from choosing slow paths under load.
How this is actually fixed the right way by a role.
1. Basis lead mandates a stress test simulation where 50 users refresh a dashboard, while 100 users create sales orders. 2. The team implements parameter-driven CDS views, forcing users to select a date range before any data is retrieved from HANA. 3. The ABAP lead utilizes CDS view extensions to provide regional subsets of data, reducing the volume of each individual query. 4. Functional leads execute volume validation, verifying that the system remains responsive during the morning reporting peak.
What not to do common wrong fixes.
1. Do not simply add more CPU to the database. Unoptimized CDS views will eventually consume any amount of hardware you provide. 2. Do not allow open-ended queries in Fiori. Every analytical app must have a mandatory default filter, for example, current month. 3. Do not ignore statement performance warnings in the HANA logs, assuming they are just post-go-live noise. 4. Do not assumption that HANA is fast enough to handle 10 years of history in every single query. Shortcuts in analytics optimization will result in a sluggish system that users will eventually reject.
Follow-up 1. What is a columnar scan, and why does it impact SD performance?
Answer: in a columnar database like HANA, a query for total sales must scan the entire sales column. If the query is unfiltered, HANA scans millions of rows. While fast, this consumes massive CPU cycles. If many users do this at once, the CPU is starved, and transactional tasks like VA01 must wait in line.
Follow-up 2. How can I identify unoptimized CDS views in S/4HANA?
Answer: you should use transaction MDT_analyze metadata toolkit or the SQL plan cache in HANA Studio. Look for views with high execution count and high CPU time. These are your hot views that must be refactored with mandatory filters or better join logic.
Follow-up 3. Curveball. What if the CDS view is perfectly optimized and has mandatory filters, but it still crashes the system because the Fiori front-end server lacks the memory to process the massive JSON result set being returned by the OData service for a 50,000-line sales report?
Answer: this is a presentation layer overflow failure. Even if the database is fast, the browser and the gateway have limits. You must test the payload limit. The fix is to implement OData paging and client-side filtering to ensure only a few hundred rows are sent to the user at a time. If you miss this, a single user attempting an export to Excel for a huge data set will crash the SAP gateway for everyone, creating a day one outage. You must enforce maximum row limits for all Fiori-based SD reports.
Exclusive pro tip.
Add a reporting schedule to your day one stabilization plan. Request that managers only run heavy historical analytics during off-peak hours, for example, lunch or end of day, until the CDS views have been performance-tuned for the live production volume.
Scenario 248. CPE runtime spikes.
On day one post-go-live, organizations in the commodity or chemicals industries often face critical performance failures during order entry. S/4HANA simplifies the commodity pricing engine, or CPE data model, but the evaluation of complex formulas with high-frequency market data triggers massive runtime spikes. If the custom ABAP routines for CPE were not optimized using code-to-data principles, the pricing engine will saturate the HANA calculation threads, causing sales order sessions to hang or time out during a price change.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high runtime integrity and HANA resource risk. 2. Phase, run post-go-live. 3. Frequency, common in oil and gas, chemicals, and agricultural industries. 4. Primary ownership, ABAP lead HANA, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and basis lead. 6. Business ownership, commodity trading manager. 7. Relevant SAP note. SAP note 22264111 and SAP note 1912445, CPE simplification, and ABAP for HANA.
Diagnostic dashboard, symptoms and evidence.
How CPE performance bottlenecks manifest in the live production system. 1. Symptom. Entering a sales order for a commodity index material causes the GUI to freeze for 20 seconds before displaying a price. 2. Red flag. Technical traces in transaction SDAD show that the CPE engine is performing thousands of sequential reads on the new transparent pricing tables. 3. Business impact. Inability to execute real-time trades or respond to fast-moving market prices, leading to lost revenue and hedging risks. 4. Detection. The HANA cockpit shows high thread contention on the calculation engine, specifically for CPE-related SQL statements. 5. Technical proof. System log errors referencing thread limit reached during a mass index update for commodity prices. Insight. CPE in S/4HANA is mathematically faster, but only if the data access logic uses the native HANA calculation engine.
Why this happens, scenario analysis and root cause.
1. The project team lifted and shifted legacy CPE procedural logic that was designed for row store databases. 2. CPE formulas in S/4HANA require a more efficient set-based evaluation which legacy ABAP loops disrupt. 3. Failure to utilize the CPE buffer, forcing the engine to recalculate complex market averages for every line item in the order. 4. Underestimating the impact of real-time currency and unit conversion on the HANA calculation engine during mass price updates. The failure is a result of treating a high-performance math engine as a simple legacy background task.
Why this is a migration exclusive failure.
1. In ECC, CPE was a procedural engine that handled data in the application server's local RAM. 2. S/4HANA migration moves the CPE data model into transparent tables, forcing the engine to code pushdown for performance. 3. The transition from legacy pricing indices to HANA native CDS views for market data is a unique S/4HANA migration task. 4. This failure only surfaces when the new integrated commodity core encounters the real-world calculation density of a live environment. Migration turns a sequential math task into a parallel database task.
Financial and customer impact.
1. Material loss if hedging decisions are based on stale or incorrect prices due to system latency. 2. Revenue leakage if pricing timeouts result in default or zero prices being applied to high-volume commodity contracts. 3. Operational disruption as sales teams cannot finalize orders during periods of high market volatility. 4. High cost of emergency code refactoring, as developers must rewrite complex formulas in a live system to restore speed. CPE failures directly jeopardize the enterprise's ability to manage commodity risk and profit margins.
Governance and accountability RACI model.
Securing commodity pricing requires an integrated technical and functional guard. 1. Accountable ABAP lead HANA, the person who owns this and gets fired if it fails. 2. Responsible ABAP developer refactors legacy CPE routines to use code-to-data logic and CDS views. 3. Consulted SD and commodity lead provides the complex pricing formulas and market data requirements. 4. Informed. IT transformation director monitors the price calculation time as a key day one health metric. Accountability ensures that functional complexity does not crash the technical digital core.
Ownership who actually fixes it.
Resolving this requires an engine and data audit. 1. The ABAP lead utilized transaction SQLM to identify the specific CPE database queries causing the highest CPU load. 2. The technical architect applies SAP Note 1912445 to optimize the plan stability for commodity index sales tables. 3. The SD functional lead refactors the CPE formulas to ensure they utilize standard SAP pre-calculation results. 4. The basis lead monitors the HANA memory consumption during a mass market data update to prevent system-wide hangs.
How this is actually fixed the right way by a role.
1. ABAP lead mandates a zero-loop select policy for all commodity-relevant custom developments. 2. The team implements HANA native formulas, moving complex math from the ABAP kernel into the HANA calculation engine. 3. The SD team utilized SAP Note 2226411 to ensure the simplified CPE data model is correctly indexed in the new system. 4. Functional leads execute stress testing, verifying that the system can reprice 5,000 contracts in under 10 minutes.
What not to do. Common wrong fixes.
1. Do not allow users to manually hard-code commodity prices to bypass a slow system calculation. This destroys your audit trail. 2. Do not use direct SQL update statements to fix pricing conditions in table PRCD_elements. 3. Do not ignore performance warnings in the CPE log, assuming they will self-heal once the database caches the data. 4. Do not assume that ECC custom CPE reports will work in S4 HANA without a full code rewrite for the new data model. Shortcuts in CPE validation result in an uncontrollable financial risk on day one.
Follow-up 1. What is the primary performance benefit of the new CPE model in S4 HANA?
Answer: the primary benefit is HANA native parallelization. In S4 HANA, the CPE engine can split a complex formula into multiple threads and calculate them simultaneously on different HANA cores, whereas ECC was forced to calculate them sequentially in a single ABAP thread.
Follow-up 2. Why is the CPE buffer so critical for day one stability?
Answer: the buffer stores the results of recent calculations for a specific material and market. If a sales rep enters an order for 100 items of the same commodity, the buffer ensures the system only calculates the price once instead of 100 times, saving 99% of the CPU resources.
Follow-up 3. Curveball. What if the CPE calculation is fast, but the sales order save fails because the price to margin transfer to the Universal Journal ACDOCA triggers a rounding conflict between the CPE high-precision math and the general ledger 2-decimal restriction?
Answer: this is a ledger collision failure. S4 HANA enforces synchronous financial integrity. You must test the financial commit logic. The fix is to implement commercial rounding rule C at the final step of the CPE formula before the data is passed to the FI subledger. If you miss this, you will have financial ghosts, orders that are technically priced correctly but financially unsavable, blocking your entire order to cash pipeline on day one. You must perform a penny variance audit on your top 50 commodity contracts before go live.
Exclusive pro tip.
On day one, monitor transaction CPAREP CPE reporting. If you see a high percentage of in-process records, your calculation engine is bottlenecked. Manually trigger a mass repricing job during lunch hours to clear the calculation queue and restore system speed.
Scenario 249. Revenue recognition runtime spikes.
On day one post-go live, organizations often encounter severe performance degradation during revenue recognition processing. S4 HANA deprecates legacy SD revenue recognition in favor of SAP Revenue Accounting and Reporting, or RER. If the background jobs for processing revenue accounting items, or RAI, are not optimized for the HANA database, the system will experience massive memory consumption and long-running threads. This causes revenue contracts to lag behind the physical shipments, resulting in skewed profit reports and month-end closing delays.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high financial closing and database performance risk. 2. Phase, run post go live. 3. Frequency, common in industries with multi-line subscription or milestone contracts. 4. Primary ownership, FICO lead and revenue accountant, the person who owns this and gets fired if it fails. 5. Supporting ABAP lead and basis lead. 6. Business ownership, corporate controller. 7. Relevant SAP note. SAP note 2267319. S4 TWL revenue recognition engine.
Diagnostic dashboard, symptoms and evidence.
How revenue recognition runtime spikes manifest in the live system. 1. Symptom. The nightly RI processing job transaction FRR_RI_proc runs for 10 hours and eventually fails due to heap memory limits. 2. Red flag high work process consumption for the background user RAR_service during the afternoon sales peak. 3. Business impact, inability to generate real-time margin reports, leading to management blind spots regarding today's profitability. 4. Detection, monitoring table FRR_D_RI_order shows a backlog of millions of unprocessed events from the SD module. 5. Technical proof, HANA alerts for out of memory specifically targeting the revenue accounting calculation threads. Insight, RER is a CPU-hungry engine. If you do not throttle the inbound events, the engine will overheat the database.
Why this happens, scenario analysis and root cause.
1. Legacy SD revenue recognition was account-based and lightweight. SAP RER is event-based and requires complex contract re-evaluations. 2. The project team failed to implement block-wise processing for RAIs, attempting to commit too many contracts in a single technical unit of work. 3. Custom baddies in the RER interface transaction FRR_IMG perform unoptimized database selects, extending the lock time on financial ledgers. 4. Underestimating the impact of contract modifications. Every price change in SD triggers a full reallocation in RER, multiplying the calculation load. The failure is a result of treating a sophisticated financial subledger as a simple data mirroring task.
Why this is a migration exclusive failure.
1. ECC upgrades kept the VBR EV table schedule static, ensuring that the history never impacted the performance of new transactions. 2. S4 HANA migration involves a choice between RER or EBRR, both of which utilize the high-speed HANA engine but require a new data access paradigm. 3. The requirement to process thousands of inception-to-date revenue catch-ups is a one-time stress event unique to the S4 HANA path. 4. This failure only surfaces when the new financial engine encounters the true historical document depth of the production system. S4 HANA forces a revaluation of financial history that legacy ECC never attempted.
Financial and customer impact.
1. Material delay in the quarterly financial close, leading to non-compliance with public reporting regulations. 2. Inaccurate balance sheet reporting of contract assets and liabilities if the system lags in processing fulfillment events. 3. Customer service paralysis as reps cannot confirm if a service milestone has been technically recognized for billing purposes. 4. Loss of ROI as the organization fails to achieve the continuous accounting goal of the S4 HANA business case. Revenue runtime failures directly jeopardize the financial integrity sign off of the enterprise.
Governance and accountability RACI model.
Securing revenue throughput requires a link between finance and technical performance leads. 1. Accountable FICO lead and revenue accountant, the person who owns this and gets fired if it fails. 2. Responsible ABAP lead refactors the custom RI interface logic to ensure HANA native code to data compliance. 3. Consulted basis lead monitors the HANA memory segments and optimizes the background job parallelization. 4. Informed corporate controller manages the month-end closing calendar based on the system performance. Accountability ensures that accounting rules do not exceed the technical limits of the database.
Ownership who actually fixes it.
Resolving this requires an engine and interface performance audit. 1. The ABAP lead utilized transaction SQLM to identify the specific revenue accounting queries causing the highest CPU load. 2. The FICO lead configures processing groups in SAP RAR to distribute the contract calculation load across multiple threads. 3. The technical architect utilizes SAP Note 2267.319 to ensure the latest RAR-specific performance patches are active in the kernel. 4. The basis lead ensures that the HANA log segments are sized correctly to handle the peak volume of financial commits.
How this is actually fixed the right way by a role.
1. FICO lead mandates a data pruning strategy, moving non-essential historical revenue items to a sidecar database to reduce the RAR load. 2. The team implements a synchronous RI transfer, ensuring that the sales order save is not blocked by the revenue engine calculation. 3. ABAP lead refactors any RI baddie that performs direct table selects, moving the data retrieval to the standard RI metadata structures. 4. Functional leads execute mass close simulation, verifying that the system can process 50,000 revenue events in under 1 hour.
What not to do. Common wrong fixes.
1. Do not allow the RI processing job to run every 5 minutes for all objects. This will create a permanent CPU spin in the HANA database. 2. Do not use manual journal entries to bypass a revenue accounting error. You are creating a permanent subledger variance. 3. Do not ignore memory limit warnings in the RI monitor, assuming they are just one-off data issues. 4. Do not assume that event-based revenue recognition, or EBRR, is as lightweight as legacy ECC SD Rev Rec. Shortcuts in revenue performance validation result in a financial hard stop on the first month-end close.
Follow-up 1. What is a revenue accounting item, or RAI, in S/4HANA?
Answer: a RAI is a technical data packet sent from SD to the revenue engine RAR. It contains the transaction event like a shipping or billing event. S/4HANA uses RAIs to decouple the sales process from the complex accounting reallocations, improving the performance of the core order entry.
Follow-up 2. Why is contract modification so expensive in terms of runtime?
Answer: when an order price changes, S/4HANA RAR must reevaluate the entire contract history to ensure the revenue is reallocated fairly across all items according to IFRS 15. This look-back math is CPU-intensive and requires millions of calculations for high-volume documents.
Follow-up 3. Curveball. What if the revenue postings are fast, but the reconciliation report between SD and RAR hangs because of unoptimized HANA joins on table FRR_D_contract?
Answer: this is an analytical metadata failure. Your subledger is healthy, but your auditability is broken. You must test the report extraction throughput. The fix is to implement a summary ledger CDS view or use data aging to move historical contracts to cold storage. If you miss this, you will have invisible revenue. The money is in the bank, but your CFO cannot prove it to the auditors, risking a qualified financial statement.
Exclusive pro tip.
On day 1, monitor transaction FRR_RI_MON specifically for the processing time column. If you see items taking more than 500 milliseconds each, your contract search logic is unoptimized. Add secondary indexes to your RI metadata immediately to restore closing speed.
Scenario 250. Flexible workflow runtime latency.
On day 1 of an S/4HANA Go Live, managers often report that their My Inbox app is incredibly slow or that approval decisions take minutes to commit. S/4HANA replaces legacy procedural workflow with the metadata-driven flexible workflow engine. If custom agent determination baddies perform unoptimized database lookups, or if the task gateway cache is not tuned, the approval process will become a major operational bottleneck, delaying shipments and revenue recognition.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, medium user experience and process velocity risk. 2. Phase, run post go live. 3. Frequency, common in organizations with thousands of daily approval tasks. 4. Primary ownership, workflow developer and Fiori lead, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and basis lead. 6. Business ownership, sales operations manager. 7. Relevant SAP note. Not applicable runtime and workflow design gap reference SAP Note 2198647 for S4 HANA simplification context.
Diagnostic dashboard, symptoms and evidence.
How workflow runtime latency manifests in the live production system. 1. Symptom: a manager clicks approve in Fiori, and the system displays a loading spinner for 30 seconds before the task disappears. 2. Red flag: the My Inbox tile on the Fiori launchpad shows an incorrect count of pending tasks, for example shows 10 but the inbox is empty. 3. Business impact: significant delays in releasing high-value orders, leading to missed carrier appointments and customer frustration. 4. Detection: checking transaction/IWFND/traces reveals high response time for the task gateway service. 5. Technical proof: logs in transaction SWF_process_admin showing workflow instance locked due to slow background updates. Insight: flexible workflow is a web service. If your API response is slow, your business process is slow.
Why this happens: scenario analysis and root cause.
1. Custom agent determination baddies use nested select statements to find the next approver, which is an anti-pattern for HANA. 2. Failure to optimize the task gateway cache. The system is recalculating the entire inbox for every user click. 3. The project team used complex CDS views for workflow start conditions that scan millions of rows of sales history unnecessarily. 4. Underestimating the impact of push notifications, which add a secondary network handshake between S4 HANA and the manager's device. The failure is a result of treating a metadata-driven UI as a simple back-end background task.
Why this is a migration exclusive failure.
1. ECC Business Workflow SWDD ran in a stateful GUI session where the user's connection was already established. 2. S4 HANA Flexible Workflow runs in a stateless web environment, requiring a new technical handshake for every approval action. 3. The shift from BOR objects to ABAP classes for workflow events is a fundamental change unique to the S4 HANA path. 4. This failure only surfaces when the new Fiori-based My Inbox architecture meets the true concurrency of the production management team. Migration introduces a UI latency layer that legacy ECC workflows never encountered.
Financial and customer impact.
1. Operational paralysis as urgent customer shipments are delayed by hours while waiting for a system spinner to clear. 2. Reduced manager productivity as they spend 20% of their day waiting for the Fiori inbox to refresh. 3. Risk of approval bypass as users find manual workarounds to ship goods because the system is too slow to use. 4. High support costs as IT teams must manually trace and clear stuck workflow instances during the stabilization phase. Workflow latency directly compromises the agility promised by the S4 HANA digital transformation.
Governance and accountability RACI model.
Securing process speed requires a partnership between UX and development leads. 1. Accountable workflow developer and Fiori lead, the person who owns this and gets fired if it fails. 2. Responsible ABAP developer refactors the custom agent baddies to use HANA-optimized CDS views. 3. Consulted SD functional lead provides the acceptable approval time, for example under 2 seconds for validation. 4. Informed IT transformation director monitors the workflow completion time as a primary user adoption KPI. Accountability ensures that technical overhead does not destroy the user experience.
Ownership: who actually fixes it.
Resolving this requires a gateway and baddie performance audit. 1. The Fiori lead identifies the service latency in transaction/IWFND/main_service for the task gateway. 2. The ABAP developer replaces legacy agent determination SQL with direct reads from the S4 HANA team and responsibility management tables. 3. The technical architect utilizes SAP Note 2198647 to optimize the workflow scenario buffering settings. 4. The basis lead increases the gateway thread count to handle the peak morning approval tsunami.
How this is actually fixed the right way by a role.
1. Fiori lead mandates the use of gateway caching for the My Inbox app, reducing database calls by 70%. 2. The team implements parallel agent determination, allowing the system to find 10 approvers in a single asynchronous thread. 3. ABAP Lead utilizes HANA SQL hints in the workflow CDS views to prioritize the header search over historical items. 4. Functional leads execute device testing, verifying that approvals work instantly on both desktop and the SAP mobile Start app.
What not to do common wrong fixes.
1. Do not tell managers to just use the legacy SAP GUI inbox. This destroys the Fiori first strategy and creates data silos. 2. Do not disable start conditions to speed up the workflow. You are removing the mandatory financial controls. 3. Do not ignore Fiori console errors in the browser. They often point to a technical timeout that Basis can fix. 4. Do not assume that sandbox workflow speed is valid for production. 500 concurrent approvers are different than 1. Shortcuts in workflow performance result in a management team that rejects the new system on day 1.
Follow-up 1. Why is the task gateway so critical for S/4HANA workflows?
Answer: the task gateway is the technical translator that takes back-end workflow events and turns them into OData for the Fiori app. If this gateway is untuned, it becomes the middleman bottleneck, adding seconds of latency to every user interaction.
Follow-up 2. What is team and responsibility management in S/4HANA?
Answer: it is a new framework that replaces legacy Agent Z tables. It uses HANA-optimized tables to find approvers based on sales org or customer group in milliseconds, providing the speed needed for the flexible workflow engine.
Follow-up 3. Curveball. What if the workflow is fast, but the My Inbox tile shows an outdated count for 5 minutes due to untuned gateway caching, causing managers to wait for tasks that are already there?
Answer: this is a cache staleness failure. S/4HANA uses pull notifications for the tile count. You must test the invalidation interval. The fix is to configure the OData soft state and notification channel via SAP Note 2198647 to ensure the tile count is refreshed every 30 seconds. If you miss this, you will have idle managers, people who are ready to approve but do not see the work, paralyzing your day 1 shipping wave.
Exclusive pro tip.
On day 1, monitor transaction SWF_flex_activate for any scenarios with activation errors. A partially active scenario will create documents that are permanently stuck in approval pending without an owner. Reinitialize the task buffer immediately if you see a backlog of unassigned items.
Section 12. Wrap up. HANA performance incidents.
Section 12 has debunked the myth that the HANA database is an infinite resource. We analyzed how unoptimized legacy ABAP code, lock escalations in the Universal Journal, and unfiltered CDS views can paralyze even the fastest hardware. The takeaway is that performance in S/4HANA is an architectural discipline. If you do not adopt the code to data paradigm and optimize your technical commits, your digital core will remain sluggish regardless of your server size.
The universal interview tip. Whenever you ask a tech VP or an industry mentor how to crack a tough interview, they all give you the exact same tip. Get familiar with the most commonly asked interview questions. It sounds simple, right? But here is the problem. The search nightmare. Finding the actual most commonly asked questions for senior roles is a nightmare. Generic Google searches only give you basic textbook definitions, and those will not help you clear a lead architect or senior engineer round where production reality matters. Imagine a master vault. Now, imagine a vault where the absolute most commonly asked interview questions for your specific role are already collected for you, perfectly organized by interview rounds like 1. Most commonly asked technical-based question and answers. 2. Most commonly asked scenario-based question and answers. 3. Most commonly asked real-world problem-solving question and answers. 4. Most commonly asked system design question and answers. 5. Most commonly asked behavioral-based question and answers. Cross-domain mastery. I built the ACE Interviews Master Vault for the modern architect. We did not just do this for one role. We covered everything: SAP, cybersecurity, DevOps, software testing, data engineering, Java, and Python. The ultimate all-access deal. Instead of paying for individual PDFs, you can now unlock our entire database. Get over 1,000 plus PDFs containing 50,000 plus of the most asked question and answers for a mere 1,499 rupees a month. The elite transformation. Stop studying just to pass. Equip yourself with the cross-domain confidence of a true architect and walk out of your next interview choosing between 2 or 3 elite job offers. Unlock the vault now. The era of buying individual guides is over. Click the link in the video description below right now to unlock the Master Vault. Now, let's get back to the masterclass.
Transition to Section 13, Security and Authorization Incidents.
A high-performing system is useless if your users cannot access it, or worse, if they can access data they are not supposed to see. In Section 13, we move into the governance layer. We will analyze the security and authorization incidents that occur when legacy ECC roles clash with the new S/4HANA Fiori and business partner security models. This is where we ensure the system is not only functional, but also compliant and secure.
Section 13, Security and Authorization Incidents.
Section 13 addresses the risk of failed access control. In S/4HANA, security is a multi-dimensional challenge involving traditional PFCG roles, new business partner roles, OData service activations, and CDS-level data control language or DCL. We will examine why users often find themselves with blank launchpads on day one, and how the move to the digital core creates new segregation of duties conflicts that were invisible in the legacy ECC environment.
Section 13, Incident List, Security and Authorization.
The following incidents represent the governance and access risks in S/4HANA. Scenario 251, BP authorization gaps. Relevant SAP note, not applicable security and role redesign gap. Scenario 252, CDS authorization missing. Relevant SAP note, not applicable security and role redesign gap. Scenario 253, Fiori catalog gaps. Relevant SAP note, not applicable security and role redesign gap. Scenario 254, segregation of duties conflicts. Relevant SAP note, not applicable security and role redesign gap. Scenario 255, pricing condition authorization changes. Relevant SAP note, not applicable security and role redesign gap. Scenario 256, credit authorization differences. Relevant SAP note, not applicable security and role redesign gap. Scenario 257, workflow authorization failures. Relevant SAP note, not applicable security and role redesign gap. Scenario 258, revenue contract authorization gaps. Relevant SAP note, not applicable security and role redesign gap. In S/4HANA, security is no longer just about T-codes. It is about services and data access.
Scenario 251, BP authorization gaps.
On day one post-go-live, users often find they can no longer maintain customer master data. In ECC, access was controlled by the object v_KNA1_VKO. S/4HANA mandates the business partner model, which introduces new non-SD authorization objects like b_bupa_grp and b_bupa_RLT. If the security team migrated legacy roles without adding these mandatory business partner objects, sales reps will be blocked from updating addresses or tax IDs, halting the creation of new sales orders.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, medium security governance and operational continuity risk. 2. Phase, run post-go-live. 3. Frequency, extremely common in brownfield conversions. 4. Primary ownership, SAP security and GRC lead, the person who owns this and gets fired if it fails. 5. Supporting MDM lead and SD functional lead. 6. Business ownership, master data governance manager. 7. Relevant SAP note, not applicable security and role redesign gap. Reference SAP note 2265093 for business partner context.
Diagnostic dashboard, symptoms and evidence.
How BP authorization gaps manifest in the live production system. 1. Symptom, users receive the error no authorization to maintain business partner in role FLCU01 when using transaction BP. 2. Red flag, sales reps can view customer data but the edit button is grayed out despite having legacy maintenance roles. 3. Business impact, total halt in new customer acquisition on day one as master data teams cannot finalize the business partner setup. 4. Detection, transaction SU53 for affected users shows multiple failures for objects starting with B_bupa_. 5. Technical proof, Mismatches in table AGR_1251, where legacy O2C roles are missing the required S/4HANA master data objects. Insight. Business partner security is cross-modular. You need permission for the partner before the customer.
Why this happens: scenario analysis and root cause.
1. The security team treated the migration as a technical role copy, ignoring that the T-code redirection to BP bypasses many legacy checks. 2. Failure to define BP grouping authorizations, which act as a secondary security gate for different customer categories. 3. Legacy SD roles only included customer objects, but S/4HANA requires general partner and role-specific objects to save any record. 4. Underestimating the impact of contact person security. ECC handled contacts as table entries. S/4HANA handles them as separate business partners. The failure is a result of treating S/4HANA security as a one-to-one map of ECC, rather than a new permission framework.
Why this is a migration exclusive failure.
1. ECC upgrades never change the fundamental customer master security objects v_KNA1_VKO. 2. S/4HANA migration physically redirects XD01 and VD01 to the BP transaction, which uses an entirely different authorization stack. 3. The requirement to synchronize customer account groups with BP grouping authorizations is a unique S/4HANA hurdle. 4. This failure only surfaces when the new business partner digital core is first touched by a restricted business user. Migration turns a stable permission set into a governance gap.
Governance and accountability RACI model.
Securing master data requires a partnership between GRC and MDM. 1. Accountable SAP security and GRC lead, the person who owns this and gets fired if it fails. 2. Responsible security administrator performs the PFCG role updates and adds the new B_BUPA objects. 3. Consulted MDM lead provides the mapping between ECC account groups and S/4HANA BP groupings. 4. Informed global sales director monitors the master data backlog as a primary day one operational metric. Accountability ensures that system lockdown does not become business lockdown.
Ownership who actually fixes it.
Resolving this requires a role enrichment strategy. 1. The security lead identifies all roles containing legacy customer objects like v_KNA1_VKO and v_KNA1_GRP. 2. The security administrator utilizes transaction SU24 to find the new S/4HANA BP prerequisites for the BP transaction. 3. The MDM lead validates that BP role assignments, for example FLCU00 for FI and FLCU01 for SD, are correctly included in the user's profile. 4. The QA team executes persona testing, ensuring a sales rep can maintain an address but cannot change a credit limit.
How this is actually fixed the right way by a role.
1. SAP security lead mandates a security SIT, where users test with their actual roles instead of SAP_all. 2. The team implements composite roles that combine legacy SD permissions with the new mandatory BP objects. 3. The MDM team utilized transaction BUSD to ensure the BP view visibility is aligned with the user's functional role. 4. Functional leads execute first-day smoke tests, verifying that a new customer can be created from scratch in under 2 minutes.
What not to do: common wrong fixes.
1. Do not grant B_BUPA_GRP with asterisk values to all users on day 1 to bypass errors. This creates a massive security breach. 2. Do not allow users to revert to legacy XD01/VD01. These transactions are technically redirected and will still fail on the same BP objects. 3. Do not ignore authorization trace results in ST01, assuming they are just post-go-live noise. 4. Do not assume that customer and vendor roles can be managed by the same security objects in S/4HANA. Shortcuts in BP security result in a permanent audit violation that will haunt the GRC team.
Follow-up 1. What are the 2 most important BP authorization objects for SD?
Answer: they are B_BUPA_GRP authorization groups and B_BUPA_RLT BP roles. Without B_BUPA_GRP, you cannot touch the record at all. Without B_BUPA_RLT, you cannot access the Sales and Distribution Data tab role FLCU01 within the BP transaction.
Follow-up 2. How does S/4HANA handle contact person security differently than ECC?
Answer: in ECC, contact persons were table entries in KNVK. In S/4HANA, every contact person is a separate business partner ID. This means you need authorizations for the relationship object B_BUPR_REL and the contact person's own BP record to maintain the link.
Follow-up 3 curveball. What if the user has full BP authorizations, but the sales order save still fails because the background CVI synchronization attempts to update a table that the user's legacy SD role does not have change access for?
Answer: this is a cross-object synchronization failure. In S/4HANA, the BP save triggers a background update to table KNA1. If your role design separated BP from customer maintenance too strictly, the user might have changed for BP but only display for customer. You must test the handshake integrity. The fix is to ensure the user has activity 02 for both B_BUPA_RLT and V_KNA1_VKO to allow the CVI engine to finalize the database commit on day 1.
Exclusive pro tip.
On day 1, monitor transaction SU53 specifically for object B_BUPA_RLT. If you see a spike in failures, your role definition for the sales team is missing the mandatory FLCU01 role. Add it to the composite roles immediately to restore customer maintenance.
Scenario 252. CDS authorization missing.
On day 1 post-go live, internal auditors often discover that sales reps can see sensitive pricing and margin data across all global regions. S/4HANA Embedded Analytics utilizes CDS views that do not automatically inherit legacy PFCG authorizations. If the development team failed to implement data control language or DCL files for custom O2C dashboards, the system will bypass row-level security, leading to a massive data privacy breach and corporate policy violations.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high data privacy and regulatory compliance risk. 2. Phase, run post-go live. 3. Frequency, common in organizations with custom Fiori and SAC analytics. 4. Primary ownership, SAP security and GRC lead. The person who owns this and gets fired if it fails. 5. Supporting ABAP lead and analytics lead. 6. Business ownership, data privacy officer. 7. Relevant SAP note, not applicable security and role redesign gap reference SAP note 2267306 for analytics context.
Diagnostic dashboard, symptoms and evidence.
How CDS authorization gaps manifest in the live production system. 1. Symptom. A local sales manager for North America opens a Fiori dashboard and can see the gross margin for Europe and Asia. 2. Red flag, CDS view definitions contain the annotation at access control. Authorization check, #not_ required for financial data. 3. Business impact, significant breach of internal need to know policies, potentially leading to competitive data leakage within the company. 4. Detection, comparing the results of a custom Fiori report against a legacy SAP GUI report like VA05 reveals a difference in record counts. 5. Technical proof, errors in the access control trace showing that the user's PFCG roles are being ignored by the SQL engine. Insight in S/4HANA, a CDS view without a DCL, is an open window into your most sensitive database tables.
Why this happens, scenario analysis and root cause.
1. Developers focus on the logic of the report but treat security as a separate task for the GRC team, who often do not understand CDS syntax. 2. A lack of awareness that S/4HANA analytics do not automatically use the authority check statements from legacy ABAP code. 3. Pressure to deliver fast analytics results leads teams to use #not_ required as a shortcut to bypass access denied errors during development. 4. The security team is not trained on data control language and continues to rely on legacy PFCG trace methods, which are blind to DCL. The failure is a result of an architectural gap between the development layer and the governance layer.
Why this is a migration exclusive failure.
1. In ECC, reporting was predominantly based on ABAP reports where row-level security was manually coded into the start of selection. 2. S/4HANA migration introduces direct database access via CDS views, pushing the security check from the application layer to the HANA database layer. 3. The requirement to write DCL roles for every custom view is a unique architectural task of the S/4HANA transition. 4. This failure only surfaces when the organization enables embedded analytics for a live production user base. Migration removes the code-level security gate, requiring a new database-level gate.
Financial and customer impact.
1. Material risk of insider trading or data theft if sensitive margin and pricing data is visible to unauthorized employees. 2. Potential GDPR or data privacy fines if personally identifiable information in sales orders is exposed via unfiltered views. 3. Failed external audits, leading to a loss of corporate SOX compliance certification. 4. Loss of ROI as the company is forced to disable analytical apps until the security can be correctly implemented. CDS authorization gaps directly compromise the data governance integrity of the enterprise.
Governance and accountability RACI model.
Securing analytical views requires an integrated DevSecOps approach. 1. Accountable SAP security and GRC lead, the person who owns this and gets fired if it fails. 2. Responsible ABAP lead ensures that every custom CDS view has a corresponding and active DCL file. 3. Consulted data privacy officer defines the organizational level sales org plant that must be secured at the row level. 4. Informed IT transformation director monitors the security audit results for the new digital core. Accountability ensures that security is a mandatory part of the definition of done for all analytics.
Ownership who actually fixes it.
Resolving this requires a database-level security audit. 1. The security lead identifies all custom CDS views and checks their access control annotations in transaction SC80. 2. The ABAP lead implements DCL files data control language that utilize the aspect PFCG_auth to link to the user's roles. 3. The SD functional lead provides the specific organizational attributes VKORG, VTWEG that must trigger the data filter. 4. The technical architect performs a security stress test, logging in as different regional users to verify data masking.
How this is actually fixed the right way by a role.
1. SAP security lead mandates a zero open view policy, where all analytical views must have an active DCL. 2. The team implements row-level filtering inside the HANA database, ensuring that unauthorized data never even reaches the Fiori UI. 3. ABAP lead refactors unoptimized DCL logic to ensure that security checks do not impact the 1-second response time requirement. 4. Functional leads execute persona validation, verifying that a sales rep can only see orders for their assigned customer group.
What not to do. Common wrong fixes.
1. Do not use #not_ required for any view that contains financial, pricing, or customer-sensitive data. 2. Do not rely on Fiori app-level security tiles to protect data. If the CDS view is open, a user can still access it via Excel. 3. Do not hardcode sales organization filters into the CDS view itself. This makes the view unreusable and hard to maintain. 4. Do not ignore authorization failures during SIT, assuming the GRC team will fix it in prod. Shortcuts in CDS security result in a permanent data privacy loophole.
Follow-up 1. What is a DCL and why is it needed for CDS views?
Answer: DCL stands for Data Control Language. It is a separate technical object that acts as the security guard for a CDS view. While the CDS view defines what data to show, the DCL defines who can see which rows based on their PFCG authorizations.
Follow-up 2. Can I use legacy PFCG roles to control CDS access?
Answer: yes. The DCL is designed to check the user's existing PFCG roles like V_VBK_VKO. It effectively reuses your legacy security design, but applies it at the HANA database level for high-speed analytical filtering.
Follow-up 3. Curveball. What if the DCL correctly filters the data in the Fiori dashboard, but the user can still see the unauthorized margins by using the Export to Excel feature in a standard S/4HANA O data service that bypasses the DCL check due to an incorrect at metadata.allow extensions annotation?
Answer: this is a metadata loophole failure. Some S4HANA services can bypass DCL if the analytical flags are not set correctly. You must test the export chain. The fix is to ensure the OData service is defined as analytical and that the DCL is inherited by the service metadata. If you miss this, you will have data extraction leaks, your screen looks secure, but your Excel downloads are unfiltered, creating a massive regulatory compliance risk on day one.
Exclusive pro tip.
Add a DCL check to your automated transport release process. If a CDS view is transported without a corresponding DCL object, the transport should be blocked by the GRC gatekeeper. Never allow an unguarded view to reach the production environment.
Scenario 253, Fiori catalog gaps.
On day one of an S4HANA Go Live, users often log in to find a blank Fiori launchpad or missing tiles for critical tasks like create sales orders. While legacy ECC roles provided access to T-codes, S4HANA security requires the assignment of Fiori catalogs for app visibility and OData services for data retrieval. If the security team failed to map every business process to its corresponding technical catalog during the realize phase, the organization will face a total operational standstill, despite the backend being technically ready.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, medium user access and productivity risk. 2. Phase, run post go live. 3. Frequency, extremely common in projects moving to Fiori first operations. 4. Primary ownership, SAP security and GRC lead. The person who owns this and gets fired if it fails. 5. Supporting Fiori and UX lead and SD functional lead. 6. Business ownership, sales operations manager. 7. Relevant SAP note, not applicable security and role redesign gap. This is a security governance failure.
Diagnostic dashboard, symptoms and evidence.
How Fiori catalog gaps manifest in the live production system. 1. Symptom. Users report that the Fiori launchpad is empty or missing specific apps required for their daily O2C routine. 2. Red flag, technical error logs in the browser console showing 404 not found for specific SAP UI5 component IDs. 3. Business impact. Call centers and warehouses are unable to process transactions, leading to immediate revenue loss on day one. 4. Detection. Checking the app finder in Fiori shows 0 results for standard SD apps like managed sales orders. 5. Technical proof. Mismatches in table AGR_catalogs where PFCG roles are missing the technical link to the S4HANA business catalogs. Insight. A user without a catalog is a user without a system. In S4HANA, visibility is the first gate to execution.
Why this happens, scenario analysis and root cause.
1. The security team focused on backend T-codes, but ignored the front-end catalogs required for the Fiori web interface. 2. Failure to utilize the SAP Fiori Launchpad Content Manager to verify that assigned catalogs contain active and valid apps. 3. Mismatch between technical catalogs owned by SAP and business catalogs customized for the organization. 4. The project team tested with SAP_all during SIT and UAT, masking the fact that specific catalog assignments were missing. The failure is a result of treating Fiori as an optional UI rather than the mandatory entry point of the digital core.
Why this is a migration exclusive failure.
1. ECC security was one-dimensional PFCG roles for T-codes. S4HANA security is three-dimensional roles, catalogs, and services. 2. S4HANA migration involves a UI transformation that requires a 100% redesign of how users navigate the system. 3. The technical requirement to activate OData services for every Fiori app is a unique task of the S4HANA migration lifecycle. 4. This failure only surfaces when the organization attempts to operate the system through a web browser on day one. Migration introduces a UI security layer that legacy ECC security teams have never managed before.
Financial and customer impact.
1. Revenue loss as sales reps cannot enter orders, leading to missed shipping windows and potential customer penalties. 2. Inaccurate inventory reporting if warehouse staff cannot access Fiori apps to confirm picking and packing. 3. High operational costs as a security war room must be established to manually patch thousands of user roles. 4. Loss of management trust as the expensive S/4HANA system appears broken to the end users on the first. Catalog gaps turn a high-tech migration into a manual business crisis.
Governance and accountability RACI model.
Securing user access requires a partnership between security and UX leads. 1. Accountable SAP security and GRC lead. The person who owns this and gets fired if it fails. 2. Responsible security administrator performs the PFCG role updates and assigns the business catalogs. 3. Consulted Fiori and UX lead provides the technical mapping of apps to catalogs and groups. 4. Informed IT transformation director monitors the user login success rate as a primary go-live health metric. Accountability ensures that system up actually results in system accessible.
Ownership who actually fixes it.
Resolving this requires a technical catalog audit and role reconciliation. 1. The security lead identifies all missing catalogs using the Fiori Launchpad Content Manager transaction /UI2/FLPCM_cust. 2. The Fiori lead ensures that the underlying OData services transaction /IWFND/main_service are activated in the production client. 3. The SD functional lead validates the app to persona mapping to ensure each user sees the correct tiles for their job function. 4. The technical architect performs a role simulation test, logging in as a restricted user to verify Launchpad visibility.
Who gets blamed versus who owns it.
1. Blamed Fiori team. The business assumes the apps are broken. 2. Blamed SAP users claim the Launchpad technology is unreliable. 3. Actual owner SAP security and GRC lead responsible for the failure to perform a realistic persona-based security UAT. 4. Root cause treating Fiori security as a technical afterthought rather than a core O2C requirement. If a user cannot see the tile, the migration has failed from their perspective.
How this is actually fixed the right way by a role.
1. SAP security lead mandates a 0 SAP_all policy for the final UAT cycle to identify catalog gaps early. 2. The team implements standard SAP business roles as a baseline and only adds custom catalogs for unique Z transactions. 3. The Fiori lead utilizes Rapid Activation Tasks transaction SDC01 to ensure all standard SD catalogs are technically sound. 4. Functional leads execute first-day persona checks, verifying that the top 5 job roles have 100% app visibility.
What not to do. Common wrong fixes.
1. Do not allow users to customize their own launchpads to find missing apps. The catalogs must be assigned at the role level. 2. Do not ignore 403 forbidden errors in the browser, assuming they are network glitches. They are authorization gaps. 3. Do not assume that T-code access in SAP GUI automatically grants app access in Fiori. 4. Do not allow go live without a persona-based visibility sign-off for every major O2C job function. Shortcuts in catalog management lead to a day 1 user rejection of the new system.
Follow-up 1. What is the difference between a Fiori catalog and a Fiori group?
Answer: a catalog is the security container. It defines which apps a user is authorized to see. A group is the layout container. It defines how those apps are organized on the user's home screen. You can have access to an app in a catalog, but if it is not in a group, you must search for it in the App Finder.
Follow-up 2. What is the best tool to find missing S/4HANA security objects?
Answer: you should use the Fiori Apps Library online to find the technical catalog and OData service for any app. In the system, use transaction /UI2/FLPCM_cust Launchpad Content Manager to check for missing assignments in your PFCG roles.
Follow-up 3. Curveball. What if the user has the correct catalog and group, but the tile shows a cannot load tile error because the OData service was activated in the backend system, but the ICF node was not activated in the front-end gateway?
Answer: this is a split stack activation failure. S/4HANA requires a two-key activation. You must test the gateway link. The fix is to use transaction SICF on the front-end server to activate the specific service node. If you miss this, your roles will be correct, but the UI will remain dead, causing a total day 1 Fiori blackout.
Exclusive pro tip.
1 week before go live, ask 3 users from different departments to log in to the Fiori Launchpad in the quality system. If they cannot find their primary daily task within 3 clicks, your catalog and group design is flawed and must be simplified immediately.
Scenario 254. Segregation of duties conflicts.
On day 1 post-go live, organizations often discover that their legacy segregation of duties or SOD controls are bypassed by the new S/4HANA business partner model. In ECC, maintaining customers' SD and vendors' MM were separate functions with different security objects. Because S/4HANA consolidates these into the single BP transaction, a user who could previously only create customers may now also have the permission to create vendors or manage their own credit limits, creating a major financial audit and fraud risk.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high financial compliance and internal control risk. 2. Phase, run post-go live. 3. Frequency, common in organizations moving to the unified business partner model. 4. Primary ownership, SAP security and GRC lead. The person who owns this and gets fired if it fails. 5. Supporting FICO lead and SD functional lead. 6. Business ownership, internal audit director. 7. Relevant SAP note, not applicable security and role redesign gap. This is a governance and role logic failure.
Diagnostic dashboard, symptoms and evidence.
How SOD conflicts manifest in the live production system. 1. Symptom. A user in the sales department is found to have maintained bank details for a vendor ID that is linked to their own employee record. 2. Red flag. The GRC Access Risk Report shows a 300% increase in conflicts for users who were migrated with legacy ECC roles. 3. Business impact. Significant audit findings, and the potential for internal fraud as the system fails to enforce the 4 I's principle. 4. Detection. Checking table BUT000 reveals business partners with both customer and vendor roles managed by a single user ID. 5. Technical proof. Overlapping authorizations for the S/4HANA object B_BUPA_RLT, allowing access to both SD and FIAP roles. Insight. Consolidating master data into one transaction, BP, creates a governance vacuum if your roles are not redesigned.
Why this happens, scenario analysis and root cause.
1. The security team used T-code-based SOD rules that were blind to the fact that XD01 and XK01 are now both handled by transaction BP. 2. Failure to implement field-level or role-level security within the business partner framework to separate SD and MM functions. 3. Legacy SD roles contained wide-open master data objects that were safe in ECC, but provide excessive power in the S/4HANA BP model. 4. The project team failed to update the corporate GRC rule set to account for the new S/4HANA security objects like B_BUPA_GRP. The failure is a result of treating the business partner model as a technical change rather than a governance shift.
Why this is a migration exclusive failure.
1. ECC upgrades never merge the customer and vendor master data, so SOD boundaries remained physically separated by different tables and screens. 2. S/4HANA migration forces the one transaction BP architecture, which is a fundamental change in the internal control landscape. 3. The requirement to map legacy customer and vendor permissions into a single BP role set is a unique S/4HANA migration hurdle. 4. This failure only surfaces when the organization attempts to audit the new unified master data landscape. S/4HANA migration creates a security collision that ECC upgrades never encountered.
Financial and customer impact.
1. Increased risk of fake vendor fraud where employees can create themselves as partners and trigger payments. 2. Material weakness findings in external financial audits, leading to loss of corporate certification and investor trust. 3. Operational disruption if the internal audit team forces an emergency lockdown of the master data team post-go live. 4. Inaccurate financial reporting if users with sales and finance roles bypass intercompany elimination controls. SOD conflicts directly compromise the financial integrity of the enterprise digital core.
Governance and accountability RACI model.
Ensuring corporate compliance requires an integrated audit and security authority. 1. Accountable SAP security and GRC lead, the person who owns this and gets fired if it fails. 2. Responsible security administrator redesigns the PFCG roles to enforce role-based BP security. 3. Consulted internal audit director provides the conflict matrix for the new S/4HANA processes. 4. Informed CFO monitors the residual risk levels in the financial subledgers post-migration. Accountability ensures that technical consolidation does not lead to financial deregulation.
Ownership who actually fixes it.
Resolving this requires an S/4HANA-ready security redesign. 1. The security lead identifies all users with overlapping FLCU customer and FLVN vendor roles in table AGR_users. 2. The GRC lead updates the access risk rule set to include S/4HANA specific objects like B_BUPA_RLT and B_BUPA_GRP. 3. The SD functional lead validates that sales reps only have access to BP roles relevant for order to cash. 4. The technical architect implements field-level UI masking to hide financial bank details from non-FICO users within the BP transaction.
Who gets blamed versus who owns it.
1. Blamed SD lead. The auditors assume the functional design allowed the conflict. 2. Blamed SAP users claim the BP model is inherently insecure. 3. Actual owner SAP security and GRC lead responsible for the failure to update the access risk rule set for S/4HANA. 4. Root cause, treating S/4HANA as a simple technical upgrade rather than a fundamental change in internal controls. If a user has too much power, the role design is the root cause.
How this is actually fixed the right way by a role.
1. SAP security lead mandates a clean slate role redesign during the realize phase, abandoning legacy ECC roles. 2. The team implements attribute-based access control or ABAP to restrict user access based on sales org and BP grouping. 3. Internal audit lead executes a post-migration SOD audit, requiring 100% remediation of P1 risks before go live. 4. The project team utilizes SAP GRC access control to automate the risk analysis for all new S/4HANA user requests.
What not to do. Common wrong fixes.
1. Do not allow users to keep their legacy ECC roles as a permanent solution. They are structurally incompatible with S/4HANA SOD. 2. Do not ignore low-level conflicts in the BP transaction, assuming users will not find the other modules. 3. Do not assume that Fiori tiles provide security. A user with backend BP access can still see unauthorized data via SAP GUI. 4. Do not allow go live without a certified SOD report signed by the corporate controller. Shortcuts in SOD validation result in a financial black hole and regulatory penalties.
Follow-up 1. Why is the BP transaction a higher SOD risk than legacy ECC transactions?
Answer: in ECC, customer XD01 and vendor XK01 were physically different screens and code bases. In S/4HANA, the BP transaction is a unified engine. If a user has access to BP, they can technically switch between roles within the same session. You must use the B_BUPA_RLT object to strictly limit which roles each user can access.
Follow-up 2. How does S/4HANA handle field-level segregation within the BP?
Answer: S/4HANA uses field groups. You can assign different authorization levels to different groups of fields like bank data versus address data. This allows you to let a sales rep update a phone number while blocking them from seeing or changing the customer's bank account.
Follow-up 3. Curveball. What if the user has the correct BP roles, but the system triggers an SOD conflict in GRC because they also have the credit manager role UKM000, allowing them to both create an order and increase the customer's limit to bypass a credit block in real time?
Answer: this is a process collision failure. S/4HANA FSCM is more integrated than legacy credit management. You must test the cross-module risk. The fix is to implement emergency access management for credit overrides. If you miss this, you will have a self-approving Salesforce, which is a major red flag for SOX compliance and financial risk on day one.
Exclusive pro tip.
Run a conflict matrix specifically for any user with the FLCU01 and UKM000 roles simultaneously. This sales and credit combination is the most dangerous SOD risk in S/4HANA SD. Enforce a strict separation of these two roles before the first production order is saved.
The universal interview tip. Whenever you ask a tech VP or an industry mentor how to crack a tough interview, they all give you the exact same tip. Get familiar with the most commonly asked interview questions. It sounds simple, right? But here is the problem. The search nightmare. Finding the actual most commonly asked questions for senior roles is a nightmare. Generic Google searches only give you basic textbook definitions, and those will not help you clear a lead architect or senior engineer round where production reality matters. Imagine a master vault. Now, imagine a vault where the absolute most commonly asked interview questions for your specific role are already collected for you, perfectly organized by interview rounds like 1. Most commonly asked technical-based question and answers. 2. Most commonly asked scenario-based question and answers. 3. Most commonly asked real-world problem-solving question and answers. 4. Most commonly asked system design question and answers. 5. Most commonly asked behavioral-based question and answers. Cross-domain mastery. I built the ACE Interviews Master Vault for the modern architect. We did not just do this for one role. We covered everything: SAP, cybersecurity, DevOps, software testing, data engineering, Java, and Python. The ultimate all-access deal. Instead of paying for individual PDFs, you can now unlock our entire database. Get over 1,000 plus PDFs containing 50,000 plus of the most asked question and answers for a mere 1,499 rupees a month. The elite transformation. Stop studying just to pass. Equip yourself with the cross-domain confidence of a true architect and walk out of your next interview choosing between 2 or 3 elite job offers. Unlock the vault now. The era of buying individual guides is over. Click the link in the video description below right now to unlock the Master Vault. Now, let's get back to the Masterclass.
Scenario 255. Pricing condition authorization changes.
On day one post-go live, sales managers often report that they can no longer maintain discounts or that junior staff are able to see sensitive cost conditions. In ECC, pricing security was often limited to transaction codes like VK11 and VK12. S/4HANA moves pricing to a service-oriented model, where the transparent table PRCD_elements is accessed via Fiori apps and OData. If the security team fails to update the specific condition-level objects like V_KONH_KSCH and V_KONH_VKO for the new S/4HANA services, the organization will face either unauthorized margin erosion or a total stop in promotional pricing updates.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, medium financial control and data privacy risk. 2. Phase, run post-go live. 3. Frequency, common in organizations with tiered pricing and sensitive cost data. 4. Primary ownership, SAP security and GRC lead. The person who owns this and gets fired if it fails. 5. Supporting SD functional lead and ABAP lead. 6. Business ownership, commercial pricing manager. 7. Relevant SAP note, not applicable security and role redesign gap reference SAP note 2267308 for pricing data model context.
Diagnostic dashboard, symptoms and evidence.
How pricing authorization gaps manifest in the live production system. 1. Symptom. Users can open the set sales prices Fiori app but receive an access denied error when trying to save a specific condition type. 2. Red flag. Sales reps can see the internal cost condition VPRS, which was strictly hidden in the legacy ECC system. 3. Business impact. Inability to launch new pricing campaigns on day one, leading to lost revenue and competitive disadvantage. 4. Detection. Transaction SU53 shows failures for object V_KONH_KSCH even though the user has the legacy VK11 role. 5. Technical proof. Mismatches in the service to object mapping and transaction SU24 for the new S/4HANA pricing OData services. Insight in S/4HANA, you do not secure the screen. You secure the condition type across all entry points.
Why this happens: scenario analysis and root cause.
1. The security team assumed that legacy SD pricing objects would automatically function when called by modern Fiori apps. 2. Failure to implement field-level security for sensitive condition types like material cost or profit margin. 3. Legacy roles were built around T-codes and lacked the business object permissions required by the S/4HANA pricing engine. 4. The project team failed to perform a pricing sensitivity audit to identify which user personas should be allowed to see which conditions. The failure is a result of treating pricing security as a technical copy rather than a financial governance task.
Financial and customer impact.
1. Direct revenue loss if promotional discounts cannot be updated in time for a seasonal launch. 2. Margin erosion if unauthorized users apply high-value discounts that bypass the standard approval workflow. 3. Audit risk if the company cannot prove that cost data is restricted to authorized financial personnel. 4. High support costs as IT teams manually update thousands of condition-level authorizations in a live system. Pricing authorization failures directly compromise the company's gross margin controls.
Governance and accountability RACI model.
Securing the price list requires a partnership between GRC and sales. 1. Accountable SAP security and GRC lead, the person who owns this and gets fired if it fails. 2. Responsible security administrator refactors the PFCG roles to include granular condition type security. 3. Consulted commercial pricing manager provides the condition sensitivity matrix who sees what. 4. Informed sales operations director monitors the price update completion rate as a key go-live health metric. Accountability ensures that commercial data is only accessible to those who need it.
Ownership who actually fixes it.
Resolving this requires a condition to role audit. 1. The security lead identifies all custom roles containing object V_KONH_KSCH condition types. 2. The SD functional lead categorizes all condition types into public, restricted, and confidential. 3. The security administrator utilizes transaction SU24 to associate these objects with the new Fiori pricing apps. 4. The QA team executes data masking tests, verifying that a sales rep sees the net price but not the internal cost.
How this is actually fixed the right way by a role.
1. SAP security lead mandates a zero visibility policy for cost conditions across all non-finance roles. 2. The team implements organization-level pricing security, ensuring reps can only maintain prices for their own sales org. 3. The ABAP lead refactors any custom pricing CDS views to include mandatory DCL security checks on condition types. 4. Functional leads execute mass price update simulations, ensuring 50 users can update different conditions simultaneously without error.
What not to do: common wrong fixes.
1. Do not grant V_KONH_KSCH with asterisk values to all users on day 1. You are exposing your entire margin structure. 2. Do not rely on Fiori personalization to hide cost fields. A savvy user can still find the data in the underlying OData call. 3. Do not assume that the ECC price security is sufficient for the new S/4HANA condition contract framework. 4. Do not allow go live without a negative test, proving that unauthorized users cannot change base prices. Shortcuts in pricing security result in an unauditable and commercially vulnerable digital core.
Follow-up 1. What is the most important authorization object for SD pricing?
Answer: it is V_KONH_KSCH condition types. This object allows you to restrict users by specific condition IDs. For example, you can allow a user to maintain discounts K004, but strictly block them from seeing or changing the material price PR00 or cost VPRS.
Follow-up 2. How does S/4HANA handle display-only access for prices differently?
Answer: in S/4HANA, the system often uses analytical CDS views to show prices in Fiori dashboards. If the user has display access to the sales order, but lacks the DCL authorization for the pricing table PRCD_elements. The reports will show 0 or masked values.
Follow-up 3 Curveball. What if the user has correct pricing authorizations in Fiori, but the sales order save fails because the pricing service running in the background lacks the technical permission to read the condition records assigned to a specific account group that was restricted during the CVI cleanup?
Answer: this is a cross-object authorization failure. The pricing engine needs access to both the price condition and the business partner record. The fix is to ensure the background update user has sufficient BP-level authorizations. If you miss this, you will have calculation deadlocks where the price is determined on screen but rejected by the database save task.
Exclusive pro tip.
On day 1, monitor transaction SU53 specifically for object V_KONH_VKO. This indicates a user is trying to maintain prices for an unauthorized sales organization. Use this data to identify regional power users who may need elevated permissions before they block the morning orders.
Scenario 256. Credit authorization differences.
On day 1 post-go live, credit managers often find they are unable to release blocked sales orders or update customer limits. S/4HANA replaces legacy SD credit management objects like V_KNKK_FRE with SAP FSCM credit management objects like F_UKM_SGMT. If the security team failed to decommission the obsolete SD objects and replace them with the new FSCM permission set in the business partner roles, the entire credit release workflow will fail, stopping every high-value shipment at the warehouse gate.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high financial risk and supply chain disruption. 2. Phase, run post-go live. 3. Frequency, extremely common in migrations to FSCM credit management. 4. Primary ownership, SAP security and GRC lead. The person who owns this and gets fired if it fails. 5. Supporting SD functional lead and FICO lead. 6. Business ownership, global credit director. 7. Relevant SAP note, not applicable security and role redesign gap reference SAP note 2270544 for credit management context.
Diagnostic dashboard, symptoms and evidence.
How credit authorization gaps manifest in the live production system. 1. Symptom: a credit manager attempts to release an order in transaction VKM1 or Fiori and receives the error no authorization for credit segment. 2. Red flag: users cannot open the credit tab in the business partner transaction BP despite having full SD customer roles. 3. Business impact: thousands of orders are stuck in credit block status with no one in the company able to technically release them. 4. Detection: checking transaction SU53 for the credit manager reveals failures for objects starting with F_UKM_. 5. Technical proof: mismatches in the activity field for object F_UKM_SGMT where release activity 43 is missing. Insight in S/4HANA: credit is no longer an SD setting. It is a separate financial component with its own security wall.
Why this happens, scenario analysis and root cause.
1. The security team lifted and shifted legacy SD roles V_KNKK_*, which are functionally dead in the S/4HANA kernel. 2. Failure to assign the credit management business partner role UKM000 the security administrator IDs. 3. The project team failed to map the legacy credit control areas to the new FSCM credit segments in the authorization logic. 4. Underestimating the impact of real-time scoring. S/4HANA requires authorizations to trigger external credit agency calls during the check. The failure is a result of treating a modern risk engine transition as a simple functional update.
Financial and customer impact.
1. Operational paralysis as the warehouse sits idle waiting for credit clearances that managers cannot technically perform. 2. Revenue loss as frustrated strategic customers cancel orders that were blocked for 48 hours due to a security gap. 3. High cost of emergency hypercare as security consultants must manually patch hundreds of roles in the live production system. 4. Audit risk if the company grants temporary wide access to release orders, bypassing mandatory financial risk controls. Credit authorization failures directly paralyze the company's daily cash flow and shipping dock.
Governance and accountability RACI model.
Securing the credit gate requires a partnership between GRC and finance. 1. Accountable SAP security and GRC lead. The person who owns this and gets fired if it fails. 2. Responsible security administrator redesigns the PFCG roles to include the new F_UKM authorization objects. 3. Consulted credit manager defines the approval limits and release authority for each job role. 4. Informed global sales director monitors the order release backlog as a critical day 1 KPI. Accountability ensures that the corporate risk policy is technically enforceable.
Ownership who actually fixes it.
Resolving this requires an FSCM-ready security audit. 1. The security lead identifies all users who previously held legacy SD credit release roles, for example VKM1, VKM3. 2. The security administrator adds the mandatory object F_UKM_SGMT with specific credit segment values to those roles. 3. The FICO lead validates that the risk class and check rule in the BP master are accessible to the credit team. 4. The technical architect utilizes SAP Note 2270544 to ensure all obsolete SD objects are removed from the system trace.
How this is actually fixed the right way by a role.
1. SAP Security Lead mandates a risk-based role design where only the regional credit head has release authority. 2. The team implements self-service credit limit requests via Fiori, ensuring the workflow and security are perfectly synced. 3. The GRC team utilizes transaction UKM_BP to verify that every manager can see their assigned credit exposure values. 4. Functional leads execute stress testing, verifying that a manager can release 50 orders in a single batch without a security error.
What not to do. Common wrong fixes.
1. Do not allow sales reps to have release authority just to clear the day 1 backlog. This is a major SOD violation. 2. Do not use direct SQL updates to clear a credit block in table VBAK. The FSCM subledger will remain out of sync. 3. Do not assume that PFCG role copy from ECC will work. The technical names of the credit objects have changed completely. 4. Do not ignore authorization failures in the background RFC user. This will block the automatic release from paid invoices. Shortcuts in credit security result in a financial governance crisis on day 1.
Follow-up 1. What are the primary authorization objects in S/4HANA FSCM credit management?
Answer: the core objects are F_UKM_SGMT credit segment access and F_UKM_LMT credit limit maintenance. These replace the legacy SD objects and must be configured for every user persona in the credit department.
Follow-up 2. Why is the business partner role UKM000 so important for security?
Answer: UKM000 is the SAP credit management role. Without this role assigned to the business partner, the FSCM engine cannot store a credit limit or calculate a risk score. Even if the user has the PFCG role, they will see an empty screen if the BP role is missing.
Follow-up 3. Curveball. What if the credit manager can release the order manually in S/4HANA, but the automatic credit release fails during the nightly payment run because the background system user batch_user lacks the permission to update the new documented exposure field in table UKM_item?
Answer: this is a technical user authorization failure. S/4HANA automation requires the background user to have full update access for FSCM objects. The fix is to use transaction ST01 to trace the batch_user session and add the missing UKM_ objects to the system role. If you miss this, your system will remain blocked for credit even after the customer has paid their bill, resulting in an unshippable backlog.
Exclusive pro tip.
On day 1, monitor transaction UKM_ log specifically for authorization errors. It provides a centralized view of every credit check that failed due to a missing security object. Use this to identify and patch role gaps for your regional managers in real time.
Scenario 257. Workflow authorization failures.
On day 1 post-go live, Managers often report that their Fiori My Inbox is empty despite sales orders being blocked for credit or pricing. S/4HANA Flexible Workflow utilizes the Task Gateway and OData services to deliver approval requests. If the security team provided legacy backend workflow authorizations, but failed to assign the specific Fiori service objects and task IDs to the manager roles, the approval signals will never reach the front end, paralyzing the O2C release process.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, medium process automation and user productivity risk. 2. Phase, run post go live. 3. Frequency, extremely common in projects adopting Fiori My Inbox. 4. Primary ownership, SAP security and GRC lead, the person who owns this and gets fired if it fails. 5. Supporting Fiori and UX lead and workflow developer. 6. Business ownership, sales operations manager. 7. Relevant SAP note, not applicable security and role redesign gap reference SAP note 2198647 for workflow context.
Diagnostic dashboard, symptoms and evidence.
How workflow authorization gaps manifest in the live production system. 1. Symptom, a manager has the My Inbox tile, but the count is 0 while the sales order fulfillment app shows 50 blocked orders. 2. Red flag, technical error logs in the browser console show 403 forbidden for the task processing OData service. 3. Business impact, significant delays in order fulfillment as administrators are forced to manually release documents in the backend. 4. Detection, transaction SU53, for the approver shows failures for object S_service and object S_W data. 5. Technical proof, errors in the SAP Gateway error log transaction /IWFND/error_log referencing the workflow task provider. Insight in S/4HANA. Seeing a task is a security event. If the OData pipe is locked, the manager is blind.
Why this happens, scenario analysis and root cause.
1. The security team assumed that legacy ECC workflow objects like S_WFR_PRI were enough for S/4HANA approvals. 2. Failure to maintain the task ID and scenario ID in the role's authorization values, making the inbox unable to filter tasks. 3. A lack of trust relationship between the front-end gateway and the back-end S/4HANA core for the workflow technical user. 4. The project team tested workflow using SAP_all, masking the fact that service-level authorizations were missing. The failure is a result of treating a web-based workflow engine as a legacy GUI-based process.
Why this is a migration exclusive failure.
1. ECC Business Workflow SWDD used the SAP Office Inbox SBWP, which required no OData or web service security. 2. S/4HANA migration moves the approval desk to the Fiori Launchpad, requiring a 100% redesign of the security handshake. 3. The requirement to activate the Task Gateway Service GW_WM is a unique S/4HANA technical cutover task. 4. This failure only surfaces when the new flexible workflow engine attempts to push a task to a modern web user on day 1. Migration introduces a service auth layer that ECC security teams never had to govern.
Financial and customer impact.
1. Revenue is trapped in the system, as billing and shipping blocks cannot be removed without a technical release. 2. Missed delivery windows for high-priority orders lead to customer penalties and contract violations. 3. High support costs as IT teams must manually forward work items to unblocked users during the go-live week. 4. Loss of management trust as executives feel the new system is an obstacle to their daily decision-making. Workflow authorization failures turn a streamlined process into a manual bottleneck.
Governance and accountability RACI model.
Securing the inbox requires a partnership between GRC and workflow leads. 1. Accountable SAP security and GRC lead, the person who owns this and gets fired if it fails. 2. Responsible security administrator assigns the Fiori catalogs and OData service permissions to approver roles. 3. Consulted workflow developer provides the task IDs and scenario IDs that must be whitelisted in the roles. 4. Informed sales operations manager monitors the mean time to approve as a primary O2C health metric. Accountability ensures that system access includes actionable access.
Ownership, who actually fixes it.
Resolving this requires a gateway and task security audit. 1. The security lead identifies every PFCG role that corresponds to an approver persona. 2. The Fiori lead activates the task processing OData service in transaction/IWFND/main_service. 3. The workflow developer utilizes transaction SWF_process_admin to verify that tasks are being correctly routed to the user's ID. 4. The technical architect ensures the S_service object is updated with the hash values for the Fiori at my inbox.
How this is actually fixed the right way by a role.
1. SAP security lead mandates a zero God mode UAT where all managers test using their restricted production roles. 2. The team implements task-specific roles, ensuring that a credit manager only sees credit tasks and not pricing tasks. 3. The Fiori lead utilizes transaction/UI2/FLPCM_cus to verify that all required catalogs are assigned to the PFCG roles. 4. Functional leads execute notification testing, proving that clicking a mobile alert correctly opens the task in the Fiori app.
What not to do. Common wrong fixes.
1. Do not allow users to use the legacy SBWP transaction as a permanent fix. You are bypassing S/4HANA's analytical core. 2. Do not grant S_service with asterisk values. This allows users to execute any backend API, creating a major security risk. 3. Do not assume that workflow is an SD-only task. The security for my inbox is a shared cross-modular infrastructure. 4. Do not ignore CSRF token errors in the browser. They often indicate an authorization mismatch in the gateway. Shortcuts in workflow security result in a fragmented and unauditable approval process.
Follow-up 1. What is the task gateway, and why is it the new security gate?
Answer: the task gateway is the middle layer in S/4HANA that translates technical workflow events into OData for Fiori. Because it is a web service, it requires its own security profile. If you have backend workflow rights but lack gateway rights, your inbox will always be empty.
Follow-up 2. How can I identify missing workflow objects for user?
Answer: you must use transaction ST01 system trace. Filter by the user ID and look for authorization check failures. Specifically, look for failures in object S_W data and S_service while the user is attempting to refresh the Fiori launchpad.
Follow-up 3. Curveball. What if the manager can see the task and the document details, but the approve and reject buttons are missing from the bottom of the Fiori screen, even though they have full activity 01 for the backend workflow object?
Answer: this is a decision key authorization failure. Fiori My Inbox uses specific metadata to render buttons. You must test the button level security. The fix is to add the decision activity to the task gateway OData service in the user role. If you miss this, you will have passive approvers, people who can see the problem but are technically powerless to fix it, halting your day one shipping wave.
Exclusive pro tip.
On day 1, monitor transaction SWI2_diag specifically for ready tasks without an agent. These are orphan tasks where the system found an approver, but the approver's role lacks the technical permission to view the task. Fix the scenario to role mapping immediately to release the bottleneck.
Scenario 258. Revenue contract authorization gaps.
In the run phase post-go live, revenue accountants often report that they cannot access contracts in the new SAP Revenue Accounting and Reporting or RAR system. S/4HANA replaces legacy SD revenue recognition, which used SD sales org security, with a new contract-based model requiring specific RAR objects like F_FRR_con and F_FRR_ACC. If the security team failed to create these new financial roles, the accounting team will be unable to recognize revenue or reconcile the O2C subledger, delaying the first monthly close.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high financial integrity and audit compliance risk. 2. Phase, run post-go live. 3. Frequency, common in industries with subscription or project-based billing. 4. Primary ownership, SAP security and GRC lead. The person who owns this and gets fired if it fails. 5. Supporting FICO lead and SD functional lead. 6. Business ownership corporate controller. 7. Relevant SAP note, not applicable security and role redesign gap reference SAP note 2267319 for revenue accounting context.
Diagnostic dashboard, symptoms and evidence.
How revenue authorization gaps manifest in the live production system. 1. Symptom. Users attempt to open transaction FRR_TM00 revenue accounting and receive the message no authorization for contract management. 2. Red flag. Revenue accountants can see the sales order but the revenue accounting item or RI monitor is blank for their company code. 3. Business impact. Inability to perform mandatory IFRS 15 or ASC 606 revenue allocations, resulting in a potential financial restatement. 4. Detection. Transaction SU53 shows multiple failures for objects starting with F_FRR_. 5. Technical proof. Mismatches in the security trace where the system attempts to check revenue accounting key access but finds a legacy SD object instead. Insight. RR security is not SD security. Even a sales director needs new financial roles to see their own revenue contracts.
Why this happens, scenario analysis and root cause.
1. The security team assumed that revenue recognition access would inherit from the user's sales organization V_VBAK_VKO permissions. 2. Failure to define the revenue accounting key authorizations, which act as a security gate for different types of revenue, for example, service versus product. 3. The move to S/4HANA RAR introduced the company code as the primary security dimension, which was secondary in legacy SD Rev Rec. 4. The project team failed to conduct a revenue accountant persona workshop, assuming they only needed standard FICO roles. The failure is a result of treating a new financial subledger as a simple SD add-on.
Why this is a migration exclusive failure.
1. ECC upgrades never changed the revenue engine. Legacy SD Rev Rec tables were protected by standard SD authorization objects. 2. S/4HANA migration physically deactivates the old table's VBREK/VBREV and moves data to the new RAR subledger tables. 3. The requirement to assign accounting principle and condition category authorizations is unique to the S/4HANA RAR path. 4. This failure only surfaces when the newly converted revenue contracts are first accessed by the accounting team in S/4HANA. S/4HANA migration creates a security boundary between the sale and the revenue.
Financial and customer impact.
1. Material risk of unauditable revenue, leading to a qualified audit opinion and loss of market confidence. 2. Delayed month-end closing as the finance team cannot perform the revenue posting run without technical permissions. 3. Internal disputes as regional managers cannot verify their net sales figures against the general ledger. 4. High cost of manual emergency role creation, as auditors demand proof of data access controls before the books are closed. Revenue authorization gaps directly compromise the single version of truth in the financial statements.
Governance and accountability RACI model.
Securing the revenue ledger requires a partnership between FICO and GRC leads. 1. Accountable SAP security and GRC lead, the person who owns this and gets fired if it fails. 2. Responsible security administrator designs the new PFCG roles containing the F_FAR authorization objects. 3. Consulted FICO and SD functional lead provides the mapping between revenue keys and business user personas. 4. Informed CFO monitors the audit readiness of the new S/4HANA revenue subledger. Accountability ensures that financial disclosure is backed by financial security.
Ownership who actually fixes it.
Resolving this requires an RAR-specific security audit. 1. The security lead identifies all users who were previously authorized for transaction VF44 in ECC. 2. The security administrator adds the mandatory objects F_FRR_CON contract and F_FRR_ACC account to their roles. 3. The FICO lead validates that the accounting principal values in the roles match the S/4HANA ledger settings. 4. The QA team executes reconciliation testing, ensuring an accountant can view the link from the sales order to the RAR contract.
How this is actually fixed the right way by a role.
1. SAP security lead mandates a financial close simulation where all RAR tasks are performed by accountants with their new roles. 2. The team implements cross-module segregation, ensuring that an SD rep can view but not post revenue contracts. 3. The GRC team utilized transaction FRR_T M00 to verify that data masking is working for sensitive standalone selling prices. 4. Functional leads execute audit trail validation, proving that every revenue posting can be traced back to the authorized user.
What not to do common wrong fixes.
1. Do not allow users to keep legacy SD Rev Rec roles as a substitute. They provide zero access to the new RAR subledger. 2. Do not ignore missing attribute errors in the security trace, assuming the data is just missing. It is usually hidden. 3. Do not assume that FICO General Ledger access is enough to see RAR contracts. They are separate security gates. 4. Do not allow go live without a formal revenue security sign off from the corporate controller. Shortcuts in revenue security result in an unauditable and commercially vulnerable digital core.
Follow-up 1. What is the primary authorization object for SAP RAR?
Answer: it is F_FRR_con. This object controls access to the revenue contract. You can restrict users by company code, revenue accounting item class, and specific activities like display, change, or perform allocation.
Follow-up 2. Why does S/4HANA RAR require accounting principal authorizations?
Answer: S/4HANA RAR supports multi-GAAP reporting, for example US GAAP and IFRS simultaneously. A user might be authorized to see IFRS revenue, but blocked from local GAAP values. You must manage this using the object F_FRR_ACC to ensure compliance.
Follow-up 3. Curveball. What if the user has full RAR authorizations, but the FRR_T M00 screen shows an incomplete document flow because they lack the permission to see the originating SD sales order in the underlying S/4HANA cross-module CDS view?
Answer: this is a cross-component visibility failure. RAR displays links to SD. You must test the link security. The fix is to ensure the user also has display access to object V_VBAK_VKO sales order. If you miss this, your revenue accountants will be working in the dark. They see the contract but cannot verify the original sales data, leading to massive delays in resolving contract errors post-go-live.
Exclusive pro tip.
On day 1, monitor transaction FRR_RI_MON specifically for authorization errors in the processing status. These indicate the system user batch_user lacks the permissions to create contracts. Add the F_FRR_objects to the system background roles immediately to prevent a RI backlog.
Section 13. Wrap up. Security and authorization incidents.
Section 13 has exposed the governance risks of the S/4HANA digital core. We analyzed how legacy ECC roles failed to provide Fiori access, the critical need for CDS-level data control language, and the dangerous segregation of duties conflicts created by the unified business partner model. The takeaway is that S/4HANA security is no longer a back-end task. It is a full-stack architectural requirement that must be redesigned to protect your data integrity.
The universal interview tip. Whenever you ask a tech VP or an industry mentor how to crack a tough interview, they all give you the exact same tip. Get familiar with the most commonly asked interview questions. It sounds simple, right? But here is the problem. The search nightmare. Finding the actual most commonly asked questions for senior roles is a nightmare. Generic Google searches only give you basic textbook definitions, and those will not help you clear a lead architect or senior engineer round where production reality matters. Imagine a master vault. Now, imagine a vault where the absolute most commonly asked interview questions for your specific role are already collected for you, perfectly organized by interview rounds like 1. Most commonly asked technical-based question and answers. 2. Most commonly asked scenario-based question and answers. 3. Most commonly asked real-world problem-solving question and answers. 4. Most commonly asked system design question and answers. 5. Most commonly asked behavioral-based question and answers. Cross-domain mastery. I built the ACE Interviews Master Vault for the modern architect. We did not just do this for one role. We covered everything: SAP, cybersecurity, DevOps, software testing, data engineering, Java, and Python. The ultimate all-access deal. Instead of paying for individual PDFs, you can now unlock our entire database. Get over 1,000 plus PDFs containing 50,000 plus of the most asked question and answers for a mere 1,499 rupees a month. The elite transformation. Stop studying just to pass. Equip yourself with the cross-domain confidence of a true architect and walk out of your next interview choosing between 2 or 3 elite job offers. Unlock the vault now. The era of buying individual guides is over. Click the link in the video description below right now to unlock the Master Vault. Now, let's get back to the masterclass.
Transition to Section 14, Analytics and Reporting Incidents.
Now that your users are securely logged in, they need to see their data. However, the reports they relied on for decades are often the first things to break. In Section 14, we move from access to insight. We will analyze the failure of legacy SD reports, the impact of the logistics information system deprecation, and the architectural challenges of moving to real-time embedded analytics.
Section 14, Analytics and Reporting Incidents.
Section 14 addresses the visibility gap created by the S/4HANA data model simplification. S/4HANA moves away from pre-aggregated statistics tables toward on-the-fly calculations using CDS views. We will examine why legacy Z reports produce incorrect totals, how the death of LIS disrupts sales forecasting, and why unoptimized CDS views can lead to a reporting performance crisis that impacts the entire production system.
Section 14, Incident List, Analytics and Reporting.
Following incidents represent the visibility and insight risks in S/4HANA. Scenario 259, SD legacy reports incorrect after migration. Relevant SAP note, SAP note 219867. Scenario 260, embedded analytics replacing LIS gaps. Relevant SAP note, SAP note 2267306. Scenario 261, KPI definition differences. Relevant SAP note, not applicable analytics redesign gap reference SAP note 2267306. Scenario 262, margin analysis interpretation issues. Relevant SAP note, not applicable analytics redesign gap reference SAP note 2267306. Scenario 263, reconciliation ECC versus S4 reporting mismatch. Relevant SAP note, not applicable analytics redesign gap reference SAP note 2267306. Scenario 264, CDS performance issues in reporting. Relevant SAP note, not applicable analytics redesign gap reference SAP note 2267306. Scenario 265, revenue reporting mismatch versus FI. Relevant SAP note, not applicable analytics redesign gap reference SAP note 2267306. Scenario 266, data aging filtering impacting analytics. Relevant SAP note, not applicable analytics redesign gap reference SAP note 2267306. In S/4HANA, reporting is the primary value driver. If the reports are wrong, the business value is lost.
Scenario 259, SD legacy reports incorrect after migration.
On day 1 post-go live, sales teams often report that their custom Z reports for order history or invoice registers are producing empty results or incorrect totals. S/4HANA simplifies the data model by deleting status tables like VBUK and moving data to the document headers. If legacy custom ABAP code was not refactored to point to the new transparent fields, the reports will continue to query ghost tables or unpopulated compatibility views, leading to a total loss of historical reporting accuracy.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high data integrity and reporting reliability risk. 2. Phase, run post-go live. 3. Frequency, common in systems with extensive custom reporting history. 4. Primary ownership, ABAP lead HANA, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and basis lead. 6. Business ownership sales operations director. 7. Relevant SAP note. SAP note 2, 198647, custom code adaptation for S4 HANA.
Diagnostic dashboard, symptoms and evidence.
How legacy reporting failures manifest in the live production system. 1. Symptom: a custom open sales order report shows 0 records even though the warehouse is actively picking orders. 2. Red flag: ATC checks identify direct database access to obsolete tables like VBUK, VBUP, or VIAKPIA as priority 1 errors. 3. Business impact: inability to track daily sales performance, leading to management panic and manual data extraction workarounds. 4. Detection: comparing the output of a legacy Z report against the standard S4 HANA Fiori sales volume app reveals a 100% variance. 5. Technical proof: SQL traces in transaction ST05 show the report is scanning empty database views with 0 index optimization. Insight compatibility views are a band-aid. They allow the code to run, but they do not guarantee the data is correct.
Why this happens: scenario analysis and root cause.
1. Legacy ABAP code utilized direct selects on tables that SAP has physically removed from the S4 HANA database schema. 2. Failure to refactor inner joins involving table VBUK. Because the table is now a view, the join logic behaves differently on the HANA kernel. 3. The project team remediated syntax errors but ignored the logical drift where data was moved from the item level to the header level. 4. Underestimating the impact of business partner renumbering. Legacy reports are still searching for old customer IDs that no longer exist as primary keys. The failure is a result of treating S4 HANA as a simple technical upgrade rather than a data model transformation.
Why this is a migration exclusive failure.
1. ECC upgrades never deleted core tables like VBUK or KONV, ensuring perfect backward compatibility for custom reports. 2. S4 HANA migration involves a physical repository purge of obsolete SD tables to enable real-time HANA analytics. 3. The technical requirement to use the replacement object framework for Z code is unique to the S4 HANA transition. 4. This failure only surfaces when legacy custom logic meets the new S4 HANA database schema on day 1. Migration forces a code modernization that 20 years of ECC upgrades never demanded.
Financial and customer impact.
1. Loss of management visibility into unbilled revenue, leading to poor cash flow forecasting and potential liquidity risks. 2. Inaccurate commission payments if the calculation reports are pulling stale data from obsolete status fields. 3. Customer service delays as reps cannot accurately report on order history using their legacy Z dashboards. 4. High cost of emergency hypercare development to rewrite hundreds of unremediated reports in a live environment. Reporting failures directly compromise the data-driven culture of the modern enterprise.
Governance and accountability RACI model.
Securing reporting accuracy requires a partnership between ABAP and sales leads. 1. Accountable ABAP lead HANA, the person who owns this and gets fired if it fails. 2. Responsible ABAP developer refactors legacy Z reports to utilize standard S4 HANA CDS views and transparent tables. 3. Consulted SD functional lead provides the mapping between legacy status fields and the new S4 HANA header attributes. 4. Informed sales operations director signs off on the functional parity of the new reports compared to ECC. Accountability ensures that the business memory is not lost during the system transition.
Ownership who actually fixes it.
Resolving this requires a code scan and data map audit. 1. The ABAP lead utilizes transaction SCI with the S4 HANA _readiness variant to identify all references to deleted tables. 2. The technical architect replaces direct select statements with the standard SAP API-enabled CDS views. 3. The SD functional lead validates the join logic to ensure that header-level statuses correctly reflect the item-level reality. 4. The QA team executes a report parallel run, comparing the output of ECC versus S4 HANA for 50 critical reports.
Who gets blamed versus who owns it.
1. Blamed. SD functional lead, the business assumes the data didn't migrate correctly. 2. Blamed, SAP users claim the new system has deleted their historical records. 3. Actual owner, ABAP lead HANA responsible for the failure to remediate legacy code for the new data model during realize. 4. Root cause, treating custom code as a black box that would automatically adapt via compatibility views. An incorrect report is a code failure, not a data loss event.
How this is actually fixed the right way by a role.
1. ABAP lead mandates a zero obsolete table policy for all custom reports transported to production. 2. The team implements CDS first reporting, replacing legacy ALV reports with modern Fiori Elements apps. 3. The SD team utilize SAP Note 2198647 to ensure all replacement objects are correctly assigned to Z programs. 4. Functional leads execute volume comparison testing, verifying that Z reports produce identical totals to the Fiori standard apps.
What not to do, common wrong fixes.
1. Do not use direct SQL to read from shadow tables. S/4HANA will reject these calls in future cloud updates. 2. Do not ignore null results in reports, assuming there was just no sales today. Check the data source first. 3. Do not allow users to keep using the ECC system as a reporting sidecar post-go live. This creates a data silo. 4. Do not assume that compatibility views provide the same performance as physical tables. Shortcuts in report remediation lead to a permanent loss of operational visibility.
Follow-up 1. What is a compatibility view in S/4HANA?
Answer: it is a virtual DDL view created by SAP that has the same name as a deleted table like VBUK. It allows legacy code to compile and run by redirecting the query to the new tables like VBUK. However, they are read-only and often lack the performance of the original physical table.
Follow-up 2. Why do inner joins fail on compatibility views?
Answer: because the data that was previously in one table is now spread across many. A legacy join that expected a one-to-one relationship might now encounter a one-to-many relationship in the underlying S/4HANA tables, causing the report to duplicate rows or return incorrect sums.
Follow-up 3. Curveball. What if the report produces correct results for the sales manager, but returns 0 records for the regional rep, because the legacy Z report used an authority check on a field that was moved from the material master to a business partner role that the rep does not have access to?
Answer: this is a security data collision failure. In S/4HANA, the data location and the security object must be perfectly aligned. You must test the persona reporting logic. The fix is to refactor the authority check to use the new S/4HANA objects like B_BUPA_GRP. If you miss this, your reporting will become hierarchically broken. The bosses see the truth, but the workers are blind, paralyzing your day one sales execution.
Exclusive pro tip.
On day 1, run transaction SC16H against the virtual view V_VBUK. If your custom reports take more than 10 seconds to respond, the HANA SQL optimizer is struggling with your legacy joins. Mandate an immediate refactoring to the I_sales order CDS view to restore system performance.
Scenario 260. Embedded analytics replacing LIS gaps.
In the run phase post-go live, organizations often face a historical blindness regarding sales trends. S/4HANA deprecates the legacy Logistics Information System, or LIS, and its associated tables like S001 and S002. While S/4HANA provides embedded analytics via CDS views, these views are real-time and do not contain the pre-aggregated historical snapshots that LIS provided. If the project failed to implement a data aging and history migration strategy for analytics, sales managers will be unable to perform year-over-year comparisons on day 1.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high strategic decision support and analytics risk. 2. Phase, run post-go live. 3. Frequency, common in organizations with decades of sales history. 4. Primary ownership, analytics lead, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and data architect. 6. Business ownership, chief revenue officer. 7. Relevant SAP note. SAP note 22673006. S4 TWL SD analytics. and LIS deprecation.
Diagnostic dashboard, symptoms and evidence.
How LIS deprecation gaps manifest in the live production system. 1. Symptom. Running transaction MC plus e-sales analysis returns the message no data found for periods prior to the go-live date. 2. Red flag Fiori analytical tiles like sales volume flexible analysis only show data starting from the migration weekend. 3. Business impact. Inability to calculate growth over prior year, leading to incorrect sales targets and bonus disputes. 4. Detection. Checking the LIS update status in transaction OMO1 reveals that all statistical updates are deactivated. 5. Technical proof. Errors in the CDS analytical engine stating that historical data is not available in the transactional tables VBAK and VBRK. Insight. LIS was a history book. Embedded analytics is a live camera. If you didn't move the book, you have lost the past.
Why this happens, scenario analysis and root cause.
1. The project team assumed that HANA's speed removes the need for pre-aggregated tables like S001, ignoring the fact that LIS also acted as a historical archive. 2. Failure to migrate closed sales history from ECC to S4HANA because the data migration team only focused on open documents. 3. The move to the Universal Journal ACDOCA changed the data granularity, making legacy LIS-based market segment reports obsolete. 4. A lack of analytical bridge design. The business was not trained on how to use SAP Analytics Cloud to blend ECC history with S4HANA actuals. The failure is a result of treating the move to embedded analytics as a UI change rather than a data lifecycle shift.
Why this is a migration exclusive failure.
1. ECC upgrades never impacted LIS. The statistical tables were cumulative and independent of the transactional engine version. 2. S4HANA migration physically deactivates the LIS update engine to prevent performance overhead on the HANA database. 3. The requirement to choose between real-time CDS and data warehousing for history is a unique S4HANA strategy decision. 4. This failure only surfaces when the organization attempts its first trend analysis in the newly converted S4HANA environment. S4HANA forces a reporting paradigm shift that ECC maintenance never encountered.
Financial and customer impact.
1. Material risk of bad forecasts if planners cannot see historical seasonality during the first S4HANA planning cycle. 2. Loss of strategic visibility into customer lifetime value because the historical sale data is no longer aggregated by the system. 3. Operational disruption as managers are forced to log back into the old ECC system, read only to answer standard business questions. 4. High cost of manual data stitching where analysts must manually combine ECC and S4HANA reports in Excel every Monday morning. LIS deprecation without a replacement strategy turns your digital core into a system with short-term memory.
Governance and accountability RACI model.
Securing the corporate history requires a partnership between data and analytics leads. 1. Accountable analytics lead. The person who owns this and gets fired if it fails. 2. Responsible data architect ensures that the historical data scope includes the records required for trending. 3. Consulted SD functional lead provides the business rules for legacy sales statistics, for example, how returns impacted LIS. 4. Informed Chief Revenue Officer monitors the sales trend accuracy during the first quarter post-go live. Accountability ensures that system cleanliness does not come at the cost of historical visibility.
Ownership who actually fixes it.
Resolving this requires an integrated history strategy. 1. The analytics lead identifies all mission-critical LIS reports, for example MCTA, MCTC, and maps them to S4HANA Fiori equivalents. 2. The data architect implements HANA native storage extension to allow historical sales data to be searchable without consuming expensive RAM. 3. The SD functional lead validates the analytical CDS views to ensure they aggregate data exactly like the old S001 tables. 4. The technical architect utilizes SAP Analytics Cloud to provide a unified view that pulls history from BW and actuals from S4HANA.
Who gets blamed versus who owns it.
1. Blamed data migration team, the business assumes the history was not loaded. 2. Blamed SAP users claim ECC was better for reporting. 3. Actual owner analytics lead responsible for the failure to lead the reporting transformation workshops during Explore. 4. Root cause, treating the LIS deprecation as a technical shutdown rather than a business transition. A blank trend chart is an architectural gap, not a data entry mistake.
How this is actually fixed the right way by a role.
1. Analytics lead mandates a historical reconciliation gate, requiring that S/4HANA trends match ECC trends for a 2-year period. 2. The team implements persistent CDS views, which act as a virtual aggregation layer to simulate the speed of LIS without the table overhead. 3. The SD team utilize SAP Note 2267306 to ensure the simplified analytics configuration is active in the digital core. 4. Functional leads execute trend simulations, verifying that the system correctly calculates month-over-month growth using migrated data.
What not to do. Common wrong fixes.
1. Do not try to reactivate LIS updates in S/4HANA. This will significantly slow down the VA01 save time and is technically unsupported. 2. Do not allow users to rely on the ECC archive system for daily operational trending. It is too slow and fragmented. 3. Do not assume that Fiori tiles will automatically have 5 years of history if you only migrated 1 year of data. 4. Do not ignore null results in the Fiori dashboards, assuming the business is simply quiet on day 1. Shortcuts in analytical transition result in a management team that is blind to day 1 performance.
Follow-up 1. What is the main benefit of replacing LIS with embedded analytics?
Answer: LIS was always out of sync because it updated asynchronously. Embedded analytics in S/4HANA is true real-time. The moment you save a sales order, the dashboard updates. There is no more waiting for batch jobs or reconciling statistical tables with the general ledger.
Follow-up 2. What happens if I have custom LIS structures, S900 range in ECC?
Answer: these will be technically migrated, but the update logic will be deactivated. You must refactor these custom structures into CDS views. S/4HANA is designed to calculate these custom KPIs on the fly using the power of the HANA database, rather than storing them in redundant tables.
Follow-up 3. Curveball. What if the embedded analytics shows 0 for historical months, even though the data was migrated? Because the fiscal year variant in the new S/4HANA Global Ledger was changed from the legacy ECC variant, causing the CDS time hierarchy to fail to find a matching period for historical records.
Answer: this is a financial analytical misalignment. CDS views use the T009 table for time stamping. You must test the historical ledger parity. The fix is to implement a time mapping CDS view that translates legacy periods to the new S/4HANA fiscal dates. If you miss this, you will have dead history. Your records are in the system, but your Fiori apps cannot count them because they are looking for the wrong date buckets.
Exclusive pro tip.
Conduct a reporting dry run during UAT. Ask the business to provide 3 specific historical trend questions. If the S/4HANA system cannot answer them using Fiori standard apps, mandate a history load or SAC integration task immediately before go live.
Scenario 261. KPI definition differences.
On day 1 post-go live, executive leadership often reports that critical sales KPIs, such as net sales or incoming orders, do not match their legacy ECC benchmarks. In ECC, these KPIs were often calculated via custom LIS rules or overnight BW extractions that filtered out specific document types. S/4HANA Embedded Analytics calculates these figures in real time directly from the Universal Journal and sales tables. If the business logic used in the new CDS views is not perfectly aligned with the legacy definitions, the organization will report conflicting financial truths, leading to management confusion.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, medium strategic reporting and executive trust risk. 2. Phase, run post-go live. 3. Frequency, common in organizations with highly customized legacy reporting. 4. Primary ownership, analytics lead, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and FICO lead. 6. Business Ownership Chief Data Officer. 7. Relevant SAP Note. Not applicable Analytics Redesign Gap Reference SAP Note 2267306 for SD Analytics context.
Diagnostic dashboard, symptoms and evidence.
How KPI definition drift manifests in the live production system. 1. Symptom: the sales volume tile on the Fiori Launchpad shows a value 15% higher than the legacy sales register report. 2. Red flag: executives find that return orders are being counted as positive sales volume in new dashboards. 3. Business impact: inaccurate profit forecasting and incorrect resource allocation based on inflated or deflated real-time data. 4. Detection: comparing the data source of a Fiori KPI CDS view against the legacy ABAP code logic reveals a mismatch in the where clause. 5. Technical proof: mismatches in table ACDOCA where statistical items are being aggregated into financial KPIs. Insight: real-time analytics is only as accurate as the business definition it encodes. A fast wrong number is worse than a slow right one.
Why this happens: scenario analysis and root cause.
1. Legacy KPI definitions were invisible, buried in custom ABAP reports or BW transformation logic that was not documented. 2. S4 HANA standard CDS views use the SAP best practice definition of sales, which may differ from the company's 20-year-old internal logic. 3. Failure to account for intercompany eliminations in real-time views, leading to double counting of group-level revenue. 4. The project team assumed embedded analytics was a technical activation rather than a functional definition workshop. The failure is a result of treating analytics as a UI task rather than a governance task.
Financial and customer impact.
1. Material risk of misguided strategy if the CEO makes decisions based on KPIs that include non-revenue items. 2. Internal disputes regarding sales target achievement, impacting regional manager bonuses and morale. 3. Audit risk if the company provides different sales totals to different regulatory bodies due to inconsistent report logic. 4. Loss of ROI as the organization loses faith in S4 HANA's single source of truth promise. KPI drift directly erodes the credibility of the entire S4 HANA digital transformation.
Governance and accountability RACI model.
Securing the one truth requires an integrated business and IT authority. 1. Accountable analytics lead, the person who owns this and gets fired if it fails. 2. Responsible SD functional lead defines the functional logic, for example, what counts as a sale for the technical team. 3. Consulted corporate controller ensures the SD KPIs align with the general ledger revenue accounts. 4. Informed chief data officer signs off on the global KPI dictionary for the enterprise. Accountability ensures that every dashboard uses the same mathematical dictionary.
Ownership: who actually fixes it.
Resolving this requires a definition to code reconciliation. 1. The analytics lead identifies the top 20 most viewed KPIs and documents their legacy versus new formulas. 2. The SD functional lead refactors the filter criteria in the Fiori Manage KPIs and reports app. 3. The ABAP lead modifies the custom CDS views to exclude specific document types like pro forma from revenue calculations. 4. The corporate controller performs a parallel run validation, proving that the new dashboard matches the legacy audited financials.
How this is actually fixed the right way by a role.
1. Analytics lead mandates a global KPI catalog during the explore phase, signed off by all regional controllers. 2. The team implements semantic tags in the S4 HANA financial structure to group GL accounts into business-friendly KPI buckets. 3. The SD team utilizes SAP Note 2267306 to ensure that simplified analytics settings are correctly mapped to business events. 4. Functional leads execute trend testing, verifying that the month-over-month growth matches the legacy trajectory.
What not to do: common wrong fixes.
1. Do not allow users to create personal KPI versions in Fiori. This leads to multiple versions of the truth. 2. Do not use manual Excel adjustments to fix an SAC dashboard. Find the error in the underlying CDS view. 3. Do not ignore 1% variances in high-volume KPIs. These indicate a structural logic error in the join logic. 4. Do not assume that SAP standard dashboards are 100% correct for your specific industry nuances. Shortcuts in KPI definition result in a permanent loss of executive trust in the system.
Follow-up 1. What is a semantic tag, and why is it useful for KPIs?
Answer: a semantic tag is a label you attach to GL accounts in S/4HANA. Instead of hard coding account 400,000 into a report, you code the report to look for the tag revenue. This makes your analytics much more flexible and easier to maintain when you add new accounts to the ledger.
Follow-up 2. Why do return orders often cause KPI mismatches?
Answer: in ECC/LIS, returns were often subtracted from the total in a nightly batch. In S/4HANA real-time CDS views, a return is a separate record. If your CDS view does not have a case statement to treat returns as negative values, your sales volume will look much higher than it actually is.
Follow-up 3. Curveball. What if the KPI is correct in S4HANA, but drifts in SAP Analytics Cloud because the data acquisition job failed to account for currency revaluation posted in the Universal Journal at midnight?
Answer: this is a valuation timing failure. SAC often uses a fixed exchange rate for historical snapshots. The fix is to use live connections or ensure the SAC data model triggers a full reload for the current period after the midnight FI revaluation run. If you miss this, your cloud dashboards will show stale margins that differ from your real-time Fiori apps.
Exclusive pro tip.
Create a KPI dashboard for IT that monitors the health of your primary O2C KPIs. If the Fiori tile for net sales deviates by more than 2% from the ECC production baseline during the first 48 hours, raise a P1 technical defect immediately.
Scenario 262. Margin analysis interpretation issues.
On day 1 post-go live, financial controllers often report that product profitability looks significantly lower than in ECC. S/4HANA replaces costing-based COPA with account-based margin analysis. Because the new engine recognizes manufacturing variances and price differences as separate GL postings rather than aggregated value fields, the margin appears fragmented. If the finance team is not trained on how to interpret the new Universal Journal layout, they will assume the system is losing margin data.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high financial reporting and user adoption risk. 2. Phase, run post-go live. 3. Frequency, extremely common in organizations moving from costing to account-based COPA. 4. Primary ownership, FICO lead, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and sales controller. 6. Business ownership, corporate controller. 7. Relevant SAP note, not applicable analytics redesign gap reference, SAP, note 2267306. For analytics context.
Diagnostic dashboard, symptoms and evidence.
How margin analysis interpretation issues manifest in the live system. 1. Symptom. Controllers report that the standard margin is correct but the net margin is missing key discount components. 2. Red flag. Users are still trying to run transaction KE30 costing-based COPA and finding it out of sync with the general ledger. 3. Business impact. Inability to reconcile sales performance with the P&L, leading to a delay in the first post-migration monthly close. 4. Detection, checking table ACDOCA reveals profitability segments that are missing the expected condition type mapping. 5. Technical proof, mismatches in transaction KOT28 where the derivation rules for market segments are failing to trigger. Insight, margin in S4HANA is a ledger posting, not an estimate. If you didn't map the account, you didn't record the margin.
Why this happens, scenario analysis and root cause.
1. The project team lifted and shifted the legacy value fields without mapping them to the new S/4HANA general ledger accounts. 2. A lack of change management for the finance team. They are still looking for CE1 tables rather than the Universal Journal. 3. Failure to implement COGS splitting, which is required to see manufacturing cost components material, labor in the margin analysis. 4. Underestimating the shift from statistical pricing, which didn't hit the ledger, to real-time postings, which must hit the ledger. The failure is a result of treating margin analysis as a technical upgrade rather than a fundamental accounting redesign.
Why this is a migration exclusive failure.
1. ECC upgrades kept costing base COP active, so the value field reporting remained stable for 20 years. 2. S/4HANA migration physically prioritizes the universal journal, making the old subledgers effectively dead for modern Fiori apps. 3. The requirement to assign a GL account to every statistical O2C condition is unique to the S/4HANA single source of truth model. 4. This failure only surfaces when the new integrated financial core encounters the real-world transactional density of day one. S/4HANA forces a financial discipline on sales margins that ECC allowed you to bypass.
Financial and customer impact.
1. Material distortion of regional P&L reports, leading to incorrect profit alerts being sent to the board. 2. Inaccurate cost of goods sold reporting, resulting in wrong inventory valuation at month-end. 3. Internal friction as sales managers dispute the new margins, claiming the system is under-reporting their success. 4. High cost of manual top-side adjustments to reconcile the digital core with the legacy reporting history. Margin interpretation failures directly compromise the ROI of the S/4HANA investment.
Governance and accountability RACI model.
Securing the margin requires a partnership between FICO and SD leads. 1. Accountable FICO lead, the person who owns this and gets fired if it fails. 2. Responsible sales controller defines the margin components and validates the mapping to GL accounts. 3. Consulted SD functional lead provides the pricing procedure logic and condition category details. 4. Informed corporate controller monitors the ledger consistency report during the first month-end close. Accountability ensures that technical automation matches corporate accounting standards.
Ownership who actually fixes it.
Resolving this requires an account-to-condition mapping audit. 1. The FICO lead identifies all statistical pricing conditions and assigns them to statistical GL accounts for reporting. 2. The SD functional lead audits transaction VKOA to ensure no condition types are leaking revenue without an account link. 3. The technical architect utilizes SAP Note 2349298 to ensure COGS splitting is technically active in the S/4HANA kernel. 4. The revenue accountant performs a margin walk, tracing a single order from gross to net in table ACDOCA.
How this is actually fixed the right way by a role.
1. FICO lead mandates a margin architecture workshop during the realize phase to align GL accounts with commercial value fields. 2. The team implements real-time COGS splitting transaction SPRO to break down manufacturing costs in the ledger. 3. The SD team utilizes predictive accounting to show the expected margin in the ledger as soon as the sales order is saved. 4. Functional leads execute volume comparison testing, verifying that S/4HANA derives market segments for 5,000 invoices per minute.
What not to do. Common wrong fixes.
1. Do not allow users to keep relying on KE30 as a permanent solution. It is a legacy feature that is out of sync with the universal journal. 2. Do not use manual journal entries to correct a margin. You are destroying the document-level audit trail. 3. Do not ignore unassigned profitability segments in Fiori, assuming they are normal noise. 4. Do not assume that ECC value field logic will automatically work for S/4HANA accounting-based COPA. Shortcuts in margin analysis result in a financial black hole that will haunt the CFO.
Follow-up 1. What is margin analysis in the context of S/4HANA?
Answer: Margin analysis is the S/4HANA evolution of account-based COPA. It provides a real-time, ledger-integrated view of profitability by ensuring that every SD pricing condition is recorded as a general ledger posting in the Universal Journal Table ACDOCA.
Follow-up 2. What is COGS splitting and why is it important?
Answer: in ECC, COGS was one lump sum. In S/4HANA, COGS splitting breaks that sum down into material, labor, and overhead in the ledger. This allows the finance team to see the true source of manufacturing variances directly on the income statement without extra reports.
Follow-up 3. Curveball. What if the gross margin is correct, but the marketing segment attribute is missing for intercompany invoices? Because the FICO substitution rule transaction GGB1 only looked for standard sales orders and ignored the intercompany billing document category.
Answer: this is a metadata hierarchy failure. Intercompany documents often use different logic paths. You must test the cross-module derivation. The fix is to update the GRC or FICO substitution rule to include all relevant SD billing types like IV. If you miss this, your group-level profit will be correct, but your regional margin reports will be empty for all internal sales, resulting in a Day 1 management reporting blackout.
Exclusive pro tip.
On Day 1, monitor table ACDOCA for any record where the accounting document type is RV, but the POBJNR is empty. These are blind margins. Fix the COPA derivation rules in transaction KOT28 immediately to restore your product profitability visibility.
The universal interview tip. Whenever you ask a tech VP or an industry mentor how to crack a tough interview, they all give you the exact same tip. Get familiar with the most commonly asked interview questions. It sounds simple, right? But here is the problem. The search nightmare. Finding the actual most commonly asked questions for senior roles is a nightmare. Generic Google searches only give you basic textbook definitions, and those will not help you clear a lead architect or senior engineer round where production reality matters. Imagine a master vault. Now, imagine a vault where the absolute most commonly asked interview questions for your specific role are already collected for you, perfectly organized by interview rounds like 1. Most commonly asked technical-based question and answers. 2. Most commonly asked scenario-based question and answers. 3. Most commonly asked real-world problem-solving question and answers. 4. Most commonly asked system design question and answers. 5. Most commonly asked behavioral-based question and answers. Cross-domain mastery. I built the ACE Interviews Master Vault for the modern architect. We did not just do this for one role. We covered everything: SAP, cybersecurity, DevOps, software testing, data engineering, Java, and Python. The ultimate all-access deal. Instead of paying for individual PDFs, you can now unlock our entire database. Get over 1,000 plus PDFs containing 50,000 plus of the most asked question and answers for a mere 1,499 rupees a month. The elite transformation. Stop studying just to pass. Equip yourself with the cross-domain confidence of a true architect and walk out of your next interview choosing between 2 or 3 elite job offers. Unlock the vault now. The era of buying individual guides is over. Click the link in the video description below right now to unlock the Master Vault. Now, let's get back to the masterclass.
Scenario 263. Reconciliation ECC versus S4 reporting mismatch.
On Day 1 post-go live, organizations often encounter a crisis where sales history reports in S4 HANA do not match the legacy ECC audited figures. In ECC, reporting was often based on LIS tables or custom BI extractions that utilized specific filtering logic for returns and cancellations. S4 HANA Embedded Analytics aggregates data in real time from the Universal Journal. If the new CDS views do not replicate the legacy exclusion logic or handle credit memo reversal signs differently, the organization will report a broken history, leading to audit failures and executive panic.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high financial integrity and audit compliance risk. 2. Phase, run post-go live. 3. Frequency, extremely common in multinational conversions. 4. Primary ownership, analytics lead. The person who owns this and gets fired if it fails. 5. Supporting SD functional lead and FICO lead. 6. Business ownership, corporate controller. 7. Relevant SAP note. Not applicable analytics redesign gap reference SAP note 2267306 for analytics context.
Diagnostic dashboard, symptoms and evidence.
How reporting reconciliation gaps manifest in the live system. 1. Symptom. The sales volume dashboard shows $105 million for last year, while the audited ECC report shows exactly $100 million. 2. Red flag. Discrepancies exist only in sales organizations with a high volume of returns or intercompany transactions. 3. Business impact. Inability to certify the historical continuity of the financials, resulting in a potential delay of the quarterly investor call. 4. Detection, comparing table VBRK and ETWR in ECC against the CDS view aggregation result reveals orphan documents being incorrectly included. 5. Technical proof, errors in the CDS join logic where canceled invoices SFKN are not being deducted from the total. Insight, S/4HANA shows the raw truth of the database. If your ECC reports used hidden filters, the mismatch is inevitable.
Why this happens: scenario analysis and root cause.
1. Legacy ECC reports used hard-coded filters to ignore specific document types like Z returns that the new CDS views are unaware of. 2. S/4HANA calculates values using a different sign logic, positive versus negative in table ACDOCA compared to legacy LIS tables. 3. The project team failed to establish a golden baseline report in ECC before the production system was shut down. 4. Underestimating the impact of multi-currency translation. S/4HANA uses real-time rates that may differ from legacy BW snapshots. The failure is a result of treating analytics as a Fiori UI task rather than a financial logic reconciliation.
Why this is a migration exclusive failure.
1. ECC upgrades never change the logic of reporting. The S001 and S002 tables remain the static source of truth. 2. S/4HANA migration physically replaces the LIS engine with virtual CDS views, forcing a total recalculation of 20 years of history. 3. The requirement to reconcile legacy sub-ledger history with the new integrated ledger is unique to the S/4HANA transition. 4. This failure only surfaces when the organization attempts to view pre-migration and post-migration data in a single dashboard. Migration forces a revaluation of the company's entire sales history.
Financial and customer impact.
1. Material misstatement of historical revenue, leading to severe audit red flags and a loss of market confidence. 2. Inaccurate sales commission calculations if the target versus actual reports are using inconsistent mathematical logic. 3. Loss of management visibility as executives lose faith in the new digital core and return to using manual spreadsheets. 4. High cost of forensic accounting post go live to explain the $5 million variance to the board of directors. Reconciliation mismatches directly compromise the credibility of the entire S/4HANA transformation.
Governance and accountability RACI model.
Securing the one truth requires a partnership between IT and the controller. 1. Accountable analytics lead, the person who owns this and gets fired if it fails. 2. Responsible SD functional lead identifies the legacy business rules for revenue exclusion to the technical team. 3. Consulted corporate controller provides the audited baseline and approves the reconciliation methodology. 4. Informed CFO monitors the reporting integrity as a primary project success metric. Accountability ensures that the technical dashboard reflects the legal financial truth.
Ownership who actually fixes it.
Resolving this requires a value-to-value reconciliation audit. 1. The analytics lead extracts a 100% source to target value report, mapping ECC totals to S/4HANA line items. 2. The SD functional lead refactors the CDS where clauses to explicitly filter out statistical or non-revenue documents. 3. The ABAP lead implements calculated fields in CDS to handle sign reversal for return orders in accordance with legacy logic. 4. The sales controller signs off on a calculation truth document that serves as the blueprint for all future O2C analytics.
How this is actually fixed the right way by a role.
1. Analytics lead mandates a historical parity test, where S/4HANA must reproduce the last 8 quarters of ECC financials to the cent. 2. The team implements semantic tags in the GL to ensure that only real revenue accounts are aggregated by the OData services. 3. The SD team utilize SAP Note 226736 to reconfigure the analytics update logic for market segments. 4. Functional leads execute variant-level reconciliation, ensuring that a domestic sale and an export sale aggregate correctly under all currencies.
What not to do: common wrong fixes.
1. Do not use manual journal entries in S/4HANA to adjust the totals so they match ECC. You are corrupting your new database. 2. Do not ignore a 1% variance. assuming it is noise in a billion-dollar company that is a $10 million audit failure. 3. Do not allow users to use the old system for history and the new system for actuals. It destroys the single version of truth. 4. Do not assume the migration cockpit validated the financial logic. It only validated the data structure. Shortcuts in reconciliation lead to a permanent shadow system of reporting in the finance department.
Follow-up 1. Why is sign logic the most common cause of reporting mismatches?
Answer: in ECC, some reports subtracted returns automatically, while others showed them as absolute values. In S/4HANA's Universal Journal ACDOCA, everything is recorded as a debit or credit. If your CDS view does not correctly interpret the debit-credit indicator SHKZG, your total sales will double the return value instead of subtracting it.
Follow-up 2. What is a reconciliation baseline?
Answer: it is a snapshot of your ECC financials, for example sales, by customer/org/period, taken 10 minutes before the system shut down. This is your legal truth. You must compare your S/4HANA analytics against this baseline to prove the migration was successful.
Follow-up 3. Curveball. What if the totals match for the global ledger, but are 5% off for the local GAAP ledger, because the S/4HANA migration engine failed to carry over a historical tax adjustment that was posted only in the legacy ECC subledger?
Answer: this is a ledger alignment failure. S/4HANA requires that all parallel ledgers be balanced individually. You must test the multi-GAAP parity. The fix is to execute the migration for parallel ledgers, check SAP Note 2349298, and perform a manual value correction in the non-leading ledger. If you miss this, your local statutory filings will be legally incorrect, leading to local government fines, despite your global report being green on day 1.
Exclusive pro tip.
Add a reconciliation milestone to your SIT exit gate. The SD team must produce a side-by-side revenue register showing ECC versus S/4HANA for 100 strategic orders. If the variance is not 0, the project is forbidden from entering the UAT phase.
Scenario 264. CDS performance issues in reporting.
On day 1 post-go live, organizations often find that their high-performance HANA database is brought to its knees by unoptimized Fiori dashboards. S/4HANA Embedded Analytics uses CDS views to perform on-the-fly aggregation. If these views involve complex many-to-many joins or lack mandatory filters, a single user querying 5 years of sales history will trigger a massive CPU saturation event, causing sales order entry VA0, one to hang for all other users.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high system performance and architectural stability risk. 2. Phase, run post-go live. 3. Frequency, common in organizations with thousands of Fiori analytical users. 4. Primary ownership, analytics lead, the person who owns this and gets fired if it fails. 5. Supporting basis lead and ABAP lead HANA. 6. Business ownership, chief data officer. 7. Relevant SAP note, not applicable analytics redesign gap reference, SAP Note 2267306 for analytics context.
Diagnostic dashboard, symptoms and evidence.
How CDS performance bottlenecks manifest in the live production system. 1. Symptom. Users report that the Fiori Launchpad spins for 60 seconds before showing the My Sales KPI tile. 2. Red flag, HANA alerts for CPU overload in the index server coincide exactly with the start of the morning reporting shift. 3. Business impact, operational order entry is slowed down by 50%, leading to customer abandoned calls and warehouse delays. 4. Detection, checking transaction MDT_analyze reveals a custom CDS view, for example Z_sales performance taking more than 30 seconds to execute. 5. Technical proof, SQL traces in HANA Studio show a full table scan on table VBAK due to a missing filter in the CDS DDL. Insight, CDS views are select statements on steroids. If you write a bad query, HANA will just execute the bad logic faster.
Why this happens, scenario analysis and root cause.
1. Developers built custom CDS views using select star on transactional tables instead of selecting only required business fields. 2. A lack of mandatory parameters, for example sales org or year in the Fiori app, allowing users to query millions of rows by accident. 3. Nested CDS views calling views that reach a depth of 5 or more levels, overwhelming the HANA SQL optimizer. 4. The project team failed to implement data aging for O2C history, forcing real-time analytics to scan through cold 10-year-old records. The failure is a result of treating the database as an infinite resource without governing query complexity.
Why this is a migration exclusive failure.
1. In ECC, reporting was safe because it happened on LIS tables S001 or in a separate BW system, protecting the core database. 2. S/4HANA migration brings the reporting load on stack, meaning the search and the save share the same CPU and RAM. 3. The shift to a columnar database makes unoptimized joins significantly more resource-intensive than the old row store model. 4. This failure only surfaces when the new integrated analytical core encounters the true concurrency of the production user base. Migration removes the firewall between transactional and analytical processing.
Financial and customer impact.
1. Revenue loss as sales reps abandon orders because the system takes 2 minutes to respond to a customer inquiry. 2. Inaccurate inventory commitments if the system hangs during a real-time ATP check because the CPU is busy with a dashboard refresh. 3. Increased cloud hosting costs as the company is forced to upsize the HANA server to mask unoptimized software code. 4. Loss of ROI as users disable Fiori apps and return to using offline Excel reports to avoid system slowness. Analytical performance spikes directly compromise the agility promised by the S/4HANA business case.
Governance and accountability RACI model.
Ensuring system speed requires a partnership between basis and the analytics team. 1. Accountable analytics lead, the person who owns this and gets fired if it fails. 2. Responsible ABAP lead HANA refactors unoptimized CDS joins and implements mandatory SQL hints. 3. Consulted basis lead monitors the CPU per user and identifies the specific Fiori apps causing the saturation. 4. Informed IT transformation director manages the performance budget and signs off on the go-live readiness. Accountability ensures that business insight does not come at the cost of business execution.
Ownership who actually fixes it.
Resolving this requires an optimization and tuning strategy. 1. The basis lead utilized the HANA cockpit to identify the top 5 most expensive SQL statements in the system. 2. The analytics lead mandates a maximum row limit for all Fiori-based data extractions to Excel. 3. The ABAP lead implements HANA performance annotations, for example at object model.usage type in all custom CDS definitions. 4. The technical architect configures HANA workload management to prioritize transactional order entry over analytical dashboarding.
Who gets blamed versus who owns it.
1. Blamed basis team, the business assumes the servers are too small. 2. Blamed SAP users claim S/4HANA is slower than ECC. 3. Actual owner, analytics lead responsible for the failure to govern the query architecture during the realize phase. 4. Root cause, treating real-time analytics as a no-limits feature without technical guardrails. Performance is an architectural feature, not a hardware property.
How this is actually fixed the right way by a role.
1. Analytics lead mandates a performance SIT where 50 users refresh a dashboard while a background billing job is running. 2. The team implements parameter-driven views, requiring users to select a year or sales org before any data is retrieved. 3. The ABAP lead utilizes analytical caching via SAP Note 2267306 to store the results of complex multi-dimensional queries. 4. Functional leads execute drill-down testing, ensuring that navigating from a chart to the sales order document takes under 2 seconds.
What not to do. Common wrong fixes.
1. Do not allow open-ended queries in Fiori. Every analytical app must have a mandatory default filter, for example, current fiscal year. 2. Do not simply add more CPU cores to the database. Unoptimized CDS views will scale their consumption to fill any amount of hardware. 3. Do not ignore internal table overflow dumps in ST22. They indicate that a user is trying to load too much data into the Fiori layer. 4. Do not assume that ECC-style Z reports are safer than CDS. In S/4HANA, unoptimized ABAP is the primary source of slowness. Shortcuts in analytical optimization result in a sluggish system that users will eventually reject.
Follow-up 1. What is a nested CDS view, and why is it a performance risk?
Answer: a nested view is where view A calls view B, which calls view C. While great for reusability, it creates a massive join tree for the HANA database. If you have 5 levels of nesting, a simple sales query can result in a 50-table join in the background, which will saturate the database CPU instantly.
Follow-up 2. How can I identify unoptimized CDS views on day 1?
Answer: use transaction MDT_analyze. It allows you to see the exact execution time and SQL plan for any Fiori analytical tile. If you see large table scans on VBA-K or VBA-P, your view is missing a partition filter and must be refactored immediately.
Follow-up 3. Curveball. What if the CDS view is perfectly optimized and the database is fast, but the Fiori front-end server crashes because the unremediate custom ABAP format routine inside the OData service triggers a memory_low event while attempting to format 100,000 rows of sales data for a single browser request?
Answer: this is a presentation layer bottleneck failure. Even with HANA, the gateway has limits. You must test the payload limit. The fix is to implement OData paging to ensure only 50 rows are sent to the user at a time. If you miss this, a single executive attempting an export to Excel for a huge data set will crash the SAP gateway for everyone, creating a total day 1 UI blackout.
Exclusive pro tip.
Add a consumption audit to your first month-end close. Identify any user who refreshes a dashboard more than 10 times in an hour. These are your analytics-heavy personas. Give them dedicated training on using filters to reduce the system load and protect O2C speed.
Scenario 265. Revenue reporting mismatch versus FI.
On day 1 post-go live, the finance team often finds that the revenue by customer report in S/4HANA does not match the general ledger balance in table ACDOCA. In ECC, SD reporting was often decoupled from FI, allowing for timing differences or statistical condition variances. Because S/4HANA enforces a single source of truth, any custom CDS view that aggregates billing data without accounting for the new financial posting status will report inaccurate revenue figures, leading to reconciliation failures during the first month-end close.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high financial integrity and audit compliance risk. 2. Phase, run post-go live. 3. Frequency, common in organizations with high volumes of intercompany or statistical pricing. 4. Primary ownership, analytics lead. The person who owns this and gets fired if it fails. 5. Supporting SD functional lead and FICO lead. 6. Business ownership, corporate controller. 7. Relevant SAP note. Not applicable analytics redesign gap reference, SAP, note 2267306. For analytics context.
Diagnostic dashboard, symptoms and evidence.
How revenue reporting mismatches manifest in the live production system. 1. Symptom: the sales volume Fiori dashboard shows $10 million, but the general ledger trial balance shows $9.8 million. 2. Red flag: discrepancies are traced to documents that are in build status in SD but have accounting error status in finance. 3. Business impact: inability to close the books on day 1, requiring an emergency manual reconciliation of the sales subledger. 4. Detection: comparing the output of CDS view I_billing document item against table ACDOCA reveals duplicate or missing entries. 5. Technical proof: mismatches in the posting status field RFBSK where the report is counting documents that never reach the ledger. Insight in S/4HANA: if it is not in table ACDOCA, it is not revenue. Your reports must follow the ledger, not just the billing document.
Why this happens, scenario analysis and root cause.
1. Legacy Z reports aggregated table VBRK without checking the accounting posting status, leading to the inclusion of blocked invoices. 2. S/4HANA moves revenue recognition to SAP RER or EBRR, but custom analytics are still attempting to aggregate legacy SD condition types. 3. Failure to filter out statistical condition types like freight or internal costs that appear in SD tables but do not post to revenue accounts. 4. Underestimating the impact of rounding variances between the SD pricing engine and the new Universal Journal. The failure is a result of treating analytics as a sales summary rather than a financial statement.
Why this is a migration exclusive failure.
1. ECC upgrades kept SD and FI in separate silos, so a reporting mismatch was seen as a standard reconciliation task, not a system failure. 2. S4 HANA migration physically merges the subledgers, making any discrepancy between SD and FI a high-visibility architectural flaw. 3. The shift from table BSEG to the more granular table ACDOCA changes how line item revenue is aggregated for analytics. 4. This failure only surfaces when the new integrated reporting layer attempts to reconcile day one sales history. S4 HANA removes the buffer that ECC consultants use to hide financial variances.
Financial and customer impact.
1. Material risk of misstated earnings, leading to potential legal penalties for the chief financial officer. 2. Internal disputes regarding sales bonuses if the reports used for targets do not match the final audited revenue. 3. Loss of management trust as executives cannot get a clear answer on how much did we sell today. 4. High cost of forensic accounting post-go live to trace every cent of variance between the two modules. Revenue mismatches directly compromise the single version of truth promise of the S4 HANA migration.
Governance and accountability RACI model.
Securing financial reporting requires a partnership between SD and finance leads. 1. Accountable analytics lead, the person who owns this and gets fired if it fails. 2. Responsible SD functional lead identifies the specific account keys and condition types that constitute legal revenue. 3. Consulted FICO lead provides the general ledger baseline for reconciliation testing. 4. Informed corporate controller monitors the ledger consistency report as a primary close KPI. Accountability ensures that technical dashboards are reconciled to the audited ledger.
Ownership who actually fixes it.
Resolving this requires a ledger to subledger reconciliation audit. 1. The analytics lead identifies all custom CDS views that aggregate data from table VBRK and adds a filter for status C posted. 2. The FICO lead utilizes transaction FSR1 to identify document-level variances between sales and finance. 3. The ABAP lead refactors any CDS join logic that incorrectly includes statistical conditions in revenue totals. 4. The sales controller performs a golden order test, tracing a $100 sale from the Fiori tile back to the table ACDOCA line item.
How this is actually fixed the right way by a role.
1. Analytics lead mandates a value match policy, where no report is released unless it reconciles to the GL trial balance. 2. The team implements semantic tags in S4 HANA to allow CDS views to aggregate revenue by business category rather than hard-coded accounts. 3. The SD team utilize SAP Note 2267306 to ensure the reporting logic for margin analysis is active and synchronized. 4. Functional leads execute volume reconciliation, ensuring that a month of sales in S4 HANA matches the ECC legacy baseline.
What not to do common wrong fixes.
1. Do not use manual Excel VLOOKUPs to explain the variance. The fix must be in the underlying CDS view logic. 2. Do not allow reports to aggregate gross value without subtracting returns and cancellations correctly. 3. Do not ignore 1% variances. Assuming they are rounding issues, they are usually signs of a missing filter. 4. Do not assume that standard SAP sales volume tiles are 100% correct for your custom deferred revenue processes. Shortcuts in revenue reconciliation lead to an audit disaster that will haunt the CFO for months.
Follow-up 1. Why is table ACDOCA better than table VBRK for revenue reporting?
Answer: table VBRK only shows what was billed. Table ACDOCA shows what was posted to the ledger. By reporting from ACDOCA, you automatically exclude invoices that are blocked for accounting, ensuring your sales numbers always match your financial statements.
Follow-up 2. What is a statistical condition, and why does it break revenue reports?
Answer: a statistical condition like internal cost or freight estimate appears on the invoice for margin calculation, but is not charged to the customer. If your report simply sums up all conditions, it will inflate your revenue by including these non-payable amounts.
Follow-up 3 curveball. What if the totals match for standard orders, but are off for intercompany sales? Because the CDS view is reading from the billing table, which shows the transfer price, while the general ledger has already eliminated the internal revenue per the group consolidation rules.
Answer: this is an elimination logic failure. You must test the consolidation filter. The fix is to implement a consolidation-aware CDS view that identifies intercompany trading partners and applies the same elimination rules as SAP group reporting. If you miss this, your regional managers will report high revenue, while the group CFO sees zero for the same sales, creating a massive management reporting gap on day one.
Exclusive pro tip.
On day one, run transaction FSR1 financial subledger reconciliation every 2 hours. It provides a real-time comparison between the sales subledger and the general ledger. If the variance column is not zero, stop your mass billing job and identify the account mapping error immediately.
Scenario 266. Data aging filtering impacting analytics.
In the run phase post-go live, sales analysts often discover that their year-over-year growth charts are missing data for earlier periods. S/4HANA utilizes the data aging framework to move cold historical data from HANA memory to disk storage. If the custom CDS views used for analytics were not configured with the mandatory @data aging.no filtering true annotation, the HANA engine will only scan the hot partition, effectively deleting 5 years of history from your day one dashboards.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, medium reporting visibility and database architecture risk. 2. Phase, run post-go live. 3. Frequency, common in organizations using HANA Native Storage Extension or NSC. 4. Primary ownership, analytics lead. The person who owns this and gets fired if it fails. 5. Supporting basis lead and ABAP lead HANA. 6. Business ownership, chief data officer. 7. Relevant SAP note. Not applicable analytics redesign gap reference SAP note 2267306 for analytics context.
Diagnostic dashboard, symptoms and evidence.
How data aging gaps manifest in the live production system. 1. Symptom: a manager runs a 5-year sales trend, but the chart only shows data for the last 12 months. 2. Red flag: SQL queries in HANA Studio return full history, but the Fiori app for the same data returns a partial set. 3. Business impact: inability to perform long-term sales forecasting or seasonal trend analysis, leading to inaccurate supply chain signals. 4. Detection: checking the CDS view DDL reveals that the data aging annotations are missing or set to filtered. 5. Technical proof: mismatches in the record count between the physical table VBAK and the results of the OData service call. Insight: in S/4HANA, aged data is not archived data. It is still in the database, but you must explicitly ask the system to look for it.
Why this happens, scenario analysis and root cause.
1. The project team implemented data aging transaction DAG to reduce HANA memory costs, but forgot to update the analytics layer. 2. Developers assume that CDS views automatically read across all database partitions. In S/4HANA, they default to hot data for performance. 3. A lack of coordination between the basis team who define the aging temperature and the analytics team who build the reports. 4. Underestimating the impact of the underscore dataging field. If this technical column is populated, the record is excluded from standard HANA main memory scans. The failure is a result of treating database storage optimization as a purely technical task with no functional impact.
Why this is a migration exclusive failure.
1. ECC row store databases did not have the concept of hot and cold data within the same database. Everything was equally searchable. 2. S/4HANA migration introduces multi-temperature storage data aging as a core feature to manage the TCO of the HANA appliance. 3. The requirement to use temperature-aware SQL with data aging is a unique technical discipline of the S/4HANA transition. 4. This failure only surfaces when the organization attempts to analyze pre-migration history that has been aged out of memory. Migration introduces a visibility shield that ECC consultants never had to navigate.
Financial and customer impact.
1. Loss of strategic visibility into customer loyalty trends, potentially missing signs of declining accounts. 2. Inaccurate inventory planning if the history used for safety stock calculations is truncated by a data aging filter. 3. Increased support costs as users report data loss when they are actually just seeing a filtered view of the database. 4. High cost of rewarming data, moving it from disk back to RAM if the aging residence times were set incorrectly. Data aging failures directly compromise the long-term business intelligence of the company.
Governance and accountability RACI model.
Securing historical visibility requires a partnership between basis and data leads. 1. Accountable analytics lead, the person who owns this and gets fired if it fails. 2. Responsible basis lead configures the data aging objects and monitors the NSC or native storage extension performance. 3. Consulted SD functional lead defines the residence time, for example, how long an order must stay hot before turning cold. 4. Informed IT transformation director monitors the dashboard performance versus historical depth trade-off. Accountability ensures that cost savings do not result in data blindness.
Ownership who actually fixes it.
Resolving this requires an application-aware storage tiering strategy. 1. The analytics lead identifies all CDS views that require more than 1 year of historical context for trending. 2. The ABAP lead adds the annotation at data aging.no filtering, true to the header of those specific CDS views. 3. The basis lead utilizes transaction DAG_data_OBJ to verify that the age status is correctly applied to historical VBAK records. 4. The technical architect performs a temperature test, ensuring that cold data retrieval does not crash the application server memory.
How this is actually fixed the right way by a role.
1. Analytics lead mandates a historical audit during the realize phase, comparing S4 HANA Fiori results against the legacy BW baseline. 2. The team implements aged data-aware Fiori tiles, which provide a warning to users when they are querying cold partitions. 3. The basis team utilizes HANA NSC to allow cold data to stay searchable via disk I/O without requiring a full rewarming to RAM. 4. Functional leads execute trend simulations, verifying that the system correctly calculates year-over-year growth using both hot and cold data.
What not to do. Common wrong fixes.
1. Do not allow users to rewarm all historical data just to fix a report. You will crash the HANA memory and stop the business. 2. Do not ignore missing history complaints, assuming it was a migration load failure. Check the aging status first. 3. Do not assume that all standard SAP CDS views are pre-configured for data aging. Many default to hot data only. 4. Do not allow go live until the historical analytics have been tested on a system where data aging was actually executed. Shortcuts in data aging governance lead to a short-term memory system that frustrates management.
Follow-up 1. What is the difference between data archiving and data aging?
Answer: data archiving SOR moves data out of the database into an external file. Data aging DAG keeps data in the database, but moves it from the hot in-memory partition to the cold on disk partition. Aged data is still searchable via standard SQL, while archived data is not.
Follow-up 2. What is the data aging.no filtering annotation in CDS?
Answer: this is the master key for historical visibility. By default, S4 HANA queries only look at hot data for speed. This annotation tells the HANA database to ignore the temperature boundary and scan the cold partitions as well, ensuring your reports show full history.
Follow-up 3. Curveball. What if the CDS view has the no filtering annotation, but still returns 0 results for historical orders, because the data control language, or DCL file assigned to the view, has a fixed date filter that was added during development to improve performance, but was never removed for production?
Answer: this is a governance logic collision failure. Security DCLs are the final gate. You must test the security data parity. The fix is to refactor the DCL to use relative dates or to remove the date filter entirely, relying on the user's organizational role for security instead. If you miss this, you will have permanently hidden history. Your data is in the system, and your view is aging aware, but your security guard is blocking the past, resulting in unauditable historical trends on day one.
Exclusive pro tip.
Add a temperature check to your UAT. Ask an analyst to run a 5-year sales report. If it takes more than 10 seconds, your cold data access is unoptimized. If it returns 0 for 2022, your no filtering annotation is missing. Solve this before you close the sandbox.
Section 14 Wrap Up, Analytics and Reporting.
Section 14 has exposed the visibility gap of the S4 HANA migration. We analyzed how the death of LIS, the complexity of CDS joins, and the precision requirements of the Universal Journal can leave management blind if the reporting layer is not modernized. The takeaway is that S4 HANA Analytics is not just a UI upgrade. It is a fundamental shift from pre-aggregated history to real-time database calculation. If your reports do not match your ledger, your system has failed the single source of truth test.
The universal interview tip. Whenever you ask a tech VP or an industry mentor how to crack a tough interview, they all give you the exact same tip. Get familiar with the most commonly asked interview questions. It sounds simple, right? But here is the problem. The search nightmare. Finding the actual most commonly asked questions for senior roles is a nightmare. Generic Google searches only give you basic textbook definitions, and those will not help you clear a lead architect or senior engineer round where production reality matters. Imagine a master vault. Now, imagine a vault where the absolute most commonly asked interview questions for your specific role are already collected for you, perfectly organized by interview rounds like 1. Most commonly asked technical-based question and answers. 2. Most commonly asked scenario-based question and answers. 3. Most commonly asked real-world problem-solving question and answers. 4. Most commonly asked system design question and answers. 5. Most commonly asked behavioral-based question and answers. Cross-domain mastery. I built the ACE Interviews Master Vault for the modern architect. We did not just do this for one role. We covered everything: SAP, cybersecurity, DevOps, software testing, data engineering, Java, and Python. The ultimate all-access deal. Instead of paying for individual PDFs, you can now unlock our entire database. Get over 1,000 plus PDFs containing 50,000 plus of the most asked question and answers for a mere 1,499 rupees a month. The elite transformation. Stop studying just to pass. Equip yourself with the cross-domain confidence of a true architect and walk out of your next interview choosing between 2 or 3 elite job offers. Unlock the vault now. The era of buying individual guides is over. Click the link in the video description below right now to unlock the Master Vault. Now, let's get back to the Masterclass.
Transition to Section 15, Post-Go-Live Ghost Incidents.
We now enter the most challenging territory of any S4 HANA migration, the ghost incidents. These are anomalies that were never seen in sandbox, development, or QA. They only appear in the production environment under the pressure of real volume, real concurrency, and real data variety. In Section 15, we move from config errors to systemic behavior, where the system behaves perfectly for one user, but fails for the next without any visible error message.
Section 15, Post-Go-Live Ghost Incidents.
Section 15 addresses the risks of the asymmetrical landscape. In an enterprise conversion, the production system has a different gravity than the test systems. It has higher thread counts, larger database buffers, and more dirty historical data. We will examine why past tests in Q mean nothing if they are not validated at scale, and how race conditions in the HANA kernel can cause orders to vanish or margins to drift only when the business is at its busiest.
Section 15 Incident List, Ghost Incidents.
The following incidents represent the terrifying unexplained anomalies of a live S4 HANA core. Scenario 267, pricing correct in Q wrong in prod. Relevant SAP note, not applicable post-go-live stabilization and data load. Scenario 268, orders stuck without errors. Relevant SAP note, not applicable post-go-live stabilization and data load. Scenario 269, credit exposure inconsistent. Relevant SAP note, not applicable post-go-live stabilization and data load. Scenario 270, delivery intermittent failures. Relevant SAP note, not applicable post-go-live stabilization and data load. Scenario 271, billing month-end differences. Relevant SAP note, not applicable post-go-live stabilization and data load. Scenario 272, output intermittently missing. Relevant SAP note, not applicable post-go-live stabilization and data load. Scenario 273, ATP drift under load. Relevant SAP note, not applicable post-go-live stabilization and data load. Scenario 274, settlement differences after first close. Relevant SAP note, not applicable post-go-live stabilization and data load. Scenario 275, partner determination intermittent issues. Relevant SAP note, not applicable post-go-live stabilization and data load. Scenario 276, performance unstable only in prod. Relevant SAP note, not applicable post-go-live stabilization and data load. Scenario 277, revenue recognition drift after first close. Relevant SAP note, not applicable post-go-live stabilization and data load. Scenario 278, workflow intermittently bypassed. Relevant SAP note, not applicable post-go-live stabilization and data load. Scenario 279, precision rounding differences visible only at scale. Relevant SAP note, not applicable post-go-live stabilization and data load. Ghost incidents are not bugs, they are the result of unmanaged system environmental differences.
Scenario 267, pricing correct in queue a wrong in prod.
On day one post-go-live, sales reps often find that a specific discount or surcharge is not applying, even though the same test case passed perfectly in the quality system. This ghost variance usually stems from an asymmetrical data landscape. While the configuration is identical across the landscape, the condition records in the production system contain thousands of overlapping validity dates or dirty historical entries that the limited test data in queue are never triggered.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high data integrity and financial trust risk. 2. Phase, run post-go-live stabilization. 3. Frequency, extremely common in large global enterprises. 4. Primary ownership, MDM lead, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and ABAP lead. 6. Business ownership, commercial pricing manager. 7. Relevant SAP note, not applicable post-go-live stabilization. And data load, this is a data sync and landscape parity failure.
Diagnostic dashboard, symptoms and evidence.
How prod versus QA pricing gaps manifest in the live system. 1. Symptom, an order for customer correctly applies a 5% discount in QA, but applies 0% in production for the same date. 2. Red flag, pricing analysis and transaction VA03 shows that the condition was found but then deactivated by a different condition in the same group. 3. Business impact, immediate margin erosion or overbilling, leading to a massive volume of manual invoice corrections on day 1. 4. Detection, checking table PRCD_elements reveals that production has multiple records for the same access that QA did not have. 5. Technical proof, comparing table KONH and KONP record counts between the two systems reveals a 50% variance in historical data. Insight, identical configuration does not mean identical results if the master data fuel is different.
Why this happens, scenario analysis and root cause.
1. The project team used manually created test data in QA rather than a full scrambled copy of production master data. 2. Legacy condition records table KONV were migrated with orphan entries that the S4 HANA pricing engine interprets as active. 3. Failure to recognize condition exclusion conflicts that only occur when thousands of regional promotional records are present. 4. Technical buffering differences. The HANA pricing buffer in production was not invalidated after a mass upload of corrected records. The failure is a result of treating pricing as a technical code check rather than a data volume check.
Why this is a migration exclusive failure.
1. ECC upgrades never change the pricing search algorithm, so any data mess in prod behaved the same as it did for years. 2. S/4HANA migration physically restructures the pricing persistence layer, requiring a re-indexing of all condition records. 3. The move from cluster KONV to transparent PRCD_elements makes the system less forgiving of overlapping validity periods. 4. This failure only surfaces when the pure S/4HANA pricing logic meets the dirty legacy data volume in a live environment. S/4HANA migration exposes data debt that ECC allowed the business to ignore for decades.
Financial and customer impact.
1. Massive revenue leakage if high-value discounts are accidentally doubled or fail to apply to key account invoices. 2. Audit risk as the company cannot prove the consistency of its price execution during the transition week. 3. Operational stop shipments as sales reps refuse to save orders that show wrong prices to the customer. 4. High support costs as consultants must manually scrub table PRCD_elements in the live production system. Pricing ghosts are the fastest way to lose business trust in the new S/4HANA system.
Governance and accountability RACI model.
Securing the live price requires a link between MDM and SD. 1. Accountable MDM lead, the person who owns this and gets fired if it fails. 2. Responsible SD functional lead identifies the specific condition types and exclusions that are drifting in production. 3. Consulted pricing manager provides the commercial baseline to verify if the prod result is business correct. 4. Informed IT transformation director manages the communication to stakeholders regarding day one pricing adjustments. Accountability ensures that data parity is a mandatory gate for go-live readiness.
Ownership who actually fixes it.
Resolving this requires a database-to-database data audit. 1. The MDM lead utilizes transaction SC16N to perform a record count audit between QA and prod for table KONP. 2. The SD functional lead executes transaction V/LD pricing report to find overlapping validity dates in the live system. 3. The ABAP lead refactors any custom requirement routines VOFM that are failing only on dirty production data. 4. The basis lead executes a buffer refresh transaction $sync after any emergency data cleanup in production.
Who gets blamed versus who owns it.
1. Blamed. SD lead the business assumes the pricing config was not transported correctly. 2. Blamed. SAP the users claim the new engine is mathematically inaccurate. 3. Actual owner, MDM lead responsible for the failure to ensure data parity between the test and live environments. 4. Root cause. Testing with a clean subset of data that mask the complex overlaps of the real system. A ghost variance is a data problem, not a configuration bug.
How this is actually fixed the right way by a role.
1. MDM lead mandates a hard snapshot of production condition records to be loaded into the QA system before the final SIT cycle. 2. The team implements condition overlap checks via SAP Note 2228056 to identify and delete invalid records in ECC before migration. 3. SD functional lead utilizes parallel pricing testing, running the same 1,000 orders in both systems to flag deltas. 4. Functional leads execute mass reconciliation, ensuring that the total net value of the first 1,000 production orders matches expectations.
What not to do common wrong fixes.
1. Do not manually override prices in VA02. You are hiding a systemic data flaw that will reappear on the next order. 2. Do not assume that QA is 100% like prod. It never is unless you perform a full system refresh 48 hours before go live. 3. Do not ignore condition not found warnings in the log, assuming the user simply entered the order incorrectly. 4. Do not attempt to tweak the pricing procedure in production to fix a data error. You will break the logic for other regions. Shortcuts in data parity result in a permanent loss of confidence in the new digital core.
Follow-up 1. Why does S/4HANA find more pricing records than ECC?
Answer: S/4HANA's transparent pricing engine uses a more precise access sequence search in HANA memory. If you have legacy dead records with overlapping dates that ECC's old row-based index ignored, S/4HANA will see them and might prioritize them, leading to ghost prices appearing for the first time.
Follow-up 2. What is the risk of performing a buffer refresh in a live production system?
Answer: it clears all cached prices in the application server's RAM. For the next few minutes, every sales order will force a fresh database read for every condition, causing a temporary performance spike. This should only be done during off-peak hours on day 1.
Follow-up 3 Curveball. What if the price is correct on the Fiori screen, but the accounting document shows a different value because the pricing type in the billing copy control VTFL was changed in production to fix a separate issue, and this change was never retrofitted back to the QA system?
Answer: this is a landscape drift failure. Your UI and your ledger are speaking different languages. You must test the transport registry. The fix is to use transaction SCMP table comparison to verify that VTFL is identical across all systems. If you miss this, you will have auditor nightmares, invoices that the customer sees as $100 but the general ledger sees as $101, creating a permanent, unreconcilable financial variance on day 1.
Exclusive pro tip.
On day 1, run report PRC_MIG_check_tools from SAP Note 2228056 in your production system. It acts as a health check for your transparent pricing data. If it flags any inconsistencies, your master data is corrupt and will trigger ghost variances in your billing documents.
Scenario 268. Orders stuck without errors.
In the first 48 hours of an S/4HANA go live, users often report that they saved a sales order successfully, but it never arrived in the warehouse for picking. These stuck orders show no error message on the screen and have a saved status, but they are missing from the document flow and the delivery due list. This ghost failure is usually caused by an aborted asynchronous V2 update task triggered by a HANA memory spike or a locked index table, leaving the transaction in a half-committed state.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high transactional integrity and fulfillment risk. 2. Phase, run post-go-live stabilization. 3. Frequency, common in high-volume environments with complex custom logic. 4. Primary ownership, basis lead, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and ABAP lead. 6. Business ownership, sales operations director. 7. Relevant SAP note, not applicable post-go-live stabilization, and data load, this is a technical kernel, an update task failure.
Diagnostic dashboard, symptoms and evidence.
How stuck orders manifest in the live production system. 1. Symptom, a sales rep sees the order 12345 has been saved message, but the order cannot be found in transaction VA032 2 minutes later. 2. Red flag, mismatches between the high watermark of order numbers in table VBAK and the results of a standard search. 3. Business impact, significant fulfillment delays as strategic customer orders are effectively lost in the system's technical buffer. 4. Detection, checking transaction SM13 reveals a red line for function module RV_sales_document_add with status error. 5. Technical proof, system logs in SM21 showing database rollback occurred after the number range was already consumed. Insight in S/4HANA, the save message is only the first half of the truth. The background update task is the second half.
Why this happens, scenario analysis and root cause.
1. S/4HANA uses asynchronous V1 and V2 update tasks to handle the integration between sales, finance, and logistics. 2. A technical bottleneck in the HANA log writer causes the update task to time out before the document can be written to table VBAK. 3. Legacy custom logic in the save document prepare baddie triggers a secondary update that collisions with the primary system lock. 4. Failure to optimize the number range buffer in transaction SNRO, causing the update task to wait for an exclusive lock on table NRIV. The failure is a result of technical commit contention that only occurs at high production volume.
Financial and customer impact.
1. Direct revenue loss if the lost orders are not identified and re-entered manually before the daily shipping cutoff. 2. Inaccurate inventory commitments as the ATP engine think the stock is gone, but the order does not technically exist. 3. Severe loss of user confidence. Reps will start taking screenshots of every order because they do not trust the save button. 4. High IT operational costs, as basis teams must spend all day manually restarting failed update tasks in SM13. Stuck orders are the most terrifying ghost because they are invisible to standard business reports.
Governance and accountability RACI model.
Securing the transactional commit requires an integrated IT guard. 1. Accountable basis lead, the person who owns this and gets fired if it fails. 2. Responsible ABAP lead refactors any custom exits that are causing the background update tasks to crash. 3. Consulted SD functional lead provides the list of missing orders identified by the sales team. 4. Informed sales operations manager monitors the saved versus shipped ratio as a primary go-live health indicator. Accountability ensures that system stability is prioritized over individual features.
Ownership who actually fixes it.
Resolving this requires a kernel and code technical audit. 1. The basis lead monitors transaction SM13 every 15 minutes and identifies the specific users and transactions triggering errors. 2. The ABAP lead refactors the delivery user exits MV45FZZ to remove any prohibited commit work statements. 3. The technical architect utilizes transaction SDAD to measure the commit duration for high-volume sales organizations. 4. The database administrator optimizes the HANA SavePoint frequency to avoid I&O contention during peak hours.
Who gets blamed versus who owns it.
1. Blamed sales representatives. The IT team assumes the users are closing the browser too early. 2. Blamed SAP. The business assumes the new S/4HANA kernel is unstable. 3. Actual owner basis lead responsible for the failure to tune the update service for the production transaction volume. 4. Root cause underestimating the impact of real-time S/4HANA integrations on the background update queue. A stuck order is a technical failure of the handshake between memory and disk.
How this is actually fixed the right way by a role.
1. Basis lead mandates a hard lock on custom ABAP commits, ensuring 0 non-standard database commits are performed. 2. The team implements real-time alerts for transaction SM13, sending an email to the IT on-call team for every red update task. 3. ABAP lead refactors unoptimized pricing routines that are holding database locks for too long during the save event. 4. Functional leads execute volume stress tests, proving the system can handle 100 concurrent saves without an update failure.
What not to do. Common wrong fixes.
1. Do not tell users to just try again. You are creating duplicate document numbers and inventory imbalances. 2. Do not delete red update tasks in SM13 without reading the error message. It contains the only proof of why the order failed. 3. Do not ignore database rejection warnings in the system log. They are the warning signs of an imminent system hang. 4. Do not assumption that HANA is fast enough to overcome poorly written ABAP code in the update task. Shortcuts in update task management result in a permanently corrupted sales sub-ledger.
Follow-up 1. What is an update task SM13 in the S/4HANA context?
Answer: it is a background process that finishes the database right after the user clicks save. S/4HANA uses this to ensure that complex updates to sales, finance, and inventory happen in a specific order. If any part of that chain fails, the whole transaction is rolled back to protect data integrity.
Follow-up 2. Why are commit work statements forbidden in S/4HANA baddies?
Answer: because S/4HANA manages the database commit globally to ensure the universal journal balances. If your custom code triggers a local commit, it breaks the system's ability to roll back if a later error occurs, leading to split documents where the order is saved, but the finance posting is not.
Follow-up 3. Curveball. What if the SM13 update log shows success, but the sales order is still missing from the Fiori worklist because the Elasticsearch index for the Launchpad search hasn't been updated due to a technical failure in the message broker service?
Answer: this is a search persistence failure. The data is in the DB but the UI index is dead. You must test the Launchpad buffer sync. The fix is to run report ESH_IX_CRT_index_all to force a full re-index of the sales business objects. If you miss this, your users will think the system is losing data, even though the records are technically there, resulting in unnecessary day one panic calls.
Exclusive pro tip.
On day one, Give your Level 1 support team view-only access to transaction SM13. Instruct them that if a user says my order vanished, the very first step is to check for a red update task. Identifying a technical dump in the first 30 seconds prevents users from creating 10 duplicate orders.
Scenario 269. Credit exposure inconsistent.
On day 1 post-go live, the credit department often finds that customer exposure values in the new FSCM credit management do not match the real-world outstanding balance. S/4HANA replaces the legacy LIS-based credit check with the transparent table UKM_ item. If the migration of open orders was not followed by a technical rebuild of the credit buffer, or if concurrent sales updates are failing to commit to the credit subledger, the system will either block good customers or allow high-risk shipments to leak through.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high financial risk and supply chain integrity. 2. Phase, run post-go-live stabilization. 3. Frequency, common in systems with high transactional concurrency. 4. Primary ownership, credit manager, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and FICO lead. 6. Business ownership, global credit director. 7. Relevant SAP note, not applicable post-go-live stabilization, and data load reference SAP note 2270544 for credit management context.
Diagnostic dashboard, symptoms and evidence.
How credit exposure ghosts manifest in the live system. 1. Symptom. A customer with 0 open orders is shown as having 100% credit limit utilization in transaction UKM_BP. 2. Red flag, discrepancies between the total liability in FSCM and the sum of open items in tables VBAK and VBRK. 3. Business impact, immediate shipment blocks for strategic accounts, forcing manual intervention and delaying revenue realization. 4. Detection, checking transaction UKM_recon_report reveals hundreds of documents that are inconsistent with the credit subledger. 5. Technical proof, ghost records in table UKM_item for sales orders that were deleted or canceled in the legacy ECC system. Insight in FSCM, exposure is a subledger posting. If the posting fails, the credit check is working with fake news.
Why this happens, scenario analysis and root cause.
1. The project team failed to execute the credit rebuild utility transaction UKM_recon_ rebuild immediately after the final data migration. 2. Asynchronous update tasks for credit V2 updates are failing during peak hours due to HANA lock contention on table UKM_item. 3. Legacy ECC documents with incomplete status were migrated, and the FSCM engine cannot determine their credit relevance correctly. 4. The credit horizon in S/4HANA is configured differently than in ECC, including future orders that were previously ignored. The failure is a result of technical data drift between the sales subledger and the risk management engine.
Why this is a migration exclusive failure.
1. ECC row store databases used LIS tables S066 and S067, which were updated in a loose batch mode. 2. S/4HANA migration involves a physical value transfer to the FSCM component, which enforces real-time document-level reconciliation. 3. The requirement to assign a credit segment to every historical O2C record is a unique S/4HANA architectural mandate. 4. This failure only surfaces when the new integrated risk core encounters the dirty transactional history of the legacy system. S/4HANA exposes hidden credit errors that ECC row-based tables ignored for years.
Financial and customer impact.
1. Material risk of bad debt if the system underreports exposure, allowing customers to exceed limits. 2. Customer frustration peaks when strategic buyers are blocked for small amounts due to ghost invoices that were already paid. 3. Operational overhead as the credit team is forced to manually release thousands of orders via transaction VKM1. 4. Audit risk as the company cannot reconcile its credit risk report with the general ledger trial balance. Credit exposure inconsistencies directly compromise the company's financial defense layer.
Governance and accountability RACI model.
Securing the credit ledger requires a partnership between risk and IT leads. 1. Accountable credit manager, the person who owns this and gets fired if it fails. 2. Responsible SD functional lead ensures the checking rules and requirement routines are correctly mapped to FSCM. 3. Consulted FICO lead provides the accounts receivable baseline to verify the current customer liability. 4. Informed global sales director monitors the blocked order volume as a key day one risk indicator. Accountability ensures that system math matches the bank balance.
Ownership, who actually fixes it.
Resolving this requires an exposure to document reconciliation. 1. The credit manager identifies the top 50 inconsistent customers and compares FD33 in ECC to UKM_BP in S4 HANA. 2. The technical architect executes report UKM_recon_rebuild in the production environment to force a recalculation of all exposure. 3. The basis lead monitors table UKM_item for update terminated errors and increases the HANA update process count. 4. The FICO lead validates the FIAR to FSCM synchronization using transaction FINS_MIG_monitor.
Who gets blamed versus who owns it.
1. Blamed. SD lead the sales team assumes the credit config was broken during the upgrade. 2. Blamed. SAP the business claims the new FSCM engine is unreliable. 3. Actual owner, credit manager responsible for the failure to perform a 100% value reconciliation during the mocks. 4. Root cause, treating credit migration as a technical data move rather than a financial balancing event. A ghost block is a data gap, not a software bug.
How this is actually fixed the right way by a role.
1. Credit manager mandates a hard freeze of all limit changes 24 hours before cutover to ensure a stable baseline. 2. The team implements real-time recalculation jobs that run every hour to catch drift caused by parallel sales traffic. 3. Technical architect utilize SAP Note 2270544 to optimize the commit weight parameters for the FSCM engine. 4. Functional leads execute volume stress testing, proving the system can handle 1,000 credit checks per minute without drift.
What not to do. Common wrong fixes.
1. Do not use manual limit increases to bypass a ghost block. You are doubling your corporate financial risk. 2. Do not use SQL direct update to fix table UKM_item. The system will override it on the next document save. 3. Do not ignore small variances under $100. These are usually signs of a systemic rounding or logic error. 4. Do not assume that open invoices from ECC will automatically clear in S4 HANA without the FIAR reconciliation run. Shortcuts in credit data result in an uncontrollable risk profile post go live.
Follow-up 1. What is the primary difference between legacy SD credit and FSCM?
Answer. Legacy SD used LIS tables S066/S067, which were aggregated and difficult to audit. FSCM uses transparent item-level records in table UKM_item. This allows S4 HANA to provide a real-time, detailed proof of every cent of exposure, but it makes the system more sensitive to update failures.
Follow-up 2. How can I identify ghost exposure in S4 HANA?
Answer. Run transaction UKM_recon_report. It compares the sum of individual sales documents VBAK/LIPS/VBRK against the total exposure in the credit master UKM_totals. Any document that exists in one but not the other is a ghost that must be cleared.
Follow-up 3. Curveball. What if the total liability matches ECC exactly, but the open invoices category in S4 HANA is doubled because the FI clearing task failed to signal the FSCM engine during a peak load?
Answer. This is a signal loss failure in the Universal Journal. The payment was posted, but the credit update flag was dropped. You must test the asynchronous signaling logic. The fix is to run report UKM_transfer_items to force a resync between FI and FSCM. If you miss this, you will have stuck credits, customers who have paid their bills but remain blocked for credit, paralyzing your day one sales growth.
Exclusive pro tip.
On day one, monitor transaction SM13 for any failed updates for function module UKM_commit_batty. This is the silent killer of credit accuracy. Fixing a technical dump in the first hour prevents a massive manual workload for your credit managers.
Scenario 270, Delivery Intermittent Failures.
On day one of an S/4HANA go live, organizations often encounter ghost errors where some deliveries save perfectly, while others fail without a clear message. In S/4HANA, the delivery engine is more tightly coupled with the Universal Journal and advanced ATP. If custom baddies or unremediate ECC user exits contain race conditions or unoptimized table joins, the system will trigger intermittent timeouts and update terminations that are impossible to replicate in a quiet queue environment.
Scenario Classification and Relevant SAP, note if applicable.
1. Complexity, high logistics execution and system stability risk. 2. Phase, run post-go-live stabilization. 3. Frequency, common in high-volume warehouses with many concurrent users. 4. Primary ownership, logistics integration lead. The person who owns this and gets fired if it fails. 5. Supporting ABAP lead and SD functional lead. 6. Business ownership, warehouse operations manager. 7. Relevant SAP note, not applicable post-go-live stabilization, and data load reference SAP note 2227014 for logistics context.
Diagnostic Dashboard, Symptoms and Evidence.
How intermittent delivery failures manifest in the live production system. 1. Symptom, a warehouse worker scans a pallet and clicks confirm, but the RF device hangs and then returns a generic system error. 2. Red flag, transaction SM13 shows a high volume of failed updates for the same delivery at the exact time of the afternoon shipping wave. 3. Business impact, significant drops in dock-to-door velocity as staff must manually rescan and reprocess failed shipments. 4. Detection, checking transaction STAD reveals that database wait time for table LIKP spikes randomly during peak hours. 5. Technical proof, system logs in SM21 showing deadlock on HANA row-level lock during the PGI update task. Insight, intermittent failures are usually logical collisions, where two processes fight for the same record.
Why this happens, Scenario Analysis and Root Cause.
1. Legacy custom logic in SD user exit MV50FZ1 performs a direct update to a Z table that lacks proper indexing on the HANA database. 2. The project team failed to optimize the enqueue server settings for the high concurrency of the new Fiori-based picking apps. 3. Race conditions between the delivery save event and the ATP requirement update, causing one task to be killed by the kernel. 4. Underestimating the impact of real-time revenue recognition, which adds a mandatory financial commit to every logistics movement. The failure is a result of treating S/4HANA as a simple upgrade, while ignoring the intensity of the new synchronous digital core.
Why this is a migration exclusive failure.
1. ECC row store databases used record-level locking that was more tolerant of slow custom code. 2. S/4HANA migration physically flattens the status tables, concentrating all logistics locks on the LIKP header record. 3. The move to SAP Fiori increases the frequency of small and fast transactions, which can flood the update queue. 4. This failure only surfaces when the new architectural stack encounters the true mass concurrency of a live production warehouse. Migration removes the async buffer of legacy ECC, making every transaction synchronous and sensitive.
Financial and customer impact.
1. Operational revenue loss as trucks are delayed at the gate, resulting in missed delivery appointments at large retailers. 2. Inaccurate inventory reporting if a partial pick fails to save, but the worker physically moves the pallet to the dock. 3. Increased labor costs as warehouse staff must work overtime to manually catch up with the unsaved transactions. 4. Loss of brand reputation as next-day delivery promises are broken due to technical system ghosts. Intermittent failures directly destroy the reliability of the supply chain engine.
Governance and accountability RACI model.
Stabilizing the warehouse requires an integrated technical response. 1. Accountable logistics integration lead, the person who owns this and gets fired if it fails. 2. Responsible ABAP lead refactors any unoptimized delivery exits and removes forbidden commit statements. 3. Consulted, Basis Lead monitors the kernel work processes and tunes the HANA row-level lock parameters. 4. Informed, Warehouse Operations Manager provides the peak hour schedule to avoid IT maintenance windows. Accountability ensures that unexplained errors are treated as technical defects, not user mistakes.
Ownership, who actually fixes it.
Resolving this requires a trace and simplified technical strategy. 1. The Logistics Integration Lead utilizes transaction SM66 to identify hanging work processes during peak hours. 2. The ABAP Lead refactors the post-goods issue exit to use the new clean core BADI definitions. 3. The Technical Architect utilizes SQL Monitor or SQLM to identify hot spots in table LIPS that are causing deadlocks. 4. The Basis Lead increases the max number of locks in the NQ server profile to handle the day one surge.
Who gets blamed versus who owns it.
1. Blamed, warehouse staff management assumes the users are doing it wrong or double-clicking. 2. Blamed, SAP the business assumes the new embedded EWM is unstable. 3. Actual owner, Logistics Integration Lead responsible for the failure to perform a 100% concurrency stress test during SIT. 4. Root cause, underestimating the database resource contention of moving from batch to real-time logistics. An intermittent error is a technical race condition, not a human error.
How this is actually fixed the right way by a role.
1. Logistics Integration Lead mandates a zero-commit policy for all custom O2C developments to prevent update crashes. 2. The team implements optimistic locking for large deliveries, allowing multiple pickers to work on the same document. 3. The ABAP Lead refactors any custom requirement routines to ensure they only read from primary indexes. 4. Functional leads execute peak hour rehearsals, simulating 50 concurrent pickers in the sandbox to identify bottlenecks.
What not to do, common wrong fixes.
1. Do not tell users to refresh and try again without fixing the underlying race condition. You are corrupting the data flow. 2. Do not manually delete document locks in transaction SM12 unless the user session is truly dead. 3. Do not assumption that faster hardware will solve a logical deadlock caused by unoptimized custom ABAP. 4. Do not allow go live until the technical throughput for PGI has been proven at 120% of legacy peak volume. Shortcuts in logistics stabilization lead to a permanently fragile warehouse operation.
Follow-up 1. What is a race condition in S/4HANA logistics?
Answer: it happens when two technical tasks like a picking update and an ATP requirement update both try to modify the same document header at the exact same time. S/4HANA is strictly synchronous, so if one task arrives microseconds later, it will be killed to protect the first task's integrity.
Follow-up 2. Why are intermittent errors harder to solve than hard errors?
Answer: because they are volume dependent. A hard error happens every time and is easy to debug in QA. An intermittent error only happens when the system is under 90% load with 500 concurrent users, which is almost impossible to replicate without a professional load testing tool.
Follow-up 3. Curveball. What if the delivery save succeeds in standard code, but the status update task is killed because the shared memory buffer for the global sales monitor reached its limit during a peak day 1 volume spike?
Answer: this is a kernel buffer failure. S/4HANA uses shared memory for real-time monitoring tiles. You must test the buffer saturation limit. The fix is to increase the profile parameter rsdb/obj/buffer size and to disable non-essential Fiori real-time refresh tiles that are stealing memory from the transactional update queue. If you miss this, your warehouse will freeze every time a manager opens their global sales dashboard.
Exclusive pro tip.
On day 1, monitor transaction STAD and look for wait time on table LIKP. If the wait time exceeds 200 milliseconds, you have a custom BADI that is holding a lock for too long. Identify and refactor that code within the first 4 hours to prevent a system-wide hang.
Scenario 271. Billing month-end differences.
During the first month-end close post-go live, organizations often encounter ghost variances where the sales revenue in the sub-ledger does not match the general ledger. S/4HANA uses the Universal Journal to enforce real-time reconciliation. If legacy billed but not posted documents were migrated, or If the new rounding rules in the S/4HANA pricing procedure create sub-cent differences during mass billing, the finance team will be unable to close the period until thousands of micro variances are manually cleared.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high financial integrity and audit compliance risk. 2. Phase, run post-go-live stabilization. 3. Frequency, extremely common during the first 30 days of operation. 4. Primary ownership, corporate controller, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and FICO lead. 6. Business ownership, chief financial officer. 7. Relevant SAP note, not applicable post-go-live stabilization, and data load reference SAP note 2349298 for universal journal context.
Diagnostic dashboard, symptoms and evidence.
How billing month-end ghosts manifest in the live system. 1. Symptom, the trial balance for revenue shows a variance of several $1,000s compared to the sales register report. 2. Red flag, transaction VFX3 is suddenly populated with invoices that were green yesterday but are now red due to period closing locks. 3. Business impact, delay in public financial reporting and potential regulatory penalties for late filing. 4. Detection, checking transaction FSR1 financial subledger reconciliation reveals a non-zero balance in the O2C category. 5. Technical proof, errors in table ACDOCA where the posting date and the document date for migrated billing documents are in different fiscal years. Insight, S/4HANA does not allow close and fix later. The system requires mathematical perfection to shut the books.
Why this happens, scenario analysis and root cause.
1. In ECC, SD and FI were loosely coupled. S/4HANA requires every SD condition to map perfectly to a GL account in table ACDOCA. 2. The project team failed to reconcile in-flight billing documents that were created in ECC but posted to accounting in S/4HANA. 3. Rounding logic differences between the legacy pricing engine and the new universal journal result in 1-cent variances that block mass postings. 4. Underestimating the impact of real-time COPA derivation, which requires every invoice line to have a valid profit center and segment. The failure is a result of treating month-end as a report generation task rather than a ledger balancing event.
Financial and customer impact.
1. Material risk of misstating revenue, leading to audit failures and loss of investor confidence. 2. Operational paralysis as the finance team is pulled away from analysis to perform manual data scrubbing. 3. Increased cost of audit as external partners require 100% testing of the migration period revenue transactions. 4. Delayed commission payouts if the calculation engine is waiting for the final month-end revenue figures. Month-end variances are the ultimate test of the migration's financial integrity.
Governance and accountability RACI model.
Securing the first close requires an integrated finance and SD authority. 1. Accountable corporate controller, the person who owns this and gets fired if it fails. 2. Responsible FICO lead and SD functional lead jointly responsible for the VKOA mapping accuracy and rounding reconciliation. 3. Consulted revenue accountant provides the baseline from legacy ECC for comparison. 4. Informed CFO monitors the closing status and manages stakeholder expectations. Accountability ensures that financial truth is the primary goal of the stabilization phase.
Ownership, who actually fixes it.
Resolving this requires a value-to-value sub-ledger audit. 1. The corporate controller mandates a cent-level reconciliation for all revenue accounts between ECC and S/4HANA. 2. The SD functional lead refactors the pricing procedure rounding rules to match the FIGL decimal settings. 3. The FICO lead utilizes transaction FIN S_recon_SD_FI to identify the specific document IDs causing the imbalance. 4. The technical architect utilizes SAP Note 2349298 to optimize the accounting interface for high-volume month-end postings.
Who gets blamed versus who owns it.
1. Blamed. SD functional lead, the finance team assumes billing configuration is calculating wrong numbers. 2. Blamed. SAP, the business assumes the universal journal model is losing data. 3. Actual owner, corporate controller responsible for the failure to define a reconciliation standard during the project. 4. Root cause, maintaining acceptable variances in ECC that became fatal errors in the stricter S/4HANA environment. If the ledger does not balance, the problem is in the redesign, not the migration.
How this is actually fixed the right way by a role.
1. The corporate controller establishes a financial integrity gate requiring 0 variances before the period can be closed. 2. The team implements automatic rounding correction accounts in transaction OBY6 to absorb micro-variances. 3. The SD team utilize the value match reports to identify and fix VKOA account determination gaps in real time. 4. Functional leads execute closing rehearsals in a post-migration sandbox to identify month-end bottlenecks before the real deadline.
What not to do. Common wrong fixes.
1. Do not post manual GL adjustments to force the trial balance. You are creating a permanent audit red flag. 2. Do not ignore 1-cent variances. S/4HANA will block the entire billing batch if the ledger is out of balance. 3. Do not allow users to manually change accounts in the billing document. It is an internal control violation. 4. Do not skip the reconciliation of intercompany revenue, as these contain the highest risk for elimination variances. Shortcuts in month-end reconciliation result in a qualified audit and executive scrutiny.
Follow-up 1. What is the most common reason for SDFI variances in S/4HANA?
Answer: it is usually condition rounding. In ECC, SD and FI could have different rounding rules. In S/4HANA, because they share the same row in table ACDOCA, any difference in the decimal calculation between the pricing engine and the tax engine triggers an immediate balancing error.
Follow-up 2. Which transaction code should I use to reconcile the sub-ledger on day 1?
Answer: you should use transaction FSR1. It provides a real-time comparison between the sales subledger and the general ledger. It identifies exactly which document categories have variances, allowing you to target your investigation.
Follow-up 3. Curveball. What if the trial balance matches perfectly, but the profit center on the revenue line item is assigned to a dummy segment because the derivation logic failed for a legacy product that was not updated in the S/4HANA Material Master?
Answer: this is a metadata quality failure. Your ledger balances, but your management reporting is trash. You must test the derivation stability. The fix is to execute transaction KE21N to manually re-derive the segments for the current month. If you miss this, your regional margins will be completely skewed, making your executive dashboards useless despite a successful financial close.
Exclusive pro tip.
On the last day of the first month live, run a custom SQL query comparing VBRK and ETWR to the sum of a CDOCA HSL. If you find even a 1-cent variance, identify the condition routine and implement commercial rounding immediately to stop the drift.
Scenario 272. Output intermittently missing.
On day 1 post-go live, users often report that invoices or shipping labels are vanishing. A sales rep clicks print, receives a success message, but no document is generated. This ghost behavior usually occurs in the new BRF plus output management engine. Because S/4HANA utilizes an asynchronous Java-based rendering engine ADS, high-volume spikes can saturate the RFC connection pool, causing specific document rendering tasks to time out and disappear from the queue without a trace.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high customer communication and technical throughput risk. 2. Phase, run post-go-live stabilization. 3. Frequency, common in high-volume businesses during peak shipping windows. 4. Primary ownership basis lead, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and ABAP lead. 6. Business ownership, customer service manager. 7. Relevant SAP note, not applicable post-go-live stabilization, and data load reference SAP note 2228611. For output management context.
Diagnostic dashboard, symptoms and evidence.
How intermittent output failures manifest in the live production system. 1. Symptom: a customer service rep sees the output successful green icon, but the customer never received the email and the spool is empty. 2. Red flag, technical logs in transaction SM21 show RFC_VMC_error or gateway timeout during peak O2C hours. 3. Business impact. Trucks are delayed at the warehouse gate because bill of lading documents are missing, paralyzing logistics. 4. Detection checking transaction APOC_monitor reveals document items in error status with the message connection to ADS lost. 5. Technical proof, high garbage collection overhead on the Adobe Document Services Java instance during the billing run. Insight in S4 HANA, the save and the print are on different servers. If the bridge between them is weak, data falls through the cracks.
Why this happens, scenario analysis and root cause.
1. S4 HANA Output Management BRF Plus uses a service-oriented architecture that is highly sensitive to network latency. 2. The Adobe Document Services or ADS Java stack was sized based on average volume but crashes under peak day 1 concurrency. 3. Legacy custom print programs perform heavy database reads during the rendering loop, causing the Java thread to time out. 4. Failure to configure persistent RFC connections between the ABAP core and the Java-based rendering server. The failure is a result of technical infrastructure being overwhelmed by a modern XML-based rendering load.
Why this is a migration exclusive failure.
1. ECC legacy output and a ST was ABAP native and local. It physically could not time out in an RFC pool because there was no RFC call. 2. S4 HANA migration introduces the technology hop from ABAP to Java, creating a new point of intermittent failure. 3. The move from legacy Smart Forms to Adobe Forms increases the XML payload size, multiplying the network resource requirements. 4. This failure only surfaces when the new XML-based communication engine encounters the true multi-user pressure of a live system. Migration creates a cross-stack dependency that ECC row-based spooling never had.
Financial and customer impact.
1. Immediate cash flow impact as invoices are not transmitted, delaying the entire payment cycle from the customer. 2. Operational stop shipments as warehouse staff wait for mandatory legal paperwork that the system failed to render. 3. Severe damage to customer trust as strategic buyers receive empty email attachments or unformatted documents. 4. Increased infrastructure TCO as the company is forced into a high-cost emergency hardware expansion for the Java servers. Output performance failures turn a high-speed S4 HANA system into a slow-motion logistics disaster.
Governance and accountability RACI model.
Securing customer communication requires a partnership between basis and O2C leads. 1. Accountable basis lead. The person who owns this and gets fired if it fails. 2. Responsible technical architect optimizes the RFC pool and the Java thread configuration for the ADS server. 3. Consulted SD functional lead provides the peak output volume profile for example invoices per minute for stress testing. 4. Informed customer service lead monitors the print success rate as a primary go-live health indicator. Accountability ensures that technical speed matches the company's commercial velocity.
Ownership who actually fixes it.
Resolving this requires an infrastructure and API technical audit. 1. The basis lead identifies the ADS connection pool limits and increases the number of concurrent rendering threads. 2. The technical architect configures asynchronous output in BRF Plus to decouple the UI save from the rendering event. 3. The ABAP lead refactors the custom form data providers to ensure only mandatory fields are sent to the Java stack. 4. The QA team executes a mass rendering stress test, simulating 1,000 PDF generations in a single 10-minute window.
Who gets blamed versus who owns it.
1. Blamed. ABAP developers the business assumes the invoice form has a code bug. 2. Blamed. SAP users claim the new BRF Plus system is inherently unreliable. 3. Actual owner basis lead responsible for the failure to scale the Java application server for production volumes. 4. Root cause underestimating the CPU and memory cost of real-time XML to PDF transformation in S4 HANA. A missing invoice is an infrastructure throughput failure, not a data error.
How this is actually fixed the right way by a role.
1. Basis lead mandates an ADS performance tuning sprint, increasing the Java heap memory for the XML rendering engine. 2. The team implements output scheduling for non-essential documents, spreading the rendering load over the entire business day. 3. The SD team utilizes SAP Note 2228611 to enable the compatibility layer for legacy smart forms to reduce the ADS load. 4. Functional leads execute volume validation, proving the system can generate 1,000 documents per minute without queue failure.
What not to do common wrong fixes.
1. Do not allow users to manually re-trigger failed outputs multiple times. You are making the resource bottleneck even worse. 2. Do not ignore gateway timeout errors in the browser, assuming they are normal for new system. 3. Do not assume that smart forms are as lightweight as they were in ECC. The BRF Plus wrapper adds significant overhead. 4. Do not allow go live without a sustained load test for the Adobe Document Services server. Shortcuts in output infrastructure result in a permanently unreliable customer communication channel.
Follow-up 1. Why is S/4HANA BRF Plus more resource-intensive than legacy and ST?
Answer: ENA ST was a procedural ABAP event that wrote simple text to a local spool. BRF Plus for S/4HANA requires the system to build an XML data stream, send it via RFC to a separate Java server ADS, render it into a PDF, and send it back. This round trip consumes significantly more CPU and network bandwidth.
Follow-up 2. What is transaction APOC_monitor, and why is it essential?
Answer: APOC_monitor is the new S/4HANA output dashboard. It shows you every document, its status, and its technical rendering log. If your printing is intermittent, you can see exactly which stage, data retrieval or Java rendering, is triggering the timeout.
Follow-up 3. Curveball. What if the rendering is fast and the queue is green, but the email never reaches the customer because the S/4HANA SMTP relay lacks the authorization to send on behalf of the new business partner email domain that was changed during the CVI cleanup?
Answer: this is a digital identity failure. S/4HANA SMTP is more sensitive to sender auth than ECC. You must test the mail handshake. The fix is to update transaction SCOT to whitelist the new BP domains. If you miss this, you will have silent success. Your system says the mail was sent, but the world never received it, resulting in thousands of "where is my invoice?" calls on day 1.
Exclusive pro tip.
Configure a dedicated basis dashboard for Adobe Document Services during the first 72 hours of go live. If the response time for the ADS_RFC destination shows an upward trend, your Java stack is fragmenting. Manually clear the Java node cache immediately to prevent a total system freeze.
The universal interview tip. Whenever you ask a tech VP or an industry mentor how to crack a tough interview, they all give you the exact same tip. Get familiar with the most commonly asked interview questions. It sounds simple, right? But here is the problem. The search nightmare. Finding the actual most commonly asked questions for senior roles is a nightmare. Generic Google searches only give you basic textbook definitions, and those will not help you clear a lead architect or senior engineer round where production reality matters. Imagine a master vault. Now, imagine a vault where the absolute most commonly asked interview questions for your specific role are already collected for you, perfectly organized by interview rounds like 1. Most commonly asked technical-based question and answers. 2. Most commonly asked scenario-based question and answers. 3. Most commonly asked real-world problem-solving question and answers. 4. Most commonly asked system design question and answers. 5. Most commonly asked behavioral-based question and answers. Cross-domain mastery. I built the ACE Interviews Master Vault for the modern architect. We did not just do this for one role. We covered everything: SAP, cybersecurity, DevOps, software testing, data engineering, Java, and Python. The ultimate all-access deal. Instead of paying for individual PDFs, you can now unlock our entire database. Get over 1,000 plus PDFs containing 50,000 plus of the most asked question and answers for a mere 1,499 rupees a month. The elite transformation. Stop studying just to pass. Equip yourself with the cross-domain confidence of a true architect and walk out of your next interview choosing between 2 or 3 elite job offers. Unlock the vault now. The era of buying individual guides is over. Click the link in the video description below right now to unlock the Master Vault. Now, let's get back to the masterclass.
Scenario 273. ATP drift under load.
In the high-volume environment of the first week live, organizations often experience a ghost behavior where stock confirmations spontaneously change or disappear. S/4HANA Advanced ATP is a memory-resident engine that allocates stock in real time. If the system is under heavy load from concurrent sales orders and background backorder processing runs, the ATP buffer can experience micro-desynchronization. This results in users seeing confirmed quantities during order entry that vanish the moment the document is saved.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high supply chain integrity and HANA resource risk. 2. Phase, run post-go-live stabilization. 3. Frequency, common in retail and high-velocity consumer goods. 4. Primary ownership, supply chain planning director, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and basis lead. 6. Business ownership, sales operations manager. 7. Relevant SAP note, not applicable post-go-live stabilization, and data load reference SAP note 2321191 for advanced ATP context.
Diagnostic dashboard, symptoms and evidence.
How ATP drift manifests in the live production system. 1. Symptom, a sales rep confirms 100 units for a customer, but the saved order shows 0 confirmed and the item moves to the backorder list. 2. Red flag, discrepancies between transaction CO09 and the Fiori review availability check results for the same material. 3. Business impact, significant fulfillment delays as customer service teams must manually protect stock for strategic orders. 4. Detection, checking the ATP PSC service logs reveals a high frequency of delta merge wait times during peak hours. 5. Technical proof, mismatches between table VBBE requirements and the ATP memory buffer table ATP_BC_SDK. Insight, ATP is a live stream. If the stream is turbulent due to high volume, the data splashes and becomes inconsistent.
Why this happens, scenario analysis and root cause.
1. The project team failed to tune the ATP PSC memory parameters for the specific concurrency of the production user base. 2. Race conditions occur when the backorder processing background job reallocates stock while a sales rep is mid-transaction. 3. Unoptimized custom baddies in the requirement check loop hold HANA threads too long, causing the ATP buffer to timeout. 4. Underestimating the impact of shared memory fragmentation in the HANA database during high-frequency O2C updates. The failure is a result of technical resource contention that cannot be replicated with small test data sets.
Financial and customer impact.
1. Direct revenue loss as high-value orders lose their stock to smaller, faster orders processed by the web shop. 2. Increased logistics costs as the company ships partial quantities to satisfy the confirmed but not fulfilled promise. 3. Severe loss of user trust. Sales reps lose confidence in the save button and begin hoarding stock via manual overrides. 4. Operational paralysis, as planners spend 80% of their day resolving phantom stock conflicts. ATP drift directly breaks the customer commitment and disrupts the corporate revenue forecast.
Governance and accountability RACE model.
Securing fulfillment accuracy requires a partnership between supply chain and basis leads. 1. Accountable supply chain planning director, the person who owns this and gets fired if it fails. 2. Responsible SD functional lead refines the BOP strategy and checking rules to reduce engine complexity. 3. Consulted basis lead monitors the HANA PSC service and tunes the thread parallelization parameters. 4. Informed IT transformation director manages the fulfillment quality, reporting to the board. Accountability ensures that the system logic matches the physical warehouse reality.
Ownership, who actually fixes it.
Resolving this requires an engine and buffer technical audit. 1. The basis lead identifies the CPU bottleneck in the ATP service using transaction NSILC. 2. The supply chain architect refactors the BOP segments to ensure strategic orders are processed in a separate, high-priority thread. 3. The ABAP lead refactors the requirement baddie to remove any wait statements that block the HANA buffer commit. 4. The technical architect utilized SAP Note 2321191 to optimize the internal table statistics for the ABAP engine.
Who gets blamed versus who owns it?
1. Blamed. SD lead the sales team assumes the ATP configuration is fundamentally broken. 2. Blamed. SAP users claim the advanced ATP engine is a step backward from ECC. 3. Actual owner, supply chain planning director responsible for the failure to perform a load-based allocation audit during SIT. 4. Root cause, treating a memory resident engine as if it had the same disk latency safety of legacy ECC. A drift in confirmation is a technical performance failure, not a functional bug.
How this is actually fixed the right way by a role.
1. Supply chain planning director mandates a BOP pacing policy, ensuring background jobs do not run during peak order entry hours. 2. The team implements supply protection or SUP to create a hard buffer of stock that the BOP engine cannot steal. 3. The basis lead configures a dedicated HANA service for ATP to isolate it from the resource-heavy FICO reports. 4. Functional leads execute concurrency testing, verifying that 50 users can confirm the same material simultaneously without drift.
What not to do. Common wrong fixes.
1. Do not allow users to manually over-confirm quantities. You are creating a physical shortage at the warehouse gate. 2. Do not disable backorder processing as a workaround. Your fulfillment priorities will become permanently outdated. 3. Do not ignore buffer overload warnings in the HANA cockpit. These are the precursors to a total system crash. 4. Do not assume that increasing RAM will fix a logical race condition in your custom BOP segments. Shortcuts in ATP stabilization result in a supply chain that promises what it cannot deliver.
Follow-up 1. What is the PSC service in S/4HANA ATP?
Answer: PSC stands for Product Availability Check. It is the core HANA service that performs the stock math in memory. Unlike ECC, which read disk-based tables, PSC looks at a real-time availability buffer in RAM, enabling lightning-fast responses, but making the system sensitive to memory contention.
Follow-up 2. Why does BOP cause drift for live users?
Answer: BOP is a global reallocation. If a sales rep is entering an order for 10 units at the exact same moment that a BOP job redistributes those 10 units to a higher priority customer, the rep will see the stock available but find it gone when they click Save.
Follow-up 3. Curveball. What if the ATP confirmation is stable for the main plant, but the alternative plant substitution fails because the S/4HANA geo-distance calculation times out during the peak load, resulting in a zero stock result even though a neighboring warehouse is full?
Answer: this is a service timeout failure. In S/4HANA, plant substitution is a secondary engine call. If the system is busy, it may skip the alternative search to protect the primary transaction. The fix is to increase the maximum wait time for the substitution service. You must include multi-plant sourcing in your high-volume stress tests to avoid this day one fulfillment gap.
Exclusive pro tip.
On day 1, monitor transaction NSILC and filter for lock contention errors. If you see a material with a high wait time, your BOP segments are overlapping. Refine your win and gain rules immediately to ensure the engine processes each customer group in a clean, non-competing thread.
Scenario 274. Settlement differences after first close.
During the first month-end close post-go-live, organizations often find that their customer rebate payouts do not match their expectations. S/4HANA replaces legacy SD rebates with Condition Contract Management, or CCM. Because the new engine does not use the legacy VBox index table, any mismatch in inception to date, accruals from the cutover or business volume selection rules, will result in financial variances that block the final financial sign-off.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high financial accuracy and commercial dispute risk. 2. Phase, run post-go-live stabilization. 3. Frequency, common in industries with complex rebate and incentive models. 4. Primary ownership, SD functional lead, the person who owns this and gets fired if it fails. 5. Supporting FICO lead and revenue accountant. 6. Business ownership, sales controller. 7. Relevant SAP note, not applicable post-go-live stabilization, and data load reference SAP Note 22673777 for settlement management context.
Diagnostic dashboard, symptoms and evidence.
How settlement variances manifest during the first production close. 1. Symptom. The settlement run transaction WB2R_SC calculates a payout of $10,000 for a customer who earned $12,000 in ECC. 2. Red flag. Mismatches between the rebate accrual GL account and the settlement history monitor in the condition contract. 3. Business impact. Significant customer disputes and the inability to close the sales deduction portion of the balance sheet. 4. Detection. Checking table WCOCO reveals that business volume selection excludes specific document types that were rebate relevant in ECC. 5. Technical proof. Errors in the Universal Journal posting stating that the rebate account is not defined for new S/4HANA Profit Center. Insight. In S/4HANA, the VBox is gone. The system recalculates volume from the live ledger. If your mapping is off, your payout is wrong.
Why this happens, scenario analysis and root cause.
1. The project team migrated legacy agreements but failed to correctly map historical accrual balances from ECC into the new CCM contracts. 2. Inconsistent business volume selection. S/4HANA CCM uses different field filters for example sales org and material group than legacy LIS-based rebates. 3. Failure to perform a final settlement in ECC for expired agreements, resulting in uncleared ghost accruals polluting the S/4HANA ledger. 4. Underestimating the impact of real-time COPA. The settlement document must derive a market segment that matches the original sale. The failure is a result of treating settlement management as a technical report rather than a fundamental commercial logic transition.
Financial and customer impact.
1. Material misstatement of accrued liabilities, leading to audit concerns and potential restatement of quarterly results. 2. Strategic customer dissatisfaction, as strategic partners receive lower rebate checks than promised in their contracts. 3. Operational overhead, as the finance team must manually force payouts in S/4HANA using unaudited journal entries. 4. Risk of overpayment if the system fails to identify historical payouts already made in the legacy ECC system. Settlement failures directly compromise the accuracy of the company's net revenue reporting.
Governance and accountability RACI model.
Securing the first settlement requires an SD and finance partnership. 1. Accountable SD functional lead. The person who owns this and gets fired if it fails. 2. Responsible FICO lead ensures the GL account determination and the accrual reversal logic are perfectly synchronized. 3. Consulted sales controller validates the commercial truth of the payout results against the legacy agreements. 4. Informed commercial director manages the customer communication regarding go-live period rebate adjustments. Accountability ensures that the technical settlement matches the commercial promise to pay.
Ownership who actually fixes it.
Resolving this requires a ledger to contract reconciliation audit. 1. The SD functional lead audits transaction WCOCO to ensure every selection criterion matches the new S/4HANA document attributes. 2. The FICO lead utilizes transaction FINS_recon to identify document-level variances between sales accruals and the ledger. 3. The revenue accountant performs a reconciliation baseline, comparing the sum of KONV and ECC to the sum of WCOCO in S/4HANA. 4. The technical architect utilizes SAP Note 22673777 to apply the latest accrual recovery reports for migrated contracts.
Who gets blamed versus who owns it.
1. Blamed. SD lead. The finance team assumes the settlement configuration was lost during the upgrade. 2. Blamed. SAP users claim the new LOAB module is too complex and produces wrong numbers. 3. Actual owner. SD functional lead responsible for the failure to establish a payout baseline during the SIT2 phase. 4. Root cause. Treating CCM as an optional S/4HANA feature rather than a mandatory financial engine replacement. A payout error is usually a data mapping failure, not a software bug.
How this is actually fixed the right way by a role.
1. SD functional lead mandates a hard settlement audit ensuring every contract is proven to accrue correctly on day one. 2. The team implements automatic business volume correction jobs to ensure that cancellations are correctly deducted from the payout. 3. FICO lead ensures the reversal of accruals logic transaction WB2R_SC is perfectly balanced in the Universal Journal. 4. Functional leads execute mirror testing, ensuring a $100 sale in ECC, and S4 HANA results in the same final settlement value.
What not to do. Common wrong fixes.
1. Do not allow users to manually post credit memos to pay rebates. You are destroying the commercial audit trail. 2. Do not ignore 1-cent variances in payouts. S4 HANA will not allow the settlement document to save if it is out of balance. 3. Do not assume that in-flight accruals from ECC will automatically migrate. You must use the specialized S4 HANA transition reports. 4. Do not skip the testing of partial settlements, as these contain the highest risk for financial double counting. Shortcuts in settlement validation lead to an audit disaster that will haunt the CFO for months.
Follow-up 1. Why is the VBox removal the primary cause of settlement ghosts?
Answer: in ECC, VBox was a physical index. If it was out of sync, your rebates were wrong. In S4 HANA, the system scans the main tables in real time. If your business volume configuration is missing even one document type, the new scan will miss data that VBox used to contain, resulting in lower payouts.
Follow-up 2. What is the benefit of delta accruals in S4 HANA CCM?
Answer: delta accruals allow the system to adjust the financial liability in real time if a price change occurs after the original sale. This ensures the balance sheet always reflects the most likely payout amount, which was a manual and error-prone process in legacy ECC.
Follow-up 3. Curveball. What if the settlement is correct in local currency, but creates a financial discrepancy in group currency, because the legacy ECC agreement was migrated with an exchange rate that is no longer valid in the S4 HANA group reporting ledger?
Answer: this is a currency transformation failure. CCM requires a 360-degree currency sync. You must test the multi-currency payout. The fix is to configure the settlement exchange rate type to use the document original rate for all historical accruals. If you miss this, you will have residual variances that prevent your global profit from eliminating to zero at the end of the year.
Exclusive pro tip.
On the last day of the first month live, run report RWB2R_reconcile_BV or the S4 HANA equivalent to compare your business volume to your ledger. If the numbers do not match, your selection groups are wrong. Fix transaction WB2R_SC immediately before you issue the first wrong check.
Scenario 275. Partner determination, intermittent issues.
On day one of an S4 HANA go live, users often report that ship to or bill to partners are missing from sales orders, even though they were correctly maintained in ECC. This ghost behavior is typically caused by micro-latencies in the asynchronous CV synchronization. If the order is created via an automated interface or a fast-clicking Fiori user before the background business partner to customer link is finalized in the database, the partner determination engine will fail to find the record, resulting in incomplete documents.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, medium master data integrity and integration risk. 2. Phase, run post-go-live stabilization. 3. Frequency, common in high-volume environments with real-time customer creation. 4. Primary ownership, master data management lead, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and integration architect. 6. Business ownership, sales operations manager. 7. Relevant SAP note, not applicable post-go-live stabilization and data load reference SAP note 2265093. For business partner context.
Diagnostic dashboard, symptoms and evidence.
How intermittent partner gaps manifest in the live system. 1. Symptom: a sales order is saved but immediately goes into incomplete status due to a missing mandatory ship to partner. 2. Red flag: the issue is unreproducible. If the user deletes and re-enters the same customer ID, it works perfectly. 3. Business impact: automated EDI orders are rejected by the system, requiring hundreds of manual interventions daily. 4. Detection. Checking transaction MDS_PPO2 reveals a temporary NQ lock on the customer record at the moment of order creation. 5. Technical proof. Mismatches in table CVI_cust_link where the link exists for old customers but is missing for new ones for several seconds. Insight. S4 HANA is a synchronous digital core. If your master data update task is slow, your order task will fail.
Why this happens: scenario analysis and root cause.
1. S4 HANA uses the Customer Vendor Integration, or CVI engine, to bridge the BP and customer models, often in a background update task. 2. The project team failed to test immediate order after create scenarios, which are common in retail and web shop integrations. 3. HANA Database Delta merges on the master data tables during peak hours, create micro locks that delay the CVI commit. 4. Custom baddies in the business partner save event perform slow external address validations, extending the window of inconsistency. The failure is a result of technical race conditions between master data and transactional data layers.
Why this is a migration exclusive failure.
1. In ECC, partner determination was a single lookup in table KNA1 with zero technical dependencies on a background sync. 2. S4 HANA migration introduces the CVI engine, which creates a mandatory handshake between two different data models. 3. The asynchronous nature of the business partner to customer link is a new technical architecture unique to S4 HANA. 4. This failure only surfaces during the high-velocity transaction period immediately following the system conversion. Migration introduces a cross-object dependency that legacy ECC transactions never had to wait for.
Financial and customer impact.
1. Revenue loss as web orders are rejected, leading to customer churn and abandoned shopping carts. 2. Inaccurate sales analytics if one-time partners are missing from the sub-ledger due to sync failures. 3. Increased labor costs as the master data team must manually force sync records in the CVI cockpit. 4. Damaged customer relationships as sales reps cannot provide immediate service for newly registered accounts. Partner determination. Ghosts directly disrupt the digital onboarding of new business.
Governance and accountability RACI model.
Securing partner data requires a link between MDM and integration leads. 1. Accountable master data management lead. The person who owns this and gets fired if it fails. 2. Responsible integration architect ensures that the inbound API includes a retry logic if the partner is not yet active. 3. Consulted SD functional lead provides the mandatory partner roles required for a minimum viable order. 4. Informed IT transformation director monitors the master data latency as a key day one health metric. Accountability ensures that technical sync speed supports the business pace.
Ownership who actually fixes it.
Resolving this requires an update and wait strategy audit. 1. The MDM lead utilizes transaction MDS_load_cockpit to identify and optimize the synchronization block sizes. 2. The integration architect refactors the web shop API to use a synchronous BP creation call instead of an asynchronous one. 3. The ABAP lead optimizes the CVI_mapper class to reduce the CPU time required for the customer to BP handshake. 4. The technical architect utilizes SAP Note 2713963 to ensure the CVI technical buffer is correctly sized for production volume.
How this is actually fixed the right way by a role.
1. MDM lead mandates a real-time sync policy, disabling the background flag for CVI during the first 48 hours of go live. 2. The team implements a redetermination step in the sales order baddie to try finding the partner again 2 seconds after the first failure. 3. Technical architect utilize HANA secondary indexes on the CVI mapping tables to speed up the cross-reference lookup. 4. Functional leads execute rapid creation tests, creating a partner and an order in a single automated script to verify timing.
What not to do: common wrong fixes.
1. Do not tell users to wait 5 minutes before entering an order. This is a failure of system automation. 2. Do not use direct SQL inserts to populate the KNA1 table. You will break the CVI audit trail permanently. 3. Do not ignore locked record errors in the PPO2 queue, assuming they are just temporary, they are logic collisions. 4. Do not assumption that SAP standard CVI is always fast enough for high-speed e-commerce. Shortcuts in partner synchronization result in an unreliable and unauditable master data layer.
Follow-up 1. What is the technical difference between BP and customer partner determination?
Answer: S/4HANA performs determination on the BP ID first and then maps it to the customer ID. In ECC, it was a single lookup. This extra layer of mapping in S/4HANA CV adds a technical dependency that didn't exist before, making timing more critical.
Follow-up 2. How can I monitor CV synchronization delays in real time?
Answer: use transaction MDS_PPO2. It shows every record that failed to sync or is currently staged. If the queue is growing, your system has a CVI bottleneck that will soon manifest as missing partner errors in sales orders.
Follow-up 3. Curveball. What if the partner is found correctly in the sales order UI, but the background output task BRF plus fails because it cannot find the email address in the business partner record, even though the address is clearly visible on the screen?
Answer: this is a buffer inconsistency failure. The UI sees the memory version of the BP, but the background task reads from the database. If the CVI commit is slightly delayed, the database is still empty. The fix is to implement a synchronous commit flag for BP roles used in O2C. This ensures the database is updated before any subsequent background events are triggered, preventing ghost output failures.
Exclusive pro tip.
Add a 2-second pause to your inbound e-commerce middleware after a new customer registration. This small gap allows the S/4HANA CVI engine to finish its background work, ensuring the partner is ready for the order and reducing day one rejections by 90%.
Scenario 276. Performance unstable only in prod.
In the run phase post-go live, organizations often find that the blazing fast speed of HANA seen in the sandbox is nowhere to be found in production. While test environments are clean, the production environment contains massive data volumes and hundreds of concurrent users. If the HANA thread pool or workload management was not tuned for the specific O2C patterns of the live business, the system will experience random performance crashes during peak hours, frustrating users and halting operations.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high system availability and resource integrity risk. 2. Phase, run post-go-live stabilization. 3. Frequency, common in VLDB very large database implementations. 4. Primary ownership basis lead, the person who owns this and gets fired if it fails. 5. Supporting technical architect and ABAP lead HANA. 6. Business ownership IT transformation director. 7. Relevant SAP note, not applicable post-go-live stabilization, and data load reference SAP note 1912445 for HANA performance context.
Diagnostic dashboard, symptoms and evidence.
How prod-only slowness manifests in the live system. 1. Symptom: creating an invoice VF01 takes 2 seconds in queue but 45 seconds in production at 10 a.m. 2. Red flag: high CPU idle wait in the HANA database coinciding with a surge in real-time Fiori analytical requests. 3. Business impact: total operational stop during the morning rush as sales reps are unable to process customers. 4. Detection: checking transaction ST06 reveals that 90% of HANA CPU is consumed by unfiltered analytical threads. 5. Technical proof: mismatches in the execution plan transaction ST05, where HANA chooses a full table scan in prod due to massive data volume. Insight: performance is a function of volume times concurrency. If you didn't test both in QA, your results were a lie.
Why this happens, scenario analysis and root cause.
1. The project team performed performance testing in a sandbox with only 10% of the production data volume. 2. Unoptimized custom CDS views are performing many-to-many joins that only become expensive once they reach 10 million rows. 3. Lack of workload isolation. The system allows heavy executive dashboards to steal threads from mission-critical order entry tasks. 4. The HANA statement routing logic is untuned, causing small O2C updates to wait behind large historical analytics scans. The failure is a result of treating performance as a hardware property rather than a software discipline.
Why this is a migration-exclusive failure.
1. ECC row store databases handled large volumes linearly. HANA 2.0 uses parallel columnar threads that behave differently under load. 2. S/4HANA migration moves the reporting load onto the same CPU as the transactional load, creating new resource conflicts. 3. The requirement to tune HANA workload classes specifically for the O2C peak hour profile is a unique S/4HANA optimization task. 4. This failure only surfaces when the new integrated core architecture meets the true data density of a live enterprise. Migration moves the system to a memory-based physics model where volume and concurrency behavior is fundamentally different.
Financial and customer impact.
1. Revenue loss as customers abandon orders due to system hangs in the web shop or call center. 2. Increased cloud hosting costs as the organization is forced to upsize the server nodes in a panic. 3. Damaged reputation as the company appears incompetent during its high-profile digital transformation launch. 4. High support costs as consultants must work 24/7 to prune the database and refactor code in a live system. Performance instability directly erodes the business case for S/4HANA.
Governance and accountability RACI model.
Securing system speed requires a partnership between basis and the data leads. 1. Accountable basis lead, the person who owns this and gets fired if it fails. 2. Responsible technical architect optimizes the workload classes and tunes the HANA database parameters. 3. Consulted ABAP lead refactors expensive SQL identified by the database trace. 4. Informed IT director manages the executive communication regarding system stabilization periods. Accountability ensures that system speed is a mandatory part of the operational SLA.
Ownership who actually fixes it.
Resolving this requires a full-stack technical audit. 1. The basis lead identifies the top 10 worst-performing SQL statements using the HANA Plan Visualizer. 2. The technical architect implements HANA Workload Management WLM to prioritize dialog users over background analytics. 3. The ABAP lead refactors custom SD reports to use HANA hints that force the use of specific primary indexes. 4. The data architect implements native storage extension, or NSE, to move cold history off the primary HANA CPU.
How this is actually fixed the right way by a role.
1. Basis lead mandates a hard limit on the number of records a Fiori app can retrieve in a single call. 2. The team implements read-only replicas for heavy reporting, keeping the primary database reserved for O2C saves. 3. ABAP lead refactors select star statements to select only required columns, reducing the HANA memory bus traffic. 4. Functional leads execute peak hour simulations, verifying that the system remains stable during the 9 a.m. login wave.
What not to do common wrong fixes.
1. Do not simply reboot the server to clear the performance issues. This only wipes the HANA cache and makes the next hour even slower. 2. Do not allow open-ended reporting queries, for example, all orders for all years in the live production environment. 3. Do not ignore expensive statement alerts in the HANA cockpit, assuming it is just batch processing noise. 4. Do not allow go live without a performance budget for every P1 business transaction. Shortcuts in performance tuning lead to a system that users will eventually abandon for Excel.
Follow-up 1. Why does a full table scan kill HANA more than legacy ECC?
Answer: legacy databases were disk-based. A scan was slow but didn't consume all memory. HANA is memory-based. A full scan of table VBAK billions of cells forces HANA to load and aggregate data at CPU speed, which can consume every available cycle and block all other users.
Follow-up 2. What is HANA Workload Management WLM?
Answer: it is a traffic control system inside HANA. You can tell the database, always give 70% of CPU to sales order creation, and never let reporting take more than 20%. This prevents an executive dashboard from crashing the warehouse shipment flow.
Follow-up 3. Curveball. What if the performance is excellent for 500 concurrent users, but the system triggers a kernel panic for the 500 first user because the S/4HANA gateway reached its maximum OData connection limit, even though the database is 90% idle?
Answer: this is a middle layer throttle failure. S/4HANA speed is a chain. You must test the gateway saturation point. The fix is to increase the ICOM and max_threads and GW and max_con profile parameters in the SAP kernel. If you only tune the database but ignore the gateway, your system will be fast but unreachable for large portions of your workforce on day one.
Exclusive pro tip.
Add a performance watchdog role to your hypercare team. Their only job is to monitor transaction MDT_analyze every 30 minutes. If any Fiori tile shows a degradation trend, identify the unoptimized CDS join and apply a SQL hint before it causes a global system hang.
Scenario 277. Revenue recognition drift after first close.
During the first month in close post-go live, the finance team often identifies ghost variances in revenue. While the cutover reconciliation was green, the live system experiences drift because of inconsistent event triggers in SAP RER. If sales order modifications, such as price changes or quantity reductions, occurred mid-month and the S/4HANA contract was not updated synchronously, the recognized revenue will differ from the billing subledger, causing a reconciliation failure.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high financial compliance and revenue integrity risk. 2. Phase, run post-go-live stabilization. 3. Frequency, common in industries with project-based billing or long-term contracts. 4. Primary ownership, corporate controller, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and revenue accountant. 6. Business ownership, CFO. 7. Relevant SAP note, not applicable post-go-live stabilization and data load reference SAP note 22673119 and SAP note 2225170 for context.
Diagnostic dashboard, symptoms and evidence.
How revenue recognition drift manifests during the first production close. 1. Symptom, total revenue in report FRR_TM00 does not match the general ledger revenue account balance for the same period. 2. Red flag, the revenue accounting item monitor shows thousands of in-process items that cannot be finalized due to lock errors. 3. Business impact, inability to certify the first post-migration financial statement, triggering executive and auditor scrutiny. 4. Detection, comparing table VBRKNETWR against table FRR_D_ posting reveals sent level variances for modified contracts. 5. Technical proof, logs in the RI monitor stating contract is currently locked by a parallel update task for high-volume orders. Insight, S/4HANA RER is event-sensitive. A single missed update for an order change creates a permanent financial variance.
Why this happens, scenario analysis and root cause.
1. The system experienced micro-locking during the first month where SD updates were faster than the RR background process could absorb them. 2. Failure to perform a weekly reconciliation during the hypercare phase, allowing sent-level drifts to accumulate into material variances. 3. Legacy custom logic in the sales order save event was not correctly synchronized with the revenue accounting item or RI transfer BATI. 4. Underestimating the impact of currency exchange rate fluctuations on the unbilled receivable calculation in the new RER subledger. The failure is a result of treating revenue recognition as a month-end task rather than a real-time transactional handshake.
Why this is a migration exclusive failure.
1. In ECC, revenue recognition was table-based and sequential. Once the schedule was set, it didn't drift based on real-time event queues. 2. S/4HANA migration involves a move to the contract-based RER engine, which is constantly re-evaluating the total transaction price. 3. The complexity of managing in-flight contracts that started in ECC but modified in S/4HANA is a unique migration period challenge. 4. This failure only surfaces when the new integrated financial core encounters the real-world modifications of the live business. Migration forces a revaluation of revenue that legacy ECC never attempted.
Financial and customer impact.
1. Material risk of misstating quarterly results, leading to potential regulatory fines and loss of investor confidence. 2. Operational overhead, as the finance team must work 24/7 during the close to explain and correct ghost variances. 3. Inaccurate sales commission reporting if incentives are tied to recognized revenue rather than invoiced revenue. 4. Audit risk as external auditors require 100% transaction-level proof of the drift correction logic. Revenue drift directly jeopardizes the financial certification of the enterprise.
Governance and accountability RACI model.
Securing the first close requires an integrated finance and SD authority. 1. Accountable corporate controller, the person who owns this and gets fired if it fails. 2. Responsible revenue accountant executes the reconciliation tools and manages the RI error queue. 3. Consulted SD functional lead provides the commercial logic for mid-month order changes. 4. Informed CFO monitors the revenue leakage report as a key go-live success metric. Accountability ensures that technical automation does not violate accounting principles.
Ownership who actually fixes it.
Resolving this requires a value match and technical audit. 1. The corporate controller mandates a weekly rec run using transaction FRR_check_ consistency. 2. The revenue accountant identifies red contracts and manually triggers a recalculation in the RR monitor. 3. The SD functional lead refactors the O2C change order process to ensure it waits steps for the RI confirmation. 4. The technical architect utilizes SAP Note 2225170 to apply the latest financial reconciliation reports.
How this is actually fixed the right way by a role.
1. Corporate controller mandates a revenue freeze for old contracts, allowing only current period modifications to minimize noise. 2. The team implements automatic error reprocessing for the RI monitor to clear temporary technical locks. 3. The FICO team utilizes HANA native reconciliation reports that compare table VBREV against table FRR_D_ contract in seconds. 4. Functional leads execute modification simulations, verifying that a $1 price drop results in an immediate $1 reduction in recognized revenue.
What not to do. Common wrong fixes.
1. Do not use manual journal entries in FI to force a balance. You are breaking the contract-level audit trail. 2. Do not ignore 1-cent variances in the RI monitor, assuming they are rounding errors. They indicate a logic drift. 3. Do not assume the migration cockpit validated the ongoing event logic. It only validated the initial load state. 4. Do not allow go live until the revenue variance for the top 500 contracts is proven to be 0%. Shortcuts in revenue stabilization lead to a financial audit disaster post-go live.
Follow-up 1. What is inception to date revenue and why is it a drift risk?
Answer: ITD revenue is the total recognized from the start of a contract until today. In S4 HANA, if an order is modified, the system recalculates the ITD. If the ECC to S4 HANA baseline was off by a penny, the new remaining revenue calculation will drift progressively every month.
Follow-up 2. Which transaction code identifies RAR contract mismatches?
Answer: you should use transaction FRR_check_ consistency. It performs a 360-degree check between the SD order, the RI monitor, the revenue contract, and the universal journal, highlighting exactly where the value chain broke.
Follow-up 3. Curveball. What if the revenue contract matches the SD document perfectly, but the general ledger shows a missing posting because the universal journal extension ledger failed to receive the update due to an incorrect ledger group assignment in the RAR integration?
Answer: this is a ledger isolation failure. S4 HANA supports multiple ledgers. The fix is to update the accounting principle mapping in RAR transaction SPRO. If you miss this, your consolidated group books will be correct, but your local statutory books will be empty, leading to a failed local tax audit despite a perfect global report.
Exclusive pro tip.
On day 1, set up an RI watchdog dashboard. If the number of staged revenue accounting items exceeds 1,000, your contract engine is bottlenecked. Scale your HANA calculation threads immediately to prevent revenue drift before the first close begins.
Scenario 278. Workflow intermittently bypassed.
In the run phase post-go live, organizations often encounter a ghost behavior where high-value sales orders bypass mandatory management approvals. S4 HANA Flexible Workflow relies on a metadata-driven start condition. If the system is under heavy load, or if a user performs a fast save while a background master data sync is occurring, the condition evaluation can return a false result, allowing unapproved discounts or credit limits to reach the warehouse.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high business logic and security compliance risk. 2. Phase, run post-go-live stabilization. 3. Frequency, common in organizations with high volumes of real-time O2C updates. 4. Primary ownership, SD functional lead, the person who owns this and gets fired if it fails. 5. Supporting workflow architect and ABAP lead. 6. Business ownership, sales operations manager. 7. Relevant SAP note, not applicable post-go-live stabilization, and data load reference SAP note 2198647 for workflow context.
Diagnostic dashboard, symptoms and evidence.
How workflow bypass ghosts manifest in the live production system. 1. Symptom, a sales order with a 50% discount is saved and released to shipping without ever triggering an approval task. 2. Red flag, the workflow overview Fiori app shows the document status as automatically approved despite failing the threshold check. 3. Business impact, significant financial risk and internal control, SOX violations as high-risk transactions bypass management oversight. 4. Detection, checking the workflow technical trace reveals that the start condition was evaluated as false for a valid document. 5. Technical proof, record-level variances in table SWW_WI2OBJ where the link between the order and the workflow instance is missing. Insight, flexible workflow is stateless. If the data is not in the database at the exact microsecond of the check, the rule fails.
Why this happens, scenario analysis and root cause.
1. A race condition between the sales order save and the background price update task, causing the workflow engine to read an incomplete net value. 2. Unoptimized custom CDS views used for start conditions that time out during peak hours, resulting in a null evaluation that defaults to skip. 3. Failure to account for in-process business partner changes. The workflow checks for customer group that is temporarily locked by a CVI sync. 4. The project team used standard workflow scenarios without configuring mandatory catch-all steps for unevaluated conditions. The failure is a result of technical buffer latency in a high concurrency S/4HANA environment.
Why this is a migration exclusive failure.
1. ECC Business Workflow SWDD was event-driven and waited for a hard database commit before starting, making it immune to race conditions. 2. S/4HANA Flexible Workflow is metadata-driven and evaluates conditions in stream, which is much faster but more sensitive to data availability. 3. The shift from code-based conditions to CDS-based conditions is a fundamental architectural change unique to the S/4HANA path. 4. This failure only surfaces when the new low-code workflow engine meets the high-velocity transaction volume of a production system. Migration introduces a level of engine sensitivity that legacy ECC never encountered.
Financial and customer impact.
1. Revenue leakage as unauthorized discounts are applied and shipped without being caught by management. 2. Internal control violations, potentially leading to material weakness findings in corporate financial audits. 3. Loss of management trust in the automation of S/4HANA as strategic controls appear to work only intermittently. 4. Operational disruption as the business is forced to roll back and cancel unapproved shipments that already left the dock. Workflow bypass failures directly compromise the financial governance of the enterprise.
Governance and accountability RACI model.
Securing the approval gate requires a partnership between SD and workflow leads. 1. Accountable SD functional lead, the person who owns this and gets fired if it fails. 2. Responsible workflow architect ensures the start conditions are robust and handle null data gracefully. 3. Consulted internal audit lead defines the critical controls that must never be bypassed by the system. 4. Informed IT transformation director monitors the automatic approval rate as a key day one risk indicator. Accountability ensures that system speed does not override corporate governance.
Ownership who actually fixes it.
Resolving this requires a logic and buffer audit. 1. The SD functional lead identifies all high-risk document types and adds a mandatory technical block that only workflow can clear. 2. The workflow architect refactors the CDS views used for conditions to include HANA SQL hints that prioritize database consistency. 3. The ABAP lead implements a 1-second wait step in the workflow trigger body to ensure the database record is fully committed. 4. The technical architect utilizes SAP Note 2198647 to optimize the workflow event buffer for high-volume sales organizations.
Who gets blamed versus who owns it?
1. Blamed. SD lead the business assumes the discount rules were configured incorrectly. 2. Blamed. SAP users claim the new flexible workflow is too simple for complex business. 3. Actual owner, SD functional lead responsible for the failure to design negative condition safety nets during Explore. 4. Root cause, underestimating the impact of real-time S/4HANA OData updates on the workflow condition evaluation logic. A bypassed approval is an architectural gap, not a data entry error.
How this is actually fixed the right way by a role.
1. SD functional lead mandates a hard sign-off on all O2C workflow conditions, requiring a positive test for bypass scenarios. 2. The team implements fallback approvers for any document that triggers an error during the condition evaluation step. 3. Technical architect utilizes synchronous event triggering for high-value orders to bypass the standard event queue. 4. Functional leads execute stress testing, simulating 100 concurrent high-discount orders to prove the engine correctly blocks them.
What not to do. Common wrong fixes.
1. Do not tell users to just monitor it manually. You are admitting the S/4HANA investment has failed to secure the business. 2. Do not ignore condition evaluation errors in the technical log, assuming they are just post-go-live noise. 3. Do not allow emergency bypass roles to be used as a permanent solution for slow workflow response times. 4. Do not assume that Fiori apps will always trigger the same workflow events as the legacy SAP GUI transactions. Shortcuts in workflow validation result in a financial and legal disaster post-go-live.
Follow-up 1. What is a start condition in S/4HANA flexible workflow?
Answer: it is a logical rule, for example, if total value greater than $10,000, that the system evaluates the moment an order is saved. If the condition is met, the workflow starts. In S/4HANA, these conditions are built on CDS views, making them much faster but more dependent on real-time data availability.
Follow-up 2. How can I identify why a workflow didn't start for a specific order?
Answer: use transaction SWF_process_admin. You can search by the sales order number and see the condition evaluation log. It will show you exactly which field, for example net value, was read by the engine and why it decided the rule was false.
Follow-up 3. Curveball. What if the workflow condition is evaluated correctly as true, but the task is never created because the S/4HANA Task Gateway triggers a duplicate key error in the internal task table due to a concurrent approval request from another module?
Answer: this is a kernel orchestration failure. In S/4HANA, the Task Gateway is a shared resource. You must test the gateway throughput. The fix is to configure queue separation for O2C tasks via SAP Note 2198647 to ensure sales approvals do not fight with procurement tasks for the same database locks. If you miss this, you will have silent deadlocks. The system knows an approval is needed but cannot physically create the task, leaving your order in a permanent pending state.
Exclusive pro tip.
On day 1, set up an approval bypass report that runs every hour. It should list any sales order with a discount greater than 20% that does not have an active workflow instance. Detecting these ghosts in real time allows you to apply a manual block before the warehouse picks the order.
Scenario 279. Precision rounding differences visible only at scale.
During the first high-volume billing run post-go-live, organizations often encounter penny variances that were not visible during unit testing. S/4HANA handles pricing in table PRCD_elements with a 15-decimal internal precision, whereas legacy ECC clusters often truncated values during intermediate steps. When processing 100,000 invoices simultaneously, these micro differences accumulate into significant discrepancies between the SD subledger and the general ledger, causing the universal journal to reject entire billing batches.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high financial accuracy and month-end close risk. 2. Phase, run post-go-live stabilization. 3. Frequency, extremely common in high-volume retail and distribution. 4. Primary ownership, FICO lead and SD functional lead. The person who owns this and gets fired if it fails. 5. Supporting ABAP lead and sales controller. 6. Business ownership, corporate controller. 7. Relevant SAP note, not applicable post-go-live stabilization, and data load reference SAP note 2267308 for pricing data model context.
Diagnostic dashboard, symptoms and evidence.
How precision rounding ghosts manifest at scale. 1. Symptom, mass billing jobs VF04 fail with error balance in transaction currency, but individual VF01 tests pass perfectly. 2. Red flag, the total revenue for a billing document in table VBRK differs from the sum of its items by exactly 1 cent. 3. Business impact, inability to close the daily cash application because the bank deposit does not match the system's calculated total. 4. Detection, comparing table KONV legacy against PRCD_elements, S4 HANA reveals that decimals 3 through 7 contain non-zero values. 5. Technical proof, errors in the Universal Journal validation stating that the document is not in balance due to rounding drift. Insight, S4 HANA is mathematically perfect. If your legacy logic was approximate, the collision will happen at high volume.
Why this happens, scenario analysis and root cause.
1. S4 HANA's transparent pricing engine retains more decimal places during intermediate formula steps than the legacy compressed cluster engine. 2. Custom VOFM pricing routines were migrated with legacy type P variables that have different overflow rules on the HANA database. 3. Failure to synchronize the currency rounding rules in transaction OY04 with the pricing condition rounding rule in the procedure. 4. Underestimating the impact of multi-item group conditions, where the total discount is distributed across thousands of lines. The failure is a result of treating mathematical precision as a technical setting rather than a financial policy.
Why this is a migration exclusive failure.
1. ECC upgrades kept the legacy cluster math KONV, ensuring that the rounding errors were consistent and hidden for 20 years. 2. S4 HANA migration physically restructures the math engine, exposing intermediate decimals that were previously discarded. 3. The move to the Universal Journal ACDOCA makes micro-variances fatal errors that ECC row store ledgers simply ignored. 4. This failure only surfaces when the new HANA native math meets the massive data volume of a live production environment. Migration removes the mathematical safety net of the legacy application layer.
Financial and customer impact.
1. Delayed revenue recognition, as thousands of invoices are stuck in the accounting interface and cannot be finalized. 2. Audit risk, as the company cannot prove a consistent rounding policy between its sales subledger and the general ledger. 3. Customer disputes peak when strategic accounts' automated payment systems reject invoices due to cent-level discrepancies. 4. High support costs, as the finance team must manually write off thousands of rounding differences to close the first month. Precision rounding failures directly compromise the integrity of the company's financial subledger.
Governance and accountability RACI model.
Managing mathematical drift requires a partnership between SD and finance leads. 1. Accountable FICO lead and SD functional lead, the person who owns this and gets fired if it fails. 2. Responsible ABAP lead refactors legacy pricing formulas to use the commercial rounding standard in S4 HANA. 3. Consulted corporate controller defines the penny variance tolerance policy for automated write-offs. 4. Informed IT transformation director monitors the VFX3 resolution rate as a primary post-go-live KPI. Accountability ensures that technical precision does not result in financial paralysis.
Ownership, who actually fixes it.
Resolving this requires an arithmetic and ledger audit. 1. The SD functional lead identifies the specific account key, for example ERL, where the rounding variances are occurring. 2. The ABAP lead refactors the pricing routines VOFM to utilize the standard SAP rounding rule C commercial. 3. The FICO lead configures rounding difference accounts in transaction OBY6 to absorb micro drifts automatically. 4. The technical architect utilizes SAP Note 2267308 to ensure all data elements for condition values are synchronized.
Who gets blamed versus who owns it?
1. Blamed billing clerk's management assumes the users are entering wrong numbers. 2. Blamed SAP users claim the new engine is mathematically buggy. 3. Actual owner, FICO lead and SD functional lead responsible for the failure to define a mathematical standard during Explore. 4. Root cause, maintaining unsynchronized rounding rules between the SD pricing engine and the FI tax procedure. Rounding differences are logic gaps, not system bugs.
How this is actually fixed the right way by a role.
1. FICO lead mandates a ledger integrity audit, ensuring all currency settings in transaction OY04 match the legacy baseline. 2. The team implements automatic rounding correction at the document level to ensure ACDOCA always balances to 0. 3. The ABAP lead utilizes HANA SQL to perform a mass recalculation of open orders to identify drift before billing starts. 4. Functional leads execute stress testing, proving the system can generate 10,000 invoices with 0 balancing errors.
What not to do common wrong fixes.
1. Do not allow users to manually tweak prices to fix a rounding error. You are destroying the commercial audit trail. 2. Do not ignore penny variances. S/4HANA will block the entire billing batch if the universal journal is out of balance. 3. Do not assume that ECC statistical conditions will work the same way. In S/4HANA, they must balance in the ledger. 4. Do not allow go live until the revenue variance for the first 1,000 invoices is proven to be 0%. Shortcuts in mathematical validation result in a financial black hole that will haunt the CFO for months.
Follow-up 1. Why is rounding more critical in S/4HANA than in ECC?
Answer: in ECC, SD and FI could have different rounding rules because they were separate modules. S/4HANA forces them into a single row in table ACDOCA. If the pricing engine says $10.00 and the tax engine says $10.01, the document cannot be saved, resulting in a billing blockade.
Follow-up 2. What is the commercial rounding rule in SAP?
Answer: Rule C commercial rounds up if the third decimal is 5 or greater, and rounds down if it is less than 5. Standardizing all SD and FI formulas on Rule C is the most effective way to prevent cent-level variances in S/4HANA.
Follow-up 3. Curveball. What if the rounding is correct for the total amount, but the tax line is off by 1 cent because the S/4HANA pricing engine applied a group discount that was calculated at the header level, while the FICO tax procedure attempted to calculate tax at the item level, creating a level mismatch in the universal journal?
Answer: this is a hierarchical rounding failure. You must test header versus item tax parity. The fix is to configure condition value summing to ensure the tax is calculated on the already rounded item net value. If you miss this, you will have compliance ghosts, invoices that are technically correct but legally invalid because the tax amount does not match the local jurisdiction's item-level tax laws.
Exclusive pro tip.
On day 1, run a custom report comparing VBRK and ETWR to the sum of a CDOCA HSL for all documents. If you see even a 1 cent drift, identify the specific VOFM routine and implement strict item rounding immediately to stop the financial drift.
Section 15. Wrap-up. Post-go-live ghost incidents.
Section 15 has analyzed the most elusive risks of the S/4HANA migration. We explored how the physical and technical differences between Q and production environments create anomalies that SIT and UAT simply cannot catch. The takeaway is that a successful go-live requires more than just functional sign-off. It requires a hyper-vigilant monitoring of the HANA kernel, update tasks, and real-time ledger reconciliations to identify and kill these ghosts before they haunt your financial statements.
The universal interview tip. Whenever you ask a tech VP or an industry mentor how to crack a tough interview, they all give you the exact same tip. Get familiar with the most commonly asked interview questions. It sounds simple, right? But here is the problem. The search nightmare. Finding the actual most commonly asked questions for senior roles is a nightmare. Generic Google searches only give you basic textbook definitions, and those will not help you clear a lead architect or senior engineer round where production reality matters. Imagine a master vault. Now, imagine a vault where the absolute most commonly asked interview questions for your specific role are already collected for you, perfectly organized by interview rounds like 1. Most commonly asked technical-based question and answers. 2. Most commonly asked scenario-based question and answers. 3. Most commonly asked real-world problem-solving question and answers. 4. Most commonly asked system design question and answers. 5. Most commonly asked behavioral-based question and answers. Cross-domain mastery. I built the ACE Interviews Master Vault for the modern architect. We did not just do this for one role. We covered everything: SAP, cybersecurity, DevOps, software testing, data engineering, Java, and Python. The ultimate all-access deal. Instead of paying for individual PDFs, you can now unlock our entire database. Get over 1,000 plus PDFs containing 50,000 plus of the most asked question and answers for a mere 1,499 rupees a month. The elite transformation. Stop studying just to pass. Equip yourself with the cross-domain confidence of a true architect and walk out of your next interview choosing between 2 or 3 elite job offers. Unlock the vault now. The era of buying individual guides is over. Click the link in the video description below right now to unlock the Master Vault. Now, let's get back to the masterclass.
Transition to Section 16, Niche Industry and Localization Risks.
As we reach the final section of our 290 incident series, we move beyond the horizontal S/4HANA core to look at the vertical industry specializations. S/4HANA consolidates many legacy industry solutions into the digital core, but this fusion often breaks the highly specialized O2C logic used in retail, automotive, pharma, and utilities. In Section 16, we analyze the risks of these niche simplifications and the localization gaps that can halt regional operations.
Section 16, Niche Industry and Localization Risks.
Section 16 addresses the edge of the core. Many organizations rely on SAP's industry-specific features for hydrocarbon management, media rights, or public sector contracting. In S/4HANA, many of these add-ons have been completely redesigned or deprecated. We will examine why legacy industry transactions fail on day one, and how the mandatory move to the business partner model creates unique data loss risks for time-dependent industry master data.
Section 16, Incident List, Industry and Localization.
Final incidents represent the specialized and regional risks in the O2C landscape. Scenario 280, Obsolete Settlement Transactions Retail. Relevant SAP Note, SAP Note 2267377. Scenario 281, Time Dependency BUT000 Deactivation Data Loss. Relevant SAP Note, SAP Note 2265093. Scenario 282, Public Sector Contracting Simplifications. Relevant SAP Note, SAP Note 2273108. Scenario 283, Agricultural Contract Management Integration Breaks. Relevant SAP Note, Not Applicable Industry Solution Design Gap. Scenario 284, Direct Store Delivery Tour Status Migration Failures. Relevant SAP Note, SAP Note 2270199. Scenario 285, Oil and Gas Hydrocarbon Management Integration Drift. Relevant SAP Note, Not Applicable Industry Solution Design Gap. Scenario 286, Pharma Batch Traceability Compliance Drift. Relevant SAP Note, Not Applicable Industry Solution Design Gap. Scenario 287, Automotive Scheduling Agreement Simplification Issues. Relevant SAP Note, SAP Note 2267323. Scenario 288, Commodity Hedge Management Integration Breaks. Relevant SAP Note, SAP Note 2226411. Scenario 289, Utilities Billing Convergence SD Impacts. Relevant SAP Note, SAP Note 2267342. Scenario 290, Media Industry Content Rights Management Simplifications. Relevant SAP Note, Not Applicable Industry Solution Design Gap. Industry-specific simplifications are the most common source of hidden scope gaps in a brownfield project.
Scenario 280, obsolete settlement transactions retail.
On day 1 of an S/4HANA Go Live in the retail sector, users often report that they can no longer access the transactions required to pay out vendor rebates or reconcile store-level settlements. S/4HANA deprecates legacy retail settlement transactions like WRE1 and WRE2 in favor of the Unified Settlement Management Framework. If the retail-specific condition contracts were not correctly migrated into the new LOAB framework, the business will be unable to finalize supplier payouts, leading to commercial disputes and inaccurate cost of goods sold reporting.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high industry process and financial risk. 2. Phase, run post-go live. 3. Frequency, common in retail and wholesale organizations. 4. Primary ownership, retail O2C lead, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and FICO lead. 6. Business ownership, commercial purchasing manager. 7. Relevant SAP note. SAP note 2267377, SD rebate processing, replaced by settlement management.
Diagnostic dashboard, symptoms and evidence.
How retail settlement failures manifest in the live production system. 1. Symptom. Retail users receive the error transaction WRE1 is obsolete when attempting to perform a rebate settlement. 2. Red flag. Legacy retail agreements in table KONV are visible but show a status of locked with no migration to condition contracts. 3. Business impact. Inability to collect millions in vendor-funded promotional rebates, directly impacting the company's net margin. 4. Detection. Checking transaction WB2R_SC reveals that the retail-specific settlement types are missing from the configuration. 5. Technical proof. Errors in the Universal Journal posting stating that the retail account key is not active for the new S/4HANA company codes. Insight. In S/4HANA, retail is no longer a separate box. It is an integrated part of the financial subledger.
Why this happens, scenario analysis and root cause.
1. The project team assumed that retail modules would remain untouched by the core SD rebate deprecation. 2. Legacy retail pricing procedures used custom subtotals KZWI that are incompatible with the new settlement management calculation engine. 3. Failure to map retail site data to the new business partner groupings required for automated payouts. 4. Underestimating the impact of real-time accruals which in S/4HANA retail must hit the Universal Journal at the moment of the store sale. The failure is a result of treating an industry solution as a technical silo rather than an integrated core process.
Why this is a migration exclusive failure.
1. ECC upgrades never impacted the retail rebate engine. Legacy transactions remain the standard for 25 years. 2. S/4HANA migration involves a hard stop for legacy retail settlement, forcing a mandatory transition to the LOAB framework. 3. The physical removal of the VBox index table is a one-time architectural event unique to S/4HANA brownfield conversions. 4. This failure only surfaces when the new settlement management engine attempts to process migrated retail sales history. Migration forces a commercial logic transformation that no standard upgrade ever required.
Financial and customer impact.
1. Direct impact on the corporate bottom line as uncollected vendor rebates result in higher effective purchase costs. 2. Inaccurate inventory valuation if the system fails to apply retrospective discounts to the existing store stock. 3. Operational paralysis in the finance department as retailers must manually calculate thousands of rebate payments in Excel. 4. Audit risk as the company cannot prove the technical continuity of its promotional spend between ECC and S/4HANA. Retail settlement failures directly compromise the commercial viability of high-volume promotions.
Governance and accountability RACI model.
Securing the retail margin requires a partnership between SD and purchasing leads. 1. Accountable retail O2C lead, the person who owns this and gets fired if it fails. 2. Responsible SD functional lead ensures every retail condition type is correctly mapped to a settlement management contract. 3. Consulted Commercial Purchasing Manager provides the vendor agreement logic for validation. 4. Informed Retail Finance Director monitors the accrual balance accuracy on day 1. Accountability ensures that the commercial promise to collect is technically enforceable.
Ownership who actually fixes it.
Resolving this requires an industry-to-core transition audit. 1. The Retail O2C lead identifies all active vendor agreements and mandates their migration to condition contracts. 2. The FICO lead audits transaction OBYC to ensure account keys for retail settlement are correctly mapped to ACDOCA. 3. The ABAP lead refactors any custom retail bonus routines into the new S4 HANA settlement management baddies. 4. The technical architect utilizes SAP Note 22673777 to apply the latest retail-specific settlement patches.
How this is actually fixed the right way by a role.
1. Retail O2C lead mandates a hard settlement of all old ECC retail agreements before the final migration snapshot. 2. The team implements condition contract management for all new retail promotions, utilizing the HANA native calculation engine. 3. FICO lead ensures the settlement types in transaction WB2R_SC are perfectly aligned with the retail profit centers. 4. Functional leads execute promotional simulations, verifying that a store sale correctly triggers the vendor rebate accrual.
What not to do common wrong fixes.
1. Do not allow users to manually post retail accruals in FI to bypass a system error. You are destroying the commercial audit trail. 2. Do not assume that retail rebates from ECC are 100% identical to S4 HANA condition contracts. 3. Do not ignore missing business volume errors in the settlement monitor. Every missing dollar is a lost margin. 4. Do not allow go live until the vendor to contract reconciliation shows 0 unexplained variances. Shortcuts in retail settlement result in a financial black hole post go live.
Follow-up 1. What is Condition Contract Management, or CCM, in S4 HANA Retail?
Answer: CCM is the unified engine that replaces all legacy rebates. In S4 HANA Retail, it allows you to manage vendor bonuses, store incentives, and customer loyalty payouts in a single framework that is fully integrated with the Universal Journal.
Follow-up 2. Why is the VBox index removal so disruptive for retail?
Answer: retailers have millions of transactions. ECC relied on VBox to index these for rebates. S4 HANA deletes VBox and recalculates volume in real time. If your business volume configuration is missing even one retail document type, the new engine will miss data, resulting in 0 payouts.
Follow-up 3. Curveball. What if the settlement works correctly for standard materials, but fails for fresh food items because the S4 HANA catch weight management integration was not correctly mapped to the business volume selection, causing a units to weight conversion error?
Answer: this is a cross-industry engine failure. You must test the CWM to CCM handshake. The fix is to configure the settlement unit to use the base unit of measure for all volume-based calculations. If you miss this, you will have scale drift. The system undercalculates rebates for products sold by weight, resulting in significant revenue loss for the grocery business unit on day 1.
Exclusive pro tip.
On day 1, monitor transaction WB2R_SC specifically for retail type contracts. Any contract stuck in settlement error status indicates a missing FI account key in VKOA. Fix the retail account determination immediately to keep your vendor cash flowing.
Scenario 281. Time dependency BUT000 deactivation data loss.
On day 1 post-go live, master data teams often discover that historical or future dated customer information has vanished. In ECC, customer data in table KNA1 was static and had no concept of time slices. S4 HANA Business Partner Architecture table BUT000 supports full-time dependency for addresses, roles, and bank details. If the technical time dependency switch was deactivated during the CV synchronization to simplify the load, only the current valid record is migrated, permanently deleting future dated address changes or role assignments required for upcoming contracts.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high master data integrity and legal traceability risk. 2. Phase run post-go-live stabilization. 3. Frequency common in organizations with high volume address changes or leasing models. 4. Primary ownership master data management lead, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and basis lead. 6. Business ownership data privacy and governance officer. 7. Relevant SAP note. SAP note 226509 S4TWL business partner approach.
Diagnostic dashboard, symptoms and evidence.
How time dependency data loss manifests in the live production system. 1. Symptom. A customer who was active yesterday is suddenly blocked or invalid today because their migrated BP role expired at midnight. 2. Red flag. Future dated address changes that were maintained in legacy Z tables in ECC are missing from the BP transaction in S4 HANA. 3. Business impact. Inability to ship orders to a customer's new warehouse location, leading to misrouted freight and customer penalties. 4. Detection, checking table BUT000 for multiple validity periods fields valid underscore from and valid underscore to reveals only a single record per partner. 5. Technical proof, logs in the CVI cockpit stating that time dependency is not active, only current state will be synchronized. Insight, if you deactivate time dependency, you are turning a 4D database into a 2D spreadsheet, losing the future state of your data.
Why this happens, scenario analysis and root cause.
1. The project team deactivated the time dependency flag in cross-application components to avoid complex mapping errors during the realize phase. 2. Failure to align the current date of the migration snapshot with the validity start dates required by the new S4 HANA BP model. 3. Legacy ECC data used custom valid to fields in Z tables that were not identified as mandatory for the business partner conversion. 4. Underestimating the impact of BP roles in S4 HANA. If a role like FLCU01 has an end date, the sales rep loses access to that customer instantly on that date. The failure is a result of prioritizing migration simplicity over data lifecycle requirements.
Why this is a migration exclusive failure.
1. ECC customer data in table KNA1 was physically static. The system did not support time-dependent address or role changes natively. 2. S4 HANA migration moves data to the business partner table BUT000, which is architecturally designed for temporal data management. 3. The requirement to map a static past to a dynamic future is a unique data transformation hurdle of the S4 HANA transition. 4. This failure only surfaces when the conversion logic makes a point-in-time decision that accidentally purges valid future records. Migration forces a master data temporal redesign that ECC never supported.
Financial and customer impact.
1. Operational revenue loss as high-value orders fail to save because the customer's sales role expired in the background. 2. Inaccurate tax calculation if the system uses an obsolete header address because the future-dated tax jurisdiction was lost during migration. 3. Increased risk of audit red flags if historical address changes required for VAT compliance are no longer traceable in the system. 4. High support costs as the MDM team must manually reconstruct thousands of time slices from legacy data backups. Data loss in time-dependent fields directly compromises the audit trail of the digital core.
Governance and accountability RACI model.
Securing data lifecycles requires a partnership between MDM and GRC leads. 1. Accountable master data management lead, the person who owns this and gets fired if it fails. 2. Responsible data architect ensures the CVI technical settings transaction SPRO allow for multiple validity periods. 3. Consulted SD functional lead identifies the future dated business events, for example store openings, that must be preserved. 4. Informed IT transformation director monitors the data integrity score of the converted master data. Accountability ensures that technical settings do not result in the destruction of business history.
Ownership who actually fixes it.
Resolving this requires an application layer time slice audit. 1. The MDM lead identifies all critical future dated attributes currently stored in legacy ECC custom tables. 2. The technical architect activates time dependency for central data and addresses in the S/4HANA IMG. 3. The data migration team refactors the BP load to include multiple segments for table BUT000 and BUT020 addresses. 4. The SD functional lead validates that the sales order price date correctly fetches the address valid for that specific date.
Who gets blamed versus who owns it?
1. Blamed basis team. The business assumes the database was not copied correctly. 2. Blamed SAP users claim the BP transaction is deleting data automatically. 3. Actual owner master data management lead responsible for the failure to define the time slice migration requirements. 4. Root cause, treating business partner migration as a snapshot instead of a timeline transition. If a future change is missing, the migration logic was built without a time dimension.
How this is actually fixed the right way by a role.
1. MDM lead mandates a temporal audit, identifying all customers with planned changes in the next 12 months. 2. The team implements full-time dependency SAP Note 22659093 in the target S/4HANA system before the first mock. 3. Technical architect utilizes the migration cockpit with multiple table rows to load different validity periods for the same ID. 4. Functional leads execute date jump testing, creating an order for today and an order for next month to verify address shifts.
What not to do. Common wrong fixes.
1. Do not allow the time dependency switch to remain off just to make the load faster. You are creating future P1 defects. 2. Do not manually append future addresses to the BP after go live. You will break the link to the original ECC audit trail. 3. Do not assumption that historical addresses in ECC are automatically moved to S/4HANA. You must explicitly map them. 4. Do not allow go live without a future state validation, proving the system can handle a change that hasn't happened yet. Shortcuts in time-dependent data result in a system amnesia that will strike on day 1.
Follow-up 1. What is time dependency in the S/4HANA Business Partner?
Answer: it is a core architectural feature that allows you to maintain multiple versions of a record address, bank, roles with specific valid from and valid to dates. The system automatically picks the record that matches the current system date for any transaction.
Follow-up 2. How can I check if time dependency is active in my system?
Answer: go to the S/4HANA IMG under Cross-Application Components to SAP Business Partner to Activation Switch for Functions. If the time dependency indicator is not checked, your system will only ever store one valid version of a business partner attribute.
Follow-up 3. Curveball. What if the business partner header is valid for 10 years, but the bank details time slice was migrated with an incorrect end date that was defaulted during the CVI sync, causing the first automated refund to a customer to fail because the system thinks the bank account is expired even though it is still active?
Answer: this is an attribute-level maturity failure. In S/4HANA, every subtab in the BP has its own legal life. You must test payment lifecycle parity. The fix is to configure the CVI load to default all bank end dates to December 31st, 1999, unless a specific date exists in the source. If you miss this, you will have cash stagnation. Your system will refuse to pay or refund your best customers, creating a massive reconciliation backlog on day 30.
Exclusive pro tip.
Before the technical conversion, run a report on table BUT000 and count the records where valid_2 is not equal to 99991231. If this count is 0, your migration has ignored all historical and future data. Rerun your master data delta load with time dependency enabled before the hypercare period ends.
Scenario 282. Public sector contracting simplifications.
On day 1 of an S/4HANA go live in the public sector, organizations often find that their sales-based grant management or service contracts fail to post. S/4HANA simplifies the integration between SD and the public sector management, or PSM component. If legacy billing plans were not realigned with the new fund and grant derivation rules in the Universal Journal, the system will reject invoice posting due to missing budget period assignments, paralyzing the agency's revenue collection.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high regulatory compliance and budgetary control risk. 2. Phase run post go live. 3. Frequency common in government and non-profit organizations. 4. Primary ownership public sector project lead. The person who owns this and gets fired if it fails. 5. Supporting SD functional lead and FICO lead. 6. Business ownership public sector finance director. 7. Relevant SAP note. SAP note 2273108. ISPSCA simplification.
Diagnostic dashboard, symptoms and evidence.
How public sector contracting gaps manifest in the live system. 1. Symptom. SD billing documents remain in VFX3 status, with the error account assignment for budget period is mandatory. 2. Red flag. Legacy ECC contract object fields in SD are visible but do not trigger the expected budget consumptions in the ledger. 3. Business impact. Inability to invoice for government services, resulting in immediate funding gaps and audit exceptions. 4. Detection. Checking table ACDOCA reveals that the functional area or fund is missing for SD-originated postings. 5. Technical proof. Errors in the PSM derivation tool transaction FMDerive indicating that the SD item category is not recognized. Insight in S4 HANA. The public sector is ACDOCA native. If your SD document does not carry the budget metadata, the ledger will block it.
Why this happens, scenario analysis and root cause.
1. S4 HANA replaces legacy PSM data structures with the Universal Journal, requiring a total redesign of the SD to PSM derivation path. 2. The project team migrated SD billing plans without configuring the new budget period field, which was not mandatory in ECC. 3. Failure to align the business partner grantee roles with the new S4 HANA public sector organizational levels. 4. Underestimating the impact of real-time budget checks. S4 HANA attempts to validate the revenue budget at the moment of invoice save. The failure is a result of treating public sector accounting as a separate subledger rather than an integrated core function.
Why this is a migration exclusive failure.
1. In ECC, public sector management was a separate subledger. An SD error rarely blocked the core general ledger posting. 2. S4 HANA migration physically merges the public sector ledger into the Universal Journal, requiring perfect modular integration. 3. The technical requirement to derive a budget period for every O2C event is a unique architectural mandate of S4 HANA. 4. This failure only surfaces when the new integrated public sector core attempt to bill a government contract on day 1. Migration removes the barrier between sales and budgeting that ECC allowed to exist for decades.
Financial and customer impact.
1. Immediate loss of revenue recognition for government grants, potentially impacting public service delivery funding. 2. Non-compliance with statutory reporting requirements for public sector entities, leading to legal and political scrutiny. 3. Increased administrative overhead as finance staff must manually tag invoices with budget data to bypass system blocks. 4. Inaccurate funds availability reporting, resulting in unbudgeted expenditures or missed revenue targets. Contracting failures directly jeopardize the financial transparency of the public sector organization.
Governance and accountability RACI model.
Securing government contracts requires a link between SD and public sector finance. 1. Accountable public sector project lead. The person who owns this and gets fired if it fails. 2. Responsible FICO lead ensures the derivation rules for funds and budget periods are perfectly synchronized with SD. 3. Consulted SD functional lead provides the billing milestones and document categories that trigger budget events. 4. Informed IT transformation director monitors the budget validation error rate on day 1. Accountability ensures that the technical migration respects the legal budgetary controls.
Ownership who actually fixes it.
Resolving this requires a ledger-to-grant mapping audit. 1. The public sector lead audits transaction FMDerive to ensure SD fields like AURT are included in the derivation strategy. 2. The SD functional lead updates the billing plan configuration to include mandatory budget metadata for all government clients. 3. The technical architect utilizes SAP Note 2273108 to reconfigure the contract to ledger integration. 4. The QA team executes statutory tests, verifying that an invoice correctly updates the actuals column in the budget report.
How this is actually fixed the right way by a role.
1. Public sector lead mandates a hard validation gate, ensuring no government order is saved without a valid budget period. 2. The team implements automatic grant derivation based on the business partner and sales area attributes. 3. The FICO team utilizes transaction S_ALR_8701269 to automate the reconciliation between SD billing and funds management. 4. Functional leads execute audit trail simulations, proving that each dollar of public revenue is traceable to its source funding.
What not to do. Common wrong fixes.
1. Do not use manual journal entries in FI to bypass a budget period error in SD. You are destroying the audit trail. 2. Do not allow users to hard code budget periods in sales orders. The values must be derived from configuration for consistency. 3. Do not assume that ECC grant management rules will work in the S4 HANA Universal Journal without a full redesign. 4. Do not allow go live until the funds management reconciliation matches the audited legacy baseline. Shortcuts in public sector logic result in a financial accountability crisis.
Follow-up 1. What is the budget period, and why is it mandatory in S4HANA?
Answer: the budget period is a new organizational dimension in S4HANA PSM. It allows for the precise tracking of funds across fiscal years. Because S4HANA integrates PSM into the Universal Journal, the budget period is required to balance every revenue row in table ACDOCA.
Follow-up 2. How can I identify SD documents with missing budget data?
Answer: use transaction VFX3 and filter for account determination or field status errors. If the error mentions budget period or fund, your derivation rules in transaction FM derive are missing the SD document mapping.
Follow-up 3. Curveball. What if the budget derivation works for the main revenue item, but fails for the deferred revenue posting in SAP RAR, because the revenue accounting item was generated without the public sector attributes required for the contract asset ledger?
Answer: this is a cross-framework metadata failure. You must test the RAR to PSM handshake. The fix is to extend the revenue accounting item or RI structure to include PSM fields like fund and budget period. If you miss this, you will have stuck revenue. You can bill the customer, but you cannot recognize the revenue in your statutory books because the subledger posting is technically incomplete.
Exclusive pro tip.
On day 1, monitor transaction FM_recon specifically for SD sources. If you see a variance between invoiced and committed amounts, your public sector derivation is missing a document type. Fix transaction FM derive immediately to restore your budget transparency.
Scenario 283. Agricultural contract management integration breaks.
On day 1 of an S4HANA go live in the agricultural industry, organizations often find that their grain sales and commodity logistics stop functioning. S4HANA's optimized SD core can disrupt the complex integration with agricultural contract management, or ACM. If the custom load data capture interfaces and the contract-to-order mapping were not validated against the new S4HANA architecture, the system will fail to settle contracts, leading to payment delays for farmers and shipping halts.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high industry process and supply chain risk. 2. Phase, run post-go live. 3. Frequency, common in large agribusiness and commodity trading firms. 4. Primary ownership, agri-solution architect, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and integration architect. 6. Business ownership, grain operations manager. 7. Relevant SAP note, not applicable industry solution design gap, reference SAP note 2227014 for O2C context.
Diagnostic dashboard, symptoms and evidence.
How agribusiness integration gaps manifest in the live system. 1. Symptom. Creating an application document in ACM results in the error predecessor sales document not found despite the order being active. 2. Red flag. The settlement dashboard in ACM shows a status of failed for all documents involving new S4HANA plants. 3. Business impact. Total halt in grain shipments and unprocessed producer payments, leading to severe commercial and legal risk. 4. Detection, checking transaction/AMC/monitor reveals a spike in callback errors from the SD pricing engine. 5. Technical proof, errors in table/SAP/SLL/CLSMS stating the agricultural commodity classification is missing for migrated materials. Insight, ACM is a layered solution. If the S/4HANA SD foundation is even slightly uneven, the Agri engine will fail.
Why this happens: scenario analysis and root cause.
1. The team assumed ACM was a standalone module, ignoring its deep technical hooks into the SD sales order and delivery tables. 2. Legacy custom interfaces for load data capture were not remediate for the new S/4HANA Business Partner and CVI models. 3. Failure to align the commodity pricing engine or CPE in S/4HANA with the legacy ACM price fixation rules. 4. Underestimating the impact of document flow simplification, where S/4HANA's VBFA changes break custom ACM reports. The failure is a result of treating an industry-specific integration as an isolated technical task.
Why this is a migration exclusive failure.
1. ECC Agricultural Contract Management was a standalone add-on that operated in its own technical silo. 2. S/4HANA migration fuses ACM with the digital core, making it sensitive to changes in the standard SD document flow. 3. The move to the business partner model and CVI sync is a mandatory S/4HANA gate that breaks legacy ACM producer mappings. 4. This failure only surfaces when the new unified AgriCore attempts to execute a load data capture event after conversion. Migration turns a stable add-on into an integrated core dependency that ECC never enforced.
Financial and customer impact.
1. Direct revenue loss as grain cannot be legally settled or billed to export customers on day 1. 2. Severe legal risk and damage to producer trust if farmers are not paid correctly for their delivered grain. 3. Increased logistics costs as ships and trains are delayed at port due to missing title transfer documentation. 4. High cost of manual reconciliation as clerks must manually match weight slips to sales orders in Excel. Agri-business integration failures directly break the farmer to fork supply chain.
Governance and accountability RACI model.
Ensuring agri-continuity requires a partnership between SD and grain leads. 1. Accountable agri-solution architect, the person who owns this and gets fired if it fails. 2. Responsible SD functional lead ensures the sales document types and requirement classes support ACM application logic. 3. Consulted grain operations manager provides the settlement rules and dispute management scenarios. 4. Informed global risk manager monitors the commodity exposure based on the system's contract status. Accountability ensures that technical migration does not disrupt commercial agricultural obligations.
Ownership, who actually fixes it.
Resolving this requires an end-to-end O2C and ACM audit. 1. The agri-architect identifies every agricultural material and ensures it is classified for international trade. 2. The integration architect refactors the LDC interface to use the new business partner APIs. 3. The SD lead audits transaction/AMC/IMG to ensure the call-off and application rules are synchronized. 4. The QA team executes a barge-to-bill test, verifying that physical grain receipt triggers the financial settlement.
Who gets blamed versus who owns it.
1. Blamed grain elevator operators management assumes they are entering weight data incorrectly. 2. Blamed SAP users claim the new system is not automating the settlement process as expected. 3. Actual owner, agri-solution architect responsible for the failure to perform a cross-module data audit during realize. 4. Root cause, underestimating the dependency of the ACM engine on the core S/4HANA sales document status model. If the settlement fails, the architectural bridge between ACM and SD is broken.
How this is actually fixed the right way by a role.
1. Agri-architect mandates a producer data audit, ensuring all grain vendors have valid business partner roles. 2. The team implements real-time price fixation in the CPE engine to match legacy ACM contract rules. 3. ABAP lead refactors the ACM reports to read from the new S/4HANA status headers in table VBAK. 4. Functional leads execute volume simulations, proving the system can handle 500 simultaneous grain unloading events.
What not to do: common wrong fixes.
1. Do not allow users to manually settle ACM contracts in S/4HANA to bypass errors. This creates massive financial variances. 2. Do not use manual ECC-style weight adjustments. You must use the standard LDC objects to maintain the audit trail. 3. Do not assume that Agri-specific Z tables will automatically work in S/4HANA without a full impact analysis. 4. Do not allow go live until the contract to cash reconciliation for the last 30 days of ECC history is finished. Shortcuts in Agri-integration result in a supply chain freeze at the peak of the season.
Follow-up 1. What is the load data capture, or LDC, in ACM?
Answer: LDC is the central transaction where physical grain attributes like weight, grade, and quality are recorded. In S/4HANA, it must be integrated with the new business partner and storage location models to trigger the correct sales application.
Follow-up 2. Why do legacy ACM reports break in S/4HANA?
Answer: legacy reports often queried table VBFA directly to find document links. S/4HANA restructures VBFA and adds new document categories for CM, making old SQL queries return incomplete or incorrect results.
Follow-up 3. Curveball. What if the grain receipt succeeds, but the application fails because the S/4HANA batch status was changed to restricted during the CVI sync?
Answer: this is a cross-framework failure. ACM must respect batch management rules. The fix is to configure the ACM allocation profile to recognize new S/4HANA batch statuses. If missed, the grain is physically in the silo but technically unshippable, causing unfulfilled export contracts on day 1.
Exclusive pro tip.
On day 1, monitor transaction/AMC/MON_AC specifically for integration exceptions. These are the ghost errors between ACM and the sales order. Resolve any item category mismatches immediately to keep your commodity trading desks operational.
Scenario 284. Direct store delivery tour status migration failures.
On day 1 post-go live in the beverage or consumer goods industry, delivery drivers often find they cannot start their daily routes or settle their cash collections. S/4HANA deprecates the legacy LEDSD module in favor of SAP direct distribution. If the tour statuses and driver master data were not correctly transitioned from the old DSD tables to the new last-mile distribution objects, the system will fail to reconcile truck inventory, leading to massive data gaps and physical stock variances.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high industry-specific and logistics integrity risk. 2. Phase, run post-go live. 3. Frequency, common in beverage, dairy, and high-frequency distribution. 4. Primary ownership, DSD solution lead, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and integration architect. 6. Business ownership, direct distribution manager. 7. Relevant SAP note, not applicable industry solution design gap, reference SAP note 2227014. For O2C simplification context.
Diagnostic dashboard, symptoms and evidence.
How DSD tour migration failures manifest in the live system. 1. Symptom, handheld devices return error tour ID not found during the morning synchronization. 2. Red flag, the tour monitor in S/4HANA shows documents stuck in loading status even after the truck has left the yard. 3. Business impact, inability to process daily cash and check collections, creating a multi-million-dollar unreconciled balance on day 1. 4. Detection, checking table/DSD/HH_control reveals that legacy ECC status flags are not being updated by the new S/4HANA kernel. 5. Technical proof, mismatches in the business partner personnel role where the driver ID is not linked to the distribution organizational level. Insight, in S/4HANA, DSD is a dead end. If you didn't move to the last-mile distribution engine, your mobile fleet is paralyzed.
Why this happens: scenario analysis and root cause.
1. The project team attempted to lift and shift legacy LEDSD configuration without realizing that the module is no longer enhanced in S/4HANA. 2. Failure to refactor the DSD connector middleware to handle the new OData-based communication required for last-mile distribution. 3. The business partner renumbering during CV synchronization caused the handheld devices to lose their link to the driver and customer IDs. 4. Underestimating the complexity of tour settlement, which now requires a real-time update to the Universal Journal. The failure is a result of treating an industry engine replacement as a simple functional patch.
Why this is a migration exclusive failure.
1. ECC upgrades kept the LEDSD module stable for 15 years, allowing legacy handheld logic to remain unchanged. 2. S4 HANA migration involves a choice between staying on the deprecated compatibility mode or moving to the new direct distribution engine. 3. The technical requirement to move tour data from /DSD/tables to LMD-specific tables is a unique S4 HANA transition hurdle. 4. This failure only surfaces when the first mobile sync tour is executed in the newly converted S4 HANA environment. Migration forces a re-platforming of the mobile supply chain that ECC never required.
Financial and customer impact.
1. Massive risk of cash leakage as driver collections cannot be legally reconciled or banked in the system. 2. Inaccurate inventory valuation if the system fails to record the returns or empty containers brought back by the drivers. 3. Retailer dissatisfaction as drivers cannot provide a system-generated proof of delivery or invoice at the curb. 4. High support costs as IT must manually post thousands of tours to clear the day one logistics backlog. DSD failures directly threaten the cash-on-delivery liquidity of the business.
Governance and accountability RACI model.
Ensuring route stability requires a link between IT and fleet operations. 1. Accountable DSD solution lead, the person who owns this and gets fired if it fails. 2. Responsible integration architect refactors the mobile sync logic to use the new S4 HANA distribution APIs. 3. Consulted fleet manager provides the tour life cycle rules for route settlement validation. 4. Informed sales operations director monitors the route completion rate as a primary day one KPI. Accountability ensures that digital synchronization supports physical distribution.
Ownership who actually fixes it.
Resolving this requires an engine and sync audit. 1. The DSD solution lead identifies every visit list and route that failed to migrate into the new distribution objects. 2. The integration architect utilizes SAP BTP to map legacy handheld XML files to the new S4 HANA last mile distribution services. 3. The MDM lead ensures the driver business partner records have the mandatory roles for distribution and settlement. 4. The technical architect utilizes SAP Note 2227014 to verify the document category mapping for tour-relevant deliveries.
Who gets blamed versus who owns it.
1. Blamed. Delivery drivers management assumes the staff are entering data wrong on their devices. 2. Blamed. SAP the business claims the new system cannot handle a simple delivery route. 3. Actual owner, DSD solution lead responsible for the failure to design the DSD to SDD transformation during the explore phase. 4. Root cause, treating a module deprecation as a simple data migration rather than a process re-engineering. If the tour does not settle, the logic was never modernized for the digital core.
How this is actually fixed the right way by a role.
1. DSD lead mandates a tour pilot, testing the end-to-end sync for 5 drivers in the live production system before the full launch. 2. The team implements direct distribution LMD to replace the deprecated LEDSD settlement logic. 3. The integration architect implements a translation layer to map legacy ECC IDs to the new S4 HANA business partner IDs for the handhelds. 4. Functional leads execute cache reconciliation tests, ensuring the driver's collection matches the ACDOCA posting to the sent.
What not to do common wrong fixes.
1. Do not try to force the old /DSD/ transactions to work. You are building technical debt on a dead code base. 2. Do not allow drivers to revert to paper logs as a permanent solution. You will lose all real-time inventory visibility. 3. Do not ignore sync failures in the middle assuming they are just first-day network noise. 4. Do not allow go live without a full tour simulation including cache, returns, and inventory balancing. Shortcuts in DSD migration result in a total logistics blackout on day 1.
Follow-up 1. What is last mile distribution in S/4HANA?
Answer: LMD is the modern successor to LEDSD. It is built on a Fiori-first architecture and is designed to handle van sales and direct delivery with real-time integration into the Universal Journal and embedded EWM, providing better cache and stock visibility.
Follow-up 2. Why is the business partner personnel role so critical for DSD?
Answer: in DSD, the driver is both a sales employee and a logistics vendor. S/4HANA requires that this multifunctional role be captured in a single business partner ID to ensure the financial settlement and inventory accountability are linked correctly.
Follow-up 3. Curveball. What if the tour sync succeeds, but the driver's handheld returns an XML parsing error because the new S/4HANA Business Partner ID has more characters than the legacy device's fixed-length buffer?
Answer: this is a metadata collision failure. Legacy devices often have hard-coded field lengths. The fix is to configure internal ID mapping in the middleware to send a truncated legacy ID to the device while maintaining the full BP ID in S/4HANA. You must perform a payload audit on your mobile devices to identify these buffer limits before you send the first truck out.
Exclusive pro tip.
On day 1, monitor transactions /SAPCND/rollout specifically for dangling tours. These are routes that have been finished but not settled. Fix the distribution organizational level mapping immediately to keep your driver cache flowing.
Scenario 285. Oil and gas hydrocarbon management integration drift.
On day 1, post-go live in the oil and gas industry, organizations often find that their bulk liquid sales are inaccurate. S/4HANA consolidates ISOIL features into the digital core, but the transition changes how the quantity conversion interface, or QCI, interacts with the SD pricing engine. If the unit of measure groups and base density rules were not realigned for HANA native processing, the system will calculate incorrect billable volumes, leading to massive financial variances and tax non-compliance.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high engineering precision and financial risk. 2. Phase, run post-go live. 3. Frequency, common in upstream and downstream oil and gas entities. 4. Primary ownership, oil and gas solution architect, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and FICO lead. 6. Business ownership, hydrocarbon management manager. 7. Relevant SAP note, not applicable industry solution design gap, reference SAP note 2227014 for O2C context.
Diagnostic dashboard, symptoms and evidence.
How hydrocarbon integration gaps manifest in the live system. 1. Symptom: a sales order for 1,000 barrels is billed as 998 barrels despite temperature and density remaining constant. 2. Red flag: the quantity conversion log in the delivery transaction 03Q1 shows errors referencing ASTM tables not initialized. 3. Business impact: significant revenue loss due to systemic underbilling or strategic customer disputes due to overbilling on high-volume liquid contracts. 4. Detection: comparing the standard volume in table MSEG ECC against table MATDOC, S/4HANA reveals a precision drift. 5. Technical proof: mismatches in the QCI calculation engine where legacy rounding rules conflict with HANA's 15-decimal precision. Insight: in oil and gas, a gallon is a calculation, not just a unit. If the calculator changes, the revenue changes.
Why this happens, scenario analysis and root cause.
1. The team assumed ISOIL was transparently merged into S/4HANA, ignoring the fact that the QCI engine was refactored for HANA native SQL. 2. Legacy custom density conversion routines in VOFM were migrated without accounting for the new S/4HANA UOM group requirements. 3. Failure to synchronize the base conditions temperature and pressure between the physical meters and the S/4HANA digital twin. 4. Underestimating the impact of real-time TDP or tariffs, duties, and permits calculations in the Universal Journal. The failure is a result of treating a high-precision engineering calculation as a simple SD configuration task.
Why this is a migration exclusive failure.
1. ECC ISOIL was a standalone industry solution. S/4HANA integrates it into the core, changing how object dependencies are handled. 2. S/4HANA migration involves a physical transformation of the unit of measure group's table T006, which was never required in standard upgrades. 3. The requirement to use HANA native quantity conversion functions is a unique S/4HANA modernization task. 4. This failure only surfaces when the new integrated hydrocarbon core attempts to build a high-precision liquid sail. Migration forces a level of calculation precision that ECC row-based upgrades never approached.
Financial and customer impact.
1. Material misstatement of inventory on hand for the global group, leading to significant audit concerns at year-end. 2. Tax non-compliance risk if the excise tax calculated on the volume is inconsistent with government-mandated tables. 3. Loss of strategic customer trust as buyers refuse to pay inaccurate invoices that do not match their own physical meter readings. 4. High cost of manual quantity correction as analysts must manually calculate millions of barrels in Excel. Hydrocarbon failures directly jeopardize the financial transparency and tax status of the enterprise.
Governance and accountability RACI model.
Securing the billable volume requires a partnership between engineering and IT. 1. Accountable oil and gas solution architect, the person who owns this and gets fired if it fails. 2. Responsible SD functional lead ensures the quantity conversion settings in transaction 03DE match the legacy baseline. 3. Consulted hydrocarbon management lead provides the ASTM and API tables for mathematical validation. 4. Informed corporate tax manager monitors the excise tax accuracy as a primary day one compliance KPI. Accountability ensures that system speed does not come at the cost of volume precision.
Ownership who actually fixes it.
Resolving this requires an arithmetic and data mapping audit. 1. The oil and gas lead audits table 03DE to ensure the UOM groups are correctly assigned to all S/4HANA material types. 2. The ABAP lead refactors the custom QCI exits to utilize the new HANA native quantity conversion function modules. 3. The MDM lead executes a mass correction of base density and gravity attributes on the S/4HANA material master. 4. The technical architect utilizes SAP Note 1912445 to optimize the calculation performance for high-precision SD pricing.
Who gets blamed versus who owns it.
1. Blamed terminal operators. The business assumes the meters were read wrong at the loading dock. 2. Blamed SAP users claim the new system does not understand oil and gas as well as ECC did. 3. Actual owner. Oil and gas solution architect responsible for the failure to define the precision handshake during the explore phase. 4. Root cause, treating hydrocarbon management as a functional task while ignoring the underlying database math shifts. A quantity error is usually an architectural gap, not a physical meter error.
How this is actually fixed the right way by a role.
1. Oil and gas architect mandates a dual system quantity audit during the realize phase, verifying 1,000 document variants. 2. The team implements automatic tolerance checks to flag any quantity variance between the sales order and the terminal ticket. 3. The SD team utilized the S/4HANA TDP engine to automate the calculation of excise taxes directly in the Universal Journal. 4. Functional leads execute volume stress tests, proving the system can handle 5,000 conversions per hour without CPU spikes.
What not to do. Common wrong fixes.
1. Do not use manual ECC-style rounding adjustments to fix a systemic conversion error. You are hiding a legal liability. 2. Do not manually update the QCI tables using SQL. You will permanently break the hydrocarbon audit trail. 3. Do not ignore temperature correction warnings, assuming they are just post-go-live noise. 4. Do not allow go-live until the inventory to sales reconciliation shows 100% alignment for all liquid materials. Shortcuts in quantity validation result in a financial black hole at your first month-end close.
Follow-up 1. What is the Quantity Conversion Interface, or QCI, in S/4HANA?
Answer: QCI is the interface that calculates standardized volumes based on variables like temperature and density. In S/4HANA, it is integrated into the core and optimized for HANA memory, but it remains highly sensitive to your UOM group master data mapping.
Follow-up 2. Why is the UOM group so critical in S/4HANA oil and gas?
Answer: the UOM group table T006 defines which set of conversion rules a material follows. If your migration assigned the wrong group, the system might convert gasoline using crude oil tables, resulting in immediate billing errors.
Follow-up 3. Curveball. What if the volume matches at PGI, but the customer invoice is blocked because the tax on volume rule used an obsolete LIS lookup that was never refactored for the new S/4HANA International Trade Data Model?
Answer: this is an analytical logic failure. Many O and G tax rules are volume-based. The fix is to refactor the tax condition requirement to read from the new International Trade CDS views. If you miss this, you will have compliance blockades. Your trucks can leave the terminal, but you cannot legally bill the customer, resulting in a total revenue freeze on day one.
Exclusive pro tip.
Add a precision audit to your day one stabilization plan. Run a report comparing the net value of all liquid invoices against the liters at standard volume. If the ratio drifts by more than 0.1%, your QCI logic is unoptimized. Fix transaction 03Q1 immediately to stop the leakage.
Scenario 286. Pharma batch traceability compliance drift.
On day one, post go live in the life sciences or pharma industry, organizations often find that their electronic batch records and traceability chains are broken. In ECC, batch classification in table AUSP was loosely integrated with the delivery flow. S/4HANA enforces a stricter validation of batch characteristics during the post-goods issue event to support the Drug Supply Chain Security Act. If the migration of quality attributes was incomplete, or if the new batch status logic was not validated, the system will block shipments of life-saving medications, creating a legal and humanitarian crisis.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high regulatory compliance and inventory integrity risk. 2. Phase, run post-go live. 3. Frequency, common in pharma, biotech, and medical device industries. 4. Primary ownership, quality assurance director, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and MM lead. 6. Business ownership, head of supply chain compliance. 7. Relevant SAP note, not applicable industry solution design gap, reference SAP note 2227014 for O2C context.
Diagnostic dashboard, symptoms and evidence.
How pharma compliance gaps manifest in the live system. 1. Symptom, a delivery for a serialized batch is blocked with the error mandatory characteristic missing, despite the data being visible in transaction MSC3N. 2. Red flag, discrepancies between the country of origin in the batch master and the export declaration in the new international trade module. 3. Business impact, inability to ship temperature-controlled products, resulting in massive inventory spoilage and regulatory fines. 4. Detection, checking table MCH1 batchmaster reveals that historical manufacturing dates were not correctly converted during the CVI sync. 5. Technical proof, errors in the electronic batch record log showing that the link between the material document and the batch class is broken. Insight in pharma, a batch without verified data is not inventory. It is a liability that the system must block.
Why this happens, scenario analysis and root cause.
1. Legacy ECC systems allowed for incomplete batch records where mandatory characteristics like potency were bypassed during mass receipts. 2. The project team failed to revalidate the batch determination search strategies for S/4HANA's new memory resident AATP engine. 3. Failure to synchronize the material type settings in transaction OMS2 with the new S/4HANA quality management requirements. 4. Underestimating the impact of time dependency on batch classifications, leading to the system reading expired quality results for current shipments. The failure is a result of treating batch data as a text label rather than a regulated financial and quality asset.
Why this is a migration exclusive failure.
1. ECC upgrades never touch the batch classification table's AUSP, ensuring that legacy records remain functionally untouched. 2. S/4HANA migration involves a physical transformation of the classification engine to support real-time HANA analytics. 3. The requirement to assign a business partner ID to every batch manufacturer is a unique S/4HANA CVI mandate. 4. This failure only surfaces when the new integrated quality core attempt to validate a 5-year-old batch for a new sale. Migration turns dormant data gaps into active compliance hard stops.
Financial and customer impact.
1. Direct revenue loss as high-value biologics cannot be goods issued, preventing the generation of customer invoices. 2. Severe legal risk including the potential for a product recall if unvalidated batches reach the market due to a system loophole. 3. Operational disruption as pharmacists and warehouse staff must manually verify every batch against paper records on day 1. 4. Massive fines from health authorities like FDA or EMA for failing to maintain a continuous pedigree or audit trail. Traceability failures directly jeopardize the license to operate in the pharmaceutical industry.
Governance and accountability RACI model.
Securing the pharma supply chain requires a partnership between quality and IT. 1. Accountable quality assurance director, the person who owns this and gets fired if it fails. 2. Responsible MDM lead ensures that every batch in the migration scope has a 100% complete classification set. 3. Consulted SD functional lead provides the customer-specific quality requirements for shipping. 4. Informed global logistics director monitors the blocked pallet count as a primary day 1 KPI. Accountability ensures that technical speed does not come at the cost of patient safety.
Ownership who actually fixes it.
Resolving this requires a classification and compliance audit. 1. The quality lead identifies all materials subject to serialization and mandates a batch to class audit in transaction CL24N. 2. The MDM lead executes a mass enrichment of table AUSP to populate missing mandatory characteristics for historical batches. 3. The ABAP lead refactors the custom certificate of analysis or COA print programs to pull from the new S/4HANA trade tables. 4. The technical architect utilizes SAP Note 2227014 to ensure the batch management settings are active and stable.
Who gets blamed versus who owns it.
1. Blamed MDM team. The business assumes the batch data was deleted during the load. 2. Blamed SAP users claim the new system is too restrictive for life sciences. 3. Actual owner, quality assurance director responsible for the failure to define the compliance baseline during the realize phase. 4. Root cause, treating batch management as a technical data field rather than a legally regulated process. A compliance block is a data gap, not a software bug.
How this is actually fixed the right way by a role.
1. Quality lead mandates a compliance smoke test 48 hours before go live, verifying the COA generation for 50 materials. 2. The team implements real-time validation in transaction MIGO to prevent any batch from entering S/4HANA without quality data. 3. The SD team utilizes batch determination logs to identify and fix dead search strategies before the warehouse starts picking. 4. Functional leads execute recall simulations, proving the system can trace a single batch from the customer back to the supplier in under 5 minutes.
What not to do. Common wrong fixes.
1. Do not use manual status overrides to ship blocked batches. You are violating federal law and inviting a recall. 2. Do not manually append characteristics in S/4HANA using SQL. You will permanently break the data consistency of the material ledger. 3. Do not assume that GXP compliance from ECC automatically carries over to S/4HANA. You must revalidate the technical stack. 4. Do not allow go live until the batch to order reconciliation shows 0 unclassified active records. Shortcuts in pharma validation result in a financial and legal disaster post-go live.
Follow-up 1. Why is the classification engine so much stricter in S/4HANA?
Answer: S/4HANA uses a unified object characteristic model for all modules. This enables real-time analytics across quality, sales, and production. If a batch is missing a characteristic, the global filter will fail, and the system will block the transaction to prevent data corruption in the downstream ledgers.
Follow-up 2. What is the Drug Supply Chain Security Act, or DSCSA, impact on S/4HANA?
Answer: DSCSA requires item-level traceability. In S/4HANA, this means the serial number, and the batch must be perfectly linked. If your migration only moved the batch but not the serial history, your system will fail the mandatory compliance check during PGI.
Follow-up 3. Curveball. What if the batch data is 100% correct, but the PGI fails because the active ingredient percentage in the batch master drifts by 0.0001% due to HANA's 15-decimal precision, causing a potency mismatch error in the custom SD pricing routine?
Answer: this is a precision drift failure. HANA math is more accurate than ECC math. You must test the mathematical parity. The fix is to implement commercial rounding in your custom VOFM pricing routines to match the legacy ECC behavior. If you miss this, you will have in stock but unshippable goods. The system thinks the potency is slightly different than the customer's tolerance, blocking your most expensive product shipments on day one.
Exclusive pro tip.
On day one, monitor transaction BMBC specifically for batches with a restricted status. Reconcile these against your electronic batch record system immediately. Any mismatch indicates a data migration failure in the quality classification tables that will halt your O2C flow.
Scenario 287. Automotive Scheduling Agreement Simplification Issues.
In the run phase of an S/4HANA migration for an automotive supplier, the JIT, or just-in-time delivery process, often breaks. S/4HANA simplifies sales scheduling agreements, deprecating certain legacy features in transaction VA31. If the integration between the customer's release order and the S/4HANA delivery schedule, tables VBKD and VEDK, was not correctly realigned with the new advanced ATP engine, the system will fail to process EDI releases, resulting in immediate production shutdowns for the OEM.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high supply chain integration and contractual risk. 2. Phase, run post go live. 3. Frequency, common in Tier 1 and Tier 2 automotive suppliers. 4. Primary ownership, automotive O2C lead, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and integration architect. 6. Business ownership, automotive account manager. 7. Relevant SAP note. SAP note 2267323 S for TWL sales scheduling agreements.
Diagnostic dashboard, symptoms and evidence.
How automotive scheduling gaps manifest in the live system. 1. Symptom: inbound EDI Delfer or Delgit messages fail in transaction BD87 with the error no active scheduling agreement found. 2. Red flag: the cumulative quantity VBAK VBEZ in S/4HANA does not match the customer's last received quantity report. 3. Business impact: immediate operational shutdown at the customer's assembly line, triggering massive line down penalties for the supplier. 4. Detection: checking transaction VA33 reveals that the forecast delivery schedule has not been updated for 48 hours. 5. Technical proof: errors in the S/4HANA IDOC monitor stating that the material partner combination is inconsistent with the new BP model. Insight: in automotive, the system is the warehouse. If the EDI fails, the physical conveyor belt stops.
Why this happens, scenario analysis and root cause.
1. S/4HANA simplifies the scheduling agreement data structures, deprecating some legacy release types that automotive OEMs still use. 2. The project team failed to refactor the inbound EDI mapping for the new S/4HANA business partner and CVI number ranges. 3. New S/4HANA ATP re-allocates stock every hour, which can confirm an automotive JIT order that was previously reserved. 4. Failure to synchronize the cumulative received quantity or CRQ during the cutover, leading to a quantity over run error in the first EDI call. The failure is a result of treating scheduling agreements as standard sales orders rather than time-sensitive contracts.
Why this is a migration exclusive failure.
1. ECC upgrades never change the scheduling agreement tables VBKD, so the JIT engine remained 100% compatible. 2. S/4HANA migration physically restructures how releases are stored to improve HANA memory performance. 3. The mandatory move to the new advanced intercompany model for cross-border automotive flows is a unique S/4HANA task. 4. This failure only surfaces when the organization receives its first high-speed production release from an OEM on day 1. Migration forces a re-platforming of the high-velocity supply chain that ECC maintenance never approach.
Financial and customer impact.
1. Catastrophic line-down penalties from OEM, which can reach tens of thousands of dollars per minute. 2. Loss of future business awards as the supplier's EDI reliability score drops to 0 in the first week live. 3. Inaccurate inventory valuation if the system fails to reconcile the material in transit with the customer's received balance. 4. Operational chaos, as planners must manually type in thousands of delivery schedule lines to clear the EDI backlog. Scheduling failures directly threaten the Tier 1 status of the automotive enterprise.
Governance and accountability RACI model.
Securing the JIT flow requires a partnership between SD and EDI teams. 1. Accountable automotive O2C lead, the person who owns this and gets fired if it fails. 2. Responsible integration architect refactors the EDI mapping, for example VDA 4905 for the new S/4HANA digital core. 3. Consulted automotive account manager provides the OEM-specific release rules for validation. 4. Informed global logistics director monitors the EDI success rate as a primary day 1 operational health metric. Accountability ensures that technical speed matches the high-velocity automotive supply chain.
Ownership who actually fixes it.
Resolving this requires an EDI to order logic audit. 1. The automotive lead identifies all JIT and forecast scheduling agreements and mandates a release simulation. 2. The integration architect utilizes SAP CPI to map legacy VDA or EDIFACT messages to the new S/4HANA OData services. 3. The SD functional lead audits transaction VA32 to ensure the cumulative quantities are correctly initialized post-load. 4. The technical architect utilizes SAP Note 22673323 to ensure the simplified agreement logic is technically active.
Who gets blamed versus who owns it.
1. Blamed. Integration team. The business assumes the middleware is not sending the files. 2. Blamed. SAP users claim the new VA31 transaction is not compatible with OEM requirements. 3. Actual owner. Automotive O2C lead responsible for the failure to lead the scheduling agreement transformation during Explore. 4. Root cause. Treating the automotive industry solution as a standard SD module upgrade. An EDI failure is a data mapping gap, not a network glitch.
How this is actually fixed the right way by a role.
1. Automotive lead mandates a customer-by-customer EDI pilot during the realize phase, verifying 100% of OEM variants. 2. The team implements cumulative quantity reconciliation transaction VMA to ensure the system and the OEM are in sync. 3. The ABAP lead refactors any custom automotive user, exits for example exit_SAPLVEDK_001 to use the new S/4HANA BADI framework. 4. Functional leads execute peak volume EDI tests, proving the system can process 5,000 releases per hour without deadlock.
What not to do. Common wrong fixes.
1. Do not allow users to manually overwrite cumulative quantities to bypass an EDI error. You are breaking the legal contract. 2. Do not use standard sales orders as a workaround for JIT releases. You will lose the scheduling control required by the OEM. 3. Do not ignore partner number warnings in the IDOC log, assuming the system will guess the right scheduling agreement. 4. Do not allow go live until the final EDI handshake has been verified with at least one strategic OEM partner. Shortcuts in automotive validation result in an immediate supply chain freeze.
Follow-up 1. What is a cumulative quantity or CQ in automotive?
Answer: CQ is the running total of all items shipped to the customer for a specific contract. It is the source of truth for both the OEM and the supplier. In S/4HANA, If this number is out of sync during migration, the system will incorrectly calculate under shipments or overshipments.
Follow-up 2. How does advanced ATP impact JIT deliveries?
Answer: ATP uses HANA native allocation. If a JIT release arrives but the stock has been stolen by a higher priority BOP segment, the JIT delivery will fail to create. You must configure specific supply protection rules for your automotive contracts to avoid this.
Follow-up 3. Curveball. What if the EDI release is processed successfully and the quantity is confirmed, but the cumulative received quantity fails to sync because of a technical lock in the new ATP buffer held by a parallel market segment update, resulting in a ghost variance on the OEM ASN report?
Answer: this is a kernel concurrency failure. S/4HANA ATP and SD update tasks are highly synchronous. You must test the update orchestration logic. The fix is to configure optimistic locking for table VBKD via SAP Note 2267323 to ensure the EDI update task can finalize the CQ even during peak analytical load. If you miss this, you will send contradictory data to the OEM. Your ASN will say one thing and their release will say another, leading to day one shipping rejections.
Exclusive pro tip.
On day one, monitor transaction VMA specifically for cumulative quantity variances. If the difference is not zero, your migration snapshot was taken in the middle of an open delivery. Re-baseline your CQ immediately to match the OEM portal before the next JIT release arrives.
Scenario 288. Commodity hedge management integration breaks.
On day one, post-go live in the commodity trading or mining industries, organizations often find that their financial hedges are out of sync with physical sales. S/4HANA simplifies the commodity pricing engine, or CPE, but changes the way price fixations link to treasury and risk management. If the technical exposure triggers between the SD sales order and the hedge management engine were not refactored for the new transparent pricing tables, the company will be overhedged or underhedged, leading to millions in unmanaged market risk.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high financial risk and commodity pricing integrity. 2. Phase, run post-go live. 3. Frequency, common in metals, energy, and agricultural trading. 4. Primary ownership, commodity risk manager, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and treasury lead. 6. Business ownership, head of commodity trading. 7. Relevant SAP note. SAP note 2226411, CPE simplifications.
Diagnostic dashboard, symptoms and evidence.
How hedge integration gaps manifest in the live system. 1. Symptom. A price fixation in a sales order transaction CPE rep does not generate a corresponding logistics transactional request in the treasury module. 2. Red flag, discrepancies between the physical long and short position and the financial derivative position in the risk dashboard. 3. Business impact, massive financial exposure to market price fluctuations that should have been automatically hedged on day one. 4. Detection, checking table CPERC_D_QUOT reveals that market data is being updated, but the fixation status is not being transmitted to TRM. 5. Technical proof. Errors in the S/4HANA Exposure Hub indicating that the business partner ID used in SD is not authorized for treasury hedging. Insight. In S/4HANA, the link between the sale and the hedge is a real-time OData handshake. If the data mapping is old, the handshake fails.
Why this happens, scenario analysis and root cause.
1. The team assumed CPE logic in S/4HANA was identical to ECC, ignoring that the CPE engine was refactored to work with transparent table PRCD_elements. 2. Failure to update the commodity risk business partner roles. Treasury requires counterparty settings that SD master data often lacks. 3. The project team used legacy differential invoicing logic that is incompatible with the new S/4HANA CPE to TRM automated triggers. 4. Underestimating the impact of real-time market data feeds like Reuters or Bloomberg, which refresh faster than the S/4HANA background jobs. The failure is a result of treating a sophisticated financial risk integration as a simple pricing update.
Why this is a migration exclusive failure.
1. ECC CPE utilized a cluster table KONV, which required a batch-based extraction for hedge management. 2. S4 HANA migration moves the entire exposure calculation to a real-time push model from the digital core. 3. The requirement to utilize the new logistics to treasury integration engine is a unique architectural task of S4 HANA. 4. This failure only surfaces when the new integrated risk core attempts to generate an exposure from a live sales contract. Migration turns an asynchronous report into a synchronous financial event.
Financial and customer impact.
1. Material loss of millions of dollars if a commodity price drops and the sell side was not hedged. 2. Inaccurate financial reporting of the mark-to-market value of the company's sales portfolio. 3. Internal audit failures due to the inability to prove that every physical sale has a corresponding risk mitigation entry. 4. High cost of manual emergency hedging, as traders must manually enter positions to compensate for system failures. Hedge failures directly jeopardize the financial survival of commodity-dependent enterprises.
Governance and accountability RACI model.
Securing the hedge requires a partnership between trading and finance. 1. Accountable commodity risk manager, the person who owns this and gets fired if it fails. 2. Responsible treasury lead ensures the TRM engine correctly receives and processes the O2C exposures. 3. Consulted SD functional lead provides the price fixation rules and the commodity material mapping. 4. Informed CFO monitors the hedging ratio as a primary corporate risk indicator. Accountability ensures that technical automation serves the corporate risk policy.
Ownership who actually fixes it.
Resolving this requires an exposure to derivative logic audit. 1. The risk manager identifies the gap materials and ensures they are mapped to valid commodity IDs in S4 HANA. 2. The ABAP lead refactors the CPE requirements VOFM to utilize the standard SAP APIs for TRM communication. 3. The technical architect utilizes SAP Note 22264111 to ensure the simplified CPE model is active and stable. 4. The QA team executes a volume hedge test, verifying that 1,000 order changes generate 1,000 exposure updates in seconds.
Who gets blamed versus who owns it.
1. Blamed. SD lead. The traders assume the sales order is not saving correctly. 2. Blamed. SAP users claim the new risk engine is mathematically incorrect. 3. Actual owner. Commodity risk manager responsible for the failure to define the exposure triggers during Explore. 4. Root cause. Treating hedge integration as a technical background task rather than a core financial rule. A hedge mismatch is an architectural gap, not a transaction bug.
How this is actually fixed the right way by a role.
1. Risk manager mandates a zero unmanaged exposure policy for the day one cutover. 2. The team implements automatic position balancing in TRM to offset SD sales against financial futures. 3. The ABAP lead refactors the custom CPE exits to use the new HANA native quantity conversion modules. 4. Functional leads execute stress testing, proving the system remains in sync during high market volatility.
What not to do. Common wrong fixes.
1. Do not allow traders to manually sync hedges in Excel. You are destroying the audit trail. 2. Do not use manual journal entries in FI to bypass an exposure error in SD. 3. Do not ignore mapping errors in the TRM monitor, assuming they are just first-day noise. 4. Do not allow go live until the exposure to order reconciliation shows 100% alignment. Shortcuts in risk management result in a financial crisis the CFO cannot defend.
Follow-up 1. What is real-time exposure in S4 HANA?
Answer: it is the process where a sales order change immediately creates a financial requirement in the treasury module. S4 HANA uses OData to ensure that as soon as the SD document is saved, the company's net position is updated for hedging.
Follow-up 2. Why is CPE more precise in S4 HANA?
Answer: S4 HANA CPE utilizes HANA's 15 decimal precision for all market data calculations. This eliminates the rounding errors that were common in ECC's 2-decimal cluster tables, providing a more accurate basis for financial hedging.
Follow-up 3. Curveball. What if the SD order generates a correct exposure in TRM, but the hedge request is rejected because the S/4HANA credit risk engine blocks the transaction due to a missing counterparty limit for an internal legal entity?
Answer: this is a governance loop failure. Internal entities must be defined as risk relevant in FSCM. The fix is to configure internal counterparty limits in transaction UKM_BP. If missed, your intercompany trades will remain unhedged, creating a massive, invisible risk on your consolidated balance sheet.
Exclusive pro tip.
On day 1, monitor transaction CPE rep specifically for sales orders in error status. Any error here means your financial hedge is dead. Fix the market data mapping immediately to restore your risk protection.
Scenario 289. Utilities billing convergence SD impacts.
On day 1 of an S/4HANA go live for a utility provider, the business often discovers that their Energy Plus service bundles are failing to bill. S/4HANA for utilities mandates a convergence between the legacy ISU billing engine and the standard SD billing subledger. If the billing excellence integration was not correctly realigned with the new S/4HANA Universal Journal and contract accounting models, the system will fail to consolidate electricity usage and service fees onto a single customer invoice, leading to massive revenue delays.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high industry-specific and revenue convergence risk. 2. Phase, run post-go live. 3. Frequency, common in energy, water, and waste management utilities. 4. Primary ownership, utilities billing excellence lead, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and FICO CA lead. 6. Business ownership, head of customer billing. 7. Relevant SAP note. SAP note 22674342 S4TWL. ISU to S/4HANA utilities.
Diagnostic dashboard, symptoms and evidence.
How utilities billing gaps manifest in the live production system. 1. Symptom: a customer receives an invoice for electricity, but the service contract monthly fee from SD is missing. 2. Red flag: technical error logs in the billing workbench stating that the convergence object could not be initialized. 3. Business impact: significant revenue deferral and customer confusion as the company is forced to send multiple unconsolidated invoices. 4. Detection: checking table DKKOTX, tax registration for contract accounting reveals that S/4HANA business partners are missing the required utilities roles. 5. Technical proof: mismatches in the billing trigger queue where SD events are ignored by the ISU mass processing job. Insight: in S/4HANA, utilities is no longer an add-on. It is a convergent process that requires a shared financial soul.
Why this happens, scenario analysis and root cause.
1. The project team lifted and shifted legacy ISU logic without refactoring the SD to FICA account determination for the Universal Journal. 2. Failure to synchronize the billing cycle dates between the SD recurring billing plan and the ISU meter reading schedule. 3. Legacy custom interfaces for energy as a service bundles were built on obsolete ECC tables that were removed in the S/4HANA simplification. 4. Underestimating the impact of the business partner model. S/4HANA requires a single ID for both the utility account and the SD customer. The failure is a result of treating utilities and SD as separate planets rather than a single integrated world.
Why this is a migration exclusive failure.
1. ECC upgrades kept ISU and SD in separate technical silos with zero database-level integration. 2. S/4HANA migration forces a physical ledger convergence into table ACDOCA, requiring every penny to be perfectly mapped. 3. The technical requirement to utilize the convergent invoicing framework is a unique S/4HANA modernization task. 4. This failure only surfaces when the new integrated utility core attempts to generate a bundled bill on day 1. S/4HANA forces a financial convergence that ECC row-based modules never approach.
Financial and customer impact.
1. Massive spike in unbilled receivables as the system blocks the generation of thousands of consolidated invoices. 2. Customer disputes and payment refusals as buyers receive incorrect totals that do not match their service contracts. 3. Regulatory non-compliance if the tax on energy is not correctly calculated across the converged bill. 4. High support costs as a billing war room must be established to manually correct account determination errors. Billing convergence failures directly jeopardize the order-to-cash efficiency of the utility provider.
Governance and accountability RACI model.
Securing the converged bill requires a partnership between SD and FICO-CA. 1. Accountable Utilities Billing Excellence Lead. The person who owns this and gets fired if it fails. 2. Responsible FICO-CA lead ensures the contract accounting settings and main and sub-transactions are perfectly aligned. 3. Consulted SD functional lead provides the service item categories and pricing rules for the converged invoice. 4. Informed customer service director monitors the first bill accuracy as a primary user adoption KPI. Accountability ensures that technical convergence results in a single, accurate customer truth.
Ownership who actually fixes it.
Resolving this requires an integrated ledger and BP audit. 1. The utilities lead identifies all missing BP roles for contract accounting MKK and extends them using mass scripts. 2. The SD functional lead audits transaction VKOA to ensure all service account keys are mapped to the correct FICA main transactions. 3. The technical architect utilizes SAP Note 2267342 to apply the latest utilities SD integration patches. 4. The QA team executes a bundling test, verifying that an electricity charge and a service fee appear on the same PDF invoice.
Who gets blamed versus who owns it.
1. Blamed. SD lead the business assumes the service order was not set up correctly. 2. Blamed. SAP users claim the new billing dashboard is too complex. 3. Actual owner. Utilities billing excellence lead responsible for the failure to define the convergence rules during Explore. 4. Root cause, treating utilities as a standalone industry solution instead of an integrated digital core component. If it does not bundle, the architectural bridge is missing a pier.
How this is actually fixed the right way by a role.
1. Utilities lead mandates a hard sign-off on the convergent invoicing logic for all 50-plus service variants. 2. The team implements real-time account determination in transaction FQDL to ensure SD values flow into FICA instantly. 3. The ABAP lead refactors the custom invoicing baddies to ensure they handle both meter and service data in a single LUW. 4. Functional leads execute volume closing simulations, proving the system can generate 100,000 converged bills in under 4 hours.
What not to do. Common wrong fixes.
1. Do not allow the system to send separate bills as a permanent workaround. It destroys the seamless customer promise. 2. Do not use manual journal entries in S4 HANA to force a balance in the contract ledger. 3. Do not ignore missing contract warnings in the SD billing monitor. Every warning is a lost revenue event. 4. Do not allow go live until the final billing reconciliation between legacy, ISU, and S4 HANA is 100% finished. Shortcuts in billing convergence result in a customer service disaster on day 1.
Follow-up 1. What is convergent invoicing in S4 HANA?
Answer: convergent invoicing is the technical framework that allows data from multiple sources, like utilities meter readings, SD service fees, and external OData charges, to be consolidated into a single financial document and a single customer invoice.
Follow-up 2. Why is the Universal Journal ACDOCA so important for utilities?
Answer: in ECC, utilities and SD had different ledgers. S4 HANA brings them together in ACDOCA. This provides real-time visibility into the total customer value across both energy and services, enabling better risk management and marketing.
Follow-up 3. Curveball. What if the bill is generated correctly, but the payment clearing fails because the S4 HANA contract account, FICA, cannot find a valid tax jurisdiction for an SD service fee that was posted with a legacy ECC tax code that was never mapped to the new SAP document and reporting compliance framework?
Answer: this is a legacy to modern tax failure. S4 HANA Utilities requires a 360-degree tax synchronization. You must test the FICA to DRC handshake. The fix is to implement a tax category translation in transaction FQDL for all converged items. If you miss this, you will have stuck cash. Customers will pay their bill, but your system will refuse to clear the debt, resulting in unnecessary collection, letters being sent to paid customers.
Exclusive pro tip.
On day 1, monitor transaction FKK-INV_S for any billing documents in pending status. Every pending document is a customer who hasn't been invoiced. Identify the account assignment gap immediately to release the cash flow.
Scenario 290. Media industry content. Rights management simplifications.
On day 1 of an S/4HANA Go Live in the media and entertainment industry, organizations often find that their royalty payments and content licenses are broken. S/4HANA simplifies the content rights management, or CRM integration, moving away from legacy IP objects in SD toward the new intellectual property data model in the digital core. If the link between the sales contract and the rights of use was not correctly remediated for the business partner model, the system will fail to calculate royalty liabilities, leading to legal disputes with content creators.
Scenario classification and relevant SAP, note if applicable.
1. Complexity, high intellectual property and financial liability risk. 2. Phase, run post go live. 3. Frequency, common in broadcasters, film studios, and music labels. 4. Primary ownership, media sales and rights director, the person who owns this and gets fired if it fails. 5. Supporting SD functional lead and FICO lead. 6. Business ownership, head of royalty accounting. 7. Relevant SAP note, not applicable industry solution design gap, reference SAP note 2227014. For O2C context.
Diagnostic dashboard, symptoms and evidence.
How media rights integration gaps manifest in the live system. 1. Symptom, a sales contract for a movie license is saved in SD, but 0 royalty accruals are generated in the financial ledger. 2. Red flag, users attempt to view rights availability in transaction VA43 and receive an object not found error for the IP ID. 3. Business impact, legal non-compliance and immediate financial variances as the company fails to set aside funds for content owners. 4. Detection, checking table ACDOCA reveals that the product attribute for the IP is missing for SD-originated postings. 5. Technical proof, errors in the royalty calculation log stating that the link between the business partner and the royalty contract is broken. Insight in S/4HANA, a right is a contractual attribute. If the link to the partner is dead, the right is technically unmanaged.
Why this happens, scenario analysis and root cause.
1. S/4HANA replaces legacy media-specific IP master data with a more unified product and business partner architecture. 2. The project team failed to map legacy rights holders into the correct S/4HANA business partner roles, for example, royalty recipient. 3. Legacy custom logic in the sales contract user exit was not refactored for the new rights management BADI definitions. 4. Underestimating the impact of real-time royalty accruals, which in S/4HANA must hit the ledger at the moment of the digital download event. The failure is a result of treating intellectual property as a simple master data field rather than a legal financial obligation.
Why this is a migration exclusive failure.
1. ECC media upgrades kept the IP SD link in separate industry solution tables, ensuring perfect continuity. 2. S/4HANA migration physically decouples IP rights from the standard SD document category to allow for cloud scalability. 3. The technical requirement to transform legacy rights into digital assets is a unique S/4HANA migration task. 4. This failure only surfaces when the new integrated media core attempts to calculate a royalty for a newly migrated contract. Migration forces a level of legal and financial convergence that ECC never approach.
Financial and customer impact.
1. Severe legal risk and potential copyright lawsuits if content owners are not paid according to their contracts. 2. Material misstatement of royalty liabilities on the balance sheet, leading to significant audit concerns. 3. Operational paralysis in the rights department as staff must manually relink thousands of contracts in the new system. 4. Inaccurate rights availability reporting, resulting in the same content being sold twice to different distributors. Rights management failures directly jeopardize the trust-based revenue model of the media industry.
Governance and accountability RACI model.
Securing content rights requires a partnership between legal, sales, and finance. 1. Accountable media sales and rights director, the person who owns this and gets fired if it fails. 2. Responsible SD and FICO lead jointly ensure the sales contract correctly triggers the royalty accrual in the ledger. 3. Consulted corporate counsel provides the rights of use matrix for technical validation. 4. Informed CFO monitors the royalty liability accuracy as a primary corporate risk KPI. Accountability ensures that technical speed does not come at the cost of legal obligation.
Ownership who actually fixes it.
Resolving this requires an asset-to-contract mapping audit. 1. The media lead identifies all IP-relevant sales document types and verifies their rights trigger configuration. 2. The ABAP lead refactors the custom royalty formulas to utilize the new HANA native intellectual property APIs. 3. The MDM lead executes a mass correction of the business partner roles for all content creators and licensors. 4. The QA team executes a cycle test, verifying that a $1 digital sale correctly generates a $0.10 royalty accrual.
Who gets blamed versus who owns it.
1. Blamed legal department. The business assumes the contracts were not loaded into the system. 2. Blamed SAP users claim the new media module is mathematically inaccurate. 3. Actual owner, media sales and rights director responsible for the failure to perform a legal logic audit during the explore phase. 4. Root cause, treating rights management as a functional add-on rather than a fundamental ledger requirement. If it does not accrue, the architectural link between the right and the revenue is broken.
How this is actually fixed the right way by a role.
1. Media lead mandates a hard sign-off on the royalty accrual logic for all 100+ content variants. 2. The team implements real-time rights checking transaction SPRO to prevent unlicensed sales in S/4HANA. 3. FICO lead ensures the royalty liability accounts are perfectly balanced in the Universal Journal post-go live. 4. Functional leads execute audit trail simulations, proving that each dollar of royalty is traceable to a specific customer sale.
What not to do. Common wrong fixes.
1. Do not use manual journal entries to pay royalties. You are destroying the document-level audit trail required for creator audits. 2. Do not allow sales reps to manually update rights availability to bypass a system block. This is a legal liability. 3. Do not ignore missing IP warnings in the SD billing monitor. Every warning is a potential copyright violation. 4. Do not allow go live until the royalty to sales reconciliation shows 0 unexplained variances. Shortcuts in rights validation result in a corporate legal crisis and financial restatements.
Follow-up 1. What is intellectual property management in S/4HANA Media?
Answer: it is the unified framework that replaces legacy IS media rights. It manages the acquisition of rights from creators and the licensing of those rights to customers, ensuring that all financial royalties are calculated in real time within the SD and FICO modules.
Follow-up 2. Why is the business partner role royalty recipient so important?
Answer: in S/4HANA, you cannot pay a content owner without this specific role. The role links the royalty agreement to the physical bank account and tax registration of the creator, ensuring that payments are legally and financially compliant.
Follow-up 3. Curveball. What if the royalty calculates correctly in the sales contract, but the accounting posting fails because the S/4HANA Revenue Recognition Engine RAR rejects the IP ID as a non-valuated attribute, even though it was used for financial aggregation in ECC for 20 years?
Answer: this is a financial metadata rejection failure. S/4HANA RAR is stricter than legacy SD Rev Rec. You must test the IP to RAR handshake. The fix is to configure the revenue accounting item or RI to include the IP ID as a custom attribute. If you miss this, you will have invisible liabilities. You will sell the content, but your balance sheet will fail to show the money you owe to the creator, resulting in a massive financial restatement at year-end.
Exclusive pro tip.
On day 1, monitor table ACDOCA specifically for records with a profit center equal to your royalty clearing dummy. Every record there represents a failed rights derivation. Fix the contract to ledger mapping immediately to stop the legal drift.
Section 16 Wrap-Up, the edge of the core.
Section 16 has taken us to the very edge of the S/4HANA digital core. We analyzed how industry-specific specializations in retail, automotive, pharma, and utilities are impacted by the move to a unified data model. The lesson for the solution architect is that niche processes are often the most fragile. If you fail to validate the last mile of industry-specific logic, the standard SD document flow will collapse under the weight of unremediated technical debt.
Part 4 Wrap-Up, Securing the Revenue Engine.
This concludes Part 4 of our masterclass. In this final segment, we moved beyond functional configuration to the executive layer of the system. We secured the billing and finance integration, tuned the HANA database for high-volume performance, and established a modern security framework. Most importantly, we learned how to identify and kill the ghost incidents that threaten system stability during the hypercare phase.
The Complete Journey, Parts 1, 2, 3, and 4.
Across this 290 incident series, we have mapped the entire S/4HANA migration lifecycle. Part 1, the Blueprint and Data Model Shock. We mastered the strategic shift to business partner and the death of the legacy pricing cluster table KONV. Part 2, the IT Crucible. We navigated the technical build phase, remediating 15 years of custom ABAP code and surviving the SUM technical conversion downtime. Part 3, Transition to Live. Across 2 volumes, we analyzed the go-live gate of testing and cutover, followed by the day 1 logistics and integration failures. Part 4, the Revenue Engine. We finalized our training by stabilizing the financial ledger, optimizing HANA performance, and addressing niche industry risks. The foundation was set in the boardroom and the server room. The journey ended at the balance sheet, ensuring the company gets paid.
Masterclass Navigation, check the description.
A true S/4HANA architect never stops learning. If you joined us for the finale, ensure you go back and watch the previous segments to build your 360-degree expertise. Links to Part 1, Part 2, and both volumes of Part 3 are available in the description below. These videos represent the collective experience of 290 real-world project failures, knowledge that is not found in any standard SAP certification.
The universal interview tip. Whenever you ask a tech VP or an industry mentor how to crack a tough interview, they all give you the exact same tip. Get familiar with the most commonly asked interview questions. It sounds simple, right? But here is the problem. The search nightmare. Finding the actual most commonly asked questions for senior roles is a nightmare. Generic Google searches only give you basic textbook definitions, and those will not help you clear a lead architect or senior engineer round where production reality matters. Imagine a master vault. Now, imagine a vault where the absolute most commonly asked interview questions for your specific role are already collected for you, perfectly organized by interview rounds like 1. Most commonly asked technical-based question and answers. 2. Most commonly asked scenario-based question and answers. 3. Most commonly asked real-world problem-solving question and answers. 4. Most commonly asked system design question and answers. 5. Most commonly asked behavioral-based question and answers. Cross-domain mastery. I built the ACE Interviews Master Vault for the modern architect. We did not just do this for one role. We covered everything: SAP, cybersecurity, DevOps, software testing, data engineering, Java, and Python. The ultimate all-access deal. Instead of paying for individual PDFs, you can now unlock our entire database. Get over 1,000 plus PDFs containing 50,000 plus of the most asked question and answers for a mere 1,499 rupees a month. The elite transformation. Stop studying just to pass. Equip yourself with the cross-domain confidence of a true architect and walk out of your next interview choosing between 2 or 3 elite job offers. Unlock the vault now. The era of buying individual guides is over. Click the link in the video description below right now to unlock the Master Vault. Now, let's get back to the masterclass.
For more exciting tips, tricks, and more importantly, for valuable insights of interviews, please share, like, and subscribe to my channel. It has a lot of valuable information about various insights of interviews. It has a wide range of real-world portfolio projects of various technologies for interviews, and it Has wide range of most asked interview questions and answers of various technologies like data science, SAP, AWS, DevOps, and full-stack web development, and more. That will be useful during interviews. It has a wide range of most asked interview questions and answers and real-world portfolio projects of various technologies for freshers. For 2 to 3 years, experienced candidates, and for 5 or above years, experienced candidates to test their skills by knowing most asked interview questions and make themselves ready for interviews.